This is item number 1, convening the meeting, and we will immediately go into recess until 9 a.m. See y'all then.
Sorry, Representative, can you say that one more time? That way we have it on Zoom Live or
Sure.
YouTube Live.
Sure. Welcome everyone to the Insurance and Real Estate Committee's meeting on Thursday, March 17th. Item number 1 on the agenda is to convene the meeting. We will immediately go into recess until 9 a.m. Good?
Yes.
See you at 9.
Hey, good morning, Alex. Do we have two separate links out there? Because I just clicked on a link and was just in like a holding pattern.
No, same link for all day long.
Okay, so we don't have to log off and log back in. We just stay here.
Correct.
Okay. Good morning, everyone. Welcome to the Insurance and Real Estate Committee's public hearing for March 17th. We are going to go into recess and move to the Insurance and Real Estate Committee meeting. Great. Good morning, everyone, and welcome to the Insurance and Real Estate Committee meeting for Thursday, March 17th. Any remarks from my co-chair or ranking?
Not at this time.
Senator Lesser?
Thank you, Senator Wong. Thank you, Representative Wood. I don't have any comments at this time.
Thank you, Senator Lesser. Senator Wong.
I'd be remiss to not wish everybody a happy St. Patrick's Day and ready to get going. And we have 75 people. And I always want to offer that as we have other committee commitments through this Zoom world that we're in, there may be members coming in and out, but obviously every individual that provides testimony is important to us. So thank you, Madam Chair, and happy St. Patrick's Day again. Everybody's Irish today.
Madam Chair?
Yes.
Well, if Senator Huang's going to go down that rabbit hole, I certainly would want to echo his comments in support of St. Patrick's Day. I would also note that today is also the Jewish festival of Purim, which is another celebratory feast. And I think this is the first time since 1984 that Purim and St. Patrick's Day have coincided. So however, wherever your family comes from, I hope everybody has a wonderful day.
Thank you, Senators. I do see a lot of green out there. Okay, any other comments? All right, great. We'll move on to item number 3, which are bills for review. These are the Connecticut Insurance Department bills that we heard this past Tuesday. Number 1 is SB 359, an act concerning the Insurance Department's recommendations regarding the standard non-forfeiture law for life insurance. And this bill, summary of this is it is to lower the minimum non-forfeiture interest rate in accordance with NAIC Insurance Commissioner's model law. The next bill on our agenda is SB 360, an act concerning various changes to utilization of review companies licensure statute. HB 3582 is an act concerning the Insurance Holding Company Act. There was some JFS language submitted which updates definitions and has some technical changes to the insurance holding company definitions. HB 5388 is an act concerning the Insurance Department's recommendations regarding value-added products. And again, a lot of technical changes to work within the NAIC model language. I'd like a motion to JF SB 359, SB 360, and HB 5388 to the floor, and to JFS HB 5382 to the floor.
So moved. Representative Wood, can we create a consent calendar for these items?
Is that something that
to move to put forth a consent calendar for those 3?
Okay, any objection to that?
No. If I could just do make a point, maybe a point of order, point of inquiry, whether we are doing this by, or maybe somebody can answer whether we can do this by voice vote or whether we do have to.
No, it has to be. No, the clerk will take it down.
Thank you.
Madam Chair,
Yep.
Is it okay if we pull 5388 off the consent calendar, please?
Sure.
Thank you.
Okay, so there's a motion to put SB 359, SB 360, and HB I'm sorry, Sayed, Senator Anwar, did you want 5388 off of that? Okay, so there would be two bills on consent, SB 359, SB 360. Would we be able to add HB 5382 to that?
Madam Chair,
Sure.
I think the motion, we have to have a motion to JF those bills or JFS them as appropriate, and then after that point, once the motion is in front of us, then they could be added to a consent calendar. But I think we're sort of putting the cart before the horse, if you will.
Okay, so we have a motion to JF those bills. I believe I recall Rep. Dathan moved that. Do we have a second?
Second.
I'll second.
Second by Representative Pavlak D'Amato. Any discussion? Representative Pavlak D'Amato.
If you could just repeat the bill numbers and confirm whether all three, I believe we have now, are department bills, and then which bill of those that has been taken off consent calendar.
HB 5388 would not be on the consent calendar. And the bills that would are SB 359, SB 360, and HB 5382. All of these bills are Connecticut Insurance Department bills that were heard on Tuesday.
And one last question, what was 5388? What's the title of that bill that was taken off?
An act concerning the insurance department's recommendations regarding value-added products or services and prohibited insurance practices.
And is that the one that we have discussed in the past that is going to bring a lot of jobs to Connecticut? I'm not sure if that's the one I'm thinking of. I thought it was value-added, but I'm not sure. If
No,
that's
these are just technical changes to the statutes.
5388 is technical changes? Okay.
Yep.
Okay, thank you, that's all.
Thank you. Senator Anwar.
Madam Chair, I don't know if this is the right time to speak about 5388, or should I wait for that motion to be made and then talk about the discussion time?
Sure, why don't we do that when we bring that bill up next?
Thank you, Madam Chair.
So do you need a motion, Rep. Wood, to consent calendar 359, 360, and 5382?
I believe that's the next step. So do we have a motion to do a consent calendar for SB 359, SB 360, and HB 5382?
So moved, Representative Dathan.
Second.
Moved by Representative Dathan, seconded by Representative Nuccio. Any discussion? Clerk, can you please take the tally?
Yes, so for a consent calendar consisting of Senate Bill 359, Senate Bill 360, and House Bill 5382. We'll start with Senator Lesser.
Senator Lester in the affirmative.
Representative Wood.
Rep. Wood is a yes.
Senator Anwar. Senator Anwar, I think you're muted.
It looks like he's on another meeting, Alan.
Okay, we'll circle back. Representative Comey.
Representative Comey votes yes.
Senator Wong.
Senator Huang votes yes.
One more time, Senator, please.
Yep, Senator Huang votes yes.
Thank you. Representative Pavlak D'Amato.
Pavlak D'Amato votes yes.
Senator Cabrera.
Senator Cabrera votes yes.
Senator Maroney. Senator Maroney.
Senator Maroney votes yes.
Thank you. Representative Dathan.
Representative Dathan votes yes.
Representative Delnicki.
Representative Delnicki votes yes.
Representative Farrar.
Representative Farrar votes yes.
Representative Meskers,
Representative Meskers votes yes.
Representative Nuccio,
Representative Nuccio votes yes.
Representative Perillo, Representative Paletta,
Representative Paletta votes yes.
Representative Riley,
Representative Riley votes yes.
and Representative Rochelle.
Representative Rochelle votes yes.
Thank you.
Now, if you wouldn't mind clarifying, so the motion was to create a consent calendar. Do we now do a motion to JF those to the floor, or is that what we just did?
That is what we just did, because your first motion was to go through the action of those bills on the agenda, and then you added it to the consent calendar.
Great. Thank you. Thank you for bearing with me, everyone. Okay, the next bill for review is HB 5388. And to just give a summary of that bill, it is to amend the insurance statutes regarding value-added products or services by adopting the NAIC amendments to the NAIC Model Unfair Trade Practices Act, which establishes an allowance for certain value-add products or services. Do I have a motion to JF that to the floor?
So moved, Senator Lesser.
Moved by Senator Lesser, seconded by Rep. Dathan. Any discussion? Senator Anwar.
Thank you. Bear with me. I'm in two meetings at the same time, but this is a very important issue. Madam Chair, I'm opposed to this, and I'll tell you why. This is actually trying to give the insurance companies the option to give gifts to individuals to, for a lack of a better word, entice them to join that insurance company for the health care. What happens is that the individuals, it's almost like giving a toaster to somebody in the banks that they would have these accounts and so on, or giving them a little bit of extra, say, hey, we're going to take your premium down by 20%, but you sign up for the next 5 years. And then the people actually, because they see something upfront, we are supposed to protect the consumers. This has been an illegal practice, and then insurance companies have been doing this. And what they do on the other end is they do not cover the emergency issues. They do not cover some of the surgical interventions. They do not cover some of the primary prevention stuff. And then they would entice them and give them some of these ways to entice individuals to join their insurance company at that time. So this practice should not be legal. And this was a technical fix that came. I opposed this last time as well, because we should not be in the business to help insurance companies gain market share by enticing people and then trying to bypass what the actual product is going to be. This has happened in other places and it has been a nightmare, and they still try to do it, but because it's illegal in our state, insurance is trying to quote unquote do a technical fix to allow them to do this. So that's why I will be a no, and I hope others would join me in the same effort if they could consider that. Thank you, Madam Chair.
Thank you, Senator Anwar. And hearing your comments, I believe that the bill does the opposite, which doesn't allow the enticing by using those types of products or a toaster or, money or anything like you're saying. So I was wondering, before we jump to Senator Lesser, could OLR chime in on that? Because the way I read it, the changes do the complete opposite of what you are saying, which I'm sure all of us would be very concerned about.
Hi, this is Janet from OLR. Basically, this bill allows insurers to give insureds at no cost or reduced cost a value-added product or service that isn't specified in their insurance policy, but they have to meet certain criteria. The product or service has to relate to the customer's insurance coverage and basically be designed to provide loss mitigation, reduce claim costs, educate about liability risks, monitor or assess risk, enhance their health or financial wellness, incentivize behavioral changes to improve health. In general, the products must not be discriminatory in the insurance commissioner's opinion, and they must the availability of the products must be based on documented criteria, which the insurer provides to the commissioner upon request.
Thank you. Senator Lesser.
Yes, thank you, Madam Chair. And Madam Chair, I've had the opportunity to have a number of discussions with stakeholders from both the insurance department, which put forward this bill, but also the medical community, the providers who I know have expressed some concerns about exactly the issues that we just heard from Senator Anwar. I take those concerns seriously. Sorry about the noise in the background, but I would just ask that we move this bill forward today to allow conversations to continue. I would just highlight that I believe the content of this bill is already the subject of an insurance department bulletin, so it may already be happening in the marketplace. This would simply be codifying the existing insurance department bulletin, but I think it's important that we have conversations going forward so we can address the concerns of all the stakeholders. So with that, I'll be supporting the vote today, and want to make sure that we reach out to stakeholders on all sides to address any concerns.
Thank you for that clarification, Senator Lesser. Senator Anwar.
Thank you so much, Madam Chair. So again, what the LCO said is that this value added it does open the doors for what I'm worried about. So it does not restrict it. It does open the door, and that's part of the concerns. So what I did say is accurate, essentially, that this could be used in the manner to have a negative impact on the consumers. That's part of the challenge, and I know the commissioner wants this badly. I understand that because the insurance industry is already doing this, but when they're doing this, it's somewhat against the regulations. They are a powerful industry. They can get away with it, but right now, if we allow them and give them the green light through this bill, it is not going to help the consumers. This is not a benefit to the consumers that we want to protect. So I will be a no for this very reason. And again, I can give you examples, and then if God forbid we pass this, in a few years, I'll give you a lot more examples, and then people will come to that too. Thank you so much, Madam Chair.
Thank you, Senator Anwar. Representative Muskers.
Yeah, I expect to stand forward to support the bill, not because I'm looking to hurt the consumer, but I think it's implicit in our healthcare and healthcare policy to give the industry the support to market and inform the constituents and their clients on health saving and mitigating factors and practices, and to incentivize people to live in a more healthy environment. Recently in the insurance or in transportation, we had a lengthy conversation about the freedom of people to wear helmets or not when they were out on their motorcycles, and given the incidence of death. It's been a free will choice. We've left the helmets off our residents because they want that right. I'm not going to dispute it, but here we're talking about a process to aid the insurance industry to incentivize better behavior among the insured, which will improve outcomes, and ultimately, if it's effective on that end, will reduce premiums. And so I expect to support it. Thank you.
Thank you, Rep. Muskers. Representative Pavlak Tomato.
Yes, just to, I was going to say something similar to Representative Mesker, so I just am backing up and agreeing with what he says. It's not, I know everybody kind of has this assumption that it's government's role to protect people and to intervene in the private contracts, and to some degree an individual has a responsibility to do their research, but again, it's not the proper role of government, and us intervening just usually ends up creating more problems. Again, I would like to back up what Representative Meskers just stated, and again, I'll be looking at the bill a little more thoroughly, going over it again, but I am in support of this piece of legislation. Thank you.
Thank you, Representative. Senator Wong.
Thank you, Madam Chair. If I may, through you to the OLR, is this bill similar to last year's bill of Senate Bill 844?
Yes, to my knowledge, it is identical.
It is identical. Thank you. And I do believe that it was an issue of a very strong point of concern for me. And I remember in the testimony with Commissioner Mays, who I respect greatly, he did give some point of clarification that gave me a little bit of comfort. But I wanted to refresh people's memory in this committee that, and I want to thank Senator Anwar's very vocal and strong opposition to this now is, I'm remembering it because when you're on a committee vote and you're the only person to vote no against the bill, you remember the bill. And if I'm refreshing everybody's memory, I was the lone no vote last year. I just wanted to note that I don't know what changed with regards to Senator Anwar's strong avocation. I was actually leaning to being persuaded by Commissioner Mays and reassuring that there was no ill intent and it was creating greater efficiencies. But saying that, I wanted to point that out. I wanted to point out and refresh people's memory that perhaps these points are being made by my colleagues now this year, has validated some of my concerns steadfastly last year. So I will join Senator Anwar in voting no on this to further get clarification as we move further along this to flag it. But I was reading through and I thank OLR for reaffirming that this was indeed a identical bill to last year and that the committee all voted yes, except for me. Lonely me. Thank you, Madam Chair.
Thank you, Senator Wong. Any other discussion? Clerk, please take the roll.
I actually have, I'm sorry, can't put my hand.
No worries. Representative Comey.
To hold this bill?
We are not going to hold the bill. We're going to move towards a vote and we will work on changes that everyone's comfortable with. Again, I just want to, I think that there was a misleading statement saying that, you know, offering a toaster with insurance products, that is not what this language says. It is related products. So for example, a health, an HEP that we're, you know, referring to encourages people to get early detection on mammograms and colonoscopies and things in exchange for a dollar amount. It's part of our state insurance plan. So the intent of the language is to encourage, you know, a healthy lifestyle. And if we can make changes to fix that, if there's anything in there that leaves people uncomfortable, you have my commitment to working on that. Representative Rochelle.
I just want to check, can we make a motion to table? Is that an option? So we can further discuss this as a committee? Anyone? Can you hear me?
Yeah, I don't hear support for tabling.
There's no second to table?
I'm confused.
Madam Chair.
Yes, Senator Lesser.
Yes, thank you. I just want to say a couple of things. One, I want to just reiterate that I think I take with good faith the concerns that we've heard from a variety of stakeholders and from Senator Anwar and from some of the other committee members about this proposal. You know, as I mentioned, I do support the proposal, and I hope we can you know, address those concerns and move it forward. But you know, hearing some trepidation from the committee members and knowing that we're going to have an additional committee meeting for next Tuesday, I think it probably makes sense for to give the insurance department an opportunity to talk to members and to address any outstanding concerns. And you know, between now and next Tuesday, and also maybe give each of the caucuses an opportunity to caucus and discuss these concerns. I think they can be addressed. I take Commissioner Mace's seriously. I don't want to, describe any member of this committee as making misleading comments, but I do think we do come from different perspectives, and we are hearing concerns, and I think those concerns are all in good faith and can be addressed in the next couple of days. So at this point, I would suggest, hearing some feedback from the committee, that we pause on this item and that we could place it on the agenda for Tuesday and hopefully reach a consensus between now and then.
So Rep. Rochelle has made a motion to table. Senator Lesser, are you seconding?
I don't know that we need to take. I don't know that we need to table it.
We don't need to do a motion.
So I made a motion to JF it, and what I would say at this point is that I'm going to withdraw my motion to JF it, and at that point we can potentially recess the meeting if unless there's another motion to JF it.
Okay, so we will remove that motion to JF. This is the opportunity for everyone to vote. So Alex, did you get Senator Anwar's vote from the previous?
No, I still need Senator Anwar's vote for the consent calendar, please.
We'll just give him a second and try to waive him so we could do that, because then we're going to our public hearing. Is there anyone else that was missing?
Representative Perillo. However, I don't believe he'll be able to join us.
Yeah, I'm trying to ask him now. He might not be available. Yeah, I don't think he'll be voting.
I'm just trying to give Senator Anwar the opportunity to vote, but we may need to move on. Okay. Alex, can you grab him?
Yes, Senator Anwar, for the consent calendar, how do you vote?
Senator Anwar?
I don't have the details of the message.
Senator Anwar, Alex just needs your voice vote.
Senator Anwar votes yes. This is on the consent.
Yep.
Yes, that's correct.
Thank you.
Thank you,
Sorry
Senator.
about that. Thank you.
Okay, everyone. Item number 4 on the agenda is the announcement of our next meeting, which will be this upcoming Tuesday. Do we have a motion to adjourn?
So moved.
Seconded.
Moved by Senator Lesser, seconded by Rep.
Seconded.
Masters. All those in favor?
Aye.
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 Opposed? Okay, our meeting is adjourned and we will move to our public hearing. And I believe we all stay here, correct, Alex?
Yes, that's correct.
Okay, great. Thank you. Thank you, everyone. I'm sorry for the technical craziness, and I appreciate the clerk dealing with us. Alex, do we have speakers in the panel? We'll give him a second.
Yes, let me start moving our first speakers in.
Good morning, everyone out there in the public. Welcome to our Insurance and Real Estate Committee's public hearing, March 17th, 2022. We will be starting on our first speakers in a moment. We are just back from a recess of our Insurance and Real Estate Committee meeting, and we will be moving towards our public hearing. And I see our first speaker, Vicki Veltri from the Office of Health Strategy. Vicki, can you hear?
I
Yep, you're
cannot
on.
hear. I need to come back in. Can you hear me?
Yes.
Maybe I should testify and then come back in for questions. I don't know what the best thing is to do, but
Have her jump off, Alex, and come back on.
Okay, I'll let her back in.
did you say go ahead? I apologize. I don't know what happened. It was fine. Can I leave and come right back in? Do you want to let Senator Looney go before me? That would be
Is
fine.
he on?
I'm going to leave and try come back in.
Okay. Alex, do we have Senator Looney?
Senator Looney is not on yet.
Is Representative Doucette?
Yes, he is. I will let him in
Okay,
now.
then we let him go first.
Now.
Oh, I can hear Vicky. Vicky, can you hear us?
Yes, I can hear you. I don't know what
Okay.
happened. Welcome to Zoom land.
Thank you and welcome.
Thank you. Good morning, Representative Wood, Senator Lesser, Senator Huang, Representative Pavlak D'Amato, and members of the Insurance and Real Estate Committee. I'm Vicki Velchi. I'm Executive Director of OHS. I'm going to try to go quickly through the testimony. I know you have a long day. Here to talk about 5449 and 416. So HB 5449 has 4 sections related to COM program. Just want to briefly say section 1, we really don't have concerns with. That is consistent with our existing state law. We gave you some recommended language if you wanted to examine it about being able to ensure people can get lease arrangements or financial arrangements they do need to have in place before they come to us for a CON. Section 2 would require us to do some kind of review on markets and bonding from Chifa. I just had a brief exchange with Jeanette Weldon over at Chifa. I think there's some concern about the ability of us or to have Chifa be able to do a study with us on looking at capital spending and capital spending reviews and how those might impact the market. But what I will do is work with her and come back to you with what she might propose or not regarding this section of the bill. We do know that there is a lot of capital in the market right now, and we are concerned with the rate of capital market expenditures in the state of Connecticut and how that can contribute to healthcare costs. We do appreciate the committee bringing up some kind of idea to address that. Section 3 of the bill regards the fee for CON transactions. The current application fee is $500. It's been $500 since 2010. We are recommending to the committee that you consider a tiered fee system based on the size of the transaction or the value of the transaction. We did a little research yesterday that we'll share with the committee that shows quite a spread between the value of the transactions. About 30% of them are below $50,000 and about 30% of them are between $1 and $5 million. So there's quite a spread. And we feel that maybe the fee should be targeted to that value of the transaction. Section 4 has multiple components in it regarding a potential study. What we did in our testimony is note to you where right now we are using a lot of these ideas in the CON process, though none of them are codified into law as across the board considerations for any CON application. We're still imposing conditions when we can related to them, including tying price growth to the benchmarks, including community representation on boards, et cetera. A couple of these are in statute, the Attorney General's powers, and some of our ability to impose civil penalties. But the rest of them are things we are trying to do to ensure equity in the system, ensure price growth stays under control, et cetera, for transactions that come in front of our office. But important to remind the committee that CON transactions are just that. They are transactions. They are one at a time considerations, and they are not across the board changes, and they only last for the period of the CON. And you may remember, and I think I brought to this committee or sent to this committee some information about what happened in the CON task force back in 2017 regarding many provisions of the statutes that were recommended to be changed. None of those made it. And it's been about 7 years since the CON statutes have actually been changed. So there is some need for us to update our statutes. But having said that, Section 4 does require significant resources. We know the governor has budgeted $400,000 for OHS to do an updated statewide facilities and services plan and a markets combined with a market study to determine impacts in the market. And we think that's beyond due, and we need to get cracking, for lack of a better phrase, on doing something about that. So we're actually excited the governor proposed those funds. Finally, just a quick comment on Senate Bill 416, anti-competitive practices. This bill was based in part on a NASHP model bill. I think we sent the link to the committee. The bill as proposed is missing several vital sections of that model act, including the definition of a healthcare provider, including or excluding smaller practices from it. That bill was designed not to, that model bill, impact small practices, but right now it would under the language that's in front of you. The other provisions that are missing are enforceability provisions. And very importantly, the bill is silent on the construction section of the Model Act, which ensures that carriers and providers can enter contracts regarding ACOs, exclusive provider organizations, tiering, networks that tier providers by cost or quality, centers of excellence, and other pay-for-performance programs. That's actually a critical miss in the bill that would need to be added. Finally, the severability clause is limited, doesn't address the complete Model Act and the impact of enforceability of one or more provisions on the Model Act. So we wanted to make sure we brought that to your attention. The link is right there, and the Model Act is very clear on all the language that's included. We're happy to work with you on any and all of these bills. And finally, would just say with respect to the Gag Clause in the Anti-Competitive Act, the Gag Clause in Connecticut's law right now is merely about disclosure to patients, but not the complete Gag Clause provision that's in the NASHP Model Act. So those are the things we just wanted to bring to you. I assumed we would have questions, so I cut my testimony short so we could answer your questions, because I know you'll have them. So thank you very much.
Thank you so much for being here, Vicki, as well as other members of your team. I just did want to go back to the Chifa comment that you made. The capital expenditures, in my mind, is a huge component of issuing CON. If there are buildings going up across the state, that has a direct impact on the cost of our health insurance and on the cost of care. So I'd really like to hear your feedback on how capital expenditures could be part of that review process, because again, this committee is very sensitive to the exponential increases in cost of care that we're seeing, and then people come to us and say, why are our insurance costs so high? So I did just want to make that comment. And I think that, for everyone out there, the language of this bill is very much in draft form, and we have a lot of improvements to make. I think even some things on the fines came out wrong and should be more of a sliding scale, based on the size of the project. I was wondering if you could just talk about the definition of a suspension in service versus termination and your suggestions for improving or adding that to this bill.
Good. Thank you. Thank you for all three of those points. Regarding the first one, I will say we do have concerns about the rate of growth in the market. And I have said that, I think, in multiple forums, including the press. We are concerned because every single cost that goes in has to be borne by policyholders and people have to pay for healthcare. So we do need to ensure that it's reasonable, rational, and goes along with where we directionally should be going as a state, which is absolutely why we need that study to be done regarding an updated health services plan. What's happening is I think the market's ahead of us, and it's hard for us to keep up. So we do need to translate that somehow. However we do it, we need to have a serious discussion about where we go directionally as a state. Now, with respect to that, I will say, however, when transactions are before us, let's say it's a hospital doing something or another provider, we do review the financial expenditures for feasibility. We ensure that the project itself is feasible, but to the extent if the budget is feasible, the budget makes sense, and that the applicants have commitments to that financial support, because that would be a problem. With respect to hospitals, obviously, we have all of their financial data because we collect it all every year. So we have extreme detail with respect to the hospital's finances. Regarding, there was the second point, which I missed, so you're going to have to remind me. But the third point about suspensions and terminations, we do not have a definition of suspension or, I think, termination. Kim Martone is here and Laura Manzione from OHS are here. And Kim has a history better than I do of all of CON over the last 30 years. But to my knowledge, there has never been a definition of suspension in the statute. And I think we have a concern about long-term suspensions, which may constructively be terminations. And right now, our only way of ensuring that we could do something about that would be to proceed to regulation, which will take quite a long time to do. As you all know, the regulatory process takes a while. I mean, we can do that, and we have a set of regs that are going in shortly. But I think we believe that there should be a definition of suspension, and it should be no more than 6 months before that suspension may be considered a termination. That's our view on that one. And Kim, please chime in if I'm wrong. But I would also want to make one comment that I forgot to make earlier, and that is that the bill as drafted includes chapter, I think it's 319Z, which is the nursing homes and CON, and want to alert the committee that OHS does not regulate CON for nursing homes. DSS does, the Department of Social Services, as the Medicaid agency. And I am representing Commissioner Gifford right now and asking the committee to please remove that section, remove reference to DSS or that chapter in this bill. So I apologize if I didn't answer everything, Representative Wood, but please come back to me on the second point because I forgot.
The second point were fees, but thank you for bringing to light the DSS language that will definitely be taken out. But yes, the fees that we put in were a little misleading as well. So I just, you know, in your mind, if we did more of a sliding scale based on the project, I assume that would be okay.
Well, I think that's a more rational way to do it. The value of the transactions go all the way from, you know, below 50,000 up to 250 million for over the last 4 years. We did a poll of every single CON and the value of the transactions, which we'll share with the committee, that shows just the range. Everything from an institution getting an MRI for research uses, which is something else we could talk about at some point, why that needs to be regulated. But CON for, or an MRI for a university to do research at, you know, at that equipment cost versus a major merger and acquisition for a value of 250 million or more. Those are quite different transactions. And it seems to us that the application fee could be adjusted based on that value.
Great, thank you. Senator Lesser.
Yes, thank you, Madam Chair, and thank you, Vicky. It's good to see you and appreciate your comments on these bills. Can you give a high level, you know, I know that a lot of the conversations around CON have revolved around the closure of labor and delivery services in Wyndham, and just wanted to know if you could give a high level sort of overview about the CON process, about tools that the state has to ensure that people have access to care where they need it. And, you know, are there things that we should be contemplating either in the CON bill or elsewhere to ensure that we've got adequate access to care for people in the Connecticut?
So without speaking to a specific transaction, which I can't do because it's live in the office and I've read the testimony related to it. I will say, I think the state needs to look at a plan for the future, which is part of that health systems plan, but discussions around whether those kinds of, you know, whether it's labor and delivery or other services, that we have a planful response to where we want to go as a state regarding those services, where they're available, and ensure that there's access. I think we have a criteria on access in our statutes. We have criteria about cost effectiveness. I do think our criteria need strengthening. We have said this, I think, to the committee, to public health, and I'll just say it here too. That was one of the things that we had discussed in the CON task force back in 2016, that the criteria really needed strengthening with respect to suspensions, with respect to access to care, with respect to costs, and think that we really need to go back and re-examine some of those provisions because they do relate to that service and others. But with regard to the CON process, what happens is if anybody wants to terminate a service, and again, there's no definition of suspension in the statutes, but this is with respect to hospitals, and I believe there's one other provision related to terminations that Kim may know off the top of her head. Those require approval before those services can be terminated, excuse me. So it requires coming in, doing an application, and a lot of back and forth between the applicants and OHS to determine whether the applications are complete. And for the committee's knowledge, we have updated these applications in the last couple of years to ensure we are asking very detailed questions about access, about Medicaid that Medicaid is under consideration. So there's access to care for Medicaid beneficiaries and others. Costs, equity, been part of these very serious and very detailed questions about that. So I know there's a lot of burden on our applicants to have to do that, but we think it's critical that those questions be answered because we are evolving in a healthcare landscape here. But then in most of these cases, in similar cases, we go to public hearing. And public hearings can be requested under certain circumstances in the statutes. It's 3 or more people or 25 or more if it's, I think, a group practice or something. But then we have a public hearing, we go back, we put people under oath, people testify, then we will often ask for additional information at a hearing, which extends the period of the hearing or the record being open, then the record is closed, and then we have to issue a proposed decision. If it's a denial, it would be a proposed decision. Then the parties have an opportunity to ask for briefing and arguments in front of me as the executive director, or we might reach an agreed settlement. Those are usually the routes that are taken. So I don't know if that answered your question. Senator Lesser, maybe it was too high level. I don't know, but
yeah. So I'm going to ask you a specific question, and because it's about a potentially pending matter, I take to heart your earlier admonition that you're not able to comment on pending matters. But I do know that in the case that I referenced, your office fined Hartford Healthcare, I think $65,000 for not seeking a CON. I think the current fine is $1,000 a day. I don't know if that's a cost of doing business. Do you have any comments on why you did that, and also if the sufficient the sticks that you have available to ensure access are they in statute? Are they adequate? Can you just sort of speak to that to the extent that you can? And if you can't, I understand.
I can, I think, speak to the part where, yes, it's public knowledge and it's in the portal and it's public information that we did issue a fine. And the current penalties are $1,000 a day for the ongoing. If there's an ongoing violation, it's $1,000 a day for the violation until the violation is cured. But the parties can ask for a hearing when we issue a fine to contest the fine. And in that case, that has been requested. So I guess that's probably as far as I can go with respect to that particular matter. I will say with respect to the penalties in general, the CON task force, I think, made a recommendation regarding those penalties, or at least changing the standard to be applied or on the basis of which we would determine whether a penalty should be assessed. So right now, in order to incur a penalty, there must be a willful violation of the CON statutes. The CON task force recommended that that standard be changed to negligence. That did not happen because none of the recommendations, obviously, in the CON task force were adopted. But that's where we are. That's what the current penalty is. So we just have to apply it as has been codified. Whether it should be increased or not, I think should probably be a discussion among parties. And that has not happened. I don't think there's been another real discussion about whether penalties should be increased or not, and by how much.
And, you know, we've seen obviously a huge consolidation in a hospital ownership in Connecticut. We've seen the emergence of two major hospital chains as the dominant players in Connecticut. I know there are other smaller independent markets, but it really seems that, you know, both the emergence of the hospital chains and then their affiliated provider practices are really changing the delivery of healthcare. With as much specificity as you think, what's driving that? And do you think that there's weaknesses in this, either the CON process or on the other bill, the tiering and steering? Is that sort of allowed that to happen? And do you see that adversely affecting consumers, or is that a benefit since they're nonprofits? They're not. I don't want to say whether or not that's bad. My hunch is that it's bad for consumers, but I don't want to speak for you. And so what do you see as driving this this really relentless consolidation?
So I will start by saying consolidation has been started way before the ACA passed. And I know people attribute it quite often to the ACA. I do think the ACA has somewhat of a role. I don't think it's the only thing that's driven consolidation, but it's not a unique thing to Connecticut. This is a across the country issue that's been happening. I want to assure the committee, because I think there's information that suggests that certain things have happened that passed the CON task force that have not passed the CON task force. I think that the office needs stronger criteria relating to market impacts, competition, and other matters that I think we've recommended to the committee, probably through that document that we sent over. The CON task force really did a pretty thorough job on the landscape. And the advantage of the CON task force is that the stakeholders were represented around the table. Every party had a voice in that task force. Although when it came to the legislature, I think people returned to their current positions as opposed to the agreements that were made or the recommendations that were made in the task force. So I do think there's a significant number of changes that can be made to beef up the criteria and the transactions. Some of them include the ability to have support for economic reviews, for expert consultants. That was in the CON task force, and that's what other states do. They are able to look at the applicant and say, we're going to ask you to pay for this analysis, but we are going to do it to ensure that there's an adequate and complete review of the transaction. That to me is one of the biggest gaps. One of the other gaps is not being able to contract for clinical expertise when we need it. And I think that's a really important thing to be able to have in some of these transactions. Not every transaction, but certain transactions require that level of clinical expertise. And finally, I think also we have, without putting people on the spot, we have had lots of conversations with our AG's office, and we've been trying to work closely with them over the last few months. And we think that partnership, or I don't want to necessarily say partnership, but complementary roles in the process is really important to looking forward, because we only have a certain piece of this under our statutes, and we are not the antitrust regulator. We do not do that kind of work out of CON, but we do need the resources to be able to do it, which is why the governor has given us a few more positions too, because as I'm sure you will hear from Jim and other folks, transactions have slowed. We're slowing down in the office. We've been slowed down quite a bit by the pandemic, the number of applications, the complexity of the applications, and staff leaving or retiring. And that's creating issues for us to be able to review them and then come back to you with meaningful recommendations. So there's a number of things there. I think the NASHP model bill, as a member of the NASHP cost group, because I'm on the advisory group that NASHP has with about 15 other people like me around the United States, we worked on that in terms of advising NASHP on the contents of that bill. And that bill, that model bill is from 2021, actually, so it precedes the current session and the issues going on out in the ether. But it contains some strong provisions, and that's something I think that could be examined. But having said that, it needs to be the complete bill and not only certain provisions of the bill, because it has to allow for people to enter certain kinds of contracts, which, by the way, exist already in the state. And it may be problematic if it passes as is without ensuring that it protects some of the relationships that have developed over the years in terms of contracting between providers and carriers for value-based payment programs and the like. That was a long answer, but I don't know if it's complete, but.
We got a lot on the record. I just, I guess I heard you loud and clear, urging more resources for your office, more tools on your end. But one question I have, we do have the majority of hospitals in the state are non-for-profits, which is, I think, a good thing. But do we need, with that nonprofit status, I know that hospitals have various transparency requirements. Do we need more tools to ensure adequate transparency? And I'm mindful of the fact that there's separate legislation moving its way through the legislature addressing money that I know hospitals have parked offshore in captive insurance accounts. Are there tools that we need to make available to ensure that when reviewing either CON issues or other proposals that we have adequate data to evaluate financials?
So I will, first let me start by going back to your first question, because you asked about vertical acquisitions too. And I just want to make sure the committee knows that the physician practice work group is still meeting at this time. And we owe you a set of recommendations next year about that issue around vertical acquisitions, in which there are representative participants. I'm not sure where we'll come out on recommendations yet on that, but that is a growing issue. And at the same time, want to respect the fact that we do have a lot of small practices who either need to be able to combine or are seeking to have regular work days and the support of technology and other kinds of things that hospitals actually can offer. And that is hard to get if you're an independent practice. So those are tensions in the market around that issue. Regarding the transparency, I will say there are a ton of transparency requirements already. To be fair, on the hospitals, we have so much detail on their financials. I'm not sure there's a single thing that we are missing on their financials. We have lots and lots of financial data, and we review it. When we look at CONs, we look at those financials. Because in a CON, if a hospital is coming to us, and just to be clear, not only hospitals come through CON, many applicants come through CON for different things. But when a hospital comes through, we can compare what's being represented, what the historic financials are, what's trending, what's not trending, what's the debt ratio, et cetera, in terms of evaluating the ability to do the project, or whether or not maybe the project is going to add significant expense to the healthcare system. So we can do that now. And between that, benchmark data, APCD, et cetera, I think we have quite a bit of transparency already on the hospitals. But Kim, do you want to chime in?
Yeah, if you don't mind. The one thing that I would add is that our financial data is a year old. So what would be helpful is to have more real-time, up-to-date data. So when we're looking at a hospital acquisition, we actually have data like that's current and recent, and we do not have that. It's a year old.
I can imagine that would be particularly important right now in the pandemic, when we're seeing, large amounts of federal financial assistance and, up and down financials depending on, dramatic market changes. So I can imagine that would be important. So thank you. We've had a lot of conversations in this country on the federal level, et cetera, about the best way to structure our healthcare system. And I know that there are activists and Bernie Sanders calling for a single payer healthcare system. But it strikes me as we move towards, rapid consolidation of our hospital system in Connecticut, that we're moving towards not single payer, but towards a single payee system where we've got one or just a very small number of entities providing the overwhelming majority of care in the state. And obviously that raises a host of policy considerations. One question I have, and it's something that the state hasn't done since the 1990s, but we used to do, was engage in hospital rate setting. And I was wondering, in places in Connecticut where there are places where we still have robust competition, and there the market works fine. But in places where the market is not working fine, where there is a single player, you can either go to that hospital and its affiliated practices, or you cannot get healthcare. Where you don't have adequate competition, I know there's past precedent for this, and I think Maryland currently does it. Could we do something like a regional rate setting proposal to ensure that a company, a hospital, isn't able to abuse its effective monopoly in a particular area? Is that a policy that would be available to the state?
You'd have to adopt it. To just be honest, that would have to be, that is not under, obviously that we don't have that under existing law.
No, but my understanding is that your agency under previous incarnation did have that power and did do that up until the 1990s. Is that right?
Yes, we did in the 1990s, correct.
Kim's, when OCA existed by itself or under DP or wherever it was at the time, they actually did do hospital rate setting. It was quite some time ago. I will say that's an intensive amount of resources to do rate setting. And I'm not saying that because we would need resources to do it. I'm just alerting you that it would take significant resources to do it. Maryland has a global budget program. They actually regulate at the budget level. They do some rate setting underneath that. They don't include all the physician practices, but they do have the hospitals under a global budget. Vermont does it as well. But we have not done rate setting since the 1990s. I do want to make a comment that I did not make earlier, though, which is this committee should know in front of public health, we have proposed, because I raise it because I think you made a comment on community support. We worked with CHA last session to develop a bill to ensure that community benefit statutes were updated and that there would be additional reporting on the investment in communities, et cetera. So we are working with them. We're hoping to get that bill over the finish line. I think it was a pretty good bill, and we compromised and worked very hard to get to a compromise on that piece of proposed legislation. So that is one area where I think there needs to be more transparency, and I think that bill would bring some of that transparency. That's the one piece of transparency I didn't mention earlier.
Thank you very much. Madam Chair, that's all. Those are all my questions for right now. I may have some, I suspect this will be an interesting conversation going forward. And I see a lot of hands, so I want to let other people have an opportunity.
For sure, thank you. Representative Farrar.
Thanks, Madam Chair. Thanks for being here. Vicki, great to see you. And
you too.
I was writing questions down as Senator Lesser was going through his, so certainly hoping not to repeat, but build on them. I think, we certainly focus a little bit on, kind of how these consolidations are contributing to a lack of services. And I heard a little bit about how they could contribute to a raise in cost for us as consumers. Does your office have any data you can point us to about what these consolidations really have done to our consumer costs? Because I feel like that's just helpful for us to keep in mind as we're considering such a bill like this.
Yeah, we have to do a little more, since OHS was created, I think we have to do a little bit more digging, because some of the transactions, some of our recent transactions in which price caps were imposed or other things were done, the data's, some of the data issue that Kim mentioned earlier, the data is a little bit behind. We have done a little bit of analyses on at least, I think, one or two transactions that OHS reviewed when we started, that I can dig out, that we did as at least out of the APCD data, that showed that there was an impact by imposing, the price caps. So I think we can get that one to you. Unfortunately, and we might be able to look at some earlier ones, and I think we may have. So I'll have to go back and ask the team where they stood on that. But that's the only way we can really review it is the APCD. And we are making people aware in the COM process that we are taking administrative notice of the APCD and that we will be using it in evaluating transactions. The APCD is the all payer claims database. And that's a very robust set of data that we collect that the insurers provide to us and the Medicaid program, Medicare, and the state employee plan. So all that data is in there. So we can track prices over time, et cetera. So we can get you that. I just have to find out where it is in process.
Okay, thank you. Because I think, again, like from the standpoint of, kind of seeking out services, not only are folks realizing, oh, the quality or the service I was looking for has changed or isn't the same, but also, as you noted, we're seeing those potential increase in costs. So anything that we can point to for that, I think is very helpful. You mentioned earlier about, kind of a partnership with the Attorney General moving forward. Is there anything further that you would suggest we look at in statute to make sure that you can work in greater partnership to address some of these issues?
I don't know. I wouldn't want to put my, AG Tong on the spot here. So I think we're having continued conversations about how we can move forward. I think there's already a lot of room under existing statutes for us to partner together on things we can actually partner together on. There may be issues that they want to intervene in a different way with respect to our transactions, but we have been having a series of discussions on how we can do that, because that is what's happening in states like Massachusetts, Rhode Island, where the AG and the in Massachusetts, the determination of need. I think it's the same thing in Rhode Island, actually, work side by side. And I just want to make a comment too, going back to that last question, that I think we have data on the Yale L&M transaction since that took place in 2016 or so, I think, and Charlotte Hungerford, which I think wasn't under our shop, but then we added some conditions to it when we got there. And we did see a level of growth below the regular market for those transactions. So at least we have a couple that I think we've looked at. The rest are kind of, they're not, the impact wouldn't be seen yet. So we'd have to go back and look at the data. But I at least wanted to plug in that while I remembered. So.
Thank you so much. And to your point around the AG, I think I'm glad to hear you're in such close communication about this. And if there is anything else, I think to your point in learning from other states with Massachusetts and Rhode Island that we could do, we certainly want to hear that. So please keep us posted on that. Just two other quick questions. One around kind of quality of services kind of as consolidation occurs. Can you speak to it all? Because I think one of the things we were trying to think through in this bill was, is there or should there be kind of a greater ability for setting standards for measuring quality, again, as that impact of consolidation, and what OHS's role could be in that?
Glad you brought that up. And because the team, our health systems planning unit team and our data team, the entire group got together and developed a whole series of quality measures that could be used in the transactions. And we have some kind of either dashboard or Excel workbook or something that I think we can share with the committee that we've been using in the transactions, because you can't, it's pretty obvious to this committee, but we can't just look at costs divorced from quality. You have to look at both of them and how they impact each other. So we have developed them and we are using them. Kim, do you know whether, do we have that available? We can send to the committee, right?
We do have that available to send, yes.
Okay, great. That's actually really important.
Yeah, that's wonderful. And with that, is that something you are using currently or you're planning on using moving forward? Just kind of giving us a sense of that.
We are using it currently. In some of the transactions, the range of the quality standards that we developed are pretty broad, and lots of them would apply to hospital-based type transactions. Some of them would not. So we would only apply the ones that could reasonably apply to a certain transaction. So if it's, an MRI, we wouldn't be applying, I don't know, readmission rates or something like that to a transaction. So, but we are applying them. And maybe we can put together something to share with you about which applications, or at least point to which applications are pending or have had those included. But we certainly have an eye on the quality.
That would be great. And with those, are you looking at those not just kind of in the initial transaction, but in an ongoing way?
Yeah, so this is important to say too, and I'm not sure I said it, but the CON process, under existing law, the certificate of need, which is technically what you get, even though it's not a piece of paper, when you get basically the authorization to proceed on a transaction when you get a certificate of need. Under existing statutes, it's really only a 2-year, I believe it's 2 years, Kim. Maybe it's longer for hospitals, I don't know, but I think
Unless
it's only
conditioned otherwise, yes, it could be 3 to 5.
So 2 years is the standard. But we have agreed settlements where we extended some of these transactions up to 5 years, actually. So in those cases, we would be looking, in terms of the conditions, we have to look at them every year for compliance. And we are looking at those conditions for compliance. I know there's some concerns that we aren't looking at conditions around compliance, but we are. And we have to do that, depending on the condition, we do it either on a yearly cycle, maybe a biennial cycle. It depends on what we've agreed upon in the conditions. So throughout the transaction, we have to look at those standards. It's important to say in CON though, and I think I've said this to other people, I want to make sure this committee knows, when the transaction ends, it ends. We have no more oversight. So that's a really important thing for you to know. So I can put conditions on transactions such as price caps, such as qualities, such as hospital board membership, et cetera, but, and in a lot of cases, those continue, but I don't have any authority to mandate that once the period ends. So I just want to make sure the committee understands that it's transactional.
Right. Thank you for that. And I just had one other quick question before deferring to my colleagues. You noted it earlier a little bit around the inclusion in the governor's budget for this ability to put funds towards a long-term plan. Can you kind of speak to what that plan would allow you to do? And then the second part of that question I have is, are there, I guess from my perspective, I want to make sure that the resources are there for you to actually use this plan and to make sure that you can make decisions and implement recommendations based on what you're finding in the plan, in the planning plan of sorts, since I know it is a long-term healthcare plan. So can you speak to that a little bit?
Yes. So let me start by saying the agency is required to develop a statewide healthcare facilities and services plan. And it's supposed to be updated and modified every 2 years. The last really robust plan, very detailed plan, was 2012. It's been updated since with some utilization data and some patterns that we're seeing in the market, but not a ton of detailed recommendations. And the reason for that has been it's been resource limited, the inability to really staff that. Having said that, the key components, many of the components that are required under that plan, and Kim knows every one of them by heart, like a utilization study, an inventory of services, all that stuff, all those components have been done. It's the putting it together and looking at that with an eye towards what's happening around us in the development of facilities that we don't regulate, or are developed, or insurance products, et cetera. Where is the state going directionally? So the services and utilization, the inventory, that all has to be put together with an eye towards where do we want to go in Connecticut? And not just 2 years out, 10 years out, where do we want to be? And then match, the CON process to this plan. So what happens now is when somebody comes in for a CON, an applicant, and it doesn't matter whether it's a small applicant or a big applicant, they need to assure us in most cases that they're aligned with that plan. and that's critical because what we want to ensure a healthcare environment in which that is had obviously the stakeholder engagement it needs to establish, but be more importantly is reflective of our priorities and our vision in the state. And that's where we're going. That's what we want to do with this study. Is historically the statewide facilities and services plan has really been about where are things located, you know, how many do we have, you know, how many physician practices are there? You know, how many MRIs do we have? How many CT scans do we have? How many hospitals do we have, et cetera, et cetera? How many beds do we have in the state? But we need the recommendation part. And we need the recommendation part in the context of where is reimbursement going? You know, where are programs going in terms of payment for healthcare, et cetera, to really have a true vision. And that's why we asked for, and the governor's office and the governor, thankfully, proposed that funding for us. So we plan to tie these two things together. I think we have to get more onto the market side of the equation and how, where the directionally we're going is impacting healthcare costs, healthcare quality, et cetera. And is that where we want to go, or should we be going somewhere else? So that's, you know, that's kind of directionally where we'd like to go with it. There will be a stakeholder process for it, as is required under existing law. So we have to proceed under that pattern. And actually, we're hoping to have it done, and we're trying to draft an RFP now with the hope that that funding comes to us so we can get that study done, because I think it's critical. And I also want to clarify, I know we use the word market a lot when we talk about this, but it's really important to say that the healthcare market is not, it's not a market for refrigerators. You know, it's not buying a car. It's much more, it's not a true market like other markets are. It is highly dependent on healthcare financing, directionally what's coming from the feds, and patient choice is not as much of an issue when it comes, or it's not as much of a consideration, I think, in the healthcare market as it is in terms of buying other products. I can't shop very easily for healthcare, put it that way. I may be able to shop, but I'm not able to shop like I can shop for a refrigerator. So that's an important component of this too, is that we need to ensure that patients can express choice, have a way to do that, and have access to care in a way that they want. And that's a big undertaking, but that's where we want to go.
Thank you, Director Veltri. And I'm all set for now. I appreciate your time, and I'm certain that many of us will follow up with you to make sure we get this right, and that we can, as you said, kind of keep supporting the long-term planning and you having the resources to do that on an ongoing basis. So you're not stuck in not having this data at your fingertips to make these sort of recommendations. So thank you so much. And thank you, Madam Chair.
Thank you, Representative. Next, Representative Meskers.
Thank you, Chair Wood. Vicky, first off, let me start by thanking you for everything you do. I think your efforts, your attempts at bringing a regulatory framework that works for the state is supremely important. I have a couple of particular concerns about the certificate of need. So I'm looking for you to address those issues as we move forward. And part of that is you just highlighted to me the certificate of need on what you're approving in the certificate of need and what your oversight period is, because it sounds like there's a huge mismatch between the timeframes between the certificate of need and the oversight. So I want you to look at that and tell me whether you need changes in the statute on the certificate of need on the back of, you know, you're approving a project that's going to change the service area or improve service for 5 or 10 years, and you only have a review process for 2 years, and then a gentleman's agreement that's not acceptable. So I'd like your comments back on that. More importantly, or secondarily, on the certificate of need, I think I want to ask you, apart from fees or fines, whether or not you've considered clawbacks. Because if I'm approving a certificate of need for a $50 or $100 million project, and the assumptions were there was either misrepresentation or the investment did not yield anywhere near the desired results, I don't know why I want to include that in my base rate and compensation. So the risk needs to be borne by the investors and not by the premium payers or the rate payers in Connecticut, so that we can control the insurance process on that. And lastly, the co-chair, Senator Lesser, was speaking about setting regulatory prices. And I don't want to come out and say I'm against setting regulatory prices, but if you could comment, or I'm not sure how I set a regulatory price on a medical procedure when I don't even know what the price is. So in the comment of deductibles and trying to get my medical care effectively allocated, I don't know what anything costs in the state of Connecticut. I can walk in, I don't know what an elbow costs. I don't know what a mole removal. I don't know what any basic ingrown toenail. I can't shop an ingrown toenail in the state of Connecticut. And I don't have bizarre bone structures. So standard medical procedures. So I'd like you to comment on rate of fixing, doing a rate process, not as a percent or lesser, versus how do we get to discovery? And those are the three areas I'd like you to speak to if possible.
Okay, good morning, first of all. How are you?
Good morning. Good.
I took notes this time, so I would not forget. I hope I got it. Okay. Well, you know how that is.
The chair asks if I'm only going to issue statements or ask questions periodically, so I appreciate that.
So let me start with the last one first. Okay, so there's a range of things that are happening with respect to pricing and transparency. So there are 2 federal laws that are in place right now regarding prices for consumers to get from their carriers, that carriers have to post on their website certain prices and the ability of a patient to calculate their out-of-pocket expenses and what it might cost them. So that's a federal directive. The other one is hospital transparency and prices, and hospitals also have to post pricing transparency data on their websites, and the federal government is responsible for ensuring that happens and auditing that. With respect to Connecticut, we are redeveloping a newer and more improved cost estimator. So we had a cost estimator a year or 2 ago. We needed to improve it, ensure it included some professional fees, et cetera, for certain kinds of services. And poor Sumit, I'm going to call him out here. Our Health Information Technology Officer, Sumit Sanyani, is working with Olga Arma of our office and to develop a new and improved cost estimator that I'm hoping gets launched in the next couple of months. We have put a premium on accelerating that process. And what that would be is an interactive way, probably a Tableau display or something, for you to look by hospital or by site for a service and look at, based on APCD data, what we're seeing for the price, meaning, and when I say price in this context, that is what the insurance companies pay, right, for that procedure, and average out-of-pocket costs. So when we have in the all-payer claims database, we get the maximum allowed amount, which is the negotiated amount between the insurers and providers. We also get the remaining amount, which is total cost sharing. So we'll be able to have that up for people to look at. Having said all that, and we will promote it heavily, like we did the last time. Having said that, there's a lot of literature that shows a lot of people don't shop for care. So we need to really lean in on promoting that, because it is not easy, right, to understand healthcare costs. I don't care who you are. It's incredibly complex. It's hard to shop. So we're going to have to lean in on that process. So that sort of answers that one. That's where you would see the prices, because I know you asked about the prices. That is where it'll be. So you would see knee replacement, average knee replacement. There'd be potentially, if it's an outpatient surgical facility or if it's a hospital, different prices, right? Whether there's a professional fee for the doc who does the procedure, or an APRN if it's a service in an office or something like that. So that we're hoping gets launched ASAP. So I'm looking forward to relaunching that. So now with our new contractor aboard. That was issue number 1 in their first meeting, I think a couple weeks ago when they met. So we're working on that. RE clawbacks. we obviously don't have the authority to claw back under current statutes. I think in the task force recommendations from 2017, there was a 2017 bill that was proposing to codify the task force recommendations. That bill included extracting or some kind of penalties or a payback when we demanded price concessions, that we would get something back if those price concessions were not met. So that's the extent of the clawback. If you phrase it as a clawback, no clawbacks on capital spend or anything like that. So if that's what you were asking.
So if there's a problem with the certificate of need or it fails to fulfill its goal, you are powerless, but it's going to end up in our rate base.
Yeah, we have some ability to either modify a CON if an applicant actually asks for a modification. Let's say the business goes, they go out of business or something, right? You're not going to keep them under compliance. Or they change a location or something like that that's within a block. It doesn't make sense to make somebody go through a whole process. And we can pull a CON if we think somebody's really out of compliance with the settlement. We do have the authority to do that. It's obviously very involved, and you'd have to go through a notification process, a hearing, et cetera, because obviously that's a major thing to pull a CON. But it's almost like it's somewhat of an all or nothing if somebody's not complying. I don't believe we have any specific ability other than that. And our penalties when people don't comply with CON up to $1,000 a day. So that's the range of, authority we have in that area. And the time of the CON.
And hold on, and on the penalty, sorry to interrupt. The penalty. So on the penalty of 1,000, is that, do we hold the assessments on the CON in abeyance plus fine 1,000, or are they running the expenses that were approved under the CON and we're fining them 1,000? In other words, I'm wondering whether there is an incremental penalty or they're just losing part of whatever profit on the approval.
That's a good question, Kim. Do you know the answer? It's $1,000 a day for a willful violation. Correct. But until the violation is cured. So yes, I guess.
But the base of the CON, but the fee in the CON is still being assessed. So it's a business decision. If I get a 50 million CON and you don't like it, you can assess me 1,000 a day. But the base compensation on recovering the $50 million investment, I'm still going along. I'm still running through the system of assessments.
Yeah. But I mean, that could happen, and that could happen in theory. I mean, I want to just be clear. I don't think we've seen that.
We have not.
Okay.
So,
good.
That would be the case, yes. Although we have not really.
Vicki, the statute says that this penalty may be deducted from payments to such person or healthcare facility from the Medicaid account. So if they're getting payment that way, it could be deducted from the Medicaid account.
Okay, thank you for clarifying.
That's just the source of the payment, though. It doesn't mean
right.
The payment is 100% of the CON is denied until it's cured. That's my concern. Okay.
Right, like halt a service until we, no, that doesn't happen. But having said that, we haven't seen much of that. So I haven't really seen any of it in my time, except for a couple of fines that we have recently issued. And then the other thing regarding the time of the CONs, Kim may know better than I think Massachusetts has a longer CON period or determination to need period under their statutes, but they only recently were able to do that. I'm not aware of the other states' periods, so we could research that and come back to you on that.
Okay, perfect.
And regarding the investors, I think that was part of this conversation. So I don't know. Need more of an answer on that one, like whether it should go back to investors versus people who pay for the cost of the facilities.
Right. And that regulatory framework versus a utility, I want us to really think about it. Okay, but thank you. That's no further questions, Chair.
Thank you, Rep-Meskers. Representative Nuccio.
Thank you, Madam Chair. Hi, Vicki. How you doing?
I'm good. How are you?
Holding up well under fire. I have a couple of questions. One on every bill. So on 412, from the perspective of the telehealth, if I'm hearing you correctly, and I agree with you on this one, I think if we are to make the change that is being requested in 412, we would have to modify Public Act 21-9, because Public Act 21-9 has the assumption that you have to pay a telehealth claim the same as any other claim. So that would include a facility fee. Is that correct?
Yeah, yes, in short, yes, in short.
Okay, that's what I thought. So I'm glad you confirmed that, because I thought that was going to be an issue there. Then on the certificate of need, I want to kind of venture into something you started to talk about with Senator Lesser here. First and foremost, before we get into that, from the All Payers Claim Database, I know last time we spoke, ASO claims are not required to be put in there, and not in all insurance companies are actually complying. It's voluntary right now, correct?
So on the APCD,
yes,
any insurer must submit data. It's
okay.
It's the self-funded plans that we cannot require because of the United States Supreme Court decision in Go Bay.
So all of the insurers are compliant, correct?
Yes, they are.
Okay. But there's nothing that we can do to compel the insurance companies to, from the self-insured perspective, to provide the information, because I think that's a wealth of information that we don't have right now.
No, we don't have the authority to compel them because the United States Supreme Court decision in Go Bay versus Liberty Mutual prohibited that. So you'd have to do it by agreement. And I know the federal government has been, I think there's been efforts at the federal level to try to work to get either federal APCD that ties state APCD.
Oh, that'd be a hot mess.
And to try to overcome the issue. So the United States Supreme Court said, SCOTUS for short, said that DOL, United States DOL, would have to pass some sort of regulation or authorizing statute to allow states to actually collect these data mandatorily, because we can't do it, unfortunately.
Okay. All right, I just wanted to make sure on that one. So on the CON, I wanted to kind of dig a little bit into one thing. When I was reading the language, the existing language on the CON, there's something in there, and I can't remember the exact wording, that basically says like within 5 years of granting a CON, especially for mergers, if we think of like Yale and Hartford Hospital, that there should be a review to go back and look to make sure that what that CON had originally intended, which was not to narrow the market, but to expand it and price affordability and et cetera and everything else, that there would be a review period that we could go back, and if they were not meeting those needs, we could do something about it. Does that
That's the
sound right
task
to you?
force report. Are you referencing? I'm sorry again.
I was doing research on CON, and basically, I don't have the paper in front of me, but there's something in one of the legislation, I'll have to find it, that it pretty much says if a hospital comes and says, we're going to buy these 4 hospitals and we're going to make everything affordable, blah, 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 this is why we're doing it. If within 5 years we go back and look and they have not met those needs, I thought there was something built into there for ramifications. So I guess my question is here, I'd like to really figure out what we can do to go back and review some of these consolidations that we've seen when we are seeing data that does not support that they have made care more affordable or more accessible, and how that process would work. How do we audit it? How do we audit the CON?
Yeah, so we don't have, Kim can correct me again if I'm wrong, but I do not believe there's anything in the statutes right now that authorizes that or tells us to do that. Not suggesting that you couldn't do it otherwise if you had the resources. You'd have to have the resources to do it. And that's kind of what we're trying to start to do with the APCD data, et cetera, is to look at that and see what impacts have been. Having said that, that's just a cost review. That's not really an full access review, et cetera. So it would require more than the APCD to do that. It would require, although the APCD does give some evidence of utilization patterns pre and post, so you can at least see that. But you won't see differentials of quality and things like that. That is on our list of things. So the team, I know Kim is like nodding because, we've talked about this in the office that we need to do this. The problem sort of has been that capacity has been a problem.
I would think we'd have to
Um,
work with the DOI on that also, but I have something, Vicky. I'm gonna go back through my
Okay, well,
notes and
yeah, let
that,
me
and when I
know.
find it, I'll let you know, because
Yeah.
I think that it's kind of incumbent upon us to now look at these consolidations and see if they've met the desired need of what they had. And that gets me around to kind of what Senator Lesser was saying. When I first became a legislator, one of the very first people that reached out to me had to do with closing maternity at Wyndham Hospital. And knowing what I know about the medical field, which is, you know, enough to be dangerous in a conversation, but not intimately involved, it all made sense, right? They were doing less births. They didn't have enough staff there, or the staff was there, but they weren't keeping them trained because they didn't have as many instances and stuff like that. But then the more that I listened to the meetings and the conversations, I realized that when that hospital was purchased by Hartford Healthcare Network, they started to move out different things that were happening, right? And when you do that, you're creating an environment where you are going to have less people there. And I'm concerned because for the people in that area, now the only place to go for maternity is so far away from where they are. And yes, in an emergent basis, they can go to the emergency room, but then they're jumping out of an ambulance to try to get to where they're going to ultimately be. So my concern is, as we see these large hospital networks buying up these small community hospitals, we're losing those much needed resources in the community hospitals. You know, a community hospital should be a very small version of the needed things in a hospital. And I've seen a lot of stuff happening where those community hospitals are being purchased by larger hospital networks, and then we're seeing less services. You know, more specialized in some areas, but less services overall, which makes accessibility so much harder in those small community areas. So I'm wondering, what is the review for that from a CON perspective? If a Hartford Hospital or a Yale can come in and buy Charlotte Hungerford and Johnson Memorial and Rockville General Hospital and Wyndham Hospital and Bacchus and like all of these small hospitals, and then decide, we're not going to do maternity here, we're not going to do surgery there, we're not going to do this here. They've been kind of granted that right through the CON process to consolidate. But this gets back to what I was just saying. Where is our responsibility to go back and say, you've now reduced services to these very remote areas, and excuse the language, but they're screwed. They're just stuck out there trying to figure out who's going to service them. How do we make the healthcare call on that and not the profit call?
Okay, so let me, first of all, and just somebody has to remind me, I need to go back and correct the record on the telehealth bill. So with respect to services and access. Okay, so as part of the initial review of a transaction on a CON, merger or transaction, and that one way predates me, so I can't, Kim might be able to speak to it better than I can. But all of the review regarding access is supposed to be under their promises of service, all that kind of thing happens, right? If a hospital wants to terminate, reduction, I don't believe is covered under the statute. So that may be another area where we don't have authority. But if a hospital, oh, go ahead, Kim. Go ahead.
I just wanted to say that was also a recommendation of the CON task force, was to define reduction.
Right.
In services.
So yeah, that's not in statute right now. So we don't really have authority over a reduction. The only authority we have is over termination. So if anybody, and I don't want to call out any particular hospital because this could happen among multiple hospitals where somebody makes a decision, and there are multiple reasons that a termination may happen, including low volume, including other things. But in majority of cases, they have to come to us for a approval for that. That is the review process, right? They come to us before terminating. They have to file a CON and go through the entire process of explaining why you would need to terminate it, what's caused it, what's your plan for the future, what's the ability of people to access services if this termination goes forward, et cetera, et cetera. That's all part of the review. And that is why, you know, obviously there's one that I cannot speak about right now, but we have an investigation going on in another one in the western part of the state for the same reason. It needs to be reviewed prior to the occurrence of the termination. And this is why the plan is so important, because the demography of Connecticut has changed. In 10 years, we have not completely, but there's been a lot of demographic changes in Connecticut. People are living in different areas of the state than they were before. Services are different in different parts of the state. We have, demographic factors relating to income, race, ethnicity, language, sexual orientation, gender identity that have never been part of the process and really need to be part of the process. And that is part of that planning process going forward. Other than during discrete CONs, it's really hard to do that planning. And that's why we need to have that plan. I mean, to me, that's your questions lead to the same answer that I've given on most of these, which is we need to do the plan. We need a newer plan in place that takes into account the changes and where there are gaps in access to care for all different types of services, et cetera.
So when do we get to see that plan, Vicki? Like, because this is my concern here, and I want you to answer that question, but I just want to say my concern is when these larger hospitals come out to these small community hospitals and purchase them, what may not have been seen as a thriving, profitable hospital from the perspective of maternity or something like that, it still services an area, and it may need to be scaled down. But I would think if I'm a large corporation and I'm buying a smaller corporation here and providing maternity benefits is a priority. It's funny because I'm not an expert in this, but somebody had said to me, if it was a priority for them, there are multiple OBGYNs that are in the Hartford Healthcare Network, and you could just rotate somebody out there. You do 1 month, you do 1 month, you do 1 month, and there would always be coverage. And I know that was the big pushback is, well, we don't have an OBGYN servicing area. So I guess I'm looking for more than just we're following the letter of this, and that, and how are we meeting the community needs there? So when will that report be able to, when do we get that so we can act on it before we continue to see a loss of services out in our more rural areas here of the state, all of which I represent?
Yeah, first of all, and to be clear, when it comes to the rural areas of Connecticut and nationally, this is an issue.
Yep, it is.
It's an issue across the United States in rural areas. So the team just met yesterday. We were talking about how to slice and dice this plan so we could get something to you for next session, at least one piece for next session, and then maybe build on it, focusing more on the market issues and access issues earlier on and filling in newer data as we go. So there might be like a 2-phase study. So that's essentially the plan right now, is to give the legislature something and the governor, obviously the governor, before next session on the market situation. That should account for some of those access questions that you're raising.
Okay, so I have on my list then to follow up with you. I want to start looking at a post-consolidation review. We're working on getting the report. And then you said you wanted to correct yourself something on the telehealth.
Yes, thank you for reminding me.
You're very welcome.
I think I misspoke on the telehealth bill, and I just reminded myself that I did. So in the Public Act 129, I think it is, that's or not 129, I'm sorry, whichever the telehealth modification was. There is a tie to facility fees in the facility fee statutes under OHS. So the intent of the original executive order, which frankly, in front of this group, I helped draft in March of 2020, was to try to ensure that people, had access to care and wouldn't be billed unnecessarily. So the telehealth bill essentially codified the executive order, but the intent was not to say you can impose facility fees for self-insured plans, but not for, fully insured plans. The intent was there should not be facility fees attached to telehealth. And the current bill, SB 412, I believe the intent of that is there should not be facility fees tied to telehealth services. And so it would require not just the language I think that was proposed in Senate Bill 412, but a correction to the underlying bill, because the underlying bill says, notwithstanding existing laws, XYZ. So there needs to be an underlying correction if the intent is to ensure that facility fees cannot be assessed for telehealth services, which we believe should be the case. Because this telehealth site of origin for telehealth services is where the provider is located. So the provider does not have to be in a hospital setting. The provider could be sitting at a desk at home, could be sitting somewhere. I'm not suggesting that's happening, but I'm suggesting that I believe that there is not the kind of rationale to support facility fees for telehealth services that supports facility fees being assessed on them.
Thank you, Vicki. Thank you for your time, and thank you, Madam Chair.
Thank
you, Senator Anwar.
Thank you so much, Madam Chair. Thank you, Vicki. Good to see you. Hope you're well.
You too.
Vicki, I wanted to ask you a couple of questions on the CON. One of them was, is the 2017 the last report that came out on the task force final report? Is there anything else since that time?
No, that was a huge task force that met all through, former Lieutenant Governor chaired it, and through the 2016 calendar year. And then the report came out in 2017. There has not been one since.
And how much has been implemented from that report?
None of it, because none of it passed. It got turned into a bill in 2017. And it was paired with, I think, the creation of OHS at the time, but the bill was decoupled and it died. The task force part died, and the OHS creation was put into the 2017 budget implementer that passed in October that year.
And how much of the ground realities have changed since that report in the state of Connecticut for the CON requirements and challenges? And the continuation of the question would be that if we were to go back and legislate some of those recommendations, would that solve some of our challenges that we are facing?
And Kim is nodding yes. Hey Kim, why don't you take the first shot? Go ahead, because you have been here the longest. And then I will chime in.
Senator Anwar, I do believe that many of the task force recommendations would make a big difference in not just the CHIFID program, but the process, the efficiency, and so forth. It would provide us teeth in terms of enforcement, monitoring, compliance. It would also add to the efficiency of the process, because if we have clinical experts, financial experts, to look at these decisions, it would be very beneficial. Instead of going back and forth with many completeness questions and letters, we have an expert that we're able to reach out to. So this panel that we recommended would be essential, as well as, like I said, the back end in terms of having more enforcement, being able to look at a negotiable or negligent standard as opposed to a willful standard. That would allow us to really look at non-compliance in the back end. So those are just two big ones that are very important to me.
And I'll chime in with I think a couple of the big ones included, again, the expertise beyond clinical. The ability to be able to hire experts, economic experts, market experts to do analyses on certain transactions to determine the impact would be very valuable. There is a cost and market impact review in the statutes, but it only applies to health systems, as I am aware, that when it passed at the time. But that process, preceded some of the ability to access the APCD. So at least now we have the APCD that we can utilize in some of these transactions. But the inability to get the kind of economic expertise I think we would like to have, in addition to some beefed up criteria, and other recommendations in there in terms of transparency, efficiency of the hearing process. There are other recommendations that off the top of my head I can't even remember.
I'll also add on, Vicki, the definitions, like we've talked about, defining termination, defining reduction, defining suspension, access, cost effectiveness, impact on the hospital market. There are no definitions currently in statute or reg.
So I'll share with you, I'm currently serving as the acting chair of the Public Health Committee, and the last 3 years in the Public Health Committee, whenever we have a conversation about CON, everybody's reaction is, it's such a big deal. We have so much to do. We can't address this. And that's part of the inertia or the anxiety that we have, is that how do we manage this complex process, which has so many tentacles to it that it's almost difficult to assess. But as the rumblings of concern have been rising across all different communities that we represent, and we're seeing the healthcare change, we will have to address this. And I have in the past proposed that get rid of CON altogether in my frustration and we've had those conversations, but it's a difficult area. But I do feel that we may need a comprehensive strategy. I would say something qualitative, and I'm sorry I'm saying this, but I feel it's worthy to mention that when that report was done, our former governor did a lot of good things, but from a healthcare point of view, I sometimes feel that there was a bias towards making bigger hospitals bigger at the cost of smaller hospitals. So I want to critically look at that report, seeing the impact that has happened where the state of Connecticut just has become 2 or 3 entities and everybody else is more or less allowed to wait and die, if you will, the hospital systems, or we can convert it into emergency departments and so on. So I feel that the healthcare arena, when bigger industries, bigger hospital systems get bigger, the chances of services in the smaller communities, and I think Representative Nuccio was also alluding to that as well, becomes impacted, and the communities would be impacted in such a manner where the hospital may just make a decision that they do not want OB services in a certain community, and they would walk away from it, and we do not have any recourse at that point. And it's not as simple as that. I know that, and I will come to the second part of why it's not as simple as that. But I think that those are some of the issues that we may have to look at, because even in the last 4 years, there are some things that have changed, and I wonder if it's worthy to reassess and see if there is an opportunity to improve on this report, but at least we have something to work with. So.
Yeah, and if I'm
Yeah,
sorry to
please,
interrupt you.
Please go ahead.
So when the report was issued, obviously nothing happened, and OHS was created, and I had talked to Public Health Committee, and I said, I'd like to figure out a way where we can at least pick off, certain areas where maybe we could eliminate CON and concentrate in other areas. And we convened groups to try to do that. And we just could never reach consensus. No. And so I think it's really hard. It's really hard to change the process. You're absolutely right. So one of them was equipment. So we convened an imaging work group to try to determine whether we should recommend that we stop doing CON for equipments. Like, first of all, I don't believe anybody needs to review an MRI purchased for a research purpose. I think that that's not the best use of OHS's staff time, is to review MRIs for research purposes, or a CAT scan for a research purpose. But even that group couldn't come to a consensus on recommendations of whether we should eliminate CON for that kind of thing. That's just an example. My point is, I agree with you. It's been very hard to extract agreements from the parties, ranging from the smallest size to the largest size, to the process. But the other comment I would make in fairness is that in a couple of these cases, specifically regarding Milford Hospital and a couple others, that hospital was going to go under. And it really was going under. Actually, it was in the negative, it wasn't performing well at all. And in every one of these transactions, it's not, the hospital just doesn't say, I'm buying it, I'm going to buy it. Usually there is some kind of RFP or procurement process where there has to be bidding, And whichever hospital is, if there's a hospital merger acquisition, is deciding to, let's say, move out of the state like Ascension did in Bridgeport, or has to close like Milford, there is some kind of process of criteria of review of which entity will the hospital that's leaving or going under agree to partner with for a transaction. So there is a level, there is that level of process. So I just think that's important to say, because I don't think it's as simple as saying I'm buying a hospital, and there is an actual process that's undertaken with the hospitals that are subject to that transaction. And frankly, if the hospitals that's subject to that transaction doesn't want to agree to it, they don't agree to it. But they've undertaken a process of some sort of due diligence, an RFP or something like that, to ensure that who's ever, to make the determination of with whom they're going to agree to go into a transaction with, then that entity has to come to us, right, for approval. But I just wanted to fill in that gap, because I think sometimes people think that hospital A is going out, oh, I'll just buy that hospital tomorrow. That's not how it works.
Right.
But it's important to just kind of say that to fill in the gap. But there has not been movement. You're right. There's not been movement. But we need to have movement at some point.
The application fee that is increased, it's a pretty astronomical increase.
Well, actually, it isn't increased. It's been $500 since 2010. The bill recommends it increased to 25,000, but you may have been actually doing your other committee, but we had a discussion about potentially pinging the application fee to the value of a transaction. So
sorry for that.
If somebody's coming in, and I had said to the committee, 30% of the transactions are under $50,000, but 30% are between 1 and 5 million. And then there's some all the way up to $250 million. So there is some kind of maybe way you can look at a graduated scale or some sort of look from that perspective, so that it's not the same all the way up the value scale, but that we're not hurting the little, the smaller providers or people doing a $5,000 transaction,
Thank you for that. And I'm sorry with the multitasking, I missed that. I think it's worthy to talk about the service line issue, because that's why we are losing the OB services across our state right now, is that all the doctors are leaving our state. Can you speak to that? And can you combine the high deductible plans and the pre-authorizations and the malpractice issues, a combination of all of that? And what would the future look like if we don't intervene?
We absolutely have to intervene on workforce issues. That is absolutely critical. In fact, the governor is doing a press conference today, I think, on nursing workforce shortages. But it isn't just nursing. It's primary care, it's behavioral health across the board. And that is the case nationally as well. We're seeing, as the pandemic only escalated, I think, the issues of workforce shortage. We do hear many times in the context of certain provider groups, particularly OBGYNs, malpractice is a big issue. Lots of OBGYNs have stopped doing the OB part because of malpractice costs associated with that. And I do think it's something we're really going to have to look at if we want to maintain people here in Connecticut. Regarding high deductible health plans, I would say the thing with the high deductible health plans is we went down that more and more costs are being shifted to consumers. That's absolutely true. There's lots of data out there that shows that as a percentage of healthcare costs, people are spending more out of pocket than they've ever spent. And that is the way that employers are dealing with rising healthcare costs going into the system. So generally speaking, deductibles are a product of the input to the insurance plans, which is really the costs that are driving healthcare. If healthcare costs go up, then insurance costs are going to go up. And one way to keep premiums down is to shift more to the deductibles. I'm not saying that that's a good thing. I think high deductibles in some cases keep consumers from getting care that they actually need to get because they're afraid of the deductibles. But really that goes to the issue of needing to open up the transparency on healthcare costs and trying to slow down spending growth in the state of Connecticut so that insurance costs can come down. That's why the benchmark is critical and other strategies to reduce healthcare costs. So, I mean, and you have several bills before you today on that. Regarding prior auth, I don't know that we commented on that bill, but we are aware that with respect to primary care and the work we've done on primary care, you know about, Senator, that many of the providers have addressed to us concerns about prior authorization. And it is something we're talking to the carriers about as we talk about reforming primary care. Is there a way we can reduce, the burden of prior authorization on providers who agree to take a little more accountability in the care that they're giving to patients? And I know a couple of the plans offer that, but that definitely is an ongoing conversation. I'm not sure if that's what you were talking about when you mentioned the prior auth, and I apologize.
I think it's a number of things that are happening. If you're keeping track, the physicians are committing suicide in our state. They're leaving. The ones who cannot leave, they are moving into other professions. So there is a price that the society will have to pay. And when you're waiting for 1 hour to get a basic medicine or a basic procedure authorized by the insurance company, you basically are losing the profession, and people are moving and making a decision to identify other options at that point. There is a big cost to that. And I think in the Public Health Committee as well, we are looking at that, and I would love for you to testify. But we're looking at physicians because that's the group that's shrinking the fastest in our state.
Yeah, it is.
And so that should be considered a priority if you would consider. Obviously, I do feel that psychiatrists are you cannot get a psychiatrist, you cannot get all of the specialties anymore as well. So these are part of our challenges, and they're all linked together. And Madam Chair, I wanted to thank you for giving me this opportunity. I'm taking a little longer, but I think they're all interlinked. Yep. Between the CON, the various bills that we are taking on, and I cannot thank the chairs enough to bring some of these bills forward, because we have to intervene. The status quo is a disaster. So I will stop here. I know there are amazing people who want to testify, and then also my colleagues who may have more questions. So thank you, Madam Chair, and thank you, Vicky, and all the Office of Health Strategies team.
Yeah, you're welcome, and I'm happy to keep working with you on that issue and others. And just to give you maybe a little more peace of mind, although I don't think it solves everything, is that with respect to that issue and other issues, we are working together behind the scenes. It may not show up on this screen right now, but we work with CID, the insurance department, DSS, DPH all the time on these issues, as well as the plans, the hospitals, et cetera. So, but it is going to take a village, and there's going to have to be give on all sides. And that's the way you move forward. Everybody has to acknowledge issues and kind of push forward together. Everybody has got to make a move. Yep. And we're all in it together at the end of the day. So,
and like I said to you before as well, we have to keep working towards excellence, please. In other words, don't give up on the excellence of care, because it's when you look at quality is the first and foremost thing. And we cannot afford to lose out on that. And I'll leave it at that. You know what I'm suggesting. Thank you so
Absolutely.
much.
I totally agree with you on quality. It's got to be improved too.
Thank you. Thank you, Madam Chair.
Thank you, Senator. Vicky, thank you to you and your team. And I just want to recognize how easy and accessible you and your team have been to work with. We've been working on this issue since last summer, doing informational forums and, hosting our committee at your space and having these, discussions. So we really appreciate everything you're doing and look forward to getting this legislation further defined and specified, especially on these comments that we had here today.
Thank you so much.
Thank you.
Take care.
Have a great day.
You too. Bye-bye.
Next up, we have Senator Looney, followed by Representative Jason Doucette.
Don't believe the senator is on yet, but Representative Doucette is here with his constituent.
Great. Welcome, Representative Doucette.
Hey, good morning, Madam Chair. Great to see you. Co-chairs Lesser and Wood, Ranking Members Huang and Pavlak D'Amato, and distinguished colleagues on the Insurance and Real Estate Committee. I appreciate the opportunity to testify this morning in strong support of HB 5446, which is an act concerning equal coverage for medically necessary infertility treatments. The basic gist of this bill is that it would amend current law to require health insurance providers to provide equal coverage for medically necessary expenses associated with infertility treatments. And the current law amounts to a discrepancy for insurance coverage for fertility treatments, which effectively discriminates against different classes of people, particularly LGBTQ couples. I'm going to yield my time to my constituent, Shannon Hansen, who is here with me. And I'll just add that this is one of those bills I think that most of us have been fortunate in the past to have an idea, a concept brought by a constituent that is clear, that is concise, that represents a well identified problem that needs fixing. And this is one of those. I think this is a fantastic piece of legislation, and I'm going to let Shannon tell her story on why it is needed. Thank you.
Thank you so much.
Shannon, are you there? There she is.
Good morning, everyone. Can you hear me okay?
Yes, we can hear you.
Perfect. Good morning, Madam Chair and members of the committee, and thank you for the opportunity to testify before you today. My name is Shannon Hansen, and I'm testifying on behalf of myself and my wife, Megan, in support of Bill 5446. This bill is very close to our hearts as we've been trying to start a family over the past few years via artificial insemination. Megan and I began planning for our family shortly after we got married in order to educate ourselves on the process and to plan financially. Before my first IUI, I called our insurer to verify my coverage. Much to my surprise, I was informed that IUIs are only covered by the couple after they try to conceive for 1 year. In lieu of this option, I learned that we as a same-sex couple would need to pay out of pocket for 6 rounds of IUI before we received coverage. I expressed to our insurer that the inequitable coverage for same-sex couples is discriminatory. In response, I was told that my company would need to change its insurance coverage or the state law would need to change in order to allow same-sex couples to take advantage of equitable coverage. So I looked into what it would take to do both. I made my company aware of the inequalities in our infertility coverage and how it impacted same-sex couples such as Megan and myself. Fortunately, they quickly took action to modify our insurance coverage policy company-wide, which allowed all women to benefit from fertility coverage without the previous stipulations. This was not only a huge win for women in same-sex relationships, but also single women looking to start a family. This change was implemented immediately for all 200,000 employees. I consider myself privileged to work for a company that responded to the inequalities of our insurance coverage. However, there are countless individuals across the state who are not as fortunate. By amending the definition of infertility in the Connecticut General Statute, health insurance organizations would be required to extend coverage for medically necessary expenses to same-sex couples and single women. Furthermore, I implore you to increase the IUI lifetime maximum benefit beyond 3 cycles. To date, I've undergone 3 IUIs myself, which unfortunately were not successful. Megan and I were prepared for this, as IUIs typically take numerous attempts before resulting in pregnancy. The lifetime maximum of 3 cycles is impractical for those who wish to start a family and to have more than 1 child, and sometimes for those who are simply trying to have their first. The pursuit of parenthood is an inalienable human right, and one that until recently was afforded to my heterosexual neighbors, but not myself without a hefty price tag. Access to fertility options for non-traditional couples and individuals should not be left to the discretion of employers to correct, but rather a necessary component of any insurance plan that offers infertility coverage. Until then, same-sex couples and single women will continue to pay a premium because we do not fit the mold of a traditional family. I implore the state to pass Bill 5446 in order to afford all women accessible options to establishing families in Connecticut, regardless of their family status. Thank you for your time, and I welcome any questions you may have.
Shannon, thank you for sharing your story with us. Senator Matt Lesser.
Yes, thank you, Madam Chair, and thank you, Shannon, and thank you, Representative Doucette, for your advocacy on this issue. I have been interested in this for some time now, and was the author of a bill in 2017 that sought to make sure that we could expand our fertility coverage to everyone. And I understand what you're trying to do, and I completely support it. Just a couple of questions. Shannon, you mentioned that your employer has 200,000 employees. Is that right?
That's correct.
Okay. So I'm going to assume, based on that your employer is it's a very large employer. And as a result, I'm pretty sure they are not covered by Connecticut's insurance laws, that they probably have a self-insured system. And although, in this committee, we want to make sure that everyone has access to the highest quality care, we are tied, unfortunately, by federal law, and we cannot regulate certain types of employer provided insurance. So I'd be happy to maybe work with you offline and work with Representative Doucette to check what kind of insurance. But one note of caution, and just in terms of our abilities here, obviously you did the right thing, and I'm glad your employer stepped up and addressed this horrendous inequity. But my gut tells me that no matter what we do in this committee, we cannot regulate self-insured employers, just because that violates that goes beyond our authority as a legislature. So I just wanted to just state that. And obviously, if I'm wrong, Representative, or please let me know. The other thing I would just mention, I having met with a number of other folks who are part of the coalition of advocates who are pushing for this. I did have the opportunity to reach out to the Connecticut Insurance Department, because I thought we had addressed this issue in 2017. It's obvious that there are lots of same-sex couples who need access to this vital service, this vital coverage. And so it's their understanding that that's the law, that insurance should cover same-sex couples. Obviously, whether or not that's happening on the ground with insurance companies is a different question. And so what I would invite, Representative Doucette, I don't know if you're interested, but what I'd love to do is facilitate maybe a meeting, not here, but maybe a sit-down meeting with the insurance department to figure out, are people falling through the cracks, and in fact, does the law do what we say it should do? Your other point about increasing the number of IUI cycles, I'd also heard some questions about perhaps some other tweaks to the law. I think that's totally reasonable, but I just want to have those two comments. One about our limits to only cover fully insured plans, and two, we need clarity from the insurance department about what the current law says. I would also just point out one last thing, and I know I'm going on a little bit of a rant here, that there was a bulletin issued, I think in March of 2019, that sort of fleshes out what the current state of the law is, and maybe we could do a deep dive with the insurance department to figure out what's covered and what isn't. Representative Doucette, I don't know if you have anything that you wanted to. I don't know if I had any questions in there, but other than just ask if you'd be willing to join me in sort of sitting down with the insurance department and getting some clarity as to what the current law is.
Oh, absolutely. And I would let Shannon respond as to what her the response was from her employer. She texted me that her Zoom froze and she had to drop off, so she's going to try to come back in. But she can tell you, in particular, the employer came back initially and told her that under the definition as they were interpreting it of infertility, that she was not able to qualify or to prove that that she had attempted to conceive. And again, if she could describe that in greater detail, but it was something that would be impossible for her to prove or to accomplish. So that was why this started for her. So that's why they changed the definition of infertility. But yes, happy to continue working with you, and hopefully she is able to log back in.
Great. And thank you, Representative. Hopefully she will as well. I just will say, I just got a text from the insurance department while you were answering, saying that they were very interested in working with you as well. They share your commitment and Shannon's commitment to ensuring that, you know, all couples are able to get this without regard to the type of the relationship. So let's get some clarity on that. This is a critically important issue, and happy to sort of, you know, have a meeting of the minds on this to find out what the deal is. Thank you.
Great.
Thank you, Madam Chair.
Thank you.
Thank you, Representative Nuccio.
Thank you, Madam Chair. Senator Lesser, if possible, I request to be part of that group when you have those conversations. I think what Representative Doucette is saying is correct. And I think the resolution to the issue that's being presented is in the definition of infertility. Because the definition of infertility from a legislative perspective, I think that would facilitate this even through an ASO account, because we're defining infertility, and then an infertility benefit. We're not mandating benefit. We're defining infertility. So I think that's the difference. The very small but relevant difference is in the definition. And I know that Connecticut. There's multiple states. I've got multiple states here that have already passed legislation defining the benefit of defining the infertility. Holy moly, I can't speak today. Not the benefit, but just the actual definition of infertility. So I'm also very supportive of this bill, Rep. Doucette, and I would happily work with you. I've already reached out to Representative Curry, and I've got a couple of questions on a couple pieces of language in there. And oddly enough, they were around some of the lifetime maximums, and also specifically the language around limiting coverage to individuals who have maintained coverage under such policy for at least 12 months. And I'm concerned about what that would mean from the perspective of if you change jobs. Does that mean you have to now wait another 12 months? You have to stay with that employer for at least a year to get this benefit? And my concern here is that we are ensuring that these benefits are available to everybody. So this isn't a new benefit. It's not a mandate or anything like that. This is, to me, is just in ensuring that we have equity across looking at I pay insurance as well as you pay insurance. If I'm a 36-year-old woman who has not met the man of my dreams and wants to have a baby, I'm paying that same exact policy price as you, who's a married couple and who's trying to have a baby. So if I decide I want to have a baby, then I'm deciding I want to have a baby, period. And that's where it should kind of end. And same for same-sex couples. You know, if you're making the choice to have a baby, you're paying into the same exact insurance policy as everybody else. You know, we don't define other eligibility for benefits that single out groups, right? So I'm looking at this as a matter of making sure that the benefits that are being offered to everybody in the plan, and removing some of the barriers there. And I think changing the definition will do that. So I'm definitely would love to sit down and talk to you. Like I said, I've already reached out to Jeff. We've gone back and forth a couple of times. We're going to try to sit down and chat about it. And Senator Lesser, if you do have that working group, I would love to be part of that to try to find a resolution to make sure we're encompassing as many people as possible.
Thanks, Rep. Nuccio. I think you captured it perfectly.
Thank you.
Shannon is back with us. I see if there are any questions for her.
Well, Shannon, thank you for sharing your story. I know you had to jump off, but I am wholeheartedly in your camp on this.
Senator Lesser.
Yes, thank you. Yes, and through you, Madam Chair, I'm obviously happy to work with Representative Nuccio. Glad those conversations are already happening. Just one quick question for Representative Doucette. The way the bill is drafted, for some reason, it seems to use an earlier version of doesn't seem to refer to the current law on the fertility benefit. I don't know if this was a mistake by LCO, but we did make a bunch of changes to this statute in 2017. And I just wanted to I didn't think this was something that you intended to do, but I just wanted to make sure that you weren't trying to, repeal some of the changes we did to make sure that women with cancer, for example, could access fertility preservation. That wasn't, and women over age 40. I didn't think that had anything to do with what you were testifying. I think it was just a drafting error, but just wanted to make sure that wasn't intended in any way.
No, certainly not my intention, and I'm just not sure about that. Thank you for pointing it out. There are others.
LCO issue, and we'll work with them on that. Yeah.
And Shannon may know something about this. I know there are others who are going to testify today as well, who have been involved in this effort and are well versed on it. So you may want to ask those folks as well.
I didn't have any sense that it was intended. I think it was just a clerical error, and we'll work with that. Thank you so much, Representative. It's good to see you and hear from Shannon. And I think this is a really important issue, and look forward to working with Representative Nuccio and other stakeholders on this. So thank you very much.
Thank you to you both for joining us. Have a great rest of the day.
Thank you.
Okay, next up we have Ann Hughes, Representative Ann Hughes, followed by Representative Susan Johnson. And I do want to make a note that we have come to our first 2 hours. So after those next two speakers, we'll be going back and forth between the public and public officials. So welcome, Representative Ann Hughes.
Thank you, Madam Chair. And I know some of this has already been covered, so I'm just going to highlight that I'm a co-sponsor in support of SB 409 long-term care insurance bill. But I really want to talk about HB 5449, and which is about strengthening the certificate of need process, strengthening the accountability for our hospitals and even nursing homes, to strengthen the approval process before expansion of existing facilities. I also want the OHS to have a oversight along with DHS or Department of Ed or whoever the appropriate agencies are about the reasonableness of budget. But I especially want to talk about the strengthening clarity and definition around suspension of labor and delivery services versus termination of labor and delivery services. Because if we are in labor and going to the hospital, the impact is, it doesn't matter if the services are suspended or terminated. The impact is you can't go to that hospital. So I really want the Office of Healthcare Strategy to look at impact and strengthening the certificate of need process and ensure that big hospital systems that are terminating, essentially terminating community essential services that are necessary for the public good in that community, have strict guidelines that they must adhere to before they simply stop those services. Labor and delivery in both Sharon Hospital has been provided over 100 years in a remote kind of rural area that I happen to live in for almost 15 years, and same with Wyndham Hospital. And I find it really atrocious that these essentially monopolies or consolidation of hospital systems are not accountable to the public good, and they are perhaps using tax exempt status to not adhere to this process. So I fully support strengthening the penalties, the fees. I think it should be on a sliding scale determination for the application process for capital improvements, but they absolutely should go through the CON process before an approval process before breaking ground. So that's basically my testimony. And I know you've already covered a lot of those nuances with your testimony this morning. So I just wanted to be on the record.
Thank you, Representative Hughes, and I appreciate all your hard work on the Aging Committee related to long-term care and holding a informational forum with us to hash that issue out. So thank you for your great work there.
Yep.
Any questions? I don't see any. Representative Hughes, thank you so much for coming. Have a great day.
You too.
Next up, we have Representative Susan Johnson, followed by Liz Gustafson.
Thank you so much, Madam Chair, and good morning to you, Madam Chair, and also Senator Lesser and the ranking members and distinguished members of the Insurance and Real Estate Committee. I'm Representative Susan Johnson, and I represent the 49th House District, which is Windham, and it includes Windham Hospital, which has been the subject of a lot of the difficulties that we've been discussing since your hearings began today, but also a quick history on the Windham Hospital situation. So back in 2015, Windham Community Memorial Hospital had already been part of the Hartford Healthcare, and that was back in the mid 2000s. And so they had been doing a lot of good work in Windham until around 2015, when they decided to change the intensive care unit to the progressive care unit. And the intensive care unit is a 24/7 operation, whereas a progressive care unit is a unit that would be providing some emergency services, but not on a 24/7 basis. Unfortunately, our certificate of need process at the time was not able to address that because of the statutory configurations that we had in our situation. So we had numerous hearings in our community. We had doctors who protested the change from the intensive care unit to a progressive care unit. Yet, despite all of that, we were unable to do anything about it. Hence, we went to the Public Health Committee and worked with Lieutenant Governor Nancy Wyman and helped create the Office of Healthcare Strategy. And so that's how that occurred. Now the Office of Healthcare Strategy has all this responsibility, and they are doing amazing work with the statutory configurations that they have now. But I would hope that what we would be able to do is take the language and that I support the Senate Bill 416 and House Bill 5449 to strengthen their capacities and follow up on the work that they've been doing, because they know exactly what type of language, what they need to do to expand and make sure that we don't have any more situations like what's happened in Windham. Because by decreasing the access to the intensive care unit, the doctors left, the OBGYNs left. These things also caused, I believe, and I think it might have just been confirmed during some of the processes that you've been listening to today, that there's been an increase in the medical malpractice insurance if a doctor wants to do OB services here in Windham. And whenever that kind of emergency service is decreased, I would suspect that the medical malpractice insurance would go up. So I would hope that the committee would look into that. Also, I noticed that, Madam Chairman, you had also discussed the idea of buildings that would increase the cost of overall hospital care. And I know out in Eastern Connecticut, there are some places where Day Kimball Hospital and Hartford Healthcare have been in competition with one another, building hospital offices and access to some care on an outpatient basis out here right across the street from each other, which is absurd in terms of the cost. The other thing is, once the hospital care for the maternity and delivery services has been discontinued before the Office of Healthcare Strategy was gone to by Hartford Healthcare. They had been fined, Hartford Healthcare had been fined because they did not ask for a certificate of need change. And so they had been fined, has been discussed here also, to the tune of about $1,000 a day, up to the point in which they made the request for a certificate of need, which they have not yet made a determination on, and through the Office of Healthcare Strategy. So I'd like to also take a look at the fact that a reduction has been mentioned here before, a reduction in access as well as termination in access be focused on in terms of the language that you'll be drafting to change how we do the Office of Healthcare Strategies work in the future. Very, very important work that you're doing here, very much appreciated. And we will say one other thing that goes to show that it has not been an increase in safety for women having babies outside of this area.
And that is there was a head-on collision with a woman who was in labor and on her way to the Bacchus Hospital. And apparently one of the people in that collision passed away. I'm not sure just which one, but that is written in the Chronicle, and it's part of my testimony that I'm giving to you, that I will be submitting to you shortly. But there's been a death already while a woman is in labor on her way to deliver a baby outside the Wyndham area, when the person lived right here in Wyndham and could have delivered safely here. So this is a problem because these larger corporations don't understand the places in which we are located. And we have a very high minority population that's very low income, that has language differences. And we need to make sure that those kinds of things are addressed here in the Wyndham Hospital area. So we've got a great community organization that's been working hard to help make sure that these changes are made known to the state, and that we try and make sure that our certificate of need process addresses these things. And as you can see, the changes in the hospitals, the consolidations have been so vast and so complex that we need to give the tools to the Office of Healthcare Strategy and the Attorney General to make sure that they have the tools that they need in the law to make sure we continue to have access to good health care all throughout the state. So thank you very, very much for all the good work you're doing.
Thank you for that testimony, Representative Johnson. I don't see any questions, but we appreciate your testimony. It was very insightful. Thank you.
Thank you so much. Bye.
Okay, so I don't see our next speaker on here, but I do see number 10, Brenda Butchbinder, followed by Ted Doolittle.
Good morning, Madam Chairman, committee members, representatives, and community members that are here. I'm here to support HB 5449 to strengthen the con process and to save rural health care. I'm a member of Wyndham United to Save Our Healthcare Coalition. It is a pleasure and an honor to be here today. What is the price of a human life? In the Great Depression, community members of the rural city of Willimantic reached into their pockets to fund the building of Wyndham Community Memorial Hospital. Vital life-saving medical services were given locally and lovingly. Almost 9 decades later, Hartford Healthcare acquired our hospital. Corporate healthcare consolidation and regionalization moved health services away from Willimantic. In 2015, Hartford Healthcare closed our ICU without a certificate of need. They fired nurses, removed core services like labor and delivery, diminished anesthesiology and specialists. Local services continued to diminish with pandemic closure of our maternity unit. We lost Mansfield OBGYNs just over the town line. They're still there. They now send their patients down the road of Route 6 to Manchester Hospital to deliver for the past 2 years. Wyndham Hospital through Hartford Healthcare lets RNs deliver in emergency departments, or pandemics deliver on the side of the road on the route to Bacchus. Fewer childbirth choices mean more C-sections, not VBACs, rushed rides, not rest, and loss of family visits. Traumatic risk, poor maternal and neonatal outcomes make lasting health complications for mother and child. Medicare and Medicaid funds are moving from Wyndham County to wealthier New London and Tolland counties. Unregulated public health has shifted services in Willimantic further from a regional service center to a healthcare desert. East region of Hartford Healthcare means services moved from Wyndham to Bacchus. Wyndham United to Save Our Healthcare testified at the con hearing on November 10th last year, and the case closed a week later. We were promised a decision 30 to 60 days later about the fate of our unit. A small fine from $115,000 reduced to $65,000 was levied against Hartford Healthcare, a light slap on the wrist of a very wealthy healthcare corporation. Too little and too late. The con process favored a corporation by allowing the removal of a rural healthcare service to stand and continue 2 years and running. In Wyndham Willimantic, we speak truth to power. We inspire our legislators and insurance regulators of Connecticut to remember that healthcare is a human right. legislate a stronger con process and stop the pain of our community. Protect lives in Willimantic and surrounding towns with quality health care close to home once again. What is the price of a human life? We faced the COVID pandemic without an ICU. Now we face our
Thank
next
you. Your 3
pandemic.
minutes has expired.
And thank you so much for your testimony. We appreciate your time today. And we have a question from Senator Anwar.
Yes.
Thank you so much, Brenda, for your testimony. Could you share one or two stories about the impact it has had on women from that closure?
As part of Wyndham United Healthcare, we hit the streets during the pandemic with masks and gloves and everything else, neighborhood to neighborhood. And I heard a story of a woman who went into labor, and she had the terrible decision, do I go to Manchester or do I go to Norwich? Because she knew she couldn't go to Wyndham. She put herself in her car in labor and drove to Manchester, holding the baby in with one hand and the wheel on the other. The stress and trauma of that mother, and the child has learning disabilities. Now, we don't know if that sort of birth fosters that thing. We have no idea, but there are ramifications. Some of them are lifetime, whether it's asthma, whether it is postpartum depression with the mother, whether it is, complications of birth that happen with stress. We have some other ones. We know of a woman with mental health condition who lived 2 blocks from Wyndham Hospital that presented with a premature baby at Wyndham Hospital and was whisked away to Bacchus. And they said, we can't handle it, it's too preemie. So they helicoptered her to Hartford with a premature baby and this mother with mental health issues, when this could have been handled in Wyndham. The stories go on and on. A lot of the women in the area did not know the hospital was closed. It was one announcement in the paper. And if you were in the pandemic and worried about food or where your next heating bill was going to be paid, you weren't looking at the newspaper. And a lot of the women that we spoke to on our did not know. This came out of left field and heartlessly during the pandemic without a vaccine. So, yeah.
Thank you. Thank you so much for your testimony, and thank you for being an advocate and the work that you do every day. Thank you.
Thank you.
Thank you, Madam Chair.
Thank you. Senator Lesser.
Yes, thank you. And thank you, Brenda. I was having a little bit of some flashbacks because, as I think members of this committee know, I became a father last year during the legislative session. And for whatever reason, my spouse and I decided to use the OB services at a hospital that's about 35 minutes from our house. And I still remember the white knuckle drive exceeding the speed limit rather substantially to try to make it there in time. And we barely made it. And so I understand that there are some pluses to going to a center of excellence, but there's some real downsides to having women who need to give birth not have access to it in their communities. And it was an incredibly stressful and potentially dangerous circumstance for us. And I was just curious do you know if anybody's collected any numbers on potential adverse impacts already from women in Wyndham who've been denied access to local services?
We have asked about that, and we've asked also about the disappearing memorial funds and trust funds that were dedicated to our hospital, which seem to have disappeared from the health corporation. We don't have those statistics. They're not apparent and they're not reachable.
Mm-hmm.
There's no accountability.
So in terms of, and this is the insurance committee, but in terms of the public safety aspect of it, if you can't access care in a reasonable radius of your home, there's going to be a cost to that in terms of public safety, if not in terms of raw dollars. But then also in terms of my question earlier of Ms. Veltri trying to understand getting more transparency data now that we have these giant hospital systems, how that's impacting access to care. So you would look for us to impose additional transparency requirements on hospital systems? Is that something that you know?
The rates of C-sections, and we were I think, one of the highest counties for C-sections. We've been 20 years as a disadvantaged county, and now we're just left with Dade Kimball for birth in Windham County. It's the last Windham County hospital where there's birth services, and it's all back roads to get there too. We have no highways reaching Willimantic. There are none.
You don't have to tell me I got my vaccination at Dade Kimball Hospital. They did a wonderful job, but from where I live in Middletown to Dade Kimball was quite a long drive, a very pretty drive, but it was a long drive, and can understand how asking folks to take that drive from Windham would be a big burden on folks. So thank you. Thank you, Madam Chair. I appreciate the time.
Brenda, thanks so much for joining us today.
Thank you.
Next up, we have Ted Doolittle, followed by Dr. Shangold.
Yes, good morning. Can you hear me okay, Madam Chair?
Yes, we can.
Good.
Yeah.
Madam Chair, Senator Lesser, Senator Anwar, Representative Pavlik D'Amato, and Senator Kelly, thank you for the opportunity to address you this morning. My name is Ted Doolittle. I am the Executive Director of the Office of the Healthcare Advocate, which, as most of you legislators know, provides free expert assistance to folks who are fighting with their health coverage, like representing people in health insurance appeals and so forth. We have filed testimony on a number of the bills that are on the agenda today. I want to highlight some of those today. The first one I want to speak on very briefly is SB 362. That's with respect to the Access Health Connecticut Board, the board of the Obamacare exchange in the state. This bill, for reasons I don't know, forbids normal people from serving on the board, normal people who have never worked for an insurance company. I can't for the life of me think of a reason for this. I did put together a list of the types of folks that would be banned in my testimony. Regular folks such as Brenda, who just testified, would probably not qualify. Most of the members on this committee would not qualify. Retired distinguished members of this committee mostly would not qualify. This is a bill that really should get 0 votes, and that's all I'll say about that. The second bill I want to speak to is SB 415, that's 415. This is the bill that concerns step therapy and utilization review. In our written testimony, I elaborate what I'll state briefly, but we recommend that you take this as an opportunity to start to take in-network status seriously. Let's take in-network status seriously. Let's do limited or no utilization review for in-network providers. I call this concept low denial or no denial health plans. And this dovetails strongly with Senator Anwar's comments on a prior bill regarding prior authorization. This also, this idea of limiting the burdens of utilization review, especially for in-network physicians, goes right in the flow of what's happening in the industry in terms of setting up what they call centers of excellence, where the insurance companies try to direct, for instance, all of a plan's knee replacements to the Mayo Clinic or something like that. Once you get routed to the Mayo Clinic, your claims are not going to be reviewed or denied. So this is right in step with what's going on in the industry. And I urge you to take the opportunity to really take in-network status seriously, give the in-network doctors limited or no utilization review. The next bill I want to comment on is HB 5447, that's 5447. And this sets up a prior authorization task force, again, in line with Senator Anwar's previous comments. This is something we really can improve on. Prior auth, as you know, is one of the really bugbears that all your constituents face in terms of getting their health insurance coverage. We have taken the opportunity in that bill to also ask for an enhancement to the already required notifications regarding my office. Already there's several points in the statutes that require the insurance companies to identify OHA, the Office of Healthcare Advocate, and give our name and address. That information, and they're all compliant. I'm not saying anybody's not compliant with those existing requirements. That information tends to wind up in 9-point type to back near the alternative language. And that contributes to OHA's status as the best kept secret in state government. If I speak to a group of 20 folks, I know that the next day we're going to get either 1 or 2 cases. That's how widespread these insurance denials and challenges are. And so you'll see in my written testimony that we're recommending that you give OHA's notice much more prominence, a blurb, for instance, on the first page with a few words just directing people to OHA, telling them that there's free expert assistance available. So that's a great opportunity to end the status of OHA as the best kept secret in state government. I want to principally direct my comments this morning to SB 416, that's 416, that's the anti-tiering provision. I will actually align myself with Director Veltri's earlier comments regarding needed technical changes. But this is a big one. This is a big one, folks, and I urge you to pay attention to it. In my view, there's really, before this session of the legislature, there's 3 serious health care cost control measures. There's the healthcare affordability that I'll mention in a moment. But if you're a legislator and you want to take back to your constituents that you're doing something on cost control, I would urge you to support 3 bills. SB 260, which is an aging bill, I'll mention in a moment. SB 356, which was before this committee earlier this week, and this bill, SB 416. We have internationally abnormal prices in this state. It is out of control, it's unsustainable, and it's ridiculous. All 3 of these bills are geared toward giving the commercial carriers more bargaining power against specific high-cost providers. Since 1980, the carriers in Connecticut and across the country, don't want to pick on anybody in Connecticut, the carriers have not been able to deliver internationally normal prices. Commercial carriers, at the end of the day, they need a credible way to say no to specific high-cost providers. I don't view these types of bills as anything like price setting, which Representative Meskers raised earlier. These bills all get into price explanation and price justification, the type of price justification that's used in MedPAC to set to justify the prices that Medicare pays and all other wealthy countries. And I believe that providers of all sorts owe people of Connecticut who pay their requested prices by the deductible a justification for their prices. I've mentioned Senate Bill 260, just very briefly. That's an aging bill that sets us up a prescription drug affordability board that allows a panel of experts to evaluate whether drugs are increasing in price too rapidly. That's one. That's number 1 of the big 3. Number 2 of the big 3 is SB 356. This committee is familiar with it. This adds affordability and rate review to the existing authority that insurance department has. Right now, CID is entitled to ask 1 question at the premium rate hearings. Does the carrier have enough money to pay the claims? That's fine, but that's only half of the cost. That question is limited to premiums. It excludes the amounts that your constituents pay out of pocket. So we need to add a second question. The question now is, does the carrier have enough money to pay the claims? Are they going to be solvent? The second question you need to add there through SB 356 is, do your constituents have enough money to pay the claims? Do your constituents have enough money to pay the claims? That's the number 2. The number 3 of the big 3, I would say, is the bill SB 416, the anti-steering provision. Again, commercial carriers need a credible way to say no. Already, the public side, we have that in the Medicare and the Medicare Advantage plans have a price justification system. And all the other wealthy countries also use a price justification, not necessarily price setting, but a price justification system. Explain your prices that you want the people to pay. In conclusion, I would just say that one of the jobs, I think, of any legislator in this state, in this era of healthcare, is to examine and support the carriers where possible. If there's a contract dispute, the default position, obviously you want to look at the specifics of any contract dispute, but the default position should be to support the carriers in trying to get internationally normal prices. The carriers have not been able to negotiate internationally normal prices for the people of Connecticut, and there's only one place that they need help, and the only place they can get that help is from the legislature. So that's where these bills come in. So those are my comments. Madam Chair, and I certainly am available to answer any questions. Thank you for the time.
Thank you. This was very helpful testimony. I did just want to talk about a few items that you mentioned, SB 356. The issue that I think needs to be clarified, and correct me if I'm wrong, is like the definition of affordability. I think that seems to be what people trip over. I was wondering if you could just explain or agree or offer some suggestions how we move that forward.
First, I would say, is this going to be a new activity? Absolutely it is. And just as Director Beltry was explaining some of her needs to supply new definitions, there would be a need to get into the affordability. This legislature and the governor have wisely started us down the path in terms of developing CHAI, the CHAI, the Connecticut Healthcare Affordability Index. Does there need to be a reasonable benchmark or definition of affordability? Absolutely. Perhaps it could be the ability of a family to afford a given plan if that family has the median income or has the 25th percentile income in an area. Is this a new activity? Absolutely, I agree with it. I agree with that statement. That doesn't mean that we shouldn't do it. Our healthcare system is broken and we need to fix it. And this is part of the hard work of fixing it.
Great. And then I just wanted to throw out an option for the prior auth that we have. Many of us have met with different groups and read some legislation from Texas that listed a gold standard, which is basically if the carriers are approving they're approving a prescription or an MRI or something like that, 90% of the time the prior auth would not need it. What would you agree with something like that?
I think that's headed in the right direction. I would, the way I view it and that's a productive way, the Texas method. The way I would view it is, again, let's take in-network status seriously and let's give you the benefits of that lower you are if you're in network. If you're not in network, if you're not in network, that's to me a different situation because the healthcare plan hasn't had a chance to vet that provider. However, if you are in network, the healthcare plan can view your work and they can take you aside and educate you and say that, hey, you are not in line with your peer group in terms of the drugs you're prescribing or something of that nature. There could be a clinical explanation for it, right? You could be a person who uses a drug more because you have a subspecialty of some sort. Absolutely. That work all needs to happen to make sure you're not throwing out the baby with the bathwater. But at the end of the day, we do need to be able to make it easier for the folks that are compliant and practice according to the correct clinical standards. And we need to make that trip smoother for those folks and make it so there's tiered discipline or education on up to removal from being in networks privileges, perhaps, for somebody who is recalcitrant and refuses to change their ways. So I think the Texas model is something we should look at. If you want to go in the more in direction sort of that I envision it and just say, if you're in network, that implies a certain amount of vetting has already taken place. But if you want to look, I think the Texas approach is doing what I'm doing. You're looking at the track record. You're saying, and then you're rewarding the good behavior, right? You're rewarding the good behavior. Well, you have to do that very carefully because, like I say, I'm coming out of the program integrity anti-fraud world, and I know often when you see astronomical charges in one particular provider, when you dig in, you find out there is an explanation because they are offering a treatment of a rare disease, let's say. There can be legitimate explanations. So these are difficult to administer fairly, but we do have to get there.
Great. Thank you. I will now go to, I believe, Representative Meskers was next, but I don't see him. So, oh, there he is. Okay. Representative Meskers, you're up.
Sorry, I was listening closely, but chasing a long-haired dachshund that I'm babysitting. So I apologize. Ted, I want to thank you for your testimony. I'm concerned over the last 2 days in the testimony I've listened to, the testimony in relation to the financial cost of insurance, the idea that, you know, larger payments to certain providers would improve healthcare. And given the overall cost of healthcare in Connecticut and the premiums and the cost of insurance, I'm concerned with what you're suggesting. I think improving the bargaining power of the insurance companies and getting us good healthcare is important. And I guess I sat through an NCOIL meeting, National Council of Insurance Legislators, on pre-approvals, and it is a check and balance on the use of insurance and the premiums for necessary and unnecessary procedures.
Mhm.
And I'm a little concerned that when I weaken that bargaining power in terms of pre-approved and non-pre-approved, I think the question is the reward and penalty that I would consider in terms of what am I going to let happen in terms of either clawbacks and or how do I discipline or make sure that I'm not just rewarding people who use the system to bill. And, you know, if I buy an MRI, I need to run as much volume through that MRI to pay for the MRI. And I just don't know that I'm worried on pre-approval. So until I feel like I've got real teeth on the negotiated pricing, so I don't want to put, you know, caps, but when I have transparency on pricing on medical care, I'm willing to lean in on the other side on the pre-approval. But I'm afraid you're lifting that gate before we have an effective. So I guess the question is, how do you see that ebb and flow for the premiums and the charges of insurance if I lighten up where you think I'm being overly restricted on, or insurance companies on pre-approvals? Do you think, I don't know if I need to scale in the procedures that are going to increase price competition, lower costs with improving the pre-approval process to improve medical care? I'm worried I'll do one and not the other, and I'll end up with another 10 or 20% premium increase for all of our insured constituents. So if you can speak to that a little bit.
You know, obviously, there's a lot of different balls in the air here. If you wanted to tier them, so I would say to move to the transparency issues first. For instance, add affordability and rate review to CID's responsibilities during the rate review process, so that we can, for the first time, get the providers into a public forum to explain and justify specific prices for specific procedures, right? That's where, at the end of the day, the money comes down to. It's not an overall system issue. It's about a specific price for a knee replacement. And the question is, if it costs $36,000 at your place, how come it costs $12,000 in Montreal, you know, or in Germany with better results? So if we have to,
or in Hartford versus Greenwich.
Absolutely, a lot of disparities in price, you know, within the region. Absolutely. So the way to get there, look, we want to do this in a methodical way. My recommendation would be to go to the transparency issues first, and then take on the others. But I do think that there are ways to control costs overall while still making it easier for the proven good providers to get through the insurance claims approval process. What I'm suggesting really is for the industry to follow what the federal government has done on the program integrity or anti-fraud side, which is to stop looking at individual claims, right? If you stop one bad $150 claim, that's good. But what you want to identify is which provider is doing 100 of those $150 claims that are inappropriate. So move the utilization review focus away from the individual from the individual claim level to the provider level, right, to the provider level and look at the patterns of practice. And if we do, the problem with the way we do it now, which is stop an individual claim, is that a family gets hurt, right? That's the problem. A family doesn't get the care they need. And now they have the anxiety about that. And how do we appeal this? Or how do we get an alternate treatment? That puts the patient and your constituent as the victim. Really, the dispute should be between the provider, who has a practice pattern, not this one dinky little claim, but a practice pattern that is inadequate. And in that way, we can make sure people are getting the right care at the right time, which of course is what everybody within reach of my voice wants.
So then I guess where I would come back with you on this would be, I'd like to phase in either some kind of penalty or control function on practice patterns with a 3 or 6 month lead time to say, if I want to correct the practice pattern before I open the gate to higher pre-approvals or try to get a gold card, to make sure that I am, because you touch my heartstrings when you talk about the individual and their access to care. And so I'm sensitive to both issues. I'm just trying to figure out, you know, when I try to take care of someone and the premium goes up 30%, how many people have I damaged? That's the game, right? Unfortunately.
Certainly understand that. Let me draw your attention to, I'm not sure which bill this is in, but in one of the my written testimonies that we filed today, helped by Sean King and Adam Prizio, we mentioned OHA's perennial request that we think about standardizing the medical necessity guidelines. Right now, each company has its own medical necessity guidelines, and sometimes even within one company, different plans will have different medical necessity guidelines, and that rather what we should have is a Connecticut-wide or a nationwide standard of medical necessity, so that everybody is working off the same playbook, and we are synchronized in terms of what we think are the clinically accepted through medical societies and other experts standards of care, and make those standards of care equal amongst all the companies. My guess is that Senator Anwar has some stories about things that he does for one company going through and they're not going through for another company. And that could be because they have different medical necessity guidelines that they are writing into their policy contracts.
Thank you very much. That's helpful with your testimony. I appreciate it. No further questions.
Thank you so much, Representative Metzger. Next, I have on my screen here in order is Representative Nuccio.
Thank you. Hey, Ted, how you doing?
I'm doing well, Representative. How are you?
I'm good. So I want to talk about a few of the things that you put together there. First of all, I like what you just said on having a standardized medical necessity, because that is true. Different policies, different companies, different everything. I like the idea of having like a standard medical necessity guideline. In regards to the pre-approval, it's been about 22 years since I processed a claim. It's been a while. But I, being in industry long enough, know the reason why pre-authorizations were put in place, right? I've lived it, I've experienced it, I've seen it across the boards. And we did see a lot of constraint with controlling medical costs, right? So people complain all the time that the cost of healthcare is too high. And then when insurance industry puts stuff in place to kind of control it, they get yelled at because they're trying to control it and we're not listening to the experts and blah, 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 on and on, right? So it's like, which devil do you want to sit with on this, right? So pre-auth is definitely in place for a reason. That being said, I would like to know, like I said, it's been about 22 years since I actually processed a claim and had to go through a pre-auth list, but I'd like to understand the difference of what we had even 10 years ago and what we have now. Because if we see a provider that 90% of the time their cataract surgeries are pre-approved, there's still 10% that it's not, that's going to add to the cost of care, right? So trying to figure out how we can have a system in place that maybe is updated. If we say, okay, we're going to give Senator Anwar carte blanche, he doesn't need to pre-auth anything anymore. And then in 4 months, we all of a sudden see his claim volume double, right? Now, if it's a year, I can't even look at that. you're increasing the cost of care with no understanding of why. So I wouldn't be opposed to looking at something in place with like a frequent check-in, and the higher score you have, the less frequent your check-in kind of thing. But we still need to be able to kind of put a cap on when we see self-referral, when we see referral inside your own organization or to your own providers in the network, and medical necessity and stuff like that. So I think there's a happy medium. And I'd be interested in negotiating and trying to find out what that happy medium is. And I think of this, especially when we talked about like the consolidation stuff, when we're looking at the information from Vicky's all claim payer database, the APCD, right? And we're seeing instances go down in hospitals, like less instances, but the costs 200 times what it was, 150 times what it was. It's not utilization that's driving it, it's the cost of care, which then gets me to my last comment. I really struggle with the bill on the adding the affordability clause, because affordability to you is different than affordability to me and different to affordability to somebody else. So I struggle with that. And I do know that there is a populace out there who loves these high deductible health plans, the younger people who they just want a catastrophic plan. They don't want to have a more expensive plan. And when we get to that affordability, my problem with it here is, and maybe you're knowledgeable enough in this industry, you know that affordability, a cost of an insurance policy, claims drives the cost of the insurance contract, right? Insurance companies are legislatively not able to have administration of profit of more than 15% from a MCR perspective. And it is a widely known fact that insurance companies' average profit is between 2 and 4%. You would not deny a 2 and 4% profit to any other company. The problem is that the claims volume is so high, the 2 to 4% is an astronomical number. So that's the claims drive the cost of the policy, the payment drives the cost of the claims, the contract drives the cost of the payment, and the size of the provider drives their ability to be able to negotiate higher payments. And on the same hand, we have people on here telling us we need to pay providers more. So if we're paying more for services, that means the cost is going to be higher. So again, how do we calculate that into affordability? For rate reviews, they look at the cost of claims, the cost of administration, and they come back and say, this is what do we think is reasonable, what is not, right? So this is my snake, right? Claims, cost, provider, network, claims, cost, provider, network. It's the never-ending circle. So I struggle with the affordability piece of it because I think that is very ambiguous. But I understand what you're trying to do. What I think is going to happen, though, is you'll start to see a shift back to more of the HMO type products, which is a fully insured product that guarantees you coverage. It has a $10 copay, but your premiums are going to be $400 every 2 weeks, $500 every 2 weeks, because we're not addressing the claims, the cost, the payment, the network. So I guess that's where I struggle. And I respect you a lot, and we have good dialogue back and forth. So I guess I'm looking for you to kind of help me try to see where we can, by just attacking this one thing or putting something on there to say an insurance company can't raise the rates applicable to their claim cost. Where does that money then come from?
Okay, so a lot in there, and I appreciate the back and forth that you and I have had over the past few months, and I appreciate your thoughtful attention to these issues. First, there's an opportunity here to try, in terms of the prior approval, to take the patient out of it, right? That's really the central. Let's take the patient out of it, and let's have the tussles be between the providers and the carriers. That's item one. Secondly, is affordability defined at this point? No. There's cutting edge work going on in our state. I mentioned it before, the Connecticut Health Affordability Index. It's ambiguous today. It is ambiguous today, but it needs to be defined. And this is part of the work of trying to fix our healthcare system. So we've made a start through OHS's CHAI Affordability Index work. We can carry that work over to the rate review process. And for the first time, again, your constituents have to pay these prices. They typically don't even hit their deductible. So give the people of this state their first ever chance to have explained to them the prices. Right? That's what the affordability and rate review gets to. There is in terms of having a sanction on a company for not reaching affordability, that's not in the bill, and that is something that may never need to happen. But one thing we could do, just for instance, without a penalty, right now, if you go to the egg section, you've got the pasture raised and you've got the cage free and you've got the organic. Those are all, they once were ambiguous, but now they're defined, right? Now some parameters, you know what pasture raised mean. I can't tell you what the definition is now, but I know it's there, right? It's a specific thing that you have to meet, and then there can be audits on the egg producers to make sure that they're doing it. So in the same way, perhaps just even having an affordability or non-affordability label, could be really helpful. But again, the key thing here is for the first time, make specific high cost providers explain to the people of Connecticut why they have to pay that specific price for that specific procedure.
Oh, I agree with you on that. I absolutely think from the perspective of, listen, like I said, everybody knows I've been in industry for a long time. I've been complaining since the first initiation of a high deductible health plan. And I said, if you want me to be an informed consumer, you've got to give me all of the information. Yeah. I wholeheartedly agree with that. You should be able to look and see, here are my 5 options for an MRI, and here's where I want to go because this is where I can afford. I absolutely wholeheartedly agree with that. And I think that gets into the anti-tiering or bill, the language that you were talking about there, is that the larger a network gets, the less control industry even has to keep the cost down, because there's always, I've been involved in multiple places where we're just going to pull our entire network if you don't pay us X, right? And that entire network services hundreds of thousands of people more, sometimes in some states, major city networks, that millions of people. There's no ability there to kind of keep it down. So that gets us back to the size drives the negotiation, right? So it's literally the snake eating its tail all the time. And I am a willing partner to work on this. I guess I'm just kind of struggling with where and how. So
sure. One quick comment in response to the very thoughtful comments that I agree with much that you said. So high deductibles, the idea was that the consumer would become price sensitive and be able to ferret out. The problem is that most healthcare is not shoppable, right? And that's why we need some other process, which is public and periodic, where those prices are discussed, because they can't be discussed between the patient who's in the ambulance on the way to the hospital.
Right. And again, I think it's a pendulum. If you look at the HMO world, right? Everybody went to the doctor for every single thing because you paid $5 and that was it, right? So utilization was massive. And now you've got the high deductible health plan where I would sit there and say to my kids, you just have a fever. Unless you have a fever and you're throwing up in this, then we're not going to the doctor because it's $134.16 to walk in the door. So we need to find that middle ground. I'm anxious to work to try to find that middle ground, but I think you've given me a couple of good things to look at here, and I definitely like the medical necessity guidelines.
Thank you.
Thank you very much.
You're welcome. Thank you.
Thank you, Representative. Senator Omar.
Thank you, Madam Chair. Ted, thank you so much for your testimony, and I've read through your testimonies as well, and appreciate the work that you and your office do. I just wanted to pick your brain a little bit. So you have been the chair of the task force for the high deductible plans. What was the final few things that can address this big challenge, and from the patient's perspective, but also from the provider's perspective?
Yeah, well, there's a couple. I'm just seeing if I can pull up the number of the bill that has the high deductible.
5410.
Oh, okay. Well, in our testimony, we zoom in on a couple of the most popular recommendations of the high deductible task force that you referenced, there was nothing that got a unanimous because the carriers took the position that they, I guess, didn't have enough information to vote positively for anything. So nothing was unanimous, but there were a couple of things that just make all the sense in the world. Like, for instance, if you join a high deductible plan mid-year now, and it's got a $10,000 deductible, well, let's make it so you join in November. You join around Thanksgiving, you get a new job, high deductible, $10,000 deductible. You have to pay a $10,000 deductible in the 6 weeks that are left in the year, right? So the premium at that point becomes free money, you know, for the insurer. And why don't we prorate that? That's idea one that came out of the committee that I'll mention. Idea two is if you move from one high deductible plan to the next one in the same year. So you in a high deductible plan A, and you have a $10,000 deductible, and you pay $5,000, and then you get a new job in July, also $10,000 deductible. You don't get any credit for that $5,000. Representative Nuccio was explaining to us that high deductibles are supposed to put skin in the game, right? It's supposed to make sure that the patients have some financial pain in terms of price sensitivity. That's been proven, you know, not to actually guide their behavior. But if you've already put $5,000 in the game, why do you have to put a second $10,000 deductible, the full deductible, remember? Why do you have to put two skins in the game if you switch high deductible plans mid-year? So those are two, to me, common sense, obvious, low-hanging fruit reforms that came out of that task force.
And I see that they are not part of this bill at this point.
That's right. I think we mentioned that in our testimony, though.
And again, this is a critical part that is impacting our society. And what are your thoughts on the health savings account and the coordination with the employer?
Are you speaking with reference to the HSA related bill that is?
Correct.
Okay.
No, there's a HSA part, I think, within this bill.
I'm going to have to get back to you offline. Okay. I'm not prepared to delve into that right now.
Okay, no worries. Then I wanted to thank you for highlighting the challenges with Bill number 362, where you're making a committee full of insurance background individuals for health insurance exchange, where you pretty much know what the verdict is going to be when you do not have the community voice in any shape or form. So I appreciate that, and I'm glad that we as a committee are going to hear that loud and clear, that that bill may be harmful. And then again, maybe my vision is I don't look at it from the industry perspective, I look at it from the consumer perspective. So that's how I would assess that. And from a consumer's perspective, that is bill is not a good bill. So I appreciate that. The part about the prior authorization part, and I think what you suggested some language change in that one. This is the 5447.
Yeah, in terms of 5447, our principal recommendation is to enhance the already required notifications about my office, right? And the prior authorization task force could be instructed to do that. There might be other bills also that, to me, it's a little bit of a tweak because you're already requiring the notifications of our office. You would just be specifying and enhancing the prominence of those notifications.
So here's what was going through my mind when I read your testimony on this particular one. I was saying, because the insurance industry is requiring prior authorization on everything. Right now, even a rescue inhaler for an asthmatic, right? They'd rather have a young boy or girl not breathe than to actually allow them to have a rescue inhaler. That's how bad it is. So when you see that situation, your office may need to be bigger than the entire state of Connecticut because the insurance industry is requiring prior authorization on everything. Do you have the bandwidth to manage this disaster they've caused?
We would need to talk about that. I mean, I've worked in a number of federal and state offices, and when I got here 5 years ago, I was really surprised how busy we already are. If OHA becomes as well known as it should be, and it should be known by everybody in the state, right? Everybody should know there's this free resource. We will need further resources. There's no question about it.
Yeah, so that was part of the challenge, is that we're trying to have a smart plan for prior authorization. And despite what the industry would want, for them, look, on the other side, you have a highly trained clinician who has spent their lifetime trying to know about the disease. On the other hand, they have whoever they may have. It's not somebody with the same background to say no, and then after about 1 hour of waiting. So it's almost, that's why people are leaving the state, is that they can deal with this bureaucracy that has been created. These are actually barriers to treatment and well-being of the patients. So what can your office do? Can you call your office and the physicians and call your office and say, hey, we can't get a human on the other side, and the human we get doesn't know what to do. Yeah. And they say, we'll put you on hold for another 45 minutes. Yeah. And then they go to a computer and they say, we can't do it. And then your 2 hours are lost for one basic medicine.
Yeah, well, we certainly try to, we have providers who come to us all the time, and we work with them on behalf of their individual patients. So certainly that is an option. I guess one thing I would just mention is the prior auth situation any better in any other state? I'm not necessarily aware that this is specific to Connecticut, but perhaps we could start fixing it here.
I've heard rumors that Texas may be a little bit better after their law, but I don't have concrete evidence. But I do think that this is a major challenge across the board, because the insurers have a playbook that's pretty much similar across the country right now. So some places are worse than the others because we are quote unquote the insurance capital, so we can abuse our society.
So if we were to make it easier for the good providers, perhaps we would attract more providers to the state, which I think is your point.
Yeah. Thank you again for your testimony. Appreciate the work that you and your office do. Thank you, Madam Chair.
Thank you. Thank you so much. Thank you, Ted. I don't see any other hands. Have a great day.
Great. Thanks so much, Representative Comey.
You're welcome. Okay, next we have number 11, Greg Shangold, Dr. Shangold, followed by number 12, Thomas Burr. Go ahead, Doctor.
Good morning, distinguished members of the Insurance and Real Estate Committee. On behalf of the Connecticut State Medical Society, I want to thank you for the opportunity to provide testimony for House Bill 5410, and that concerning high deductible health plans. My name is Greg Shangold. I'm an emergency physician and a past president of the organization. We thank the committee for raising this bill, which begins to address the negative consequences of high deductible health plans that they have on patient health and the value of the physician-patient relationship. After many years of studying this issue, I believe people recognize this is a huge problem with our healthcare system. Now we must focus on the reform. All we need to do is look at the COVID-19 related healthcare, and society made the decision that most of that care would be pre-deductible. People sought out testing and early treatment. When people needed to pay out of pocket for testing, the testing went down. CSMS supports the concepts proposed in this bill. This bill begins to address some of the deleterious effects of high deductible health plans. In order to accomplish meaningful reform, CSMS would recommend that this bill be amended to incorporate some of the suggestions from the task force that Ted Doolittle just referenced. None of them are in this bill or have been implemented to this point. After a comprehensive review of this issue, the task force recommended making insurance carriers responsible for paying the negotiated fee to providers, and the insurer could then collect any patient financial responsibility. A majority of the task force members supported this recommendation. When patients do not pay their deductibles, physicians have two choices. They either take a loss or they send the patient to collection. Unlike other healthcare entities that are 501c3s, this debt is not tax deductible. Unpaid costs leave patients hesitant to return for needed medical care and potentially lead to additional medical problems. Multiple studies have demonstrated patients foregoing essential care with high deductible health plans. If the patient financial responsibility is paid to the insurance company, the scenario of receiving multiple bills from multiple providers will be eliminated. The sanctity of the physician-patient relationship has been forever damaged by physicians serving as collection agencies. Opponents have suggested the insurance company and the physicians should discuss this issue during their negotiations. This just isn't possible. Health insurers present physicians with take it or leave it contracts that leave no room for negotiation or bargaining. Ultimately, this is a major reason physicians cite leaving private practice and joining a large system. The reality is that high deductible health plans are hurting patient care in Connecticut. The time is now to introduce reforms that would overhaul and reform high deductible health plans. The task force issued its final report in 2020. Connecticut's patients and physicians cannot wait any longer for meaningful reform.
Thank you. Your 3 minutes has ended.
CSMS stands committed to working with this committee and any individual legislators on how to best accomplish this much needed reform.
Thank you so much, Doctor, and I appreciate you coming in as representative of the Connecticut State Medical Society, and sounds like you're on the task force as well, correct?
That's correct, Representative. I was one of the 12 members on the task force.
Wonderful. Thank you for your time that you were graciously shared with us. I know you care about it very much. I have a question from Senator Anwar.
Thank you, Madam Chair. Thank you, Dr. Shangold, for your testimony. We appreciate that. Could you share some of the other things that you feel would help this bill become a little bit better from the consumer's perspective and also from the provider's perspective?
Right now in the bill, what it does is it sort of lowers the deductible or caps the deductible so that it's still a federally classified as a high deductible health plan, which has a minimum of a $1,400 individual deductible and $2,800 family deductible. And the problem is, and there was a Dr. Fendrick, if you look up the report, and he's part of value-based healthcare at University of Michigan, he quoted that this solution does hurt, and I believe Representative Nuccio mentioned this, that many young people who don't access healthcare wouldn't benefit from this bill. However, if you look at Victor Villagro's testimony within the task force, there is a problem with the literacy. Many people don't know what plan to choose. So it is good to have options, and this bill, I think, addresses deductibles, but it sort of limits options. And so that's why we would like to see some of the other things that are within the task force. Specifically, right now, we're not saying that we should get rid of deductibles or do anything about this. The problem is that the physicians are the collectors of the debt. And that really hampers the physician-patient relationship. So we provide the service, and then we have to go to the patient and collect the money, even though the insurance company is the ones that created this scheme, this relationship. So doctors have a relationship with the insurance company. We sit there, we negotiate a fee. The insurance company should pay us that. And if they want the patient to have skin in the game, as we've talked about this whole morning, then they can be the ones that collect that patient responsibility instead of the physician being there. They're much bigger entities, billions and billions of dollars. And because of all of the things we've talked about with regulations, many of these reasons are why physicians have chose to leave the state and join these large entities, because they just can't deal with the bureaucracy anymore.
So Dr. Shangold, I heard an insurance company representative at one point say, hey, you have a car accident and you have your 500 or 1,000 deductible. And after that car accident, you just go and pay it to the person who's fixing it. And then you just get your car fixed, whatever it takes. So that's what patients are. They're like cars. And when they have an accident, they come to you and you are like a mechanic. And you just take the money and then take care of it. Is that a fair way to assess this relationship? And is hypertension, diabetes, retinopathies, and cataracts, are they car accidents?
I mean, I don't think the analogy applies, which I believe is what you're saying, because the first thing is you don't get your car back if you don't pay the money. They'll just keep your car. Meanwhile, at least in my field, which is the emergency department and all the doctors that provide emergency care, we don't ask people's insurance before we take care of them. EMTALA, which is a federal law from 1986, basically says you take care of the patient, you stabilize them, and then you go and try to collect the money. So from right there, the analogy falls apart. The second is about, I think you're talking about sort of high value care, that there's many things. If you don't want to drive, then you don't drive. If you don't want to have your car optimal, there's things you can do. But avoiding essential care, which a lot of times is what high deductible health plans do, leads to further more expensive care down the road. So when you don't get that medicine to control your diabetes or your blood pressure, then you're going to be dealing with the surgeries and interventions for kidneys, retinopathy, and other problems, not to mention heart attacks and strokes. So I just don't think it's an analogous situation.
And I think that's part of the challenge, because in the insurance world, they say this is a product. They look at it as a product, but they also look at the human behind that as a product. And the clinicians look at that as a human and then a person, and they treat them with the said that this could be my family member. That's the value that they would put in taking care of that individual. I would take care of them like my family. And between a product and a family, that disconnect is what's happening. And what's happened is, like you're saying, is that if a patient needs care, the doctors will provide the care. And if they cannot pay, they will say, well, let's figure that out. But the amount of deductible and the percentage of deductible components has increased to the point that you cannot stay as a sustainable model to continue to provide care. And I think that's what you're suggesting, is that if we don't change this in a meaningful manner and have the insurance company have more skin in the game, because they're the ones who have created a win-win strategy for themselves, that's what we are up against as people who are representing the community and the people who are impacted by it.
I think that's exactly right. And not to mention, the insurance companies are much bigger entities where they can wait 12 months, 24 months for a patient to pay their share, especially when you consider HSAs being funded. They're not funded equally all in January. Many times they're not funded for the first 6-9 months of the year to have that money. But many doctors are small businesses. They still need to pay for the staffing. They need to pay for those resources. They need to pay for more and more bill collection. And yet they're not receiving that revenue. And that's what entices them to go and join a larger entity versus having that small personalized care. Because I know in public health and in this committee, we're looking for things that keep doctors coming to the state and keep costs down and keep private practice. And this is one of those things that is not helping with that.
Thank you so much for your testimony and the work that you do. Thank you, Dr. Shangold. Madam Chair, thank you.
You're welcome. Thank you, Senator. Representative Nuccia.
Thank you, Madam Chair. So Dr. Shangold, you represent the Medical Society of Connecticut, correct?
That's correct.
How many licensed doctors do you represent out of the population in Connecticut?
Our membership is just over 4,000 doctors at this point.
Do you know how many there are in Connecticut?
How many licensed doctors in Connecticut? Well, there's licensed doctors and then there's practicing doctors, because some have maintained their license but haven't continued to work. But I think the number is in the 9,000 to 10,000, but I can get back on the exact number.
That'd be good. Thank you. So not to be obtuse, as like some people like to be, I'm the one who said very clearly that, the doctor is providing a service. And if this were an insurance being like any other kind of insurance, if there's a deductible, the person who receives the receives the service is the one who are responsible for paying the deductible. And there have been conversations before. The majority of people have ASOs contracts, and there is absolutely no financial responsibility of industry. And regardless of what some people like to say, doesn't matter what people do for a living. We're all elected to represent our constituents, regardless of our jobs. So when some people push for increases to provider rates and stuff like that, it's just as obviously self-serving as they say other people are for the industries that they represent. Either way, looking at this across the board, there are definitely issues around the high deductible health plan, but trying to have industry collect a deductible that they are not responsible for because they don't pay the claims. It is a not negotiated contract between an employer and the employee. There's a lot of education that needs to take place, as you mentioned, between what you're getting for the high deductible health plan. Or, as I mentioned before, we could swing back to the whole HMO model, and then the cost of healthcare is going to be so exorbitant that people won't be able to afford it. So when I'm looking at, you are specifically referencing 5410 and the things that are on here regarding the annual deductibles and the calendar year basis and looking at the different policies and such. I think there's work that could be done from an education perspective, but people are purchasing a policy that gives them certain benefits. So I struggle with the idea that you have to take the person who's negotiating with doctors and the contracts and not providing healthcare service and not paying for said healthcare service, and then saying that they have to collect it. So I think there's a lot of work to be done. Eager to have the conversations, but I just find irony in some of the things that are said and how we're trying to besiege who is more. If a doctor thought of every person as family, I guess I would say, then do you charge your family? You know, it's all a business across the board, and we're talking about people's lives, and we're talking about providing healthcare insurance for people, or even more importantly than healthcare insurance is healthcare benefits, healthcare in general. So there's many people in here, there's many levers across the board. I would happily work on trying to look at high deductible health plans. I don't like them myself, never have. And trying to find an option that works around the HSA accounts and helping trying to find funding for that. But I don't think shifting the blame off of one person to another because it's beneficial to one party is the way to do this. Thank you, Madam Chair.
Thank you very much, Representative. Seeing no other questions, thank you, Doctor, for coming here today.
Thank you very much.
Okay, you're welcome. Next up, we have Thomas Burr. Hi, Thomas.
Yes, good afternoon, Representative Comey and members of the Insurance and Real Estate Committee. My name is Thomas Burr, and I'm the Community and Affiliate Relations Manager of the Connecticut chapter of the National Alliance on Mental Illness, otherwise known as NAMI Connecticut. I am testifying today in support of SB 414, an act concerning mental health parity, and SB 415, an act concerning step therapy, adverse determination, and utilization reviews. First, in regards to SB 414, you have my written testimony, which discusses the history and elements contained in the 2019 Mental Health Parity Reporting Bill, which the Connecticut legislature passed and that Governor of Connecticut signed back in July of 2019, to great public acclaim, I might add. So in the interest of time, I'll skip over that. In spite of the passage of that 2019 Parity Reporting Bill, gaps continue to remain for patients seeking quality, affordable mental health coverage. And yet the healthcare insurance industry continues to be uninterested in adhering to either the letter or spirit of these laws. Mental health parity in healthcare insurance in Connecticut remains elusive, and it is long past time for both the Connecticut Department of Insurance and the healthcare insurance industry to account for themselves. Regarding SB 415, step therapy, adverse determination, and utilization reviews are well-known techniques that allow health insurance companies to deny covered care to their customers and interfere with the recommendations of healthcare professionals. These decisions are often made by people with no medical training and/or no intimate knowledge of a customer's health history and needs. This bill shifts the current burden of proof from the doctor-client to the health insurance company when arguing for step therapy, adverse determination, and/or a utilization review. Now, regarding the adverse determination and utilization review piece of this, In my written testimony, I referenced some testimony from Ted Doolittle from last year. I didn't realize he'd be on just two people before me today. So all the stuff that he said regarding adverse determination and utilization, I'm just going to, echo. He covered it very well. And I just, we couldn't agree more. I mean, it really, at the end of the day, it hurts people, and it's just not the right way to go about it. Regarding step therapy, the insurer will not authorize a higher step drug until a patient fails on a lower cost prescription drug. This can have devastating consequences for people with a mental health condition, up to and including the risk of suicide. Studies have shown that restricting access to medication has resulted in increased hospitalizations, lengthier hospital stays, and more emergency room visits, including for patients seeking mental health treatment. And this is just simply bad medicine. Therefore, in conclusion, we support the passage of both SB 414 and SB 415. Thank you, and I'd be happy to answer any questions you might have.
Thank you, Thomas. Any questions from the committee? I don't see any. Thank you for your testimony and for waiting so long to testify. Really appreciate it.
My pleasure. Thank you.
Next up, we have Mario Lee, followed by Ron Edelman.
Hello, thank you very much. Yes, I'm Mario Lee, and I'm the founder of the Affordable Families Coalition, and I'm here to support HB 5446. I'd like to take a quick second and thank Representative Nucio for her earlier statements of support on this bill, as the definition of infertility is very important, as equal coverage cannot be applied for fertility treatment without the diagnosis of infertility. So today I'll receive testimony from doctors, advocates, and survivors on the need for the updated policies in this bill that protect all constituents, especially those in the LGBTQIA community. I myself am a member of the gay community, and I always knew that I wanted a family, but also that living authentically would make that a difficult goal to achieve. This was a large weight on me growing up and made it difficult to come out. This legislative session, we have a chance to alleviate this weight from the shoulders of all LGBTQIA adults and youths in Connecticut. I hope you'll consider the following reasons to support this bill. Firstly, that healthcare is intended to make whole and to be applied with appropriateness and equity. Anyone that is in a medical need, regardless of identity, deserves help. The governing bodies around fertility care have made clear that LGBTQIA community members are prime candidates for family building assistance. Nextly, that no two people paying for the same product or service deserve unequal treatment because of sexuality. Imagine power companies being able to limit electricity usage by sexuality. Would that be tolerable? We pay for the same policy as our heterosexual counterparts, and we do expect the same benefits. We also expect our government to protect us from discrimination and inequity, especially in relation to something as critical as healthcare. Connecticut is a place for families. Growing up here, I know that this state is a wholesome place with equitable values. And here we know it takes a village to raise a child, but now we get a chance to acknowledge and understand that sometimes it also takes a village to have one. I implore the committee to take up and affirmatively vote this bill with the recommended amendments. Some amendments of note are the reinstallation of Melissa's Law, which was unanimously voted on by the committee previously and was taken out during the writing of this bill's process. We like that to be added back in. An increase in the mandatory minimum of lifetime coverage for IUI and IVF cycles to at least 4, but preferably 6. In addition of language, allowing patients to forego preliminary treatments and go straight to those that will increase the success chance for that patient. This is because every time insurance forces someone to use a less effective treatment, a pregnancy is created that's likely to be lost. And finally, an update on the medical procedures listed in the bill. This will take out outdated procedures that are no longer provided and add those that are effective today and acknowledged by the governing communities. I thank the committee for their time and ask again that you vote for HB 5446. And thank you again for your time.
Thank you, Mario. Representative Nuccio.
Thank you, Madam Chair. Too many buttons to push. Mario, thank you very much for writing in and coming today. Did you say those amendments are in your testimony? Or do you have those amendments? Because I don't see them on the original, on the bill.
They are not. We're asking for those amendments through our sponsor, and I'm happy to send those out your way. They are amendments that we originally sent in when the bill was in writing, but they didn't make it into the finalized draft.
Okay, yeah, if you could send those over, I'd appreciate it. hopefully there was somebody else on earlier, and we're going to have a working group to kind of look at this and look at the language. And I had a couple of questions on the language in there also. So if you could send those over, I would appreciate it. I think you have my contact info.
Yes, absolutely. I'll send those over. And if you need my inclusion in that group, I'm happy to participate as well with our information.
Thank you very much. Thank you, Mario. Thank you, Madam Chair.
Thank you. Next up, we have Dr. Edelman, followed by Holly Hackett. Sorry, we still have a question. Sorry, Senator Wong.
Thank you, Madam Chair. I was a late entry, but Mario, thank you very much for your presentation. Are you submitting testimony on behalf of yourself or any organization? Because I wasn't sure I caught that. But before you answer, I want to compliment you for your presentation and your efforts and your testimony. I greatly appreciated it, and you're a wonderful voice on behalf of the advocacy.
Well, thank you so much, Senator. I appreciate that very much. Yes, I'm speaking for both myself personally and my coalition, Affordable Families, which was the organization that introduced this bill via our sponsor, Jeff Curry and Liz Linehan.
Terrific. Thank you. Well, they should be very darn proud of you. Great job done. Thank you. Thank you, Madam Chair.
Any other questions? Okay, we will move on to Dr. Edelman, followed by Holly Hackett.
Good afternoon, distinguished members of Insurance and Real Estate Committee. I'm Ron Adelman, a practicing ophthalmologist and president of the Connecticut State Medical Society. On behalf of the physicians and physicians in training of Connecticut, thank you for the opportunity to provide testimony on prior authorizations. We have submitted the detailed written testimony. Most of our doctors cite prior authorization burdens as a major issue facing them and their patients. The health plan prior authorization process impacts the ability of patients to receive timely, needed medical care and requires physicians and their office staff to spend hours and hours each week trying to obtain medically necessary care for their patients. The problem is this. Prior authorization is an administrative hurdle that commonly delays access to care for patients and serves as an imposition into the patient-physician relationship, and also delays appropriate patient care. Prior authorization can harm patient outcome and create a tremendous obstacle to necessity treatments. Recently, the use of prior authorization has snowballed, and we have reached a point where prior authorization is required for a multitude of procedures, tests, surgeries, and medications that patients need. Ultimately, almost all services requiring prior authorization are approved, but sometimes it's way too late. It's after the patient has been already harmed. What's the benefit if the outcome is not good? It's too late. Thus, these prior authorization requirements are unnecessary, detrimental to patient health, and wasteful of the physician's time and healthcare resources. Prior authorization requirements invariably delay care and keep physicians on the phone for hours and hours, detracting them from the time that could be spent on patient care, explaining the management care, and healing people. In addition, health plans have multiple departments internally that deal with prior authorizations. Physicians may encounter one department or representative of the plan who will state that prior authorization is not needed. The service is performed, and then another department of the same health plan will now say that the service is denied, saying that prior authorization was in fact needed. In a 2021 survey of physicians conducted by American Medical Association, 93% of physicians reported that prior authorization created delays in accessing necessary care for patients. In the same survey, 82% of physicians reported that prior authorization can lead to patient abandoning a recommended course of treatment. In addition, 34% of respondents reported that prior authorization requirements had led to serious adverse medical event. More than 1/3 of the response said that there has been serious adverse medical event due to prior authorization. And one quarter of
Thank you. Your 3 minutes has expired.
have said that the patient needed hospitalization due to prior authorizations. Thank you.
Thank you, Dr. Edelman. Let's see if there are questions. Senator Anwar.
Thank you, Madam Chair. Thank you, Dr. Edelman, for your testimony. It's good to see you in person. You're like a world-renowned retina surgeon, and so I'm glad to see you at least on the screen because you're a busy person. I wanted to ask you a quick question. Because of macular degeneration, the timeliness of treatment, do you recall any situations where there was a challenge with timeliness of treatment because of prior authorization in some of these cases?
Absolutely. It's a daily situation for us. Macular degeneration is a blinding condition. It needs timely treatment, and it happens in older people. Like, I'll give you an example that happened this week. A 80-something-year-old person was brought by children for getting treatment for macular degeneration. And then what happens is we need to call to get authorization for the medication from insurance companies. It took hours on the phone before we could get the authorization. During that period of time, children had to go back to work. So they took the patient back home. Now they have to take another day off from work to bring their mom to us to get treatment. And this type of situation many times result in patients not getting treatment and affecting the impact. Not only delays the care, but sometimes actually people are not able to bring the patients in for the treatment. And this is in a lot of other situations it happens. I can tell you that in my office, I have one person half time is working on prior authorization for treatment of patients with macular degeneration. So that's a staff. Instead of that staff time to be used more usefully for healthcare issues, it's just on the phone. And sometimes we spend hours and hours on the phone to get one authorization. Now, in orthopedic setting, for example, it's not uncommon for a health plan to deny a patient a needed MRI, and then they say instead of MRI, you need to get physical therapy first, and then MRI would be approved. And the physicians many times know that physical therapy is not useful in that situation, and patient need the MRI, but for the checking the checkbox, the physical therapy is needed. And thus patient time is wasted, and also patient has to pay for the co-payment of the physical therapy and wait for a while until that physical therapy is done, and then MRI is done. So it delays treatment in many different ways.
Thank you so much for your testimony, and thank you for the work that you do. And I can't even imagine what it would be like to lose vision just because there's a bureaucratic process in place. Thank you so much, Dr. Edelman. Thank you. Thank you, Madam Chair.
Thank you. And just if I may add one thing to your question, sometimes there is a mention that prior authorization is because there have been an abuse of system, which I understand that, but we have the same patients who have same group of patients. Most of my patients are Medicare who have macular degeneration. With Medicare, our staff spend 5 minutes per day on the phone to get the authorization, and those are most of patients. And the minority of patients who are on private insurances, they spend hours every day. So if it's an abuse, how come there's no abuse to Medicare? And so basically there should be the similar rules.
Thank you so much for that comment. I think that's very valuable. Thank you, Madam Chair.
Thank you.
Thank you, Dr. Edelman. Next up, we have Holly Hackett, followed by Sam Hellmeyer.
Good afternoon, Representative Wood. Thank you very much. I have to get to my paper now. Apologies, I got interested in what the doctor was saying. Okay. Good afternoon, Senator Lesser, Representative Wood, and distinguished members of the Insurance and Real Estate Committee. My name is Holly Hackett. I am the Office Administrator at Keep the Promise Coalition and a registered voter in East Haven. You can see all of the other organizations I'm a part of, so I have a lot of background information dealing with healthcare advocacy. I'm here to testify in support of Bills 414, 415, 416. SB 414, please refer to Jordan Fairchild's, Tom Burrs, who just testified prior to me, Sheldon Taubman, and Ellen Andrews' testimonies. My personal point of view is a little bit different because I feel that it is due to the fact that the insurance companies do not want the state to realize that they are not following parity guidelines and Public Act 19-159, an act concerning mental health and substance use disorder benefits. The insurance industry does not care about people, only their profits, and continue to prove this. There are very few repercussions, if any, for the insurance industry going against our laws. Regarding SB 415, an act concerning step therapy, adverse determination, and utilization reviews, KTP supports this bill as we do support SB 414. Please refer to Jordan and Tom's testimonies as well. And as a staff member at Keep the Promise Coalition, I've heard too often what happens when our members fill insurance companies' recommended scripts instead of what the doctors ordered. The repercussions of this end up costing the healthcare system a lot more than if they just paid for the medication the patient's doctor ordered. The worst case scenario of a person losing their life to this dangerous standard operating procedure happens too often and for the money. Is a person's life and potential worth how much a stockholder's quarterly earnings check is? I have experienced this with my biologic medications. I have psoriatic arthritis and fibromyalgia. Due to my bleeding disorder, there are many medications I cannot take. If I had a less thorough doctor or I didn't understand my own conditions, I could have bled to death if I took the medications the insurance company recommended. And this has happened to me many times. Just to give you an idea of the exorbitant cost of my prescriptions, my Tremfya is $12,679 every 2 months. And the oral biologic Otezla Amon costs $12,585.34 for a 3-month supply. And my total prescription drug cost for January 2022 was $26,932.06. So I have a lot of experience as a person fighting for the medication that my doctors order.
Thank you. Your 3 minutes has expired.
Okay, well, you can read the rest of my testimony, and I would be more than happy to take any questions.
Holly, thanks so much for coming here today. I don't see any questions, so have a wonderful day.
Thank you. You as well.
Next up, we have Sam Hellmeyer, followed by Dr. Freeze.
Thank you, Chair Wood, Chair Lesser, and members of the committee. My name is Sam Hollmeyer, and I'm Director of State Affairs here on behalf of PCMA to oppose Senate Bill 415, but also to provide comment on Senate Bill 410, which deals with spread pricing, and House Bill 5447, which we think deals with gold carding. PCMA is the National Trade Association representing America's PBMs, where PBMs administer prescription drug plans to more than 266 million Americans. Senate Bill 415 would require the plan to bear the burden of proving that the provider has not made the best possible choice for a patient when making a decision on the course of treatment. We recognize the importance of the provider-patient relationship in the delivery of these healthcare services, but we, as well as our clients, want to ensure that the consumers have access to all the safe and effective medications, but also affordable medications when it comes to these prescription drugs. This bill would be an automatic cost increase for fully insured plans offering benefits in Connecticut. We predict that the removal of these tools, such as step therapy and prior authorization, would increase drug expenditures by an estimated 4.6% over 10 years, or $737 million. The way that PBMs price benefits for their clients would also be completely upended, which would result in increased premiums as well, as we've heard. No other state that we're aware of has a law like this due to what we think is the cost associated with it. I did hear Vicky Veltri speak before me today that they are working with stakeholders on issues such as this, and we're happy to join in that conversations on this topic. Next, to provide comments on Senate Bill 410, which is a study on spread pricing. There are two types of contracts that a plan can enter when working with their PBM, spread versus pass-through. I want to stress that either of these choices is a plan choice. In a spread pricing arrangement, clients choose the financial arrangement on how the reimbursement is done to pharmacies where it's fixed. It provides clients with more certainty in their pharmacy costs and allows them to budget in a more predictable manner. In a pass-through contract, the reimbursement negotiated with retail pharmacies is passed on to the client. The PBM then collects fees on those clients. This approach could involve more variation in costs due to what's going on in the drug pricing marketplace. An example I like to use for this is home heating oil pricing arrangements. You can pay a fixed rate, which would be compared to a spread pricing over the course of time, again, for that predictability. Or you can pay a flexible rate, which is compared to the pass-through model that is based on what the price of oil currently is in the market plus fees. As a consumer, you have that choice, and we believe that the same choice should be left to plans when structuring their PBM benefits. Lastly, I want to talk about House Bill 5447, which is a study on gold carding. Real quick, we feel that providers' gold card status should not exempt them from a plan's ability to implement additional safety checks that are currently in place to contain—
Thank you. Your 3 minutes has expired.
Medication utilization. Thanks for the time today, and I'm happy to answer any questions of the committee.
Thank you, Sam. I don't see any questions, and I appreciate your time.
Thank you.
Next up is Dr. Freeze, followed by Eva Bermuda Zimmerman.
There we go. Sorry, the video wasn't showing up. Hello, everyone. Thank you, representatives and senators, for taking the time to hear from myself and all my constituents with the Connecticut College of Emergency Physicians. My name is Dan Freese. I'm a clinical emergency physician in Hartford and the former president and current legislative chair of the Connecticut College of Emergency Physicians. I'm here today to testify in favor of the concept of Bill 5410 to look at the effects on high deductible health plans. And it is obviously a complex issue, and we are sensitive to the sort of seesaw nature of if you decrease deductibles, then you increase premiums. That's definitely reality. But I wanted to give a couple examples of how we feel that the current situation is not benefiting all your constituents of Connecticut or the healthcare field in general. I would also highlight the testimony of my illustrious colleagues and fellow members of the High Deductible Task Force, Ted Doolittle and Greg Schengold, who has spoken before me quite eloquently. But we in the emergency department see the effects of high deductible health plans almost every day. We both have issues with billing that were highlighted by Dr. Schengold, by the fact that we are mandated, which we're okay with, to see patients regardless of any ability to pay, and without the ability to even discuss any pricing involved in their care, or at least until they're stabilized. To then only receive 40 to 80% reimbursement on bills allocated to high deductible plans. That's tough for especially the independent private groups in emergency medicine who rely on some steady stream of income and have negotiated these prices with the insurance company. That this is the negotiated price for this service. To then have it allocated as much as multi-$1,000s to the person after an emergency is difficult to even expect them to be able to afford, considering the average consumer doesn't have more than $500 put aside for any medical emergency. These high deductible plans are much higher. Secondly, we see patients who have delayed care or avoid care because of high deductible plans. I frequently see patients who are no longer seeing their primary doctor or no longer seeing a necessary specialist because they have high deductible bills that are due to that provider, or they've been unable to pay those bills. And thus they're in my emergency department. I always push back against the concept of emergency care being expensive care, but it definitely shows a breakdown in the system and probably does increase costs overall to public health in general and to that patient when they end up with later stages of disease or injuries in medical conditions that aren't being treated. So we definitely feel that—
Thank you. Your 3 minutes is up.
I'll finish. That some limitations and regulation of high deductible health plans would benefit the consumer as well as the healthcare field. Thank you.
Thank you, Dr. Freeze. We appreciate you spending time waiting to give your testimony when you have really critical work to do. So,
fortunately,
thank you. Thank you. Have a great rest of the day. Next up, we have Eva Bermuda Zimmerman, followed by Laura Rubino.
Hello there. Thank you for having me. Good afternoon, Representative Wood, Senator Lesser, and esteemed members of the Insurance and Real Estate Committee. My name is Eva Bermuda Zimmerman. I am here representing myself for today. I was a former healthcare navigator for the state of Connecticut for 4 years and also a healthcare organizer with 1199. And in that experience, I have many, many examples of people who are trying to get into health insurance, trying to get connected to services, not sure how to navigate the healthcare system. But today I'm here to testify in favor of HB 5449 and act concerning certificates of need. As a former nursing home worker and hospital organizer, I have to say that in that process of trying to connect with your patient, making an impact on their lives, and on the flip side, those workers who do live in the district, everyone at the end of the day needs access to medical attention and access that is not an hour away or 45 minutes away, but immediate. As a resident in Litchfield County with our neighbors in Sharon, Connecticut, 32% of Sharon constituents are of poverty. They're in the poverty line, and they don't have the luxury to drive that 45 minutes to an hour. They don't have the luxury to try to do that sacrifice. And right now, when you're looking at the language that the bill currently has, it has the opportunity to expand and probably fix that ability of closing services. The language should include and more specifically state that no closure of services or consolidated entities should occur prior to the certificate of need or approval. Often the current statute does not always honor the certificate of need. For example, Wyndham Hospital, Rockville Hospital, Johnson Hospital, and Sharon Hospital all have different processes of closure or closure of services. The Litchfield County Hospital, Sharon Hospital, right now is closing their labor department. And it's just heartbreaking to hear the parents and mothers who are just creating all of these and scrambling. They're creating so much turmoil in their lives, trying to figure out what's next. And the scramble for the healthcare providers who love what they do. I'm appealing to all of you, imploring to all of you to change this legislation so that doesn't happen. We need more common sense language when it comes to the certificate of need process. Wyndham and Rockville hospitals have been fined by the Office of Healthcare Strategies, and some of the violations are looking at $65,000 to $118,000, but still it's not enough of a deterrent to stop major hospitals to close down significant providers and services that they have. And this is just an opportunity to clean up that language, give those constituents and those patients a place where they trust to remain with their services. So as a resident, on behalf of our Sharon neighbors here in Litchfield, I really ask that you look at this and you consider new language to make sure that this stops happening. So thank you so much for allowing me to testify. As I mentioned before, my expertise on this is the fact that I've been a healthcare advocate and organizer for over 10 years, and I've had over 15,000 people that I've personally registered in health insurance. And in that registering process, I've had many, many stories of how people need health insurance, but on the other side, after I get them health insurance, what happens to the services? If they don't have connections to their hospitals, then they don't have connections to services, and an hour away is not there. Thank you so much.
Thank you, Eva. I don't see any questions from the committee. Thank you for coming on and spending time with us this morning.
Thank you.
Next up, we have Dr. Rubino, followed by Sheldon Taubman.
Can you see me?
We can't see you, but we can hear you.
Oh, okay. I'm sorry. I think I thought I was all set for being able to see me, but I'm Dr. Rubino. I am a general surgeon and in private practice. I've been in practice for more than 20 years. I'm sorry I'm not as, I don't have a 14-year-old sitting next to me to help me with this computer system, but I have been in practice, as I say, in private practice for over 20 years, trying to circumvent this pre-authorization. The pre-authorization that we deal with in our office is arduous. And I want to say that over the past 20 years, it's gone from a simple phone call to now hours on the phone. And unfortunately for the patient, it ends up being something that we cannot overcome. I've had to hire a separate person in my office to do pre-authorizations because the amount of time on the phone is inordinate and unpredictable. We cannot get approvals online. And when we do get approvals, it's not a guarantee for payment. So we end up often getting approval and then they will change their policy and grandfather in what the time frame is that you have done a procedure, and therefore the procedure has not been covered. I will give you an example of this, and this I think will be very telling. I had a patient that I did a cholecystectomy, which is a gallbladder removal, who dropped a stone into the common bile duct, which was unforeseen during the surgery. She subsequently developed pain, and I wanted to get a CAT scan to evaluate her abdomen. I could not get a CAT scan ordered on this patient, and my office spent more than 5 hours talking to the insurance company trying to get approval. I was in the operating room. They eventually turned it over to the patient and said, we cannot get approval for this. Start calling your insurance company yourself, which she did. The patient called me in the operating room to tell me that if I just give the order to the insurance company, they would allow her to get the CAT scan. When I came out of the operating room, I called the insurance company. They would not approve the CAT scan and said, no, that's not true. That's not what we said, and that's not what we will do. If you can then send in her documentation, which has already been sent in, we will do this. And I explained to them that I'm in the operating room. There's no way I can send in her documentation. You already have it, and I don't know who has it right at the moment, but there's nothing I can do about this. So she said, well, we can't approve it at this point. I called the patient back, and the only way to get this patient evaluated was to send her to the emergency room. So she incurred the cost, or her insurance company incurred the cost of her being sent to the emergency room.
Thank you. Your 3 minutes is up.
She was evaluated there. She was found to have this stone. She became septic, which means that she had to be transferred to a tertiary care center because we couldn't take care of her here because we didn't have the doctor to do that. And then she ended up in the ICU, intubated, and, I guess a week, pretty sick, and then recovered. So it was this type of thing that is so difficult for physicians to withstand. I think that you're taking private physicians out of the private force, because I would just turn this over to my big, insurance company, office practice manager, and they would just kick it up the line. And if the patient couldn't get seen or done, she would again get sent to the emergency room. But this is incurring costs for the insurance company and delay of care for patients.
Thank you, Doctor. I'm sorry to cut you off in the middle of your testimony, but we do have a 3-minute limit on public comment, and but we did hear you and appreciate your testimony. I don't see any questions from the committee, so thank you so much for spending time with us this afternoon.
Thank you.
Next up, we have Sheldon Taubman, followed by Dr. Russo.
Good afternoon, Representative Wood, Senator Lesser, other members of the Insurance and Real Estate Committee. My name is Sheldon Taubman. I'm the litigation attorney at Disability Rights Connecticut. We're the protection and advocacy system for Connecticut, serving individuals with a full range of disabilities. I'm here to testify about the impact of SB 415 and SB 416 on people with disabilities. First, regarding 416, disabled people not on Medicaid face significant costs due to higher and higher hospital-based prices and anti-competitive practices by large hospital systems serve to drive up those prices. Even if people with disabilities are insulated from premium increases due to employer or exchange subsidies, they still are saddled with paying co-insurance for a lot of hospital charges. They pay a direct percentage of the charge, so as the hospital prices go up, their own costs go up. And overall, people with disabilities use more hospital affiliate services than do non-disabled folks. Turning to 415, exempting from step therapy any drugs for treatment of, quote, a behavioral health condition or a chronic disabling or life-threatening condition or disease. This would significantly benefit individuals with a wide range of disabilities, who currently find their access to treatment blocked. Of course, step therapy is not about therapy at all. It's insurers interfering, quote unquote, therapeutically, but only to get a cheaper drug out there. It is like calling capitation prepayment and then pretending it's no longer capitation. A better term for this is really fail first. Fail first is particularly problematic for people with mental health disabilities for several reasons. One is it's a challenging situation for providers trying different drugs which cannot be fully known in advance will work for which individuals and have very serious side effects. Also, some of the behavioral health drugs have permanent side effects which will persist after the experiment is ended, and fail first will likely delay crucial medically necessary treatment, placing people with mental health disabilities at risk of harm and costly restrictive institutionalization, or even suicide. The Medical Society, in its written testimony, urges the prohibition on all failed first requirements. I recognize the reality for providers of patients with behavioral health and other disabling conditions, particularly in a difficult pharmacological environment, and I call your attention to the testimony whenever we talk about a seizure medication situation. Given the severe side effects of these drugs and the results of delays in appropriate treatment, exempting at least these drugs from fail first will significantly improve access to appropriate therapy for people with disabilities. I did want to address the false claim made at the hearing on Monday related to a similar bill by the insurance industry, saying there's protections in the bill so you don't have to worry, in the existing law, so you don't have to worry. One is that you only have to be experimented on for 60 days, and the other is that there's an automatic override. 60 days can be a lifetime with the wrong medication while the clock is ticking away for suicide. Second, there's nothing that's automatic in the statute at all. It says that a provider may request at any time an override of the use of any step therapy drug regimen. And then the reviewer will review based upon whether the provider demonstrates that certain requirements are met. This is hardly automatic, and it's all the clinicians have
Thank
testified.
you. Your 3 minutes has expired.
Okay, I'll just wrap up. As the other clinicians have testified, the reality is that the overrides are very difficult to get. And the last thing I did want to mention is that 415 also will address the related burden of insurance companies routinely second guessing the judgment of treating providers, as you've already heard, and requiring a rebuttable presumption in favor of the provider in prior authorization reviews will significantly benefit people with disabilities, especially those with multiple conditions. Thank you for the opportunity to speak with you today. Appreciate it.
Thank you, Sheldon. I don't see any questions, so we appreciate you coming here this afternoon. Next up, we have Dr. Russo, followed by Susan Halpin.
Yes, I guess good afternoon, Representative Wood and other members of the committee. I'm Dr. Bob Russo, the Chief Medical Officer of the State Medical Society. What I'd like to do in 3 minutes is to tell you how to solve some of the problems with pre-authorization that has come up in Bill HB 5447. First and foremost, we need to modernize the system. Right now, the only use of a fax machine in a doctor's office is for these pre-auths. There's no reason that the pre-auth cannot be integrated into the computer systems. In short, we have MyChart, we have EMRs, we have all sorts of drop-down menus. If we were allowed then to use those systems to get a pre-auth with a time limit, meaning that if you could drop down a menu, ask for the pre-auth, and within 24 hours get it, the physicians wouldn't have the problem with delayed care. We also then would know what is behind the drop-down menu. One of the problems you heard earlier, especially Ted brought it up, I believe earlier, there's no uniformity of what everybody demands. Medicare is one thing, the different ASOs and the different commercial products have all different criteria. Although they all claim to be based on the same medical database, they aren't actually the same. So if you link the patient's insurance to the drop-down menus in the EMR, we wouldn't have that problem of having to ask what the patient knew about their own insurance. That's one. Two, it needs to be extremely more transparent. We need feedback about when we're denied, why we were denied. Not that it was denied. Sometimes the patient gets the notification before we do. We get a lot of calls about what's happening and what didn't happen. We also think that the gold card system is only the first step. What that means is, but if you're doing it correctly, there's no reason to have to do the same thing over and over and over again. So if there's a database that says every time I've applied, I get an 80 or 90% approval rate, why do I have to keep doing the same thing when it takes hours to do it? And as we're trying to entice people to practice in the state of Connecticut, you see these barriers being set up with administrative problems where I think Dr. Adelman pointed out, it takes 2 hours sometimes to get an approval for a macular degeneration, which is an extremely common process. We just can't expect solo and small practices to be able to take that burden and then not look at the big corporate practice and say, that's a much easier life to live. Dr. Rubino pointed out, I could just pass that on to case management. So I think it's important, if we want to preserve our private practice, we want to preserve the hassle factors and the stresses that we're putting the physicians under, that we really need to modernize this system, and it's easily done. Texas did it. And there's a lot more, almost every state now, the medical societies are beginning to ask, take this administrative burden off of us. And in Connecticut, with the fax machines and the phone calls, it makes no sense when I can get a lab test, I can get an imaging study all on a click of a mouse. Why can't we get the pre-authorizations the same way? Why can't we figure out?
Can you please summarize?
Sure. Why can we not figure out what's behind the curtain, this Wizard of Oz type thing, where everybody says proprietary, we can't tell you why we denied you. That makes zero sense when you treat patients.
Thank you, Dr.
It's in my
Russo,
written testimony.
Thank you. We appreciate all the time that you have spent with this committee. I did look into the using of fax machines and phones for prior auth. And the response I got was that there are still doctors that want to use this type of technology. So I don't know if you have any comments to that, but if we required everything to be done electronically within a 24-hour period, would there be a phase in? Would we stifle any sort of communication between a provider and a carrier? I just want to make sure that, we don't pass something that then we're saying, oh my gosh, we have to go back in and fix it or spend tons of money on. Just want to get your feedback on that.
Right. Well, right now in Connecticut, we have an operational HIE, the Health Information Exchange. You can use that. The insurance company, by the way, could use that same database if they participated, and to be able to look into the patient's chart and lab work. They wouldn't have to have us go back through it on paper and then file it again. So, and I believe the state has a requirement coming up that there's a time limit that you have to be in an electronic medical record. So it isn't something that we're asking for just for pre-auth. It's going to allow OHS and some of the others, Ted's group, Ted Doolittle's group, to be able to look at the databases now. We'll be able to compilate data and get some feedback. So no, I don't think it's a problem for the small practices, because they're also going to be on the HIE. They're also going to be part of these databases and would be able to do it.
Okay, well, that is very helpful. We do want to work on this issue. We hear the same stories over and over again, and I do appreciate your boots on the ground feedback on how we can help small doctor groups. I want to go to Representative Pavlak Tomato for questions.
Yes, thank you, and thank you for your testimony. Yeah, I agree with you. I know it's not probably as far as the just pull up your notes. Probably as far as the facts and technology, I know it. Whatever language we might have right now is not or will. I know I've seen in some drafts may not be enough, but that's something I do want to focus on. But I agree with you. I don't even own a fax. I don't even know anybody under 80 who does. I mean, it's bizarre, but and like you said, the integrated systems, I think they're already there. So, and there's requirements going forward. So it just makes sense. The 24 hours, now, I guess would you differentiate that? I think there's, and well, let me ask you, is there a current requirement that if you're in a procedure and then there's one that is, as you're in there needed due to an emergency, or rather than, getting out and going back into the patient. Is there an exception for that already for certain procedures and pre-ops?
Yes, there is an emergency authorization. Of course, the problem we have with that, it can be retro denied. If it happens on a Saturday night or Sunday when there's nobody on the other end of the fax machine, you can get emergency authorization. And actually, that's the reason you'll hear from so many ER doctors that the way around the problem is to just send the patient to the ER, because the ER then can perform the service as an emergency. It probably adds to the cost, but the 24 hours, what would happen if you integrated it into MyChart or HIE or whatever electronic system you want to use? The system would have the answer. You would know that when you clicked on it and said, I want an MRI because this patient's got osteoporosis and hip pain, it's going to be, it could instantly be approved because it'd be in the software package. The ones that would take longer are the ones that are more complicated, or there was more homework that needed to come out of the chart, which if it's in the HIE or and the insurance has access to, say, MyChart, they would be able to go into the chart and look at an x-ray result or do this, that, and the other. We wouldn't have this fax back to the office when the office may not be open. Next time the office opens, it looks for the report, it faxes the report back and forth. I mean, it's archaic in today's world. I mean, I can make a hotel or a dinner reservation and get the answer instantaneously. Why could I not do the same thing with these pre-auths? It would be easy to back up the information and link it to each insurance company. So the concept of, well, our system is proprietary. Well, it would be if it was hidden behind the forms on the internet. So yes, the purpose of the 24 hours is to get it done. Remember, a lot of the patient problem comes from the delay waiting to get that. And there's no debate. What happens if back pain is the famous one with MRI, you are told to go do other things before you can get the MRI. If you had the chart in front of you as a physician, you'd be able to look and say, well, no, wait, this is an 85-year-old with osteoporosis, already had one hip fractured from, bone loss. She needs the MRI to see if the hip's fractured. She doesn't need 6 weeks of PT, which, by the way, might fracture her hip. So, I mean, I think you can build enough in the background of these systems that could easily answer the question.
Okay. And you had given an example of some type of dystrophy that I think it was a common procedure that still needs pre-approval. Like, what is? Can you just what is that? Just so I can understand.
The ophthalmologist, Dr. Edelman, mentioned the fact that a lot of what happens in his practice, the thing he had mentioned is macular degeneration. That's where the center of the eye begins to go bad and you begin to see double vision and you have blind spots. But there's also retinal detachments and hemorrhages. That's a very time-limited thing. It needs a pre-auth. If you need to get the pre-auth and you have just a limited amount of time to get to save the eye or save the vision, that's the argument. What happens if it gets delayed because your fax machine doesn't work or the other side doesn't work and you're making phone calls at the wrong time and you're not talking to an ophthalmologist? Usually you can get to a physician, but it may not be in a specialty at the level that, say, a Dr. Edelman is or Dr. Hemmel or somebody like that is. So that's our problem. It should be easy to fill out a form, find out you're doing the proper thing. That's the object of the gold card. Figure out you're doing the proper thing and then be able to move on with the care, because the quality of the care and the quality of the results is based on the speed of the performance. It just shouldn't be hung up over fax machines. It's just ridiculous, in my opinion.
Okay. I know we probably, and I know we need or could use some assistance with language. So, if there's any, I'm sure your email is on your testimony. If there's a way we can reach out,
Absolutely.
And that would be very helpful. Thank you.
Thank you. Yeah, we'd be more than happy. And we have tried and more than willing to help do it.
Yes, Doctor. So thank you for all the time you've spent with our committee. We appreciate it.
Thank you. Take care
Next
now.
up, thank you. Have a good one. Next up, we have Susan Halpin, followed by Scott Walter.
Good afternoon, Madam Chair, Senator Lesser, Representative Pavlak D'Amato, and there he is, Senator Wong. So strange on the Zoom, but and to all the members of the committee, my name is Susan Halpin. I'm here today on behalf of the Connecticut Association of Health Plans. I have submitted a number of pieces of testimony, written testimony on many of the bills on your agenda today. Before I go on to the main bill that I want to focus on, I just want to touch on the previous speaker's comments and something where we agree. Dr. Russo talked a lot about the HIE and electronic health records. Where I would disagree with him is I don't think we're there yet, but I think we're getting there in terms of that interactive exchange of electronic information. And honestly, a lot of the issues that have been raised today really speak to the need for the study that the bill HB 5447 talks about. I think there are conversations to be had among the communities, and we would be welcome parties to those conversations. Less than 15% of procedures that I've been told are actually prior auth. Some plans report it's down around 3%, but experiments with gold carding and studies around gold carding have actually demonstrated that while they work for a little while, the change in behavior is temporary and utilization creeps up very quickly. And all of a sudden, there is, an enormous number of procedures being performed. And those are studies that have been done by the New England Journal of Medicine that I'll be happy to share with the committee. So long story short, I think a more in-depth conversation as a study is warranted. I wanted to spend most of my time, which I've probably already used up, on Senate Bill 415 today, an act concerning step therapy, adverse determination, and utilization review. I will say that this is really several bills in one. It is not one bill. It is a bill that we have testified on before. We believe it's the single most expensive bill that you have or will consider in the near future. It will have a number of impacts to the fully insured market and to the self-insured market. It presumes anything is medically necessary unless an insurer proves otherwise under appeal. Insurers do not have the information that would it really upends things. As the previous speaker, Sam Hallemeyer, said, I'll associate my comments with him. The step therapy provisions you heard him speak about, and the clinical peer provisions, which would require it's a very small change that goes from similar to same, and it would have to have an appeal looked at by the exact same subspecialty that is happening, which would really grind the whole prior auth purpose to
Thank you,
a halt.
Sue. Your 3 minutes are up.
Yep, got it. Just in closing, I just want to say that, there's a lot of figures out there about the amount of unnecessary care that is delivered. 65% of physicians reported that at least 15 to 30% of medical care is unnecessary. There are estimates by the Institute of Medicine that suggest 200 to 800 billion is wasted annually on excessive treatment and testing. And I think you could find a lot of those other statistics with a quick search. So in closing, we oppose and look forward to working with the committee on any and all of these bills going forward.
Thank you, Susan. I do just want to elaborate a little on the cost. I was just reading an OFA report. I believe this bill has been in front of the committee for years, and that seems to be the hang up. It did reference a cost to fully insured individual and group plans, as well as partnership plans that our municipalities are paying for. It doesn't give a specific number, though, which is very concerning to me. Saying that this is going to raise health insurance premiums is one thing, but what kind of cost is it? I mean, I'd really like to see the per plan rate. And would your group be able to get that for us? I mean, how can we dive further into that?
Very good questions. And we did some initial analysis and projected that the impact for fully insured and small group market plans is 68 million to 92 million. And that for large employers, it's about if you were going to go into the self-insured market, it would be between 330 and 450 million. I think that might have even been for one plan. But it's very hard to calculate the impact of what this legislation would be. And I think in addition to that, fiscal notes are great. They tell policymakers what the impact is to the state, so to the state employee plan and the partnership plan, and it also makes reference to what the impact would be to municipalities. But what it doesn't do, what a fiscal note doesn't do, is talk about the impact to the small business or the employer market. And it doesn't talk about what the impact would be to the plans that are sold on the Affordable Care Act exchange, known as Access Health CT. And, this is complicated actuarial analysis. And I think in order to do that, we've long argued for the exchange should be part of the fiscal note, right? So that would give you an idea of the impact to those employer markets or individual markets that's out there. But it's almost so large at this point, we really can't calculate it. It really would upend to things. It probably would return us to much more of a fee-for-service market, where back when I first started working, we had an 80-20 rule where the health insurer picked up 80% and the person picked up 20%. And that didn't work out very well, which led us into the managed care arena. But good question. We'd love to, actually work through it, but it's very difficult the way the bill is structured.
I do have a concern about people that were testifying prior to you calling this a fail first approach.
Mm-hmm.
Do we have any numbers that show that the step therapy, that the lower costing, say, generic drug or generic therapy that is offered as that first step, like how often does that actually work? Is it 100% of the time it doesn't? And that's because those numbers would really scare me. That would be a fail first bill or a fail first approach. But, is it more of, 50% of the time the lower costing therapy or drug is actually working? I don't know what the different steps mean for people, because that fail first approach is really scary for us, because we want people to have access to quality care, like the best therapy and drugs right out of the gate. And speakers prior to you did reference that a lot of the time, those first, cases don't work. I don't know if you have any data or feedback on that, because I think that'd be really helpful for our committee.
Sure. And I have been asked by others to gather that data. So we are pulling that together and we'll share with you what I can. I think it's important to understand there's two sides of step therapy. What's been referenced really is the cost side. There's another side, which is the quality indicator side, and the fact that step therapy regimens follow evidence-based practices. So when we talk in theory or in principle that we want to follow evidence-based scientific, practices, we often don't recognize that the implementation of that are through processes like step therapy. So there are a lot of drugs out there that treat the same things, right? And you want to start with the most efficacious, the one that has been demonstrated to work with the least amount of side effects. And of course, cost is, a consideration. I mean, if you pulled this bill through to its conclusion, his natural conclusion, no one would get generics anymore. If a provider writes a brand name drug, the top of the line, newest drug, least understood drug on what the impact will be, then it's going to be approved. And I think if you drill down on this, most people would agree that's not necessarily the best medicine or the best approach going forward. And there may be a need for those medications, right? If something that has proven to work in 80% of the cases doesn't work for you, which does happen, then that next level drug needs to be tried. There's also differences between brands, exact same brands. There may be two brands that are one is considerably more expensive than the other, you know, and I should have added there's a third piece to this. There's quality, there's cost, and then there's affordability of a health plan. We can cover everything. You know, I know car analogies have gotten in trouble here, but we could have an automobile policy that covers windshield wipers and oil changes and car washes and tires and brakes, but nobody would be able to afford auto insurance. So we can't talk about you know, cost control, and you spent a lot of time on affordability this morning. You can't talk about those things unless we talk about the underlying cost of care. And one of the fastest growing underlying costs of care is pharmacy and pharmaceutical company interactions. So we can't have one discussion without the other. I know that doesn't give you the data that you were looking for, and I will do my best to get back to you on that, but I just wanted to kind of give that landscape.
And just to follow up, are providers encouraged to use different priced drugs, or do they look at it? You know, I mean, I don't know. I'm not a doctor, so like, you know, what, like, how are they picking a generic versus something that's the latest to the market and is, you know, on the commercial every day? Like, are they, you know, said, hey, this, you know, I don't really know how they're, you know, picking which, you know, medication to use. I don't know if you can give us some background on that.
Yeah, I mean, you're asking, you know, a question that's been, you know, talked about a lot, and it ranges from, you know, the pretty heavy advertising that's out there for certain drugs, and I notice my demographic because I'm probably one of the few people that still gets my news through the nightly news. And if I watch the nightly news, I see, you know, I think every other commercial is, or every commercial is a drug pharmaceutical, or you know, a pharmaceutical drug. And so it plays a large part, as does, you know, the pharmaceutical reps. I mean, I've certainly been in doctors' offices where, you know, reps come in and are, you know, sharing their product and asking doctors, you know, to utilize it. I think most doctors don't. I think they know what the generics are and what the formulators are. And, you know, I've certainly had doctors say to me, you know, these very expensive biologics, we're talking about hundreds of thousands of dollars for a drug, you know, for an arthritis drug. You know, I've had a doctor say to me, you know, it's like taking chemo. You could lose your hair, you could do this. You really want to try this and manage it over here first, rather than go to that step. So I think that that is certainly part of the equation, but you can't divorce the two. I mean, you can't divorce the heavy marketing and the heavy advertising from, you know, prescribing use, even if it's not intentional. It's certainly, you know, part of the process.
Okay, and I apologize, Stephen, I just want to ask one last question. Because we have the opportunity to ask the carriers all of these questions. So it's like the time that I get to like stockpile all these questions that I have from previous speakers. But if we were to say that carriers have to use HIE, which again, I'm not, you know, familiar with this, to do prior auths within a 24-hour period. And we implemented that for the start of January 1st, 2023. Is that something the systems can handle?
I'll certainly take it back and ask, but my gut says no. I don't think it's just on our side, on the carrier side. I think it's also on the provider side. If you've got a wider response, there's a lot of electronic transactions that happen today via prior auth and other means. I think that there's been a lot of movement. You know, this is the third try that Connecticut has made to stand up an HIE. The first two failed. And they failed for a variety of reasons. You can do the research on it, but this one seems to be moving. But it's still in its infancy. And, I think you have to, I get my analogies wrong all the time. My husband yells at me, but you have to build the structure before you can implement. And I think somebody said that before me today. You have to make sure that the infrastructure is there before you can drive the cars, over the bridge. And I think it's coming. I think some of this frustration is going to erode organically over the next couple of years. I'm not going to say that there haven't been problems with technology, as we all experience doing these kinds of calls every day. There's always some bumps in the road, and we have to figure those out. But we did these working groups like you suggest under this bill before. We did it around clean claims. We did it around clinical trials. I think there's benefit to that kind of conversation before we implement a proposal.
Okay, I'm not in love with that answer, especially because we're in 2022 and I just expected technology to be much further along, but I would like to talk with you more about that offline. Thank you so much. Representative Masters.
Thank you, Chair Wood. Susan, I think our chair is correct. Even though I think her mother is the same age as I am, even I am using technology. So we need to get with the program on the insurance side, on the submission of claims, on the adjudication of authorization, et cetera. We had a conversation yesterday. I think we're a constructive pro. I think we care about the insurance industry as it represents an important part of our state, but we represent our constituents. We need, everyone has to, walk and chew gum at the same time. So we need to move forward on that. So I just want to give you that thought. Apart from that piece of marginal tongue lashing, was there something you didn't get to say in your testimony that you thought was essential in the bills before us? Because when I asked that question, give you potentially more time than the 3 minutes.
I think if I could just spend a moment on the high deductible health plans. I think it's important to have a little bit additional perspective. We appreciate the intent of where House Bill 5410 is going to provide relief on the deductibles. I think it's very evident. If you look at the exchange has 3 metal tiers. You hear about them often: bronze, silver, and gold. And those are all set up in accordance with benefit designs that are developed and approved by the exchange board. The lower end of the plans are the bronze plans. They have higher cost sharing, but lower overall premiums. And if you did the math overall, it would have a lower overall annual price. The gold plans are available and they have much lower cost sharing, deductibles, copays, much lower, but they have a higher premium and folks have the choice. I think if we look at the bill that's before you, and this was news to me as well, it would eliminate the bronze level on the exchange. And it's an unintended consequence of the legislation. I think the conversation is important. I too was a member of that high deductible healthcare task force and participated in those conversations. But it's the balloon effect. You're going to squeeze one end of the balloon, it's going to come out the other. The other side, you squeeze the other end, it's going to come out on the front side. I will say, I don't think we would be
Susan, sorry, let me interrupt you. So the concern basically, ultimately, this is an attempt to shift the burden on collection on the high deductible plan from the physician to the insurance, but it's not resolving the problem. There are people who are buying high deductible plans. If I put words in your mouth or if you agree, there are people who are buying high deductible plans who potentially shouldn't be buying them. because they will be unable to make the payments. And you're just questioning whether it's to put the collection onus on the insurance companies or on the physicians. So the question may be, do we have the right gateway in terms of financial wherewithal? Would that be fair?
I think, first of all, there are legal reasons why an insurer could not collect the deductible for a provider. That's the nature of the contract that's been entered into. I think you're familiar with the HSA fix issue on another bill.
Right.
I think there are requirements that the person who's using HSA dollars or their own deductible dollars, they have to pay the physician directly. There are some experts out there that I would be happy to put you in touch with that testified before the high deductible healthcare task force on this very issue. So I would be glad to get back to you. But I think
we need to study it then, because the question is
yeah.
collectability of that high deduction and the burden on the hospital, the burden on the physicians. And you're telling me you can't accept it. We need to have a conversation about what's the solution on screening on the sale of high deductible plans and people's ability to participate and adequately service them, because I'm hearing from the physicians they're not collecting either. So there's a problem.
I can tell you what happens to me when I go to the doctor. I have to pay up front a lot of times. So, they're getting, at least in some cases, in my case, they're getting the funds, although I know enough to say, I'm going to wait until my insurance company pays the difference. And I will say everything is moving digital, right? I mean, I think there's, and I don't want to leave you or the good chairwoman with the impression that we are not electronically sophisticated. We are transacting claims and prior auths and all kinds of things electronically every day. I think the system as a whole is not ready, not necessarily insurers. You've got to remember, you've got to have connectivity with hospitals. You've got to have connectivity with labs. You've got to have connectivity with imaging companies and to get MRI results and x-rays and CAT scans. All of that stuff has to kind of be in one central repository in order to pull the trigger on a January 1, 2023 date. I just don't think we're there as a system, not as the carriers, but as a system. I also will tell you, particularly on behavioral health, we're still taking paper claims, because when we talk about individual docs practicing in the market, there are still onesie twosies, or single shingle docs that are submitting paper claims. Birth to 3, which is kind of a state-run program that submits a quasi-state-run program that submits claims to health insurers. We're still taking those claims on a paper basis in many instances. So I guess I want to leave you with the impression it's not the insurers necessarily, it's the system as a whole that has to get there. I think it's moving. I think the HIE and the challenge, right, is we put laws into place and then it takes a lot of time for them to come to fruition. You all took these steps a few years back to put this HIE in place for the very reasons you're talking about today. It's under the Office of Health Strategy and it's moving forward.
And lastly, as we are moving or trying to move forward on the issue, I mean, there are the questions about pre-authorization, gold carding, et cetera. I hear your concerns. I don't know that I'm prepared to approve gold carding because I'm worried about the ultimate cost. But if we are going to flexibilize the authorization process, it would be helpful to hear from you and from the industry. What are we doing in terms of tort reform and liability insurance? And are there other pieces, when we talk about that balloon, are there pieces of the regulatory framework that we should be bringing to the table to reduce the cost of insurance while you're worried that an open claim process will increase the cost of insurance? I want to look at both of those issues. Like if there's a horse trade to be done on tort reform with improving access, right?
Mm-hmm.
Because so far in the last couple of days, the only thing I've heard is I need to either improve access to healthcare or I need to pay people more money, which ultimately is going to hit into my insurance premiums and raise the cost of my product. So we need to move outside some of the boxes on tort reform and other things to think as well. Because obviously today you're defending your industry against measures that you think will increase the cost of healthcare and therefore the cost of premiums. And that may not work to improve the outcomes either. So let's take the next step is, are there other regulatory reforms we can do to reduce the cost? So let's have that dialogue, please. No
Thank
further
you,
questions.
Representative. And I did hear you mention that the other day, and I think you are right on point on that. I think a medical malpractice liability insurance is something that should be looked at. I don't think it's been looked at by the legislature in quite some time. I'll leave it. I heard some of the testimony. I'm not sure who presented it, but talking about the exorbitant costs for OBs and how that's impacting practice in Connecticut. So I would concur that that is certainly an area that we can all focus on to bring down healthcare costs overall.
All right, thank you much.
Thank you, Brett Meskers. Definitely a topic that we will take up outside of session and hopefully hit the ground running with. Senator Wong.
Thank you, Madam Chair, and welcome, Susan. I wanted to ask some questions in regards to step therapy, and make no mistake about it, so many of the things that we deliberate over the insurance as it relates to insurance mandates are good ideas. They're well-intentioned ideas. But I think you elaborated a little bit, but can you go a little bit further in regards to what the cost? We don't have a true fiscal analysis, and I think you articulated it can be complex. But what is clearly obvious is this is not just simply a one cost mandate, but it has a potential of a multiplier effect. Would that be correct?
Absolutely. No question. I mean, once that gate is open, it's not going to be closed again. And I think you just have to, there's only so far you can stretch the dollar, the healthcare dollar, and over 25 cents of that dollar right now is going to drugs, between 20 and 25%. So, we talk about, we want to pay behavioral health providers. We talk about, we want to, incent value-based payment arrangements. That doesn't leave a lot of dollar left for those other priority initiatives we're talking about. And it's increasing dramatically every year as well.
I hear you on that, but I'm going to be devil's advocate in this, in the sense that we hear the healthcare dollars being squeezed, the insurance dollars being squeezed, but the challenge is, in a small part, you're hearing that your revenues are at incredibly high levels, your compensation levels are high. Can you differentiate between the cost of doing business and staff costs versus the administration of plans that articulates the dollars that you allocate for care versus the administrative? Because I must say to you, that is one of the hardest positions that you have to take is, right, we're squeezing the dollars, but when I hear multi-million compensation packages for executives, you can see how the public can sometimes just kind of shake their head and say, boy, where's all that money going when it should be going into the challenge of patient care? If you may indulge me in being a devil's advocate on this.
Sure, I'd be happy to. I think you heard somebody say earlier, this is an enormous industry, by the way, which is 30,000 plus jobs here in the state of Connecticut. The volume that comes through the health plans is very large. So some of the numbers that you hear are in that context. Health plans are typically making between 3 and 4% profit a year. I guess you have to look also that we're the only part of the process. You all have spent a lot of time talking about price caps on pharmaceuticals this year. We are the only segment of the industry that does have a medical loss ratio cap on ours policies. We have to spend between either 80, depending on the market, or 85 cents on every dollar on medical care. There is very sophisticated definitions on what counts as medical care versus what counts as administrative dollars. And If we go over that, we are required to refund dollars, checks to employers or individuals. So again, I feel like we've been having this conversation for a very long time. We've been talking about affordability. I think there have been a number of restrictions that have been placed on insurers and their processes. At the same time, they're being asked to assure affordability of plans for purchase. And we have to look at it holistically and understand the consequences of a number of proposals that have already been adopted and put into statute, or on the table to be put into statute. And just putting on a typical insurance hat for a moment, insurance likes predictability. They like to understand what they're pricing. We talked about the affordability factor. How do you price something that is so subjective? I want to talk also about in that pricing structure, we talked about the high deductible healthcare and prorating the deductible. When you're an actuary and you have to figure out a pricing model, and you have to think about how many people might join, might leave the plan, might leave the employer, might join the employer, might have a prorated deductible. I mean, I think Ted Doolittle mentioned that if somebody pays their premium in November, they get no benefit out of their deductible. I guess I would argue it the other way, which is if somebody pays a premium in November and they get in a car accident, God forbid, and they have, enormous medical bills, and probably a car accident isn't the best example, because when we talk about, I hesitate to go down this road, but when we talk about clawbacks and money, and I won't say clawback, but recoupment, that sometimes is because of something called subrogation, where that claim was the responsibility of an auto insurer, right? Because it was associated with a car accident, and it was first line of payment, it comes from the health insurer, right? So at some point you have to marry those things together. But in going back to my initial example, if somebody has those high cost surgeries or other medical costs, they're getting far more than what they paid in the premium in that month of November and December with a prorated deductible or a full deductible. So, but that's the nature of the actuarial science that goes on behind the scenes in pricing products. I hope I answered your question.
Well, it's going to be a constant refrain, because it is a complexity. We hear that, but ultimately people see it very viscerally and emotionally when you talk about healthcare. And obviously it's a lot of money and something that people hope they'll never have to use. That being said, I also want to, and thank you for the indulgence, Madam Chair, is for a second question is, one of the impetus for this is the frustration of patient care, that people have illnesses, loved ones that are impacted by difficult to diagnose and treat cases, and they're rejected. I think the power of that rejection and the force of that lack of personal interaction is what's fueled a lot of the impetus for this bill, for the second opinion and the different step processes. Has the organization, your member organizations, reevaluated your internal operations? Maybe we don't need a law to mandate these kind of requirements that add extra dollars, but perhaps as the organizations, your clients, looked at a review process, customer service process, notification processes that are much more, or have caseworkers that are much more extended, and develop a relationship for these kind of complex and challenging patient care, to really explain why pertinent generics and certain approaches that the insurers are suggesting is making sense because of your experience, your actuarial analysis, your nursing expertise in your organization. I think one of the biggest frustrations we have heard in testimony, Susan, is the impersonal rejection and the lack of communications or rationale from many of your processes that to reject a potential in the minds of consumers that have paid into the premium, that potential life-saving, life difference positive making approaches are being rejected on a form letter is something that really causes the ire of people. Has the organization considered internal structure and an investment in customer relationships?
Yes. And I appreciate the question. I can say, there are innovations happening all the time. I don't think I think carriers are well aware of the frustrations, and I think they are looking at what they can do to address those. A lot of that is digital solutions, and working in that area. I mean, I know even myself, who's in the business, I only recently started using my health plan portal, right? There is a ton of information on the portal, right? And my carrier wouldn't give me my insurance card until I signed up on the portal. So I had to do it that way. I'm not sure that might be in a self-insured environment, but it engaged me in a way that I haven't been engaged before. I can also tell you that I've received communications from a PBM that said, here's the medications, you're on or your family member is on. Did you know that these are, you could consolidate 2 of these, or that there's a drug interaction between 3 of these. And, I think that you're right. We probably could do a better job of explaining some of the reasons for denials. We do have to post all of our prior authorization requirements and clinical protocols online, and those were laws that you all passed. But there's very good reason for a lot of this stuff, and even denials. I understand the frustration. I understand there are things that folks want to, to have go through the process unanswered, unquestioned. But, if you think about drugs, and I know this is a big topic of conversation, so again, I hesitate to go down this road, but you're talking about in other committees and in some of these committees, off-label uses of drugs. And, it can be hugely beneficial. But I've been around since the pain management debate for opioid use. I remember going into legislators, much like yourselves, and saying, our medical directors are saying that this pain management mandate is going to create an epidemic. And I was kind of laughed out of the room at the time, right? Because the whole objective was to ease pain. And if any of you have watched the Hulu show Dope Sick, you will see that the providers were unwittingly, pulled into that, and nurses and doctors and everybody. There has to be a check and balance somewhere. Perhaps the checks and balances aren't perfect. There is an appeal process in statute. Connecticut was the first one to put that appeal process in statute. It's been the model used in the rest of the country. If you ask the Department of the appeals that have come, you will see that about 50% are found in favor of the consumer or the provider and 50% in favor of the health plan. That tells me that there are legitimate disputes over certain medical practices. Should certain drugs be given to kids under 12 years old, off-label use that have not been approved by the FDA? I would want somebody looking at that if it were my child, and at least, if I go through the appeal and my doctor says it's really important, then I'm going to look for it. And I know we're in a crisis situation, and my heart goes out to people, and I've been there with people, and I know what it's like, but you have to look at it as a system and not always on an individual level. And I think too often we're looking at things on an individual level.
I appreciate that, Susan, and your experience is valued, your insight is valued. But I'll share with you, you are going to have a constant debate on this. Mm-hmm. And I think if the industry knew better to proactively address this issue and announce a comprehensive protocol, a change in procedure, and have a case manager to delicately handle these issues. This is not an issue of a commodity or an exchange of an item. You're talking about loved one's life and healthcare, and to just simply say, here's the decision, creates the fulcrum for activities like bills like this. So I would urge, if not anything else, you're going to continue to have these kind of requests, because loved ones will fight for their family members and loved ones when health and life and death is at risk. So I would urge you to perhaps reevaluate your clients to do a better job on a customer service side. And if not, you're going to continue to get pressures on these or inordinate these kind of bills that are going to create tremendous cost burden, when I believe you're trying to do your best as an entity that is trying to provide quality healthcare insurance coverage for all of your members. Sometimes it gets lost from the lack of an ability to communicate effectively. So on that note, thank you very much for your time, and Madam Chair, thank you very much for the indulgence of the time as well. Thank you, ma'am.
Thank you,
Thank
Senator.
you, Senator. And we've had a quick switching of the guard, but thank you very much. Other questions for Ms. Halpin? If not, thank you very much for coming by.
Thank you very much for your time. I appreciate it.
Next up, we have Scott Walter, followed by John Brady.
Good afternoon, everyone. My name is Scott Walter. I'm a retina specialist here in Hartford, Connecticut. I'm actually testifying today from our surgery center in Rocky Hill, Connecticut. I wanted to speak a little bit on the topic of the high deductible health plans, and specifically to provide a patient perspective. This is actually about a patient I operated on this morning, a guy by the name of John. He's a 51-year-old flooring guy. He came in to see me a month ago on February 15th. He'd been losing the top half of his vision. And by the time he got to me, his vision in his left eye had been reduced from his baseline of 20/20 to counting fingers. And unfortunately, John had a retinal detachment. And this is really something that we see as an emergency that needs to be dealt with, generally speaking, within about 24 to 48 hours. So I went ahead and signed John up for surgery the next day here at Rocky Hill Surgery Center. And unfortunately, John never showed up to the surgery the next day. The reason being that when he left our office, he had to go get a pre-op physical. And he was told, because of his high deductible, that he would have to pay $200 out of pocket to get the pre-op physical. And he didn't have the money. And so he had to leave the urgent care clinic and basically was embarrassed and didn't show up for surgery. We contacted him the next day. My surgical coordinator reached out once we realized he had all these financial difficulties. We got our financial coordinator involved, and all of them working together with him, spending hours on the phone trying to sort out his situation. So John has been with Connecticut Insurance for 8 years. His employer pays 60% of the premium. He pays 40% of the premium. He's never gone to a doctor in the last 8 years, okay, until this incident with his vision loss in his left eye. And, you know, he's got a $4,250 deductible and a 30% coinsurance after that. And he tells us that basically he can only afford out of pocket to pay $100 a month. So if you add all this up, it's going to take him 4.5 years to pay off his deductible and his coinsurance to save his vision in that eye. And, you know, he couldn't even get in to get his pre-op physical done, you know, let alone pay for the surgery. So we actually scheduled him an additional 3 times. He no-showed because he wasn't able to kind of get things together. We finally got a payment plan in place. He doesn't qualify for care credit, but we're willing to accept $100 a month for the next 4.5 years to try and get this done for him, because it really is an emergency. But here we are, it's March 17th. It's been over a month, not 24 to 48 hours. The man's retina was completely detached. He's now going to need 3 surgeries instead of 1 because he's developing scar tissue in the retina. We had to perform an extensive retinectomy, put in silicone oil, which required another surgery to remove it, cataract surgery after that. This is just driving up the cost of care for everyone. And we're selling insurance.
Thank you. Your 3 minutes has expired.
Thank you. So basically, bottom line is these high deductible health plans are harming patients, and we're selling them inappropriately to people who really can't afford to pay their deductibles.
Thank you, Scott, for your testimony. And Scott, I will just say, your story is particularly poignant. I think you may know this, that both Representative Wood and I represent the town of Rocky Hill, and so the folks who come into your surgical center there are most likely our constituents. And so that story is really heartbreaking. And so the question that I have, and I'll be asking other folks, I know that the goal behind high deductible health plans is to lower healthcare costs by limiting overuse of healthcare. I think that's the theory behind it. But my concern, and I think your anecdote sort of illustrates it, is how much of this is, when we deny necessary care, are we actually adding costs down the road? And so, the bill before us, I think, is an attempt to try to address at least some of the in the weeds issues that have come up with high deductible health plans. But I hear your concerns. Is there anything else that we can do to sort of help patients like the one you just reported on?
Yeah, I mean, I think that the idea of having that deductible either collected up front by the insurance company or make it their responsibility to collect it, they can afford to spend 5 years collecting the money from the patient. Think about the administrative cost that and burden that puts on our practice to keep following up with this poor man who at that point probably doesn't, need to see an ophthalmologist anymore, at least not a retina specialist. We're still asking for him to, try and collect the accounts receivable from a surgery that happened 4.5 years ago. It's just not practical. We're busy. We like to provide high quality, care in a timely fashion. That's what we're focused on. We're not here to be bill collectors, for the insurance companies.
Or bankers for the lending or financing.
Yeah. Bottom line is we're never really going to get paid for this guy's care. I mean, essentially, it's a lose-lose situation. The patient lost vision. We're losing money. The insurance company is the only place, where the only person who's winning.
Well, thank you. Representative Wood.
Thank you, Mr. Chairman, and thank you, Dr. Walter, for being here. I know I saw that you were waiting for a really long time, so I appreciate you sticking around. I was wondering, I missed the first part of your testimony, so could you, and I apologize if you said this, but what kind of plan did this patient have?
Yeah, so he had a Connecticut commercial insurance plan. He's 51 years old. His employer pays, I believe, 60% of the premium, and he pays 40% of the premium. He's been insured with Connecticut for 8 years, and he told me that he's never made a claim. He doesn't go to doctors. That's why he had this plan. And then this terrible thing happened to him. And, so he's got a $4,250 deductible. And then after he meets his deductible, he has a 30% coinsurance. So this is even worse than the 80-20 split that we were talking about being the predecessor to, all of these, fancy newer plans.
Okay. I asked that question because, our committee has jurisdiction over about 28% of the market, which is the fully insured market. So this case actually, we wouldn't be able to be helpful with, but I'm sure this happens in the fully, insured market. So this story probably translates there. But I did just want to let you know that, a lot of doctors that have been around for decades have told us about times when the high deductible plans weren't being used, and it seems like a very different time. The high deductible plans came in, and there's less payment, less accountability, and unfortunately, the small offices are bearing that burden. So we do want to do something towards this. I'm not sure if what we have in place is the right thing, but we promise to keep working on it, and love to reach out to you and see if you can help with this as we move forward. So thank you for your time today.
Yes, thank you for the opportunity to speak.
Thank you, Scott. Next up, we have number 24, John Brady. Good to see you, John.
Good afternoon, Senator Lesser, Representative Wood, and members of the committee. My name is John Brady. I'm a registered nurse, and I'm the Executive Vice President of AFT Connecticut. AFT Connecticut is a member of the Wyndham United to Save Our Healthcare Coalition, and I'm here to testify in favor of HR 5449, an act concerning certificate of need. We support this bill, and I've submitted written testimony with some suggested language. We believe that the items listed in the study part of the bill should be acted upon sooner rather than later. So let me just speak to a few of them. We support language that specifically states that no closure of services or consolidation of entities should occur prior to a certificate of need approval. We believe that this is in the spirit of the current statute, but not always the practice. One need look no further than Wyndham Hospital, Rockville Hospital, Johnson Hospital, or Sharon Hospital to see that is the case. Rockville Hospital has stopped surgical services, and Wyndham, Sharon, and Johnson hospitals are in different phases of closing labor and delivery. What all four hospitals do have in common is that they have done so without completing the certificate of need process. Hartford Healthcare and Prospect Medical have been fined for these violations, but the fines are so small that they're unlikely to change behavior. Because healthcare corporations have adopted the policy of discontinuation of services prior to approval of a certificate of need, we support giving the Attorney General power to enjoin and fine an entity who violates the statute. This is similar to the law in Rhode Island. As we have seen from the case of Wyndham Hospital, the voice of the community and workers can be a safeguard in balancing the power of large hospital corporations and public interest. We support making it easier for these groups to obtain intervener status in the proceedings. Because there is evidence that consolidations drive up prices, we support price caps as a condition of approval. Because we have witnessed a decrease in services with consolidations, we also support a robust community benefits agreement to be part of a CON decision. Hospitals began in Connecticut as community hospitals, often with local residents collecting donations. They do not belong to a corporation, they belong to the community. We support a return of community representation on boards. In closing, I just want to thank all of you for your service to the people of Connecticut and the Office of Health Strategy for the work they do on this. Thank you so much for the opportunity to express our views, and we are available to help with this legislation any way we can.
Thank you very much, John. I don't see any questions from our committee, so thank you for being here today.
Thank you.
Next up, we have Tiziana Arma, for that, and followed by Teresa Sprague.
Hello, thank you. I'm Dr. Tiziana Arma. I am a psychiatrist practicing in the Stamford, Norwalk area. I'm living in Norwalk, and I'm also the Chief Psychiatry Officer at the Community Health Center Incorporated, which provides comprehensive care to patients, medical, behavioral health, and dental and beyond. And I wanted to talk really quickly about HB 5447. First of all, an act concerning prior auth for healthcare provider services. And I first of all just want to thank you for bringing this because this is a topic of conversation amongst psychiatry providers. I know that you all have really acknowledged the need for an increase to mental health care access. And I have to say that prior authorizations in mental health actually negatively impacts access in a number of ways. So one, it takes our time, right? So I have a provider, for instance, who can see an enormous number of patients, gives really high quality care. He's bilingual. Everybody wants to get in there to see him because he's going to get to the root of the problem. He has to set aside a whole half day just to work through prior authorizations. And in that time, he could see 11 patients who need, changes to their medications and monitoring, or he could see several brand new patients who can't get care right now, right? So that's number one, taking the time. The second is that it really discourages some who would take insurance from taking it, and people who did take it who say, you know what, this is just another administrative hurdle. I want to get to the root of things. I want to be seeing patients, and it also contributes to us losing providers who have actually. So in addition to seeing the patients, right, I'm the psychiatry officer, and I have providers I've actually lost who have cited the administrative hurdles, specifically including prior authorizations, to saying, you know what, I still have some years in me, but I just don't want to do all of this. It's just too much. And then the other is that, you know, some people talked earlier about things like, you know, being online, right, with the prior authorizations. But, you know, a good number of the prior authorizations that we do now in behavioral health for a swath of our patients are actually online, but it's still another system and it's not in our EHR. So now you have to teach people to use something else, and it still takes time. I talked about that provider who still has to take a half a day when the majority are still already online. So not only that, it's just literally repeating documentation that we've already placed into our EHR. So it could, at the very least, be made to just sort of be much more efficient. And right now, as it stands, it really does contribute to burnout. And so, you know, and I just want to say there was something that was said earlier around things like medications. And I just want to say I don't entertain any farm reps, and I don't watch television. So you know, I'm not getting influenced by any pharmaceutical companies on what I'm
Your
giving my
3
patients.
minutes has expired.
Yes, that, and so I just want to thank you again. I have a countless number of cases of patients who, you know, I'm outpatient, but I have patients who've gone to the hospitals and have had to be sent out because they've actually told them. I had one patient who was told, his family was told, look, if you stay another day, if we hold on to him another day, you are going to have to pay for this because insurance won't pay. And unfortunately, what that led to was my patient ending up right back in the hospital afterward, but only after scaring a roommate half to death and becoming disorderly and destructive because he couldn't get the care that he needed for his alcohol use. And I have 3 other patients with similar situations, whether it was bipolar disorder or psychosis. So it's also just dangerous. Thank you.
We appreciate you being here. I have one quick question for you. How do you process your prior authorization requests?
So we do have an electronic health record. It's a combination. We have some that are done online because we take the majority of our patients are Medicaid. We have a 70%, then we have Medicare, then we take insurance. So, you know, we see everyone. So it's a combination of online and as well as paper, but we have the capability to do things online, and we use one particular electronic health record.
And we heard from a previous speaker that Medicare prior auth processing timeframes is much more seamless and less timely than private insurance. Is that something that you can comment on?
Yeah, I'll be honest with you. I dread it every time I see that it's a private insurer that I'm going. So for instance, I have one patient who was on WellCare and everybody just goes, oh, crud. Okay, you're gonna have to deal with WellCare. It's gonna take a lot more time. So it's a lot of time.
And even if you do an electronic request, are you then even doing some phone time? Like, do you still have to, you know, get on the phone, or can you do everything electronically?
Right. So I have not had to do things on the phone since I was in the hospital.
Okay.
In the hospital, I spent a lot of time on the phone.
Okay. Thank you for that insight.
All right. Thank you.
I don't see any questions. We appreciate you coming on. Thank you. Next up, we have Teresa Sprague, followed by Jay Kiley.
Good afternoon. My name is Teresa Sprague, and I am the manager of patient access at Bristol Health. And thank you for allowing me to come on here and to address HB 5447, an act concerning prior authorization for healthcare provider services. Private health insurance is a source of coverage in the employer-sponsored small group and individual insurance markets. While Bristol Health recognizes the value of prior authorization, we are finding that many health plans are using it routinely for procedures with established standards where there is no history of questionable use. Nearly all private health plan coverage arrangements, whether commercial or Medicare Advantage, rely on utilization management and specifically prior authorization as a means to gatekeep access to medically necessary services. My team and I are on the front lines as we communicate to our patients that their procedure is on hold until we receive prior authorization from their insurance company. Stat authorizations are a particular burden as patients are left waiting for hours, sometimes in great pain and discomfort, for an authorization that will avoid costly emergency department charges. Unfortunately, aggressive prior authorization has become increasingly more common throughout the industry. Health plans are using prior authorization to restrict access to patients' covered services. Moreover, they are continually changing the rules that govern prior authorization, often in the middle of a provider-insurer contract period. It's important to point out that Bristol Health registration team is extremely diligent, working weeks in advance to ensure that authorizations are updated and corrected. But there are those instances when a patient has had to fast for hours or sometimes even a day or two ahead of time, only to have that procedure canceled because of an unexpected fine by a provider. This necessary unexpected change often results in having to get another authorization, which results in further delays for the patient. These unnecessary approvals are adding extra stress to a patient who is already worried about their health and the diagnosis that awaits them. Additionally, the system and staff Bristol Health has added to address the endless authorization dilemmas are adding unnecessary costs to the healthcare system. The authorization process reduces efficiency because the staff, physicians, and equipment have been reserved for these cases. During a time of national emergency where workforce strategies and strained health system capacity have been persistent challenges, there is simply insufficient bandwidth to comply with such cumbersome administrative procedures. Hospitals often have multiple full-time employees whose sole role is to manage health plan prior authorization requests. Prior authorization processes exacerbate workforce challenges and contribute to physician and other staff burnout. Expending staff resources to respond to health plan administrative requirements is unreasonable at any time, and far worse as we confront unprecedented and likely enduring challenges recruiting and retaining essential healthcare workers. We urge you to not simply study the issue, but to enact real prior authorization reform this session. Thank you for your consideration of our position.
Thank you for being here, Teresa. Do you have any idea how many employees that you have in the administrative role of dealing with prior auth at Bristol Hospital?
At the hospital itself, well, in my team, I have 7. The role is financial counselors that pretty much strictly just deal with ensuring that the providers have obtained authorization, that the authorization is done appropriately, that it's covering the correct test or the correct procedure. But that's just my team. There's also our case management team that handles for inpatients that once we've done the notification, they do the case review to extend authorization. And prior to the patient, most of the time prior to them being scheduled, you've got all of the staff members on the Bristol Health medical provider side that are the ones that are getting the authorizations. So I don't have the numbers of all of those people.
But it sounds like a lot. And are you the same question that I asked our last doctor? How are the authorizations done with your team? Is it electronically or phone?
It depends on the insurer. So okay. It's done electronically, it's done by fax, it's done by phone. It all depends on what the insurance company has available to us, what their requirements are, what it is that you're authorizing, because it depends if it's going to be inpatient or outpatient or surgical. So it's around the gamut. If it's a stat, those usually have to be done by phone. And I can tell you that in the last 2 weeks, we had 3 patients sitting in our diagnostic waiting room for hours waiting for approval. The one earlier this week never got the approval. So I don't know whether her provider ended up sending her to the emergency room or not, because that's put back in the hands of the provider. And 2 of those cases were referrals from cancer care centers. So they were definitely patients that required stat services.
Okay. Thank you very much for your testimony today, and thanks for waiting so long to share that with us. We really
thank you.
Emergency room 11.
Next up, we have Jay Kiley, followed by Dr. Karapasas. Okay, next up, Samuel Koskovich, Stephanie Cummings, I'm sorry, I skipped over Catherine Crashel.
Hello.
You're up. I'm sorry about that. I skipped over your name.
That's all right. Thank you. Chairs Lesser, Wood, Vice Chairs Anwar and Comey, and ranking members Huang and Pavlik Damadio, members of the Insurance and Real Estate Committee. My name is Katie Crashall, and I'm here to provide testimony regarding Bill number 5446 concerning access to fertility treatments. I'm a Connecticut licensed attorney, and I teach the Reproductive Rights and Justice Clinic at Yale Law School. I focus on fertility care, and I've authored journal articles and book chapters on the topic. My wife, Heather, and I live in Mystic, and I gave birth to our wonderful son, William, just over a year ago. I had to fight to access insurance coverage for fertility treatments in order to become pregnant with Will, much like Representative Doucet's constituent, Ms. Hanson, who you heard from earlier this morning. Like her, I was not diagnosed as infertile. I was told by my insurance administrator that I was unexposed to sperm and could not get coverage until I first proceeded with inseminations to mimic heterosexuals' attempt to get pregnant and be diagnosed infertile. I would have to first pay for the very services for which I was seeking coverage. The current mandate similarly defines infertility by reference to cisgender heterosexual couples, and this bill would address that issue. However, the bill should be improved in two critical ways. First, it should not expand coverage by creating a strained definition of infertility and should instead explicitly expand coverage for LGBTQ and single people. Second, it should improve access not just for LGBTQ people and single people, but for more Connecticut residents by expanding the mandate to the state's Medicaid program. First, the bill as written doesn't reflect the lived experiences of LGBTQ people and should be revised to require coverage for fertility services, rather than creating overly broad definitions of infertility that includes LGBTQ and single people. Many LGBTQ people, like me, are healthy but require care to become pregnant. There's a long history of pathologizing and medicalizing homosexuality, and pathologizing queerness can lead to distrust of the medical profession and is one of the factors driving disparities in care we see for the LGBTQ community. Rather than hide us behind a strained definition of infertility, Connecticut should be a proud leader in explicitly requiring coverage for all prospective families. Legislation pending in Maine does this. Second, the bill should not privilege improving access for some without addressing racial disparities in fertility care. Despite similar or even higher rates of infertility, driven in part by the effects of institutionalized racism, Black, Hispanics, and Latinx women utilize fertility care at significantly lower rates than white women. In order to address this disparity, the bill should mandate coverage by Husky. We must learn from mistakes of the reproductive rights movement that failed to acknowledge the racism and concessions made that protected reproductive rights without meaningfully guaranteeing their access. New York recently expanded its fertility mandate to include its Medicaid program, and Connecticut should follow suit. Expanding Medicaid would be a step closer to expanding access for all prospective families in Connecticut. I strongly support the goals of Bill 5446. But I urge the committee to consider additional critical changes to the state's existing infertility insurance mandate.
Thank you very much, Catherine, and congratulations on your son. I just wanted to ask, what kind of insurance do you have? Is it an employer-based? Is it through like Access Health? What?
Yeah, I work for Yale University, so I have a self-insured plan. So because I'm a nerd in healthcare, I knew that I needed to knock on Yale's door to get my coverage rather than that this law didn't apply to my plan. I knew that, but it's the same gymnastics that I had to do to get Yale to cover it that would be required under the statute today.
Great. Thank you for clarifying that. And we do have questions. Senator Lesser.
Yes, thank you, Madam Chair, and thank you, Catherine, for your testimony. It was excellent. Just one comment, and then I have a question. So the comment is on your point about including Husky coverage. Just the way that the legislature is built in Connecticut, this committee's cognizance is really limited to insurance. And we have a separate human services committee that really focuses on Medicaid. I happen to serve on both. They've both been meeting today, actually, so bouncing back and forth. But I think that's why the bill was written that way. But your point about equity issues and health inequity is I think a good one, an important one. In 2017, and this was a frustration I expressed with one of the earlier people who was testifying, and this is not with them, but to them. We changed the law to remove the language that really required limited the who could access the fertility benefits to people who are presumably healthy, and there was a whole lot of language about health, and we deleted that in 2017. I don't see that language in the bill that's before us. It seems to reference an earlier version of the statutes. So I'd be interested in maybe, I don't know if you've looked at the most recent version of the statute, but I just, in terms of not pathologizing same-sex couples, and that makes total sense to me, but I'm just wondering if the most recent version of our statutes is maybe a better place to work from.
Yeah, so I think that actually the bill that we're looking at is the most recent revision since Melissa's Law in 2017. Thank you for asking that question. I was listening earlier and had similar thoughts, but the main change that I believe was made in 2017 added the language that said medically necessary and removed language that said otherwise healthy. And what that did was to include people, as I know I was one of the big champions, the sponsor of Melissa's Law, was to allow people who are about to become infertile due to some sort of medical care, such as oncology treatments, or in the case for trans people, gender affirming care, some types of gender affirming care. But it still maintained the medically necessary language. And so I think actually we are working from the most recent version of the statute. And to my reading says that we haven't addressed this issue sufficiently yet.
And so then I'll go to the other part, which is, my earlier conversations with the insurance department indicate that they thought they had addressed this issue through previous bulletins, but you don't believe that that's the case. You think that this is still that work that we have to settle.
That's my understanding of the current status. Yeah, there have been helpful bulletins. I will say that there have been super helpful bulletins for the trans community to rely on to get gender affirming care, fertility preservation before undergoing gender affirming care, that have been incredibly helpful. But I don't believe this particular issue has been addressed.
Got it. Okay, great. Well, thank you. This is super helpful. I really appreciate it.
And thanks.
Thank you, Representative Farrar.
Thanks, Madam Chair. Hi, Katie. Thanks for being here today. I just had a couple questions following up on your testimony. You spoke a little bit to the need to look a little closer about how we're defining coverage. And I just wanted to clarify, when I was reading the bill and kind of hearing your testimony, one of the things I was thinking through is the bill doesn't seem to contain coverage for third-party sperm, eggs, or surrogacy services. Is that from your reading as well? And is that kind of where you're kind of going with some of your considerations in your testimony?
Yeah, thanks. That's a wonderful question, Representative Farrar. And I know that there's been some, so no, it doesn't. That's I agree with you.
Okay.
And I believe that Mario, who we heard from earlier, in some of the discussions that have been going on about proposed language to change it, would include coverage for surrogacy or third-party services. I don't think that that's necessarily something that is critical to this bill, or that I would say should be included at this point in time. It is I spent a lot of money procuring sperm, but I'm not sure that requiring healthcare providers to provide coverage for other people's care is the direction we want to go in. And if you'll indulge me in a hypothetical as a law teacher, as I am, if we do that and don't at the same time require husky care to cover fertility treatments, there could be a person who's covered by husky care and there's intended parents who want that person to serve as a surrogate. And our state laws would require the intended parents' insurance to cover that person's medical care. But then if that person later on had trouble themselves becoming pregnant and was on husky care, there would be no such access for them to exercise their own reproductive freedom. So I think that particularly in the absence of husky coverage, there's a lot of really fraught issues with covering, in particularly surrogacy services or egg provision.
Thank you for that. I'm grateful for you illuminating again those true kind of ethical and equity issues associated with that decision. And you noted New York's inclusion of Medicaid. As Senator Lesser said, that doesn't often isn't something we cover as cognizance of this committee. But if you wouldn't mind sending more information to the committee just about how New York did that and kind of what the costs were associated with that, I think that would just be helpful for us in talking more effectively about this bill moving forward. So that's a request I would make. And then finally, one of the things I was thinking about with your testimony, I know you're at Yale, but do you know if GLAAD or Planned Parenthood of Southern New England has been involved at all with this bill creation?
So I know, Polly Crozier, who works with GLAAD, was looped in pretty late in the process of, I think sometime last week. And I think similarly for PPS&E, full disclosure, I'm on the board of PPS&E, okay. But I'm not speaking in that capacity today. Okay. But so I would just say that I don't know how substantively they have been engaged, and they would be critical partners that I would hope this committee would want to make sure is involved in this discussion.
Great, thank you for that input. And I agree, I think both of their opinions would be super helpful in crafting this so that it covers kind of all the points you noted. But thank you, Katie, for being here. And thank you, Madam Chair, for the time.
Great, thank you so much. I don't see any more questions, so thank you for being here. Next up, we have Stephanie Cummings, followed by, I think, Dr. Gray. I see number 32. Stephanie Cummings is next, followed by Dr. Delicio Matta. Hi, Stephanie. Very nice to see you.
Hi, Carrie. Very nice to see you as well. Thank you to Chair Lesser, Chair Wood, Vice Chair Anwar, Vice Chair Comey, Ranking Member Wong, and Ranking Member Pavlak-D'Amato for the opportunity to testify here today. I am joined by my colleagues, Nick Zano and Vincent Faricello, who are independently signed up. But we figured we'd save the committee a little bit of time and compile our testimony into our 3 minutes. We are testifying here today in support of Bill 5448.
So good afternoon, everyone. My name is Nick Zano. This bill essentially is about giving employers the opportunity to select legal counsel of their choice when an employment claim is filed against them. Let me just explain briefly. Many insurance companies sell what's called employment practices liability insurance. And this insurance covers most employment-related claims that are filed against employers. And many employers have purchased these policies over the past years. When a claim is filed against an employer, the employer submits that claim to the insurance company. The insurance company then requires the employer to select an attorney to represent it from a panel of law firms that the insurance company has approved to handle those claims. In many circumstances, employers have existing well-qualified law firms that they have used on a regular basis for employment matters for many years. And these lawyers and these law firms are typically well-versed in the employer's culture, the employer's policies, their procedures, and in many cases have provided guidance to the employer on the specific claim that is the subject of the litigation. They are often well qualified to handle the claims that are being filed against the employer. But if that employer's law firm is not on the pre-approved panel, insurance company panel, then the employer is prohibited from selecting that law firm to represent it and therefore prohibited from using the lawyer of their choice. In many cases, the panel of approved law firms is small. In many cases, insurance companies have closed their panels, meaning they will not allow other law firms, even if they're well qualified, to be part of their insurance panel. And the law firm that is often selected to represent the employer in the litigation has no relationship to that particular employer. And employers are often disappointed that they cannot continue to use the law firm with whom they've been dealing with for a long period of time. And so insurance companies will allow employers to select counsel of their choice, but only if the employer purchases a rider to their policy that gives them that right. And if they do, then the insurance company will allow them to select their law firm, provided that law firm is approved by the insurance company. They agree to the insurance company's rates, and then they agree also to the billing structure and format that the insurance company requires. And so the bottom line purpose of this bill is to prevent insurance companies from forcing employers to have to buy their right as the client to select counsel of their choice to represent it in litigation. And in our experience, many employers are not even aware of the right to purchase a rider. And even if they are, it's cost prohibitive, and the bottom line is they should not have to pay for that right to select their legal counsel.
Thank you. Your time has expired.
Great. Thank you for that testimony. I have a couple questions. So
Sure.
the way the law is written right now, if you use one of the insurance company's panel attorneys, is that paid for by the insurer?
The insurance company will pay for it at their approved rates.
Okay, so basically the negotiation of who's on that panel and the rates has already been done. And so when a claim is filed, you're given, a list of attorneys. They already know what they're going to get paid, but it's no cost to you. And I think what I'm hearing is that your recommendation is that why not use your in-house counsel or an attorney that knows your business intimately that you've used for 20 or 30 years. But in order to do that, you would have to buy a rider.
Correct.
So there's no way. So say they sent you the list of names, and you said, no, I want to use my own private, person. Would they come back and say, no, that's not possible?
They would generally say that's not possible unless you purchased a rider that gives you that right to select counsel of your choice, even if the law firm is fully well qualified to represent the employer in that matter.
Okay.
Agreed to the insurance company's billing guidelines, terms and conditions and rates.
Okay. And I would assume the insurance company does that as a way to, sell a product at a certain price. So if we were to make this change, would we be increasing the cost of that product?
That's certainly not our intent, because I think, Nick, you pipe in too, our intent is that if a firm was allowed, that's not on the panel, was allowed to represent that employer in that matter, that firm would be agreeing to the same terms and conditions that panel counsel would be doing, including the rates. So the intent is not to increase the cost on the insurance companies.
Okay, so you're okay with the pre-negotiated rates. You just want the panel to be to have more options.
Yeah, I think what we want is the employer to have the choice to say, no, I don't want to use panel counsel. I'd like to use the law firm that I've been using for decades. And then it's up to the law firm to decide, look, we can't accept those rates, or yeah, we will accept those reduced rates, those discounted rates that the insurance company is requiring. It's exactly what happens if the employer just pays to purchase a rider. And we're just saying you shouldn't have to pay. A client should not have to pay for the privilege of selecting counsel of its choice, counsel that is well qualified and in many cases already represented that client for years.
Okay, I appreciate this testimony. This is we haven't heard about this bill yet, so it's exciting to hear about this, and I'll move it to Representative Pavlak-Tomato.
Thank you, Madam Chair. So thank you for your testimony. And I, from what I'm hearing, is that I think some of the companies were asked, are you limiting the ability of a client to get their own attorney? And at first they said no, and then apparently later on said, oh, well, actually, yes. So that makes me a little weary, but doesn't the insurance company have some type of interest that they're trying to protect as well? So I guess, the client getting your own attorney, would that be in addition to the insurance companies? No, it would just.
It would be in lieu of selecting from a group of law firms that the employer has no relationship with. The employer would have the ability to say, I would like to use my law firm. My law firm will agree to the rates that you're approving and will agree to your billing guidelines, will agree to provide the reports that you require of outside counsel. So it's just giving the employer the right to do what they would have the right to do if they simply purchased a rider.
Now, is the rider purchased at the time of the initial signing of the policy, or can that be purchased later on when they realize that they want to get a different attorney?
Yeah, I'm not 100% sure of that. I think it's at the time of the initial policy is written, but I'm not 100% sure.
Okay. And I don't do this type of law, so I have no idea. But I want to go back to my other question, is that the insurance company, they have an interest that they're trying to protect. And I mean, I'm not sure what the attorney says at the time that, let's say if they come from the insurance company, what exactly they would tell the client, right? I mean, whose interest are they really representing or protecting? I mean, to some degree, right? They're hired by the insurance company, right? Or I'm sorry, or is the client do the actual hiring?
Well, under these policies, the employer can select counsel, but only from the pre-approved list that the insurance company provides. And in many cases, the employer has no relationship with any of the law firms that are on that panel. So they're sort of forced to pick a law firm from a list that is often relatively very small and is closed. In other words, they will not allow certain law firms to join that list. So the employer ultimately is forced to pick a law firm that it has no relationship with. And unless they go ahead and purchase that rider. So.
But I mean, nobody's challenged this on, just a basic Fifth Amendment. Like, I'm not even sure how it passes that.
Yeah, I'm not aware of any legal challenge to it. But it is important to recognize that the client, for purposes of that litigation, is the employer. It's the insured, not the insurance company.
Right.
And so it seems fundamental that the client should have the right to select counsel of its choice. Just like if you get in an auto accident, right? There are laws that permit you to select the mechanic that you want to fix your car, right? The insurance company may give you a list of mechanics, or may give you a list of, if you break your windshield, they may say, look, these are the approved windshield providers that we have, but you can pick your own windshield provider. Yet to not give that same right in such a fundamental, important situation where the employer is looking for legal counsel just doesn't seem correct to us.
Right, but you and I both know that that's not a right that somebody has to give you. That's a right that the Constitution gives.
Yeah, no, I understand. Yeah.
Person. So, that's where I can't even get past that. And I don't even understand how this gets, has gone as far or as long as it has. So, I mean, I completely agree with you. And, you're accepting those rates as well. So that's understandable. So, I'm fine with it. So I guess I'll be voting in favor of it. So, but thank you for your testimony.
Thank you.
Before you guys jump off, can you both just restate your names for the camera and for testimony?
Sure. I'm Nick Zaino, Zaino.
I'm Vincent Faricello, F as in Frank, A-R-I, S as in Sam, E-L-L-O.
Great, thank you. Good to see you. Okay, next up we have Hi, Stephanie. Next up we have Dr. D'Alessio Matta, followed by James Yakabellis.
Hello, can you hear me okay?
Yes, we can hear you.
Thank you. I'm just in between patients on my phone here. So thank you, Senator Lesser, Representative Wood, and members of the Insurance and Real Estate Committee. I appreciate you hearing my testimony on behalf of HB 5447. I am Mimi D'Alessio Matta. I'm a pediatric dentist with an office in Southbury, Connecticut, and I'm here today in my capacity as the president of the Connecticut State Dental Association. I apologize once again for my appearance. Our members and patients overwhelmingly reach out to my dental association with insurance issues. So we join our medical colleagues in seeking critical prior authorization reforms in Connecticut. Currently, 11 states have enacted laws to address prior authorization. This promise to pay legislation ensures that patients have all the information they need so they can plan for all healthcare costs. In submitting an authorization request, doctors are making a good faith effort to explain the treatment plan so insurers may determine before the treatment if the plan raises any concerns with regard to payment. Once authorization is established, patients and doctors feel assured that coverage will be delivered. When the promise to pay is altered after the care is given, patients and doctors are left with an unexpected financial bind. Prior authorization was included as a core issue in the bipartisan 2020 NCOIL Transparency and Dental Benefits Contracting Model Act. The goal of this act was to prohibit dental carriers from denying, revoking, limiting, conditioning, or otherwise restricting pre-approved dental care claims or claims approved in prior authorizations. The Connecticut State Dental Association is respectfully asking this committee to consider amending this bill to include the prior authorization language from the Dental Benefit Contracting Model Act. Insurance companies should be compelled to comply with their promise to pay what is included in pre-authorization communications. The Connecticut State Dental Association supports legislation that ensures insurances honor their commitment provided in prior authorization when there are no extenuating circumstances. I thank you for your time.
Thank you, Doctor. And we heard from many of your colleagues today on this topic, and we hear you, and we hope to be able to do some good work on this committee. Any questions? I don't see any. Thank you for joining us.
All right, thank you. Bye-bye.
Next up, we have James Jacobellis, followed by Lori Gawler.
Good afternoon, Representative Wood and distinguished members of the Insurance and Real Estate Committee. My name is Jim Jacobellis. I'm the Senior Vice President of Government and Regulatory Affairs at the Connecticut Hospital Association. And I'm here today to provide comments on two bills, House Bill 5449, an act concerning certificate of needs, and Senate Bill 416, an act promoting competition in contracts between healthcare carriers and healthcare providers. I sort of am changing up my planned remarks after listening to Executive Director Veltri, because I want to align my remarks with some pointed comments that she made, as well as that I think we've heard a variety of times today and in prior hearings about having a vision and having a plan in Connecticut to look at where we want to go in terms of healthcare, how we get there, how we improve access, how we improve quality, and how we address affordability. And then how we tie that plan or that roadmap into the certificate of need process and other laws. So let me tie in to the certificate of need process, and then I'll begin a couple other thoughts on that bill. If we have a plan that looks at the demographics of Connecticut, looks at what is a crucial, and I think Senator Anwar has been ringing the bell really loudly about the healthcare workforce shortage. And we all know that we are in the middle of a behavioral health crisis. So we've done the work, we've done the plan. So now we can take our certificate of need process and figure out ways in which to expedite services and facilities that deal with behavioral health. So I think the plan does tie into a lot of what we need to do. But let me talk about a couple of specific things related to House Bill 5449. And as a preview or a teaser from Executive Director Veltri, she would acknowledge that I would be saying, and I'm saying, the process as is needs to be fixed. It is backlogged. The time at which it takes to get applications through the certificate of need process. I'm not simply talking about large applications. I'm talking about small, moderate, and large applications. It is backlogged, and it is taking an extraordinary amount of time to get applications through. So we need to fix that. Secondly, I'm also aligning myself with Vicki's remarks related to many provisions of this CON bill are currently in practice and currently part of the certificate of need process, and they become part of the process. So we look forward to working with the committee to tailor those and maybe add some more that can deal with workforce shortage issues as well as other issues. And I'm also—
Thank you, your 3 minutes are up. Thank you.
I'm not going to spend time going through the fine because the conversation that Representative Wood had, recognizing that as currently drafted, there is some, I think, some strange impact to it.
Yes, and just to elaborate on that a little bit, the fees would be more based on a sliding scale. There was an error in drafting that, and just what you said, that there is a backlog. The backlog is due to lack of staff to process this. So the fee structure was just to take another look at the fees and use some of that, the fees to pay for additional support or something like that, but that was the intent of that. So we're sorry it came out so confusing. I appreciate your comments on that, James, and we will definitely be working with you on this language going forward.
Thank you. If I may just really quickly on Senate Bill 416, I want to caution the committee to be extraordinarily careful on these provisions in going into contracts. The bill is drafted retroactively, goes into every provider contract. And when Massachusetts passed the provision related to tiering, they immediately came back in because they needed transparency provisions so providers would know which tier you were in and and what are the qualifications for each tier, because each company has a different tiering, and they provided transparency on that. And then to be really cautious on the all or nothing as we deal with making sure that we have access across the state. And I apologize for rapidly going through that, but you've been here for a while.
Did you submit written testimony?
It is either in or in process of being.
Okay, great.
Thank you.
Thank you. We'll definitely be following up with you on that.
Thank you. I look forward to that.
Next up, we have Lori Goller, followed by Richard Peer.
Good afternoon, and thank you for the opportunity to speak to all of you. I appreciate it. I'm speaking with regard to bill number 409. I'm a long-term care insurance specialist. I have been doing that work only in long-term care for a long time now, since 2005. I want to first mention that David Gutchin and his team are absolutely fabulous. My husband and I have had a long-term care partnership policy since 2007. My parents had long-term care policies, and their benefits were used for home care, assisted living facility, and nursing home. Thank you for Bill 409. I'm especially excited to see the tax credit. I am looking forward to see how the pool that is referenced in Section 1 will be funded. I haven't had as many clients' policies impacted by horrible rate increases, and I'll leave that topic to my able associates. I did want to raise two other concerns. I believe there are a couple of trial programs in place with this, and I'm urging you to continue, but I feel we are doing a disservice to our constituents to not allow Medicaid to pay for assisted living. I've seen physically more able and cognitively more able individuals in assisted living have to move to nursing homes because of the lack of funding ran out. Less stimulation, less in common with their neighbors, a less rich life. I'm sure Medicaid funding is very complicated, but on the surface, nursing home costs are significantly more. The second thing and last thing that I want to address are partnership programs. There's nothing in this bill that speaks to the partnership. We have two somewhat challenged carriers, financially challenged carriers right now as options in the Connecticut Partnership Program. Can we please find a way to work with Mutual of Omaha and or National Guardian Life to bring them into the program? I know the issues are complicated, but please. And then secondly, the daily benefit requirement for a partnership policy is currently over $300. That's a very expensive policy, and I'd venture that not very many partnership policies have been sold in the last 4 to 5 years. We've made the Medicaid asset protection unattainable for those who would be more likely to possibly need it. We want constituents to have lots of coverage and gain lots of asset protection, but in this environment, they are getting none. Even some long-term care benefit, with care supplemented by friends and family, is a gift and could help our Medicaid coffers. Thank you.
Lori, thank you so much for your testimony. It's really nice to hear from you. I don't think we've had you in front of the committee, at least while I have been chair, and this was very helpful. I was wondering if you can explain your request to add 2 new carriers to long-term care in Connecticut. Have you had that discussion with David Gutchin, and what is his feedback on that?
Not with David directly, but with his staff. I've had it with a couple of the carriers as well. There are some requirements that the original 4 partnership states would have to meet in order for us to allow them to be brought in. But it's somewhat overwhelming. We're not the easiest state to deal with. And it's, the carriers are like, well, gee, if we're a little bit easier, we'd be all in. And I'll leave the, gory details at that.
Okay.
Yeah, it would be important. I mean, I think if you look at the financial ratings of the 2 companies that we have in place now, I'm not comfortable working with them myself. I love Genworth. They're a fabulous company and wonderful for this industry, this very important industry. But we need some options. We don't have real options right now in the program. And I think if you look at the data, I can't imagine a whole bunch of partnership policies were sold possibly because of the health of the carriers. But secondly, that daily benefit of over $300 required is just untouchable for people that really would potentially take advantage of the Medicaid asset protection.
Okay. Well, those are really great points. I will definitely be following up with you. I'm sure others on the committee, maybe we can do a joint call. And I'll send it over to Senator Wong.
Thank you, Madam Chair, and welcome, Ms. Gogler. I think it's important to note that, as you mentioned, the company that you're associated with only deals with long-term care, unlike other insurance providers that does it as a supplemental line. Take us through. I think one of the most important challenges we have is from feedback is that they weren't fully informed. They weren't fully understanding the product. They see the front end of what the product can provide, but they don't fully understand the financial process as being a long time owner of such a policy. That's what we're hearing a lot about, that many people with over 20 years of quote investment into a product, and they've never had to use it, and they're indeed being priced out of the marketplace. What do you do with when people come in and begin, and when do people start buying this product? And will we have more of these challenges into the future with a marketplace that's somewhat unstable and unpredictable?
Great question, Senator. I think that if we look 20 years ago, the pricing for long-term care, hindsight is always 2020, was ridiculously inexpensive. And so what we've seen over the years is a lot of rate increase activity. I always say this, when there is a rate increase situation, the policyholder has many options, and their agent should be working with them to do what they can to make that policy more affordable. And it is possible to do. I've done it myself, for myself, and I've done it with many of my clients. So what has happened in the interim period is that through new products and rate refreshes that are levied by the insurance companies, the pricing for long-term care has increased significantly. For long-term care policies, it is still a tremendous amount of leverage and a fabulous way to prepare for a potential need in the future. But it's more in line with what the potential costs will be, and all the actuarial work and studies that have gone on over the years through the NAIC. So will there never be rate increases now because we are dealing with such much more expensive products? No, I don't think anyone would ever say that. I think that we'll be seeing some carriers that have different approaches where, similar to health insurance, it'll be a normal course of events to have new rates every year. That may be something coming down the pike, and I would imagine Connecticut is already speaking to one carrier about that. The data is there. I think the state, there are a number of stakeholders here. We have the state, we have the policyholder, and we have the insurance company. All of the rate increase burden at this point is really going on the policyholder, and maybe there's a different way to do that. Tony, there's a an associate of mine that I've introduced to Tony, who has a lot of great thoughts about that as well. So I'll refer to him in side conversations that we'll have in the future. But yeah, it's not, it's an incredible, the need for long-term care is not going away. It is getting worse. We look at our Medicaid coffers and it's very frightening. You look at what's happening to families that have to support their loved ones who have a need, and it's very, very difficult and challenging. It's affecting their future retirement assets when a child has to cut down their work hours or stop working. It has an impact all around. And so we need to be focused on this and continue to make this better, but to make it financially viable for all of the parties.
Thank you. And Madam Chair, if I could, 2 additional questions. One is, could you elaborate a little bit more about the Medicare solution that you talked about? Talk to me about the differentiation of the marketplace on long-term care and how it's separate from Medicare, and the solution you mentioned earlier. How would that work, and why would that work? And what problem would that address?
I'm not exactly sure which solution you're talking about.
Did you mention to allow Medicare to be able to provide coverage?
No, I mentioned that Medicaid should be able to pay for assisted living facilities.
Okay, thank you for that.
Yes.
The last question I had is, one of the other challenges I asked, and if you could elaborate, like, do you educate your clients in regards to the cost arc and the challenges of this product in regards to disclosure of the financial as well as the range of coverage? Because that's one of the questions they had. I think paring down to some of the lessons we learned in regards to reverse mortgages, we're looking at part of the solution is much better disclosure and education on the sales side to the consumer side. Any insight on that and the way you do your business, being the only business that you do, and the effort you make to educate your clients?
Thank you for that. So I am an independent long-term care specialist. And the most important thing, without question, that I do is education. That is the first hour-long meeting that I will have with the client, is gathering information about them, doing a little bit of education as well, but trying to understand the prospect situation. When we look at options, which we then pull together at the next meeting, we spend as much time as required upfront explaining how long-term care works, what the key questions are. We absolutely talk about rate increases when it comes to standalone long-term care solutions. That is absolutely something that we talk about multiple times. I want everyone to know it's also on every single application where long-term care policy has the potential for rate increase. I document in our system every time I mention the fact you do understand there is a potential for rate increase. Here's this carrier's history. Here's what's happened over the years. Here's why there have been so many rate increases over the last 15 years. So yes, that is absolutely critical. They're making a very large decision, and we need to be educating them, as to how to make that decision effectively.
Thank you very much. And I appreciate your insight. And as we move along on this, as the Madam Chair suggested, that we would like to reach out to you and get your expertise and thoughts on this. And we will indeed be following up with the long-term care partnership to find out about the opportunity to increase greater competition of carriers as well. So thank you, Madam Chair, and thank you, Ms. Gogler, for your time, and go Duke.
Thank you so much, everyone.
Oh, we still have another question for you, Representative Meskers.
Yeah, so excuse me, Madam Chair. It's not a question, it's a comment, and it's a thank you. And just volunteering myself to engage in the further dialogue. I think, well, I guess there's one question. I thought the commentary was very insightful and helpful in terms of additional carriers. In terms of long-term care product, in the market today, I'm assuming after the debacle of the early products in terms of the ever-rising structure of the benefits, I'm assuming they're defined benefits now for the most part. Is that accurate?
Can you be a little more descriptive of what you mean when you say defined benefits?
Well, I'm thinking in terms of their monthly guaranteed payments for a period of time, like an
Yes.
annuity. Is that the
Yes.
typical structure nowadays?
Yes, absolutely.
So when we go forward, what we're looking at the adequacy of those payments to cover what will be escalating health, long-term care costs. But the current consumer should not be facing the same nightmare of ever escalating premiums because the benefit is more defined. Is that true?
It's not that the benefit is more defined, it's that the cost of the policy is greater. Therefore, the insurance company is taking in more premium. But I would never say, I mean, who knew COVID was coming? I don't think the insurance companies fully understand the impact of COVID, right? On the one hand, we have a horrible number of nursing home residents that passed away. But on the other hand, we have, long-term COVID, which could cause a need for long-term care. But the benefit has always been defined in terms of, what the monthly or daily benefit is going to be and what the pool of money is. It's always been defined. There's never been a question of that. There's also the component of the inflation that benefit grows at every year. Those things have always been defined. The issue is that the rate increases have wreaked havoc. And I want to make one other comment on the rate increase situation. Just to reiterate, there is always something, most often something that can be done with a client's policy to shave the benefits down in some way or another, or in multiple ways, to make the policy be affordable, even with the rate increase. I will also say that neither myself or any of the clients that I've had where we've gone back and said, wow, what other options do we have? Or are we going to bear this rate increase? There are no options that will ever come close. And that may be due to my book of business. I've been doing this since 2005. There are others who've been around since 1995 and earlier, where the rate increases that have happened are still a really very positive investment and a positive way to cover a potential need that could be absolutely disabling financially.
Yeah, I think that's been something we found in our discovery. Is I don't remember if the number was 90 or 92% of the policyholders continue on with the premiums, and somewhere in the order of 6 to 8% negotiate a lower premium with a lower benefit, and only 1 or 2% actually surrender policies. So I think the alternative is always worse. But the policy structure is similar. It's just that the actuarial assumptions are better. I was under the impression that we were dealing more with an annuity type product in the market today.
You have a number of different approaches in the market today. We have what we call standalone long-term care insurance. That's all it is. It's often rich in benefits. It has a great return on investment, if you will, if you use it, if you need the care. We have policies that are under the covers, full long-term care policies and life insurance policies, where if you don't need the care, there is a life insurance benefit that will go to your beneficiaries. And we have products that are similar to that, but are an annuity under the covers. They tend in some age brackets not to perform as well as the first two, but there are three, very strong long-term care alternatives, tools to fund a long-term care plan, right? That's what we're talking about. Tools to fund the plan.
I don't want to hijack the committee hearing here for public informational. So I really appreciate, I think, what you're doing, and I look forward to conversations away from this meeting itself to follow up. So thank you very much.
You are very welcome. I welcome any future conversation.
Lori, thank you for being here with us today. We appreciate your testimony.
My
Next
pleasure.
up, we have Richard Peer, followed by David Call.
Good afternoon. Thank you for having me. My name is Richard Peer. I'm the Systems Director of the Revenue Cycle at Bristol Hospital. And in deference to the young doctor who spoke before, I am a bill collector. I appreciate the opportunity to submit testimony concerning HB 5547. Bristol Hospital supports legislative action to address serious problems with the conduct of prior authorization. However, this bill as written does not protect patients or their providers. Nearly all private health plan coverage arrangements, whether commercial or Medicare Advantage, rely on utilization management, and specifically prior authorization as a means to gatekeep access to medically necessary services. Today, aggressive prior authorization is common throughout the industry. Health plans are using prior authorization to restrict access to patients' covered services. Moreover, they are routinely changing the rules that govern prior authorization, often in the middle of a provider-insurer contract periods. While the stated intent of prior authorization is to help ensure patients receive care that is safe, efficient, and beneficial to the individual patient, we have observed that many health plans are applying prior authorization requirements in ways that impact care. Frequently, health plans establish different requirements for the information a provider must include in a prior authorization request for a particular covered benefit, and health plans also change those requirements unilaterally throughout a contract term. Further, facilities experience delays commonly when patients come in after hours or on weekends when most health plans do not have staff available to review routine requests. Keeping a patient in the emergency room or an inpatient bed while we wait for a plan's decision or response to a prior authorization request is not in the best interest of the patient. We strive to ensure the patients are receiving the right level of care when they need it. When patients wait for transfer to settings that focus on both medical and rehabilitative needs, their progress towards recovery can be negatively affected. In my role as System Director of Revenue Cycle for Bristol Hospital, my staff must ensure prior authorizations have been obtained before services are rendered, with each health plan having their own complex policies and procedures, and typically separate ones for the respective commercial and Medicare Advantage products. The hospital's registration staff often has to work closely with referring physicians and practices to ensure all necessary and appropriate authorizations are in place. It is interesting to note that despite their authorization requirements, the commercial and Medicare Advantage plans have no problem in delaying authorization determinations for transfers of patients to a skilled nursing facility. These delays do not cost the Medicare Advantage plans or most commercial plans a dime, as payment to the hospital is based on a diagnosis-related grouping or a set case rate, with no additional payment for any delay in discharge. While the patient remains in an inappropriate setting for the level of care they require, the health plans further benefit that they are not paying the skilled nursing facility for the patient's necessary and clinically appropriate care. As presented by other members, you'll see the impact on Bristol Hospital.
Thank you. Your 3 minutes are up.
I just want to add that Terry Sprague was asked earlier about how many FTEs, and it's 29 FTEs at Bristol Health.
Thank you for that. That's a very large number. Okay, we have questions from the committee. Senator Lesser.
Yes, thank you, Madam Chair, and thank you, Richard, for your testimony. You know, it strikes me that the legislature should not be neutral around the issue of competition in healthcare. And I think, we've seen a declining number of hospital chains in the state, hospitals in the state. I know Bristol is an independent hospital. We have Middlesex in my area. We've got Griffin. We've got a few, but not many. And so I'm really trying to understand the impact of prior authorizations being potentially a driver of consolidation. Is it something that you think impacts? You mentioned your FTEs, but is it something that really impacts Bristol's competitiveness, limits the viability of the hospital compared to some of your competitors?
Bristol's a small community hospital with limited resources. The more dollars we have to use to protect our payments and get authorization is taking money away from clinical support and new equipment that we could be using to help the community. Because we not only hire staff, we hire vendors and we use technology to ensure that we're getting everything that we need. Some of the vendors that we hire and some of the software programs that we get are not cheap.
And is that something that does it? Obviously, all hospitals struggle with prior auth. I don't want to say that it's easy for any of them. And I know the Hospital Association unanimously supports this, but in terms of where the impact is biggest, I assume that it sounds like from your testimony that you think is probably on the community hospital side and on the independent community hospital side.
Absolutely, because we can't afford to have a hole in our schedule because we've got somebody scheduled for an MRI and we can't get authorization. That's a hole that we need to fill. That's a service we need to perform and generate the revenue.
And if a community hospital were affiliated with a larger hospital chain, are there areas where you could centralize that? I'm just trying to think of the competitive advantage that, a community hospital that's affiliated with one of the big guys, Yale or Hartford. Are there ways for them to bring down that cost?
Yeah, the larger hospitals will consolidate hospital billing, registration, human resources, all those functions into a more centralized role.
Got it. Well, for those of us who are concerned about, increasing decentralization, I know that, anytime you're mandating anything on insurers, there's a lot of conversation, but, making sure that we have adequate competition, especially among our smaller hospitals, seems like a priority that folks should really take seriously. So I appreciate you being here and your testimony.
Thank you.
Thank you. Rep Meskers, is your hand up, or is that from a previous? I think that's from the previous.
That's a previous, sorry.
Yeah, okay. Great, thank you. Thank you, Richard. And we appreciate you being here this afternoon. Next up, we have David Call, followed by Dr. Gray.
Hello, and thank you for the opportunity. Can you hear me?
Yes, we can.
Okay, my wife and I are long-term care policy holders. We bought our policies from Travelers in the year 2000. Travelers then sold the policies to MetLife, I think in 2005, and MetLife has transferred our policies to its spin-off Bright House Life Insurance. And my policy premium on purchase was $1,358. And this year, I have received a notice that my policy will go up to $4,000 a year. And my wife will have similar premium increases on her policy. These are standalone long-term care policies. They're not coupled with an annuity or with a life insurance product. We've submitted comments to the Connecticut Insurance Department about these astronomical increases and how unaffordable they're becoming to us. These were partnership long-term care policies. And the state of Connecticut sponsored the partnership program with an idea of containing Medicaid costs. And according to what I've read on a posting by the Office of Policy Management, there's a statement that these policies have saved the Connecticut Medicaid program $83 million to date. Now, I don't know what to date is, or when there was no date on that particular policy posting. But my point is that the state of Connecticut has a substantial interest in making sure these policies stay in force to reap the savings that they've already received. So I'm a little short on information on why these policies have increased the way they have. There's been no transparency from our Bright House that discloses anything about what costs they've incurred in premiums received. I assume our insurance department has received that information, but I got no way to check that. Well, I know they can't increase my policy premium or my wife's based on my health or my wife's. They can only do it in respect to a particular class of policy. Again, no transparency on what class we are in. So we're asking the legislature to intercede with the insurance department and perhaps provide a moratorium on future rate increases for a period of years, 3 years or something like that. Because we've had, well, as you can see, over a 300% increase in my policy.
I think your 3 minutes are up.
Okay. Well,
Thank you, David.
And I appreciate the opportunity.
Yes, well, we appreciate you coming on and waiting patiently. I do have a question for you. Have you gone to your long-term care policy company and asked for any sort of adjustment of benefits to offset your premiums?
They've offered an offset, a lower premium in return for less daily coverage. They've offered two other alternatives. And so far, we have not taken them up on that, but I think we'll have to in the future.
Okay, and then one thing that we learned at our long-term care informational forum, which David Gutchin, who runs the partnership plan, was there, that there's an option that sometimes isn't offered, but it can be requested, and it's to make sure the compounding interest on the benefit, just capping it, even just capping, I think it's at 3%, but even just asking for that to be lowered to 2% has substantially lowered some of the premium rate increases. So I just want to put that out there. I'm not saying that is a solution because we are here to look at other solutions on these increases. But I do encourage you to reach out to his office and or I can connect you with that office and send you that information. So I'll look up your testimony.
Well, thank you very much. And I submitted written testimony also. By the way, my inflation increase is 5% a year.
Okay, so that, I mean, that might be a way to save, you know, a little bit while keeping your benefit at a level that you and your wife feel comfortable with. So I will follow up with you offline. And thank you so much for being here.
Thank you very much.
Next up, we have Dr. Gray, who I know has been waiting for a very long time, so we appreciate you hanging on. And that followed by Catherine Kavanaugh.
Oh, thank you, Senator Lesser, Representative Wood, and distinguished members of the Insurance and Real Estate Committee. I'm Dr. Scott Gray. I'm an orthopedic surgeon in private practice in Danbury and a current board member of the Orthopedic Society. And I thank you all for the opportunity to provide some testimony on House Bill 5410. As you know, many of the high deductible health insurance plans offered in Connecticut result in thousands of consumers being functionally uninsured because of the high deductibles. We respectfully request that the committee consider amended language to require the insurance carrier to collect their own deductibles. Many of our patients are embarrassed that they're not able to pay the high deductible responsibility. Many forego testing and treatment, as you've heard of already today, and they also ration their own care and jeopardize their health. And when they're forced to obtain care due to an emergency, as you've heard, sometimes they don't come back for further care because of their problems with the deductible burden. And as an orthopedic surgeon, it's particularly disheartening to see patients forego postoperative rehabilitation, and I've had it happen twice this month, which threatens the outcome and quality of life. Physicians and their practices are not equipped to assume the financial risk of these plans. We physicians don't require the insurance company to assume any of our clinical responsibility. However, the insurance industry is transferring the financial risk of these high deductible products to physician offices, which we think erodes the physician-patient relationship and deteriorates proper access to care. Also, the insurance industry can reap the profits of unused premiums when patients don't utilize them because of the deductibles. So we feel the insurance company must assume the financial risk of the high deductible product. They're equipped to do so as they collect and process millions of dollars in monthly premiums. The insurance companies have all the up-to-date data on what medical charges patients have incurred and whether they've reached their deductibles, and taking this responsibility, we feel, will likely curtail to some degree the high deductible component of their plans by discouraging how they write them. It's imperative that the high deductible insurance market be reformed in part by altering the collection responsibility to mitigate further erosion of the patient-doctor relationship and stop the self-imposed rationing of care. And I thank you for your time and consideration, and I'd be happy to answer any questions, especially if you have any regarding the HSA applicability to this request that we're making.
Thank you, Dr. Gray. Do we have any questions? I don't see any. Thank you so much for your time and for spending so long waiting for us.
Okay, thank you. Thank you very much.
Dr. Kavanaugh, followed by Lynn Ide.
Hi, good afternoon, and thank you so much to Senator Lesser, Representative Wood, and the other distinguished members of the Insurance and Real Estate Committee. My name is Catherine Kavanaugh. I'm a board-certified otolaryngologist practicing in Hartford, Connecticut. I'm here as an executive member of the Connecticut ENT Society and on behalf of over 800 physicians and physicians in training in the medical specialties of otolaryngology, dermatology, ophthalmology, and urology. And we asked the committee to support Bill 5447, an act concerning prior authorization for healthcare provider services, which is critical to the ability for physicians to care for patients. Patient-centered care has become an important goal across the healthcare industry. Empowering patients to assume an active role in their care and developing individualized treatment plans can help improve care, quality, and satisfaction. Despite the clear advantages to this model, physicians and patients often face barriers in the forms of programs like prior authorizations and step therapy. Such obstacles can hinder the start of care or interrupt ongoing care, negatively affecting outcomes. The processes involved in these programs burden physicians and divert valuable resources from patient care. Many physicians feel that the amount of time they and their staff have to spend on these administrative tasks diminishes the time that they can spend providing care to patients. Patient care can be negatively affected when these processes delay needed care. Health insurers frequently require prior authorization for pharmaceuticals, durable medical equipment, and medical services. In 2020, the AMA surveyed more than 1,000 practicing physicians about prior authorization. The survey results, which are enumerated in our written testimony, show the significant burden that these policies can have on patients and physician practices. Otolaryngology practices in Connecticut have faced situations where insurer representatives inform the practice that no prior authorization is required for a given surgery. The procedure is then performed on the patient, and when reimbursement is submitted, it is denied because prior authorization was not obtained. Office staff must spend precious time appealing the inappropriate denials, and patients are stressed and aggravated since they are unsure whether their procedure will be covered. A recent example is a new policy implemented by Aetna that requires approval for cataract surgery that started in July of 2021. The policy applies to Aetna's lines of business and sites of service. Cataract surgery is vital to restoring patients' vision and independence, and allows them to perform daily activities without fear of injuring themselves or having to rely on a family member. The policy that requires ophthalmology practices to get prior authorization can lead to adverse outcomes for patients. We've heard from other ophthalmologists, especially retina specialists, that some plans are requiring prior authorization for each visit for injections to treat age-related macular degeneration. And this is a chronic condition that requires monthly treatments in many patients. We believe that requiring prior authorization for each treatment the patient will need is excessive, since many of our specialists report that the plans are approving almost all of their requests. We appreciate your timely support in addressing this urgent healthcare access issue for patients. We would prefer that the action is on this as soon as possible, but we support this study and timeline for the study that this bill provides. We ask that physician representatives be included in data gathering and analysis, particularly those in smaller practices, and that consideration be given to including the Department of Public Health as well. Thank you for addressing this issue and for reading over our written testimony for this bill and also 415. Thank you.
Thank you very much, Dr. Kavanaugh. I do have a question. So if the carrier says prior auth is not required, and then you perform something, and then they're saying you're supposed to get prior auth, is there any recourse on your end, for that error? I mean, it seems very misleading that would be the guidance. That, oh, hey, by the way, you were supposed to get this prior auth, even though upfront we said, you didn't need it.
Yeah, thank you for the question. I can ask our executive director, Deborah Osborne, to get back to you with specific examples of that problem and some of the issues that she's encountered.
Okay, and does our Department of Insurance play a role in things like that? I'd love to learn more if anyone that works in that space wants to reach out. I'd be happy to do a call. Great. Thank you so much for your time.
Thank you.
Next up, we have Lynn Ide, followed by Dr. Taylor. Hi, Lynn.
Hi, good afternoon. I appreciate the opportunity to speak in support of House Bill 5449. And I believe that it's high time that our state took a more active role to protect patients and their families from the downside of rampant hospital consolidation. I look forward to working with the champions of this bill and this committee to make this bill as strong as possible. Connecticut must act now to prevent more harm. The issues you are hearing about are not new, They have just gotten too bad for us to continue to ignore. From closing labor and delivery services, skimping on investments to meet community health needs, pushing up the cost of care, and making corporate decisions that favor the bottom line over patients, hospital systems are affecting our care, our choices, and our pocketbooks. And this trend has an impact on the ability of Black and Brown and medically underserved people to get equitable quality care. Think about this. In 2000, Connecticut had 31 independent hospitals. Now we have 5. All the rest are part of larger networks, with Hartford Healthcare leading with 8 hospitals, and Yale New Haven Health System will have 9 if their bid to acquire 3 more hospitals is approved. If you add the layer of medical practices, surgical centers, and clinics owned by hospital networks, the landscape becomes monopolistic. Patients are living with the results of this. Higher and higher prices, no demonstrable increase in the quality of health outcomes, geographic control of medical care, erosion of local hospital governance, and fewer choices of providers. I ask you, is this good for our health? As a resident of Wyndham, you're going to hear from my friends and my allies this afternoon, and this morning you heard from some. I see firsthand the downside of consolidation. In the past decade, Hartford Healthcare has methodically stripped the community focus out of what was once Wyndham Community Memorial Hospital. Poorly executed community health needs assessments with no robust local input, replacing the local board with a regional board, shipping patients to Hartford via helicopter or ambulance, and more. You've heard about them deciding to downgrade the intensive care unit in 2015, and this created a slippery slope for erosion. I'm not going to go into the details of this. I would like to just say that this will not stop unless you and the rest of the legislators step in, and we stand ready to work with you to help keep these kinds of things from continuing to happen. Thank you.
Thank you.
I'm happy to answer any questions.
We do have a question, Representative Farrar.
Thanks, Chairman Wood. Hi, Lynn. Thank you for being here. I know you were wrapping up, but one of the questions that you likely can get into, not just professionally, but I'm sure you've heard from community members, is what do you see as really the practical effects of, for instance, the closure you mentioned at Wyndham, or what happened with labor and delivery? If you can speak to that at all, particularly with the public health and public safety implications that can happen when these closures happen without more oversight.
Well, I have to go back to the fact that hospitals are allowed to downgrade an ICU. And Wyndham did that without any certificate of need approval. They didn't need that. That kind of thing needs to stop, because once that happens, you create a slippery slope, which impacts in a domino sort of way the availability of doctors and services that want to practice in a place where there isn't an ICU, for example. We believe that this led to the situation manufactured by Hartford Healthcare that caused them to close labor and delivery. We have Johnson Memorial Hospital and Sharon Hospital joining in that trend. If you live in a medically underserved part of the state, which Wyndham is, the northeast corner of the state is, that just puts undue pressure on people with limited resources or limited avenues to travel to and from different hospitals. The fact that Sharon Hospital is transporting people to New York State to have their babies. I know my colleague from the Foundation for Community Health up in the northwest part of the state submitted written testimony to this committee on what they're facing up there in Sharon. And I would just say, as a resident of Windham, with a very large low-income and Latinx population in particular, there are plenty of people having babies. They're just having them in a more difficult way than need be. As the mother of 3 children who were born at Windham Hospital, my heart was broken that my daughter, who had a baby 4 months ago and I became a grandmother, we couldn't have the baby at Windham Hospital. And, you know, if you think about it, when people drive by a hospital, if you go home to visit your mom and dad and you're driving your kids in the car and you go by the hospital that's the community hospital, what comes out of people's mouths? They say, oh, that's where Aunt Mary was born. Oh, all 3 of you were born there. It really it seems unnecessarily harsh to take that away from communities. And I know that there are alternatives. And if we want to think about health equity, we need to be pushing these hospital systems to work with the community and other resources to make decisions to provide for labor and delivery and essential health services. I know Ted Doolittle spoke earlier about the concept of requiring, like the Affordable Care Act has the 10 essential health benefits. Maybe we in Connecticut, who adopted those essential health benefits to codify them, could actually apply that in the case of certificate of need and behavior by these big systems.
Thank you, Lynn. I live in West Hartford now, but having grown up in Norfolk, the Northwest corner, this very much hits home as you described it. Earlier today, it was shared with us a little bit about kind of the governor's proposal with Director Veltri of some additional funds for some long-term planning. And I just wanted to know if you had any thoughts on that proposal as it relates to really ensuring that certificate of need works hand in hand with the long-term planning.
We say it's long overdue. Vicki Veltri and the amazing staff at the Office of Health Strategy have worked miracles with too little resources. And we do need to fund and put more staff and resources into the Office of Health Strategy. And we need to do long-term planning for the health needs of our state. Otherwise, we're making decisions in sort of a vacuum, like who in a certificate of need hearing process makes the best case, most compelling case. And we know, generally speaking, it's the hospital that has the resources to make that case, and the advocates very rarely do. I just want to point out that I'm really proud of the Windham United to Save our healthcare group. We've gotten national media attention for the pushback that we've given the hospital on this issue. And I think that it's a travesty that Windham Hospital asked for permission through CON 3 months after they already closed the facility there, which begs the question of we need to give the Attorney General more power in these situations. But also the fact that once they filed their CON in September of 2020, it is now over a year and a half later, and we still have no resolution to this issue. And towns and municipalities and families and patients shouldn't live like that.
Thank you, Lynn. Thanks for illuminating those tremendous gaps and the reasons why we can't wait to act. I appreciate it. And I just thank you for your time, and thank you to Chairman Wood. Thank you.
Thank you.
Lynn, thanks for joining us today and your work on this issue. Next up, we have Dr. Taylor, followed by Dr. Abelard.
Hi.
Hi.
I'm Stacy Taylor, Dr. Taylor, and Senator Lesser, Representative Wood, and distinguished members of the Insurance and Real Estate Committee. On behalf of the physicians and physicians in training of the Connecticut Academy of Family Physicians and the Connecticut State Medical Society, thank you for the opportunity to provide testimony on House Bill 5447. CAFP and CSMS would like to thank this committee for introducing legislation that addresses health plan prior authorization requirements. Almost universally, as you've heard, our members cite prior authorization burdens as the #1 issue facing their patients and practices. Let me illustrate how prior authorizations hurt the patients of Connecticut. Just yesterday, a lovely 100-year-old frail, debilitated patient of mine was discharged from St. Francis. She not only had COVID despite being vaccinated, but also was found to have profuse diarrhea due to an infection known as C. diff. She was dangerously dehydrated from just a few days of diarrhea. She was treated in the hospital for her C. diff with the universally recommended standard of care of treatment, vancomycin. She was unable to swallow pills, so liquid vancomycin was provided. She is now going on her 2nd day after discharge without vancomycin because her insurance requires a prior authorization. No reason was given, though I suspect it is because it is a liquid formulation. Her diarrhea has reoccurred, leaving an elderly bedridden woman sitting in her own excrement until she's cleaned up. This is wrong. Let's look at another patient in my practice who was a diabetic. He had been using a specific glucometer for several years. He has some mild cognitive impairment, but isn't demented. Unfortunately, it broke a few weeks ago. I reordered the same brand, but getting the same brand required a prior authorization. And the fact that he was accustomed to one brand of glucometer was not a valid reason to continue with the same model. I had to order something different. On a follow-up visit, I asked him what his sugars were, and he shamefully admitted that he was not taking them. As this was a normally very compliant patient, I asked why. He stated that he could not figure out how his new glucometer worked and was too embarrassed to ask for assistance. These are just 2 examples of hundreds that I have seen in the past 20 years. For every prior authorization, for every peer-to-peer, healthcare expenses increase due to additional staffing requirements. Patient care decreases as attention is diverted from direct care to administrative issues that
I think
delay
your
care.
3 minutes has passed.
May I wind up?
Yes, please.
Okay. A process that was originally intended to save money by capturing large exceptional expenditures has become an overwhelming bureaucracy that likely generates more overall healthcare expenses than savings. I am heartened to see that the prior authorization issue is being paid attention to, and I believe we should continue together to refine this process to be, over time, a more equitable, pragmatic, and efficient solution. Thank you so much.
Thank you, Stacy, for joining us today. I don't see any questions from our team, but we really appreciate your time. Next up, we have Dr. Abelard, followed by Nick Zano.
Good afternoon, members of the Insurance and Real Estate Committee. Thank you for your time. My name is Dr. Jessica Abelard, and as a physician in the field of psychiatry, I work at a federally qualified health agency in New Haven, Connecticut, where I currently reside. I'm testifying in support of HB 5447. I have my full written testimony available, but I wanted to highlight the following points. Prior authorization is intended to be a cost-effective utilization management tool that requires healthcare providers to obtain approval from either an insurance plan or pharmacy benefit manager, a third-party administrator, in order to cover the cost of a specific medicine. What prior authorization really does is lead to delays in treatment. The criteria for prior authorization remains largely unclear. For example, an insurance plan may not cover a commonly prescribed dose of 40 milligram capsules of duloxetine, which is an antidepressant that is also used for chronic pain and fibromyalgia. Instead, this prescription would prompt a prior authorization review. In order to bypass the pre-authorization review and administrative burden requiring multiple phone calls, I would have to prescribe 2 caps of 20 milligram strength, which may complicate treatment adherence. Although the intended goal of pre-authorizations is to reduce unnecessary spending, this practice is not evidence-based and could cause unintended harm. For example, one of my patients is a divorced, disabled father of 2 young children. They're actually twins. He has a history of chronic back pain and depression and has been stabilized with his current medication profile for several years. Despite this, his insurance carrier requires a pre-authorization for one of his medications, doxepin, which is an antidepressant for sleep, on an annual basis. Most recently, he was unable to fill his medication due to a delay in the pharmacy approving this sleep medication, and he suffered for several weeks without it until his next appointment with me. This situation makes him feel helpless, and there are countless other stories. This delay in treatment has serious consequences, including a relapse of mental illness, increased healthcare spending, multiple phone calls, decrease in productivity, and even abandonment of care out of sheer frustration. The practice of pre-authorization undermines medical expertise. Several states have enacted reforms, including Georgia and Illinois, in order to ensure timely delivery of care and to minimize administrative burdens. In closing, we ask for increased transparency by insurers and request that a study concerning pre-authorization issues in the state be conducted, that HB 5447 specifically eliminates pre-authorizations for generic medications that are not controlled substances and dose changes of the same medication, that all reviews be conducted by physicians in the same or similar specialty as the prescriber under review, and that patient-centered care be prioritized for all patients.
Thank you. Your 3 minutes are up.
All right, please support this bill, and I'm happy to answer questions, and thank you for your time.
Thank you, Dr. Abelard. When you were referencing the doctor review, are you talking about the peer-to-peer portion of prior auth?
Yes, the peer-to-peer, there are times when it's outsourced to another agency and it's not a physician who is making the decision determination.
Okay, I have heard that request before, so I just wanted to make sure I was hearing that correctly. It just seems like that doesn't help the patient at all if you don't have the same peer, reviewing the prior auth. So thank you for your testimony. I look forward to reading your written testimony as well to go over those suggestions. I don't see any other questions, so thank you for being here.
Thank you.
Next up, we have Nick Zano, followed by Paul Verastro, and I'm sorry for mangling anyone's names.
Nick is not present.
Okay, Paul, you are up. Paul, if you could just unmute.
There we go.
Okay.
You're on. Good afternoon, distinguished members of the Real Estate and Insurance Committee. My name is Paul Verastro. I am the CEO of the Center for Advanced Reproductive Services, the fertility program at UConn Health in Farmington, Connecticut. I am submitting written testimony for my enthusiastic support of HB 5446, an act concerning equal coverage for medically necessary infertility treatment. Since 1983, the center has been responsible for over 17,000 live births, mostly to Connecticut residents. We estimate about 2,500 babies born to LGBTQ+ families. During my 23 years at the center, I've experienced firsthand the challenges LGBTQ+ families face in trying to build their families. Personally, I first came out to my family at the age of 16, way back in 1981. The scene had all the drama one would expect for the subject and the era. My mother's final words to me were, "I'm heartbroken, you'll never get married or have children." It hurt, but was also the reality of the time. Fortunately, a new generation of LGBTQ+ people born after AIDS and post Will and Grace face a more promising reality. Federal law recognized gay marriage in 2015, and advanced reproductive technologies have evolved, blazing a family-building path for LGBTQ+ people. However, that path is often blocked by a lack of insurance coverage. Connecticut has a long and strong tradition of reproductive laws supporting family building through advanced reproductive technologies. As early as 1991, the state recognized children born via donor sperm as being legitimate. Since the late 90s, the state has recognized gestational carrier contracts and pre-birth orders. Comparatively, Connecticut has always been an LGBTQ plus friendly family building state, even if unintentionally. Most recently, Connecticut took the very intentional step of passing the Parentage Act, making parental acknowledgement gender neutral, ending the legal assumption that every child has a mom and dad. This is a positive step forward, which reflects societal shifts and aligns the clinical facts of LGBTQ plus family building. However, there now exists an inconsistency between the Parentage Act and the current fertility mandate. The mandate requires a current or imminent, in the case of cancer patients, clinical diagnosis of infertility based on an outdated heteronormative family building model. Most LGBTQ plus people seeking to build families will never meet this narrowly defined clinical threshold, but always require medical intervention to build their families. Redefining infertility to include anyone who needs medical intervention serves to align the Parentage Act and the fertility mandate.
Thank you. Your 3 minutes are up.
Okay.
Paul,
I think.
do you have a sentence to wrap up?
Sure. This bill will allow the LGBTQ plus community, as well as those seeking to become single parents, to have access to fertility treatment coverage they already are paying for, avoid unnecessary delays, expenses, and unproductive medical procedures. I'm happy to answer any questions.
Great. I don't see any questions from the committee. Paul, thank you so much for being here. Next up, we have Dr. Lim, followed by Susie Craig.
Well, good afternoon. Thanks for having me. My name is Andrew Lim, and I am the Director of Emergency Medicine for Bristol Health. Thank you for the opportunity to submit testimony concerning HB 5447, an act concerning prior authorization for healthcare provider services. Bristol Health supports legislative action to address serious problems with the conduct of prior authorization. This bill, as it currently is written, does not protect patients or their providers. For 2 years, Bristol Health and all healthcare systems across the state has been on the front lines caring for patients during this pandemic. Amazing work is not just taking place in our emergency department, but in every corner of our organization. Unfortunately, the one common trend that has made our job consistently more difficult is timely access to prior authorization. While the intent of prior authorization is to help ensure patients receive care that is safe and beneficial to the individuals, I have personally observed that insurance plans, specifically Medicare Advantage plans, are applying prior authorization requirements that negatively impact care. On average, in our emergency department, we typically see about 80 patients each day. During the height of Omicron, we saw twice that volume. Additionally, we had patients boarded in the ED for 2 to 3 days longer than necessary, awaiting authorizations from insurance companies before they could be moved to a setting where they would receive the appropriate level of care. For each of those instances, we could have potentially used that bed to treat up to 20 more patients. While heightened during COVID, this issue is not just a result of the pandemic. Challenges with prior authorizations have continuously occurred on Friday nights or weekends when the appropriate staff at the insurance company is unavailable to approve transfers to short-term rehab. This results in the patients having to stay overnight or over the weekend in the emergency room until the insurance company approves the physician's recommendation. There also is an overlooked downstream effect that occurs in all hospital ERs as a result of this pending approval process. For example, I work closely with nursing leadership to determine bed availability during a crisis. Our nursing director was excited to report that there were approximately 10 anticipated discharges from our medical unit one Monday. This would help to move the 12 already admitted patients up from our ER. For frame of reference, we are currently a 15-bed emergency room. At a time when staff was in literal tears from the culmination of 2 years of stress, we quickly erased any hope of decompressing the ER when we had to update staff that all of the medically discharged patients upstairs were actually awaiting insurance authorization. Due to the lack of timely authorizations, overcrowding occurs in the ED and patient evaluations are conducted in hallways and waiting rooms as rooms were simply not available. Additional staff resources are needed to care for these patients, and it becomes difficult to identify those who are in need of more acute treatment. During a time of national emergency, when workforce shortages and capacity have already been persistent challenges, this is simply crippling. However, our team continued to deliver the best care possible to all those who came through the door, as it is our pledge as providers.
Thank you. Your 3 minutes are up.
Thank you.
Thank you, Dr. Lim. We have seen you here before, and we know that you're working hard every day. So for you to spend time testifying, we really appreciate it. I will go over to Senator Anwar. You're still muted. No. No, I can see your lips moving, but I can't hear anything. No. I think he's going to log back out and log in. Dr. Lim, what kind of processing? I mean, we talked to others from Bristol Health, but can you just walk me through your prior auth process? And is it phone calls? Is it electronically? Is it fax? Like, just share a little bit with us.
Yeah, of course. Yeah. So from my perspective in the ED, there are two main issues. One is if I have a patient who comes in who's let's say 2 weeks to walk, or they're deconditioned and perhaps they don't meet criteria for inpatient admission, we do our best to try to get them to an appropriate level of care like rehab. To do that process, our case managers are really instrumental in terms of working through that process. And I know that they unfortunately are required to use technology like fax machines to fax over an insurance authorization. What I'm told is that the regulations state that insurance companies should give us a response within 1 hour, but in reality, that process is oftentimes, overnight or even a few days if it lands on a Friday. Likewise, as I said, on the inpatient units, it's the same process in terms of reaching out to insurance companies via phone or fax, and it's similar delays as well too, which is frustrating.
Okay, great. Senator Anwar, are you able to?
Yeah, can you hear me now?
Yeah.
Okay, good. Thank you. Dr. Lim, thank you for your testimony. Dr. Lim, I did not hear you say the words, but I think you almost touched on the words that the safety of the patients are being impacted because of this policy. Did you almost say that, or did you not say that?
I was essentially alluding to that, but I have no qualms about saying that the patient safety was definitely impacted. And the frustrating part about that is that I think all of us in healthcare signed up to go above and beyond and do what it takes. I was working with colleagues who were working overtime, working in departments that they weren't traditionally trained for, and there wasn't a single colleague that had not stepped up. There wasn't a single person that said, there wasn't a single person that said, no, I will not do this. Nurses, physicians, APRNs, PAs, everyone stepped up above and beyond. I can't be prouder of my team. The frustration lies in that while we were on the front lines doing extra and everything we could, we realized that really the bottleneck was waiting for insurance authorizations. We were willing to put in the time and be as efficient as possible, but we were held back by waiting for insurance companies to move. That was really the frustrating part. I think really highlighted in the last few months.
I'm just going to think aloud. Do you think that just like everybody else during the critical time, were they stretched as well? Like, for example, during the various offices, there were not enough people, some were sick. As a result, or is this the usual process, or this was much more than usual? And now with the current phase of the pandemic, are we seeing things get better, or it's just a chronic process?
I think this is a chronic problem that was highlighted during the pandemic. I mean, to be fair, I imagine that much like the rest of the world, they were dealing with staffing shortages and illness, just like us. But while we were kind of finding creative solutions the frustration was that, the same policies were in place, and, I was looking for them to be more of a partner in delivering healthcare when they weren't, is I guess what I'm saying. I think another example kind of comes to mind is that, ideally, as we know, with patients with COVID and airborne precautions, we really should have those patients, in a room behind the door by themselves in airborne isolation, and when you go beyond capacity, hospital capacity, that becomes an impossibility, and it becomes a risk to other patients, becomes a risk to staff. And that, that kind of snowball effect is something we really saw. So it was one of the solutions, that we saw was, why are we still holding on to patients when they're medically discharged? This is an easy solution. And I think, unfortunately, although I'm optimistic about the pandemic and variants, I think, unfortunately, history has told us that we're likely to see, another surge, sadly.
I hope you're inaccurate on that part.
Me as well.
Yes. And finally, are there within the spectrum, there's so many insurance companies, and then there's Medicare as well. Can you tell me what is the differential in that process? Somebody was alluding to, for some of the components, Medicare is easier, and for others, there are some insurances that may not be as easy to work with. Have you seen patterns that you're able to speak of?
Yeah, I mean, I think our case managers would probably be would be able to provide more details. I know the feedback that I get is that you are correct. Some of the Medicare tends to be a little bit easier to work with. From what I told, the Medicare Advantage plans tend to be more difficult in terms of awaiting authorizations. I think we've had some significant delays unfortunately, for our patients that have those plans. That tends to be a troublesome carrier.
Thank you so much for your testimony. Thank you, Madam Chair.
Thank you.
Thank you. Any other questions? Thank you, Dr. Lim.
Thank you.
Next up, we have Susie Craig, followed by Gary Mayer.
Thank you, Rep, and good afternoon to the committee. Thank you for your conversation today and for hanging in. It's such a long day. My name is Susie Craig. I run Point on advocacy efforts at Mental Health Connecticut. You have my written testimony. I would like to talk specifically about parity today. As many of you know, because many of you were champions and supporters of the 2019 Connecticut bill, we have parity in the state of Connecticut. The law from 2019 outlines the process and the deadlines required for Connecticut health insurance plans, private health insurance plans, to comply with the federal law, which has been enacted since 2008. I think what's important about that is really just reinforcing that we have a law in place. Unfortunately, those deadlines have been missed, so we do not yet have the data. And let's face it, this bill is a data collection bill. So for us to understand if parity is happening and where it is not happening, we need to understand the data, and we need to have it in a comprehensible, understandable format to make those determinations. So we're a bit befuddled, if you will, to understand what this bill is. I understand it's a placeholder bill and it doesn't have much language at this point in time, but I'm curious to know what the intention is. And I also just want to make a couple more points. The model legislation that we used in 2019 is the model legislation that's been enacted in over half of the states across the country. Many of those states have moved on. They've had that foundation of helping to explain what the federal law is and how to comply with it. And now they're moving on to the next best practice, which is to adopt generally accepted standards of care. And so those best practices and based on evidence and those models are being adopted in other states across the country. But we can't get there until we do this first step of collecting the data, understanding where the disparities are, so we can set ourselves up for success, for really understanding what enforcement needs to look like and where we can make sure that we're achieving health equity across the state for all residents. And I'm just going to leave a little bit time for questions if anyone has some.
Great. Do we have any questions from the committee? Yeah, this is a work in progress bill, Susie. So we will be refining it as we move forward. So thank you. Great. Thank you for being here. Next up, we have Gary Meyer, followed by Brooke Foley.
Yes, this is Jerry Marr speaking. Can you hear me okay?
Yes, thank you for correcting
That's
my
quite all right.
pronunciation.
I submitted written testimony with regard to Senate Bill 409, an act concerning long-term care insurance. My wife and I each purchased policies back in the 90s, and our premiums have increased have nearly tripled in the last 5 years. I think Section 2 of Senate Bill 409 is a good one. Insurance companies should be required to send out notices to long-term care policyholders, and the insurance department should be required to seek policyholder input whenever premium increases exceeding 10% are being requested. And I think affordability needs to be part of the equation here. Currently, the department does not consider that. Very often at the end of their comments, when they conclude in terms of granting a certain level of increase, they say that these increases are not excessive, but to the contrary, these increases are creating excessive hardships on policyholders. Now, I know Representative Wood, you asked a previous speaker about consideration of taking perhaps a lower level of benefits. And the only thing I would point out there is that we have been faithfully paying our premiums for a certain level of benefits for over 20 years. And that's what we signed up for. And that's what we hope to perhaps be able to receive should we need those in the future. The other thing too is that the insurance companies woefully inaccurately had some assumptions with regard to how this would play out. And I think they should shoulder a bigger part of the burden. Also, the insurance department apparently is utilizing past loss recovery calculations to make decisions upon premium increases. And I've asked them to provide me with details in terms of how that's affected my premiums over the last 5 years. And I'm in the process of hopefully getting a response from them soon about that. And other recommendations, along those lines, recommendations, I think you should consider placing a 3-year moratorium on future long-term premium care increases, prohibit the Department of Insurance from utilizing that past loss recovery methodology, and perhaps require insurance companies to reimburse for policyholders for any amounts exceeding what would otherwise be the norm. The National Association of Insurance Commissioners has deemed that past loss recovery calculations are actually flawed and should not be utilized. The other possibility is to create a Connecticut Office of Long-Term Care Insurance Associate that will represent the interests of the policyholders, similar to the way in which the Office of Consumer Counsel and Healthcare Advocate represent consumers. I think you need to have a better long-term care forecasting, either by the Department of Insurance or by the Connecticut Office of Long-Term.
Thank you. Your 3 minutes are up.
I would just conclude by saying that I did submit the testimony. Please look at page 2. The insurance companies are flush with revenues and assets. The first year that my wife and I suffered premium increases was in 2018. The 3 top executives within the Bright House Financial, the 3 top executives of that company went from total salary compensation in 2017 of $4 million to nearly $25 million in 2018. So that's why it's difficult, again, to consider taking a lower level of benefits. Thank you very much for your time and consideration, and I hope that you give some thought to these recommendations. Thank you very much.
Thank you, Jerry. Senator Wong.
Thank you, Madam Chair. And Mr. Maher, thank you for your testimony. In reading your testimony, obviously you've given great effort to this in your documentation. So thank you for sharing that with the committee. Now, you mentioned began administering your policy in 2017. Is that when you acquired it, or did you purchase it much earlier?
No, we purchased our policies in the 1990s, similar to the previous caller, who I believe was Mr. Call. And that was originally with Travelers Insurance. And then subsequently, the policies were administered by MetLife. And just in the last 5 years, were taken over by Bright House Life Insurance. And that's when we began to incur increases that subsequently amounted to basically a tripling in our premium increases.
So you've had this for over 20 years then?
Oh, yes. Yeah.
And have you ever made claims against these policies?
Never have made claims, no.
Now, looking at these calculations, obviously there's statute that's been put in by the good efforts of my colleagues in this General Assembly that caps the increases starting at January 1. But even with that, do you believe that you could afford this 5 years down the road, 10 years down the road?
Well, certainly as these increases continue to occur, they become less and less affordable. I know of some policyholders who have, one, given up their policies or have backed down on their benefit level considerably. And a third category of retirees who have ended up having to get part-time jobs in order to be able to afford their increases. So this is having dramatic ramifications upon the senior policyholders, particularly those on fixed incomes.
I think one of the themes that led us in the leadership of this committee and many of our colleagues to address this policy issue is the anger and the frustration for the many years you have put into this policy. And as you get into your senior years that you're looking to utilize it, that may not be there for you. You mentioned a couple of solutions. Could you take a look and what do you think about a tax credit to be able to offset your ability to maintain these policies?
Well, I think that's a possibility. Certainly, it's helpful at the state level. Whether one itemizes or not, I think has some implications there. Given the, I know that there's certainly been an increase at the standard deduction level at the federal level. How that would actually play out with regard to the state level, I think helps in some respects. Again, I think the body of 409 is well intended, but at the same time, to make it stronger, I think some of the recommendations that I have put forward need to be considered, particularly the 3-year moratorium, prohibiting the insurance department from using methodology that may be inadvertently increasing people's premiums, and a consideration of having an independent body such as the long-term care insurance advocate to represent the interests of the policyholders. And again, not to be repetitive, but certainly the insurance executives have been making quite well in recent years, going from $4 million in terms of total compensation for the top 3 executives at Bright House to nearly 25 million 1 year later, at the same time and concurrent with our first premium increase.
One last question, and it's refreshing your memory back 20 plus years ago. When you purchased these policies, were you aware that there was no premium guaranteed, that the premium could rise based upon the calculated risk and the cost moving forward? Did you think that this was a term policy moving forward? Do you recollect how the product was presented to you and who you bought it from the standpoint? Was it a supplemental product that you bought from your life insurance or property and casualty insurance agent? Just trying to understand the history of how these policies were presented to people 20 plus years ago that are struggling right now with their shocking surprise?
Yes, I would say I bought my policy in my early to mid 40s, and I'm nearly 70 now. And I remember at the time just trying to plan for the future with regard to my wife, my family, safeguarding my assets and so forth. So I thought it was a good opportunity to jump in then. We did have a representative come to the door. I'm sure I called that person. It was a representative of the Travelers Insurance Company. And yes, in fairness, the person did indicate at the time that there could be premium increases over time, but never anticipated the extent to which the premium increases would occur. As I said, they've nearly tripled in the last 5 years. So that was something that was unanticipated. And I think too, that the product was couched in that, first of all, that Travelers was a reputable company and would stand by its product. And also, given that it was being sold as a Connecticut partnership program, certainly had some sense of security that the state would be there to back it and perhaps subsidize might be too strong a word, but certainly be an entity there that would back up and provide some support for people who are purchasing these policies so that they just wouldn't end up being in a situation of having their premium increases tripled over the period of time. Certainly having a premium increase that was modest and continuous over time, I think would have been a very fair thing. But all of a sudden in the last 5 years, caused the premium increases to triple is just becoming very devastating for a lot of senior policyholders.
Thank you. And I appreciate that. And I think it's important to note that, you know, for our sales representatives and the insurance companies, they did present this as obviously a rate risk, but obviously no one would have anticipated the dramatic and incredible rise on this. I think as policymaker, we're trying to address the right now, but I don't think there should be blame placed on specific parties. I think we're going to try to address these issues. Healthcare costs are just unsustainable across all the boards, and we have to fully understand the true cost of healthcare. But that being said, I think one of the questions that you mentioned is there is a possibility for you to reduce your coverage to lower the premium or to keep it relatively stable. But that's not a consideration that you would want to consider given the amount of financial commitment you already made. Would that be a correct statement?
That would be
reflect many people saying that as well.
We purchased the policy with certain benefits in mind, and we hope that those benefits will be in place should we ever need the coverage. And at the same time, again, where it's difficult to step down our benefit level comes from several reasons. One, that they, intentional or not, the original assumptions were woefully inaccurate. There may be methodologies that the Department of Insurance are using that allow a higher level of premium increase than should otherwise be afforded based upon standards by the National Association of Insurance Commissioners. And thirdly, just seeing the dramatic increase in the executive salaries for the insurance companies and the level of assets and revenues that the companies are enjoying in recent years, it's just it just seems unfair that senior policyholders should need to step down their benefit level in the face of all that.
Well, thank you, Mr. Mayor, and I think this testimonial opportunity is an opportunity. I want to acknowledge my colleagues here, Madam Chairwoman Wood, and as well as Representative Comey, Representative Mesker. They've been true advocates on this. It really is your voice and some of the frustrations you articulated and written in your testimony is reflected by many people that we've talked to that may not be able to testify or submit testimony. But I appreciate you giving a voice to them. And again, acknowledging the challenge that we have in front of us, but the ability to at least try to address it and move forward as a committee. So thank you very much for your time and being patient with us. And you represent the voice of so many people that are incredibly frustrated and we're hopeful to be helpful and give you an opportunity to have better policy moving forward. Thank you, Madam Chair. Thank you, Mr. Mayor.
And thank you very much for your time and your consideration. And I just want to give a shout out to Alex. He's a tremendous committee clerk.
Yes, he is. Thank you for saying that.
I worked in the General Assembly myself for almost 35 years, so I certainly appreciate great staff.
Oh, well, I just was told by someone that you used to be an OFA, so thank you for your service to our state government.
Thank you.
All right, thank you. Next up, we have Brooke Foley, followed by Mark Schaefer.
Good afternoon, Representative Wood, Senator Lesser, and distinguished members of the committee. Thank you for the opportunity to testify today. My name is Brooke Foley, and I'm the General Counsel of the Insurance Association of Connecticut, or the IAC. The IAC is a state-based trade association representing Connecticut's property and casualty insurance industry and Connecticut's life insurance and financial securities industries. The IAC opposes House Bill 5448. The language of the bill prevents an insurance company from requiring an insured policyholder to pay for the privilege of selecting legal counsel of their choice for representation in a legal claim covered under said policy. Employment practices liability insurance is important coverage offered to businesses in the state to protect employers from claims against their employees. Under these policies, policyholders currently do not typically select their own legal counsel to represent them in legal claims. Under the contract policy language, insurance companies have the quote right and duty to select the counsel, and in accordance with that obligation, insurers hire law firms to defend employers who have such claims filed against them. Insurance companies select attorneys who are employment practice experts who have practiced in this area of the law for years with the experience and expertise to swiftly and effectively defend these claims. This maintains efficiency, keeps costs and resulting premiums low, and in turn keeps the market for this insurance coverage competitive. The employment practices liability insurance market works well, and our member companies have not received complaints from policyholders about the current process. Insurers have invested interest in ensuring these cases are handled by experienced attorneys as efficiently as possible to ensure predictable results. At the end of the day, this is a contractually negotiated item and the insurance company follows the contract. If the policyholder bought a duty to defend policy, the insurer chooses the counsel. If the policyholder wants something different, they negotiate that at the time of the contract purchase. If a policyholder purchases duty to defend policy but later insists on using their own counsel, they may have to pay for an endorsement to cover the difference in price from the counsel selected by the insurer in accordance with the increased potential risk associated with representation by counsel who may not be experts in this area of the law. We ask the committee to reject House Bill 5448. Thank you, and I'm happy to answer any questions.
Thank you for that. Do we have any questions from the committee? Brooke, thank you so much for being here.
Thank you so much.
Next up, we have Mark Schaefer, followed by Davina Frankhauser. Okay, I don't see either. Oh, Davina is there. Davina, you're up. Followed by Ellen Andrews.
I'm letting Mark Schaefer in now too.
So we'll have Mark go first then?
Yes, he should be in now.
Hi, Mark. You can unmute yourself and put your video on. You are up. Mark, are you there? Great.
Yes, I am, and apologies for the delay. So thank you for the time. The Connecticut Hospital Association appreciates this opportunity to submit testimony concerning HB 5447, an act concerning prior authorization for healthcare provider services. CHA supports legislative action to address serious problems with the conduct of prior authorization. However, this bill as written doesn't protect patients or their providers. Private health plans manage, as you've heard, most of the healthcare coverage in Connecticut, including employer-sponsored coverage and Medicare Advantage. For all of this coverage, private health plans rely on prior authorization as a means to gatekeep access to medically necessary services. In recent years, the health plans have begun abusing the prior authorization process and using it as a tool to restrict access to patients' covered services. While the stated intent of prior authorization is to help ensure patients receive safe and appropriate care, many health plans apply prior authorization requirements in ways that adversely impact care. Perhaps the most serious problem is the lack of timely authorization. Delays are most common when patients come in after hours or on weekends, when most health plans do not have staff available to review routine requests. Our hospitals report some patients spending multiple days or more in the hospital than necessary due to health plan delays in authorizing post-acute care. A patient ready for discharge after business hours on Friday often needs to wait all weekend to be discharged to a more appropriate level of care. Keeping a patient in the emergency department or an inpatient bed while waiting for a plan to respond is not in the best interest of the patient. Patients who no longer require an acute level of care should be transferred to a place where they can get the specialized care they need. When patients wait for a transfer to post-acute care, their progress toward recovery can be negatively impacted. Prior authorization processes also have an enormous impact on the healthcare workforce and on the cost of care. Many plans use inconsistent administrative protocols and a dizzying array of timelines and requirements for prior authorization requests, reviews, approvals, and communication. In the face of workforce shortages and strained health system capacity, there's simply not enough bandwidth to comply with these cumbersome administrative procedures. Hospitals often have multiple full-time employees whose sole role is to manage health plan prior authorization requests. And these processes exacerbate the workforce challenges that you've heard so much about. They contribute to physician and staff burnout, and they contribute mightily to the cost of care. Our hospitals also report frequent occasions where a service is clearly medically necessary, but the health plan issues the denial anyway. In 2018, the Office of the Inspector General issued a report about Medicare Advantage prior authorization and found that 75% of the denials were overturned on appeal, which clearly demonstrate that plans were denying requests even when the need for services is well established within clinical guidelines or accepted standards of care. Unfortunately, this bill does not address the need for governmental action to end aggressive prior authorization practices.
Thank you. Your 3 minutes are up.
Instead of a study, what we need are reasonable standards for prior authorization administration. Thanks so much for your time.
Thank you very much, Mark. Senator Lesser.
Yes, thank you, Mark. And just quickly, does the CHA, does it fully align its comments with some of the testimony received from some of those small hospitals in the state?
Yes.
Okay, good. And then with regard to CON, we did hear a lot of testimony earlier in the day from Director Veltri, and I didn't know if about what she was suggesting we should contemplate for inclusion, and I didn't know if you had any comments on some of the things that she had told us.
I didn't catch all of her testimony, so I'm reluctant to comment unless there's a specific question you have about her comments that you'd like an opinion on.
Nope, that's okay. I'm sure we'll have plenty of conversations going forward, so I really appreciate it.
Thanks so much.
Mark, thank you for being here.
Happy to do so. Have a great
Next
day.
up, we have Ellen Andrews, followed by Jill Kelly. Ellen, are you there?
Yep, I'm here.
Hi, how's it going?
Okay. Thank you. I'm Ellen Andrews from the Connecticut Health Policy Project, and I want to thank you for this opportunity to offer our strong support for SB 416. You've heard a lot already today about consolidation in the provider market. It's happening, it's raising prices, and it's not improving quality. This bill follows on from the legislative forum that you had back in September on this issue and others, which I love that, how policy is iterative. I also think consolidation also, and this is something that hasn't been brought up, but it's really important, also harms the staff, overstressed, burnt out staff in hospitals. And you should really look at the testimony of our fellow, Haley Magnetta. She is a PA in an emergency room. She's working today in an emergency room, or she would have been testifying today. And she can talk a great deal about what this means to people in the trenches trying to get by. So we heard a lot of talk about strengthening CON, and I don't disagree with any of that. I think that's really important. You should know we do have among the best in the nation laws already. We have very strong CON laws. I think we need to work with our regulators to make sure that we use some of the levers that are available in the in legislation. You've also heard that we need a plan. Of course we do. We don't have a plan. And I hope that there's an open and balanced process that doesn't just bring the, the vested interest to the table, but also includes public input, meaningful way. But we can't wait for it. Hospitals are gobbling up practices in other hospitals at an astounding rate right now. We really can't afford it. SB 416 is part of dealing with that the horse is out of the barn in many ways in terms of consolidation, and we need to level the playing field with independent community hospitals and independent practices and give them a chance to survive. And this bill does that. It prohibits anti-competitive clauses. I won't go through what they are, but if there are questions, I'm happy to talk about it more than you want to hear. And the great thing about it is it's preventive. This would stop consolidation. We don't have to wait for it to happen and then sue. Other states have adopted these provisions and they're saving money, and even more states are considering these laws. One thing I want to address is Senator Lesser, you said at one point that the problem is in areas where there are monopolies and that there is good competition in areas where there isn't. That's precisely the problem that 416 is meant to address. These all or nothing clauses. For instance, if you look at, it's really wicked cool tool, Turquoise Health tool, they now include quality and price comparisons among hospitals. It's an amazing amount of work. I'm going to be playing with that all weekend. But for an ER visit, for instance, a level 1 visit at St. Francis is $340. Hartford Hospital, it's 2.7 times more. It's almost $1,000. For a level 5 visit, it's $1,266 versus $4,000. And they're just a few miles away from each other. So this is a problem everywhere in the state. Monopolies in one part affect all of us and the prices that we pay.
Thank you. Your 3 minutes are up.
So I was wrapping up. So I agree with Representative Farrar. We can't wait to act, and I hope you will pass SB 416.
Thank you, Ellen. I do want to talk a little bit about our state right now, what the state of Connecticut is like in terms of these health systems. Like in the Hartford area, we have the option of going to St. Francis, Hartford Health, there's Middlesex, there's New Britain General, there's Bristol. Are these options available in like a New Haven or a, I'm hearing a lot of testimony that in some of the rural parts of our state, there's no options. So I just wanted you to give us like a high level picture of what's happening in Connecticut. Yeah, the consolidation is growing. Yale New Haven just announced that they intend to acquire 3 more hospitals. It's out of control, and it's not just hospital to hospital, the vertical consolidation, but it's also more practices and other kinds of health facilities that often feed people into the healthcare system. So it is growing, and it's out of control, and it's unsustainable. And even in Hartford, where you have choices, the prices are still driven up because people in other parts of the state don't have choices. The fact that Hartford Healthcare has Charlotte Hungerford Hospital, for instance, and that's a must-have facility. They have to have it to comply with government regulations about access, means that they can say, if you want Charlotte Hungerford in, you have to take Hartford Hospital, even though there are all those other facilities that you talked about. And so they can name their own price, and clearly they are. It's 3 times as much as St. Francis. So it's a problem everywhere. Yeah. One thing that you mentioned in your testimony was that other states have implemented this legislation and they're saving money. Can you tell us where they're saving money? Yeah, Massachusetts for sure. Nevada just passed the bill, so they don't have savings right now. California's is in some place in implementation right now. Massachusetts, they're saving between 5 and 17%, depending on which study you like to look at, by having not only all or nothing, but also the tiers, so that consumers can choose to what based on their cost sharing, a better hospital that's either better in terms of quality and or efficiency, just a higher value tier. But the tiers have to be meaningful. If Hartford Healthcare comes in and says, if you want Charlotte Hungerford, you have to put us in the best tier, regardless of what our
our price is or what our quality is, well, then that's not meaningful and we're not going to get the savings.
Great. Any other questions from the committee? Senator Wong.
Thank you, Ellen, for your continuous great input and work. I found some interesting numbers. You either you or the Madam Chair talked about the St. Francis issue, and obviously it's very real in the recent acquisition by Yale of the 3 hospitals. Do you see it continuing? And if it's continuing, what are some of the I would say kind of guardrails we can have to manage to ensure that the marketplace competition still exists, even though we have a few mega systems?
Yeah, I agree. I think, well, we should, first of all, the OHS has not approved the Yale's merger of acquisition of 3 more hospitals. So I think we can, I'm not saying CON doesn't matter, it does, but I think we need to do more. It's gotten out of control. And I think that stopping those, prohibiting those anti-competitive clauses, those all or nothing clauses where they can, leverage one must-have hospital in one place to basically name their price across the rest of the state. And also, I think tiers are a really good idea. As a consumer advocate, I do. I think it's better if we can, as consumers, we have a choice as opposed to a narrow network of choosing a tier where if, we can pay less and get the state plan is doing this, Centers of Excellence, go to a place that has better quality and better prices, and we pay less. That's going to put, not only is it good for us, and if you really want to go to another hospital, then you can go, but you just have to pay a higher deductible or a higher cost sharing. But it also puts pressure on, and this happened in Maine when they put in tiers. The hospitals all worked really hard to get an A grade. Theirs was not tiers, it was more of A, B, C, D, and F. And hospitals that came in at failing grades worked really hard to get into an A, to get to that lower tier. I believe in markets. Maybe I shouldn't. Maybe I'm not a very good progressive, but I believe in markets, and they're very powerful to move people. And I think that's one way to move the hospitals and the systems to improve quality and serve us.
Thank
better.
you, Ellen. And I'm going to be devil's advocate when you talk about the market forces. I think we have to be cautious when we look at not allowing them to merge, because the possibility is that the marketplace would not support those hospitals, and therefore they would not exist. And that is the risk if we potentially reject the acquisition. That is a delicate balance on a free market in regards to healthcare. If you look at it as a pure economic model, because there are many healthcare hospital systems locally that are duplicative of services and may not survive. So what do you say to that from a standpoint of a market answer, and saying, look, these mergers are essential and necessary to be able to have an economy of scale to still exist to provide care, and they may be arbitrarily making a care offering decisions, but the hospital's still in the community. What would you say to that counterpoint? I'd love to hear that.
Yeah, I understand that completely, because here, in some respects, Hartford is in a much better place than where I live here in New Haven. We don't have another hospital. St. Rave's, I gave birth to my son at St. Rave's, but that doesn't exist anymore. And by all accounts, they were going to go out of business if Yale didn't merge with them. And I understand that. And I wish that we had been able to address it sooner, intervene sooner, and keep that community option. I'll tell you, as somebody who worked in the legislature trying to find care for people who are uninsured, St. Rave's was a godsend, a Catholic hospital, a godsend, but they were wonderful in terms of taking patients and making very reasonable payment arrangements for people. I'll tell you, Yale New Haven is not as good about that. They're not, definitely not. I wish we could have. Now, given that happened, I think it should be only mergers should, in that that situation should happen when a hospital is going to go out of business. Now, lots of these mergers are between perfectly profitable hospitals. And so that's not a concern. So I don't think that we should be, I think we should take those with a real big grain of salt. But I also feel, and I had conversations with people about this, we subsidize small businesses in lots of ways in the state, and also the federal government does too. And, you know, the burgers that a diner flips aren't necessarily any different than McDonald's, but it's good to have diversity in that, in those environments. And that's, you know, a diner. Small businesses and small hospitals and practices offer incredible diversity and a richness to our healthcare system and choice that would be really sorry to lose. So I think we should think about that in a broader context. And I'd love to have that conversation with you. How do we make sure we keep those community hospitals in the community?
I always appreciate your thoughts and insights. And one of the interesting parts, I mean, as we're having the certificate, the con decisions, you cited that, you know, OHS pretty much approved all but 3 of the con decisions, and you called it a robust. But we're also hearing that many entities are being held and stalled out for many years. There are many advocates that talked about this whole process and a frustration in regards to approval. But the percentages you just cited is pretty good. So, I mean, who's right on that?
Well, I think they can both be true. It can be a very slow process, but one that's biased toward approvals. And I think that's really accurate. And I'm glad to hear that, you know, OHS is looking at reevaluating the CON process. I agree with Director Veltri that the task force recommendations, we should look at those again. But I also believe that we are at a place right now with really good rules. I've been an intervener in one merger. I've been actively involved in another, and the office didn't take advantage of the opportunities to protect consumers and to protect the community and protect competition that they could have under the law. That is my opinion as an intervener, but I really believe they could have done better, to be honest.
I think we're all striving to do better. The last thing I just wanted to offer as a thought, when you mentioned St. Raphael's, as we have consolidation and non-faith-based large systems acquire faith-based systems, I think it's equally important to maintain that respect of the institutional culture and practice theory. We have seen that virtually disappear at St. Raphael's. My hope is for systems that are being acquired that are faith-based, like St. Vincent's down in Bridgeport and many other entities. Well, there are as many entities that are not acquired by the Trinity system, that we retain the history and the philosophy of care that's integral to the nature of the very systems that acquire. When you mention St. Raphael's, it is a disappointment and frustration that to see that the entire culture of that institutional faith-based is pretty much virtually disappeared. That's just my social commentary on that. And I just had to mention it when you mentioned the vast difference of St. Raphael's to the ones that I knew about, the one that I used to know. Thank you, Madam Chair, for the editorializing, unless Ms. Andrews wanted to add to that.
Oh, I agree completely.
Thank you, Ellen, for spending so much time with us today. We appreciate it.
Thanks.
I believe I skipped over Davina. And after Davina would be Jill. Hi, Davina. Thank you for waiting.
Oh, no problem. Co-Chair Woods and Co-Chair Lesser and members of the Insurance and Real Estate Committee. My name is Davina Fankhauser, and I'm the co-founder of Fertility Within Reach. I'm president-elect for the New England Fertility Society, and I sit on the American Bar Association Legislative Committee. I'm considered an expert in fertility healthcare legislation, as well as the cost of fertility benefits. I am a resource for actuary companies around the country, including Maine and Massachusetts. Having worked on this legislation for 2 years, I'm testifying to provide information and answer questions pertaining to who is involved in this effort, the cost of HB 5446, and share suggested amendments to the bill to address drafting issues related to antiquated language that is medically inappropriate and violates the ACA. Along with my testimony, I respectfully submitted recommended changes to this bill with comments, the Insurance Department bulletin you were discussing earlier. And I can summarize some of these identified problems if that would be helpful to you. But first, I just want to address some cost issues. I do not believe this bill will add additional population to the cost analysis. When reviewing the 2014 Connecticut mandate review, Connecticut residents of reproductive age were considered, but at no point did the actuary team subtract LGBTQ plus community or single population. Therefore, these individuals have already been calculated in the cost of providing fertility treatment. Projections are also calculated independently for pregnancy, maternity, and birth. However, when determining costs associated with fertility benefits, the insurers include possible benefits utilized for an additional 1 or 2 years. Adding the impact of pregnancy, maternity, and birth premiums to the fertility health care per member per month would be counting this healthcare expense twice. I want to say one suggested amendment pertains to the definition requiring somebody to try to conceive for 1 year prior to considering the other 2 definitions. This requirement would hurt people like my friend Jen from Stanford. Jen has cystic fibrosis and lives as a double lung transplant recipient. She could not carry a pregnancy. Because she and her husband were not trying to conceive for 1 year, they did not meet the definition of infertility, and they required IVF that involved a third party, so they had to pay for IVF and a gestational carrier out of pocket. I ask you to please vote affirmatively for HB 5446 with suggested amendments. I am ready to answer any questions you have pertaining to this legislation and or any other state in the country, as well as address questions asked of Ms. Cranshaw, as I have some different responses for you to consider. Thank you so much for your time.
Thank you, Davina. We have questions from Representative Nuccio.
Hi, Davina. It's nice to see you again. I was wondering if you could send over the language that you were talking about that you wanted to see changed in the bill. If you could send that over.
It's in my test. It's
in your testimony.
Coordinated with Alex. Yes, that's in my testimony.
Okay, and if you could elaborate on what you meant on the different responses. And I did receive the information you sent about the other states. That was definitely very useful. But if you could elaborate on that last piece.
Okay, great. Well, one of them had to do with I'm sorry, Representative Farrar. I'm sorry if I'm, yes, Representative Farrar asked about third-party reproduction pertaining to donor egg and donor sperm and surrogacy. And I believe Ms. Crashall said she didn't believe that those should be necessarily included in the bill. I think I know the intent that she was trying to say, but I think there is a difference in covering costs of an attorney fee versus being able to have IVF coverage when you are utilizing donor egg or donor sperm or having a gestational carrier cover your embryos for you. And one of the reasons is the cost of these services are the exact same, or almost the exact same, I should say, as if all the procedures were using the gametes of the intended parents or the uterus of the intended parent. There's not an additional cost to these services. So in no way would it harm the state of Connecticut, the insurers, the patients, to include third-party donor egg, donor sperm, and to be able to have coverage for those using gestational care or a surrogate. And another was Senator Lesser had asked if this bill was the new version or the older version. Because this bill doesn't mention anywhere about fertility preservation or oocyte cryopreservation, that's why I believe this language is probably from the previous version rather than the 2017, which is Melissa's law, which provided coverage for fertility preservation. And then also, he was asking about the bulletin. What I would say from reading the bulletin is that this bulletin specifies that the age limit of 40 is a violation of the ACA. Having limited lifetime maximums also violates the ACA, and forcing patients to report their previous health care under a different insurer is also a violation of the ACA. I don't believe it says, and I agree with her on this, I don't believe it addresses the discrimination that can take place or that is taking place about providing these benefits.
Okay. That makes sense there. Am I still okay? I'm not on mute. Sorry. All right. It's been a long day. Yes, that makes sense. All right. Thank you very much for your testimony, and I'm pulling up your written testimony now so I can pull over your suggestions.
Great. Thank you.
Thank you.
Thanks for coming, Davina.
Thank you all very much. Bye.
Okay, next up we have Jill Kelly, followed by Jordan Fairchild. Jill, you are on. Can you put your video on?
Yeah. There. All right. There.
There you go.
Hi.
Hi, Jill.
Thank you, Madam Chairman, members of the committee. It is a pleasure to be with you tonight to discuss the raised bill 409 regarding long-term health care insurance. 25 years ago, I was pleased to choose Travelers Insurance to cover my long-term care needs. Little did I know that perhaps the most important sentence in the entire brochure is on the next to the last page, stating that all changes to premium payments must be approved by the Connecticut Department of Insurance. Today, however, while that phrase gives comfort, it disappoints in knowing that the number of bills that have come before you over many years have either failed to pass or were whittled down to not being comprehensive enough to really protect the policyholder. In 1997, my first premium payment was $1,392. During the next 15 years, the premium increases were slight. Since then, the policy has been transferred first to MetLife, and then it was transferred to Bright House, and the premiums have increased dramatically. I strongly urge you to pass this bill. While I've been privileged to be reasonably good health and have not required any ADL benefits, the insurance companies have had the benefit of my money with interest and at no cost to them. Now, as a 90 years old, I understand another 10% premium is being proposed for next year. Somewhere along the line, the actuarial staffs have failed to see that instead of an average lifespan in the 80s, the norm is now in the 90s. The insurance companies' answer to their misjudgment is to give me the option of either dropping out or take the plan and decrease some of the daily benefits. I'll end by quoting from a letter that was sent to me in 2010 from the state of Connecticut Insurance Department in response to a question I had. and the answer that came to me was, unfortunately, the claims experienced for your particular policy form demonstrated that the premiums were inadequate to provide for future benefits. Now, this has become my burden. If I understand the alternative pool study proposed for this bill, my question for you would be, I wonder how long it will take before any of these parts of the bill would get passed and be able to be put into effect so that they will benefit me. Thank you for your time.
Jill, thank you so much for coming and sharing your story today. We have heard a lot of similar stories, and that's why we have been working as a committee to come up with some solutions. So your feedback has been really helpful for us.
Thank you.
I see a question from Senator Wong.
Before a question, I wanted to take a moment to acknowledge Ms. Kelly. Ms. Kelly, Jill, I must be honest, I didn't realize you were 90 because you always look so young to me. And as I say that, it is important for me to take a moment to acknowledge your tremendous legacy of public service, from being a first select woman or a select woman in Fairfield, as well as your tireless work on behalf of transportation advocacy. You have been involved in public service. So you are one of the reasons these concerns were raised because of what's happening to you. Now, in your case, at 90 years old, you've held a policy for over 25 years, as you mentioned. And I think the challenges we've cited from Mr. Mayor earlier, that you are recently widowed and you are living alone, and providing that you look at this policy has a security for the investment that you made over the years, to not be a burden on your children and to be independent in your ability to live comfortably and have the proper care. That has been absolutely usurped. I've heard that from you. Please share with the committee in regards to how that feeling is, and why you feel so angry, frustrated, but feel as though that you've been betrayed by the system. And I know that you speak for many of your peers that are unable to appear today. So please share what that feeling is like and why it's so important for us to take action.
Well, I think one of the things that Mr. Mayor said, I had considered getting into that and didn't really have direct numbers, but when he was talking about salaries of insurance, that's where I get so upset, because I know they are making money. As a matter of fact, one insurance man said to me at one point when I was arguing these points, Mrs. Kelly, we are not a nonprofit. Now, I think they're all paying themselves very well, and there is, I think, a lot of money there. And it just infuriates me that, especially over the latter years, as I said, there was very little increase the first 15 years of this policy. It was under 7%, I think. But I have a note here that from a recent letter that I've just, well, I don't know, we got it earlier, and it's so dire, the parts of it they have printed in red ink, and it says the, important change, decision required. The annual premium on your account, your long-term care coverage, has now increased, will now increase beginning January 28th. If you keep the same coverage, your premium increase will be from $5,555 to $9,600. Do you know what a shock that was to get that letter in about 3 weeks before Christmas?
Jill, I think that's when you called me.
Yeah, I ruined your Christmas too. But no, it was really that came as a huge blow. Now, the fact was that they had said they were going to prorate these premiums. They haven't been prorating them. What they offer us is lesser service. turn to page 2, they say, and we can adjust your coverage to meet your needs. Well, here I am, perfectly healthy, never having used a penny of their money. And they're sending me second page coverage options to reduce the daily fee or to reduce my policy and get less coverage. This just seems to me to be totally unacceptable. That's about all I can say about it. It just is really going from 5,000 this year to 9,000 next year. Where's the cap?
Now, I'd like to just ask what percentage, I can't do the math in my head right now because I'm drained, but the 4,000 to 9,000 seems like a greater than 20% cap. So wouldn't that be spread out over 3 years according to what we passed last year? So Senator Wong, could you follow up with Jill on that increase?
Madam Chair, I can answer that question. The premium was mailed before January 1st. It went into effect December. That was the answer.
Okay. Now,
Jill, I don't want to speak out of line. Is that correct? You received the premium.
Yeah.
The premium was billed in December, as she mentioned earlier. So it came before January 1st.
Oh yeah, because my debate was whether I would pay it, as one of my checks that I'd write out in December or wait until January 1st to mail it.
Now, Jill, the challenge is we're in the here and now, as I also said to Mr. Mayor. And whatever the solutions we may have, this proposal has many components, and one of which is to address maybe some tax credit to be able to offset the current premium burden that you carry, and to be able to kind of offset your fixed income challenges of so many of our seniors. Would that be a tool of under consideration? And what do you think of the other aspects of this bill, or do you have any other additional suggestions and recommendations based upon you're not just an individual that's testifying, as I articulated earlier, you have a depth of policy experience and long tenures as on the Board of Selectmen in our town and public policy. Any suggestions?
Well, one of the things that disappoints me is that I like the idea. I very much like the idea, the alternative pool for long-term care policyholders in excess of who've held policies in excess of 20 years, creating a self-contained pool. If I'm thinking of it properly, that does appeal to me. But what bothers me about it is you're saying that you want a response from the study in January 2003. This is going to go on for how long before we as policyholders would ever see the benefits of that? Is there a way to speed something like this up through the legislature and get things passed? I'm assuming it would pass, and that it would have enough enough people to give it consideration. But how long, out into the future bothers me, that before we'd ever see the benefits of this. But I do like what I read.
Well, we don't have a crystal ball, Jill, but given that hearing testimony from individuals like you and getting input, and as we learn more about this very complicated issue, I'm encouraged to be able to interact and formulate policy. And I want to be like a broken record to acknowledge Representative Woods and Mesker and Comey and their leadership and effort on this. I can say this, Jill, we're working on it hard, but I also want to leave by thanking you. You and Mr. Mayor represent two different pools of people that are impacted. You at 90 years old, widowed, need this product more than ever, and you made the investment to do that. To potentially be priced out of the market after so many years, when you counted on your most important years to be able to depend on this product, is, to me, absolutely untenable. So I want to thank you for being a voice for many of your colleagues. I know you've mentioned at least 3 or 4 of your colleagues that may be a little technology and camera shy, but I want to extend that you did a great job in being their voice, and I promise to keep you updated. And I want to thank Madam Chair for indulging me and leaving me by thanking you again for your tremendous years of public service in the community. Thank you, Madam Chair. Thank you, Jill.
Thank you.
Jill, we have another question for you from Representative Delnicki.
Yeah.
Good afternoon, Jill. And I've got to first make the observation that when the insurance company made the comment about they're a for-profit, they've profited so much from you that is an unconscionable statement to make. I mean, it's shocking that they would say something like that, especially when you're doing the right thing. And your case here is something that I've heard from a number of folks in my community. And you have been a tremendous spokesperson for this issue and put a face to it that really rings loud and clear. And I have to agree with the good chair and ranking member that we have to act as quickly as we can on this, because literally to receive something like that before Christmas, it's like the Grinch that stole Christmas, but it never came back.
Yeah, thank you.
So again, thank you for coming forward, and you're not alone in this predicament. I have constituents that have exactly the same issue. Again, thank you, Madam Chair.
Thank you.
Jill, have a wonderful night.
Thanks.
Happy St. Patrick's Day, Jill.
Yes, I'm in green. So are you.
All right, next up we have Jordan Fairchild, followed by, is it Michael Crane? Looks like he's up next. We may be skipping over someone, but those are the speakers I see. Jordan, welcome.
Thank you, Representative Wood. Good evening, Senator Lesser, Representative Wood, and distinguished members of the Insurance and Real Estate Committee. My name is Jordan Fairchild. I'm the coordinator and community organizer for Keep the Promise Coalition, or KTP, a grassroots group of advocates with lived experience of mental health, addiction, and co-occurring conditions. Thank you for the opportunity to testify on behalf of KTP in support of the following bills. First, regarding SB 414, despite the passage of our state's mental health parity bill in 2019, significant gaps still remain for people seeking mental health coverage. And while the statute required health carriers to submit their first report concerning parity in April of last year, those reports have not been filed due to the extensive amount of data that the insurance companies submitted, which did not comply with the requested format. Advocates have described this play by the insurance companies as death by data. We support SB 414, but believe we should enforce our existing laws. It's time for the insurance companies to submit legible data reports so the insurance commissioner can assess the state of mental health parity in Connecticut, especially during this time of crisis. But passing SB 414 by itself is not enough. In passing the 2019 bill, the legislature recognized that true mental health parity requires, at the very least, equalizing the use of non-quantitative treatment limitations between mental health and substance use disorder benefits and medical and surgical benefits. Examples of non-quantitative treatment limitations include utilization reviews and prior authorization, such as step therapy. These all allow insurance companies to avoid doing their job, to uphold their end of an agreement to provide coverage for paying customers when necessary, and allow insurance companies to play doctor under the strong financial incentive to cut costs on clients' benefits. Regarding step therapy, there was one individual earlier today who argued that these practices are intended to serve as a safeguard for patients and their families. I really wonder whether health insurance consumers also see it that way. For people seeking help for mental health conditions, failing first on a less effective drug can literally mean losing their lives. People's reactions to psychiatric medications are unique, and research has shown that when prescribing these medications, access to a wide variety of medications is needed to prevent more severe and intensive emergency outcomes. Therefore, we support SB 415, which would prohibit step therapy in mental health treatment and place the burden of proof onto insurance companies before denying coverage and utilization reviews. Finally, we support SB 416 and echo the testimony submitted by Ellen Andrews and Sheldon Taubman. This bill would ban certain types of anti-competitive contract clauses between large health systems and insurance providers, and thereby remove a tool which they have abused to gain a market advantage at the expense of competition and healthcare affordability. Thank you for
Your
the
3
opportunity.
minutes are up.
Thanks, Jordan. We have questions from Tammy Nuccio, Representative Nuccio.
Hi, Jordan. Thank you for your testimony. I'm not sure, though, I'm following on the parity review. I've had a lot of conversations with the Department of Insurance, especially after the article in the New York Times, and looked at the parity. And according to my notes that I'm looking at from the Department of Insurance, the NQTLs last year was the first year that it was filed. There were some companies that were found to be non-compliant because all of the instances, none of the instances were violations, but it was for lack of sufficient documentation, and that they have all been corrected and brought into compliance. There is no company in the state of Connecticut that is non-compliant right now. So I'm not sure if maybe your data is old, or if you're talking about the information that was in the newspaper about the 30 companies that were non-compliant, but that's the National DOL and their first report, which was massive.
Okay. Yeah, I was not aware. I think I'm referencing the information from Connecticut Parity Coalition. So
yeah, I can assure you, if you contact the Department of Labor and you sit down and talk with them, there are no companies right now that are shown as non-compliant, and there's only one county in the entire state that doesn't have adequacy of network, and it's one subsection in Fairfield County for children, behavioral, and substance use. But every other network is adequate, and rate review QTLs are done every year with rate review. So market conduct reviews are done every 4 years. So from a parity perspective in Connecticut, we're actually right in line with the law. So I would encourage you, though, to reach out to the Department of Insurance and maybe speak to somebody there. They can give you all the data that you might need.
Absolutely.
Great. Thank you. And just a reminder, Jordan, that a lot of those reports, I think all of them are available on the Department of Insurance's website. Thank you for your testimony. Next up is Jenna Bernstein, followed by Michael Crane.
Thank you, Senator Lesser, Representative Wood, and distinguished members of the Insurance and Real Estate Committee. On behalf of members of the Connecticut Orthopedic Society, thank you for the opportunity to discuss HB 6586, an act concerning prior authorization and healthcare provider contracts. So my name is Jenna Bernstein. I'm a practicing orthopedic surgeon at Yale Medicine in New Haven, and I'm the surgical chair for the Yale New Haven Health Hip Fracture Program. So as you all know, insurance plans can require prior authorization for surgery, procedures, imaging, and medication, which can not only cause delays that adversely affect patient care, but also creates an undue administrative burden on surgeons and their staff. It can be challenging to really understand what this means unless you're living the consequences daily, as our surgeon membership and our patients are. So I would like to provide a brief story just to highlight one of the daily struggles we go through with prior authorization. So as you all know, the opioid crisis is an ongoing struggle in our country. With that, orthopedic surgeons have taken an integral role in decreasing the use of opioids after surgery by employing a multimodal pain protocol. So what that means is that instead of giving patients a bunch of opioids after surgery, we use a number of other non-addictive, non-narcotic medications to decrease the opioids used and to get patients off narcotics in a few days when they used to stay on them for weeks or even months. Some of the medications that are shown to help decrease narcotic use, such as an NSAID Celebrex or neuromodulator Lyrica, can require prior authorization by insurance companies. The prescriber of these medications are often not alerted to this until the patient tries to pick their medications up from the pharmacy after being discharged from the hospital. Then the time for the prescriber to get an appointment to speak with the insurance prior authorization department can take days. And even though often once you speak with them, the medication gets approved without any further questions, they just wanted to speak with someone. This makes the patient suffer for days without their necessary medication, waste time for the surgeons in our offices, and often causes the patients to use more opioids than they normally would. The excessive and escalated prior authorization practices of insurers are being addressed throughout our country by state legislatures that have developed and passed laws to address these burdensome insurance policies. Most recently in Georgia, Illinois, and most notably the Texas legislation that was mentioned earlier today. We respectfully request this committee to take action steps to this bill by amending language in order to incorporate meaningful prior authorization reform similar to the Texas statute enacted last year. Our society is encouraged by the committee's consideration to address prior authorization systems in our state, and we would be honored to work with you to ensure the language of this bill initiates meaningful reform to the prior authorization policies of healthcare insurers. Patients' access to care is jeopardized, and the time to act is really now. Thank you for your consideration of the testimony of the Connecticut orthopedic community.
Thank you, Dr. Bernstein. I don't see any questions. Thank you so much for coming today.
Absolutely, thank you.
Next up, we have Dr. Crane, followed by Jonathan Gonzalez Cruz.
Senator Lesser, Representative Wood, Senator Wong, Representative Pavlak D'Amato, and members of the committee. My name is Dr. Michael Crane. I'm a practicing radiologist and have practiced in Connecticut for 34 years. I have served as the radiology chairman at Middlesex Hospital and the director for a radiology practice in the Shoreline. I currently serve as the president of the Radiological Society of Connecticut, and on their behalf would like to offer comments on 3 bills pending before you today. First, House Bill 5410, an act concerning high deductible health plans. We strongly support this bill. I cannot tell you the number of times we have had a patient leave our office prior to having their imaging test when they find out they will have to pay the full cost for their high deductible health plan. They forego care. If they have an underlying illness, it can get worse and is much more costly to treat later on. House Bill 5410 would limit deductibles to a minimum level for qualified plans, meaning $1,400 for an individual and $2,800 for a family. We believe these levels are sufficient. Second, House Bill 5447, an act concerning prior authorization for health care provider services. This proposal would task the insurance department with reviewing the prior authorization concept to see if it can be reduced or streamlined for medical providers who meet a target threshold for past approvals. I have seen significant patient care delayed due to these current prior authorization process. We believe this idea might have merit and would look forward to the department's report next January if the bill becomes law. Anything you can do to reduce the demands and burdens this places on the medical practices would be welcome. Third, House Bill 5449, an act concerning certificate of need. As drafted, we read Section 3 as raising the non-refundable application fee for a CON from $500 to $25,000, a 4,900% increase. This would make it impossible for smaller entities like my Shoreline practice to modernize and upgrade their latest life-saving equipment. I cannot gamble away $25,000 on an application that might not be approved. In discussing this with a number of individuals, I am told the higher rate is designed to apply only to hospitals or other larger projects. If this is the case, please be sure that this is clear in the bill language. Section 4 would task the Office of Healthcare Strategy with reviewing the Certificate of Need program. We would ask that if the review would look at CONs as they relate to imaging equipment such as CT or MRI, we be permitted to participate in the process and have a place at the table as the review is conducted. Thank you for considering the views of the Radiological Society of Connecticut. We would look forward to working further with you on these 3 pieces of legislation as the session proceeds. Thank you.
Thank you, Dr. Crane. And you are correct. The fee section was not drafted correctly and would be a sliding scale based on the size of the project. So for a machine that may cost $12,000 or $15,000, the fee would be extremely low. If you were building a new building at a $50 million range, the fee would be higher. So we will fix that.
The only thing that I'd like to comment on that is, unfortunately, our machines are very expensive, so that even a simple MRI machine would be $1.5 million. So
we
maybe
are
there-
aware of that, and we just want you to know that it wasn't designated to go after the purchase of machines, and we will review this. We do have this under review now, and the language is being fixed. So I'd love to run it by you to make sure that your group would be okay with that.
Great, thank you.
Senator Wong.
Thank you, Madam Chair. Thank you for your testimony, Mr. Crane, Dr. Crane. Particularly with your specialty, the radiology, it's a lot of it is diagnostic as well as preventive care. And with a high deductible, what I thought I heard was the fact that with high deductible plans, many of those plan holders do not go for regular diagnostics, and in the case of women's health, mammography and breast examinations. Do you find that happening with those type of plans, that we are running the risk of not having preventive care protocols or regular schedules followed?
That's one of the scariest things is women all the time will come in for their mammogram, which often with healthcare plans are covered, and they won't get their breast ultrasound. And I have seen many, many women. I mean, it's really every week a woman comes in, I'm not getting my breast ultrasound because I have a high deductible plan. And it's a shame because I see many, many cancers only on ultrasound. And it really is a shame that people are not getting their preventive care just because of this financial situation.
Thank you for that point, and that is an important consideration. Preventive care has been stalled due to this COVID pandemic for the past 2 years. And I wanted to ask of you, and I've asked of many of our radiology, particularly on the issue of women's health and breast cancer, the gap in regards to diagnostics and preventive care has eased now. But I'm finding that from many of your colleagues that there has been an incredible rise in the number of cancer incidences based upon labs diagnostic or people finally coming in. Is that can you articulate a little better than I from a medical term the rise in number and how important it is for diagnostic to occur?
Yeah, I mean, it only makes sense if we skip a year. All those people who we would have diagnosed the cancers, we're not going to see until the year after. So the cancers tend to be a little bit bigger, and we are seeing more of them now that patients are coming back. And it's an unfortunate thing with the pandemic. And I mean, hopefully we won't have to go through this again. But yes, I think it is a real issue.
And I think, as I learned from many of your colleagues as strong advocates in this, is early detection and is one of the best solutions of cure. So I want to thank you and your leadership with many of your colleagues in the radiology diagnostic area. Thank you for your work, and thank you, Madam Chair.
Thank you.
Thanks for coming, Dr. Crane.
Thank you.
We will be in touch for sure.
Great, thank you.
Okay, Jonathan Gonzalez Cruz, followed by, it looks like we have David Fried.
Good afternoon, members and chairs of the Insurance and Real Estate Committee. My name is Jonathan Gonzalez Cruz. I am a recent graduate of UConn's Masters of Quantitative Economics program and work as a healthcare organizer for Connecticut Citizens Action Group. I also became a new parent in October when my newborn was born. Today, I want to testify in support of a stronger version of HB 5449 to protect Connecticut residents from monopolistic for-profit business practices by hospitals. As I mentioned in October, I welcomed my newborn, but before doing so, my partner and I, as expectant parents, felt fortunate to live in a town where there was a hospital accessible should anything happen. On October 11th, as both of us were getting up and ready for work, We were unexpectedly rushing to the hospital because our newborn was on their way an entire month early. With many thoughts flooding our heads, such as, will they be okay as a preemie? Will my partner be okay? I felt reassured that we got to the hospital in a timely manner and were assisted. Unfortunately, for all the expecting parents in the Wyndham area, as well as many other patients, they did not share this reassurance from Harvard Healthcare. Harvard Healthcare indirectly informed them that they, as patients, were less of a priority in the closure of the Wyndham maternity ward that ultimately left patients struggling for care. A recent community health needs assessment has highlighted how transportation is a key barrier for folks in that area. Given the poverty and uninsured rates in that area as well, this further exacerbated the inequity those expectant parents, as well as other patients who went there, experience, as they did not have transportation to the hospital, or there was nowhere to even go to there, and with a lack of health coverage would not want to pay thousands of dollars just on an ambulance ride alone. In the case of health needs, especially labor and delivery, timely access to professionals who are able to take care of the patient and the newborn is imperative. Numerous studies have correlated the removal of maternity services from the community with the decline in prevention and early detection services. Given how Wyndham County was ranked last in the state in most health outcomes, and leads the state in health disparities for the last 2 decades based on my county health ratings, it was very clear that the decision by Harvard Healthcare was clearly money-driven and not patient-driven. In turn, I hope this committee supports HB 5449, and in order to strengthen it, I wanted to share some suggestions that other community members have shared before, such as the addition of community representation on the corporations boards, impact statements on service terminations in the areas of need, measurement standards for consolidation, and the ability for the Attorney General to have authority to enjoin hospital from terminating service once a certificate of need application or complaint is filed. I hope that this committee moves forward with this bill, and please feel free to include any of the community members here as part of that conversation moving forward. Thank you.
Thank you, Jonathan. I don't see any questions, so we appreciate you being here. Next up, we have, let's see, Dr. David Fried. I hope I'm saying that right, followed by Dr. Emmel.
Okay. Good afternoon, Senator Lesser, Representative Wood, and members of the Insurance and Real Estate Committee. My name is Dr. David Fried. I've been practicing dentistry in Connecticut for over 30 years. I'm retired from the Connecticut Army National Guard, and I serve on the Benny Care Advisory Board, serve on the American Dental Association Council on Dental Practice, and I'm a past president of the Connecticut State Dental Association. Currently, I am co-chair of our legislative council. I am speaking to you today to support HB 5447, an act concerning prior authorization for healthcare provider services. As you have hopefully heard, the Connecticut State Dental Association is promoting a concept called the Dental Bill of Rights. One of the recommendations is to protect patients by holding third-party payers accountable for prior authorization of treatment. Many times in the course of developing a treatment plan for our patients, it is important for patients to understand their financial responsibilities for the different options which we will offer to them. Many times, the pre-authorizations require extensive and expensive staff time, and insurance companies will wait 30 days and request more information. After the requested data is transmitted, an additional 30 days may go by before a determination is made, or the insurance company may request more data. This waiting period usually ends up with 3 different potential outcomes. One may be that the patient's condition worsens and requires more extensive alternate care. They may get the care as planned, or they may just lose interest in the care and do nothing until a crisis occurs. Assuming that the pre-authorization is received and the care is provided as planned, oftentimes the insurance company changes its mind and chooses to ask for more information and then deny the claim. Dentists are making a good faith request on behalf of their patients to help navigate the sometimes difficult world of dental and medical claims. And we are finding that many companies do not feel that their initial promise to pay is binding. For example, the total bill may be $1,200 for a certain service, such as a crown. After insurance, the patient may expect to pay $300. The procedure is completed, and then the insurance company reneges on the payment, and the patient is faced with the entire expense out of pocket. As insurers, authorizations means that they agree to make payment for the service being sought prior to treatment. However, an increasing number of insurers are denying claims for services previously authorized, reversing their agreement with both the patient and the dentist. I do not think that we need to investigate.
Thank
with
you.
a
Your 3
study.
minutes has ended.
Okay, can I just finish up?
Yeah, please finish up with a sentence.
Okay, this type of legislation is already passed in 11 states and was included as a core issue in the bipartisan 2020 End Coil Transparency in Dental Benefits Contracting Model Act. I'm asking you, and we're asking you, to consider amending the language of the bill to include this model language from the Model Act. Any questions? We can provide information. Thank you.
We do have a question. Thank you. Representative Pavlak D'Amato.
Hi, thank you, Madam Chair, and sorry about the yelling at my dog before. Doctor, how much do you think, or what percentage of your claims do you think does that happen to, you said approval and then denial?
You know, we're trying to figure that out. It's not an uncommon event. I don't know if we can put a number on it. I mean, I had a small practice and we would see it, you know, a couple times a month. And I mean, it's enough of a problem. It really goes right to the core of the doctor-patient relationship, you know, and the promise to pay from the insurance companies kind of goes at that. And what we're seeing is, you know, patients sometimes have a bad experience with dentistry, but they shouldn't also have a bad experience on the financial side. They should know everything that everything they're responsible for. And this is creating patients getting that feeling like I'm never going back to the dentist because, you know, they can't tell me what I owed and I owed all this money. And we're just trying to help our patients be able to, you know, get through the problems at the front desk, and also make sure that they get the care that they need and they deserve and they want. It's just, you know, one more problem that people don't need anymore.
Yeah. And so then also, do you have the problem of, let's say, do you find your initial claims, is there a high percentage that automatically get rejected and then accepted on the second round? Because I know that used to happen to me, and it just seemed like a high number.
Yeah, things get rejected a lot, and they have 30 days to reject them and then get, you know, a letter to you that says, we want more information. Can you provide that? Some of it seems like it's just a stall tactic. Like I said, that maybe patients will just go do something else. They'll decide, oh, their problem went away and they don't have to deal with it right now, or it gets pushed into the next calendar year. You got to remember, insurance companies, you know, dental insurance is not really insurance. It's like a coupon. You get $1,000 or $1,500 of care that you've purchased for that year. And if it's kind of held up and you don't get that work done in this year and it ends up in the next calendar year, you lost a whole year's worth of benefits. And so a stall tactic, I mean, this is my opinion, and but it just seems like it could be a stall tactic on the part of insurance companies to just hold back a benefit year. And you know, I'm sure that they wouldn't agree with that, but that's how it seems. I've been at this a long time, and it seems that claims are not being paid as quickly as they had been at one point. Some of it is because we do electronic claims and you have to attach a photo or attach a radiograph, and sometimes it doesn't match up as well as we think it should.
Okay.
But we do see it.
All right. Thank you very much. I appreciate your testimony.
Oh, you're welcome. Thank you for the question.
Thank you, Dr. Freed.
Thank you. Thank you for having us. Go UConn.
Yes, for sure. All right, next up we have Dr. Emmel, followed by Susan Eastwood.
Senator Lesser, Representative Wood, and distinguished members of the Insurance and Real Estate Committee. On behalf of the physicians and physicians in training of the Connecticut State Medical Society, Thank you for the opportunity to provide testimony on House Bill 5447 regarding prior authorizations. My name is David Emmel. I am a practicing ophthalmologist in Wethersfield, and I'm the legislative chair for the Connecticut State Medical Society. We've already heard today from a number of physicians regarding the burden of prior authorization places on physician practices, and even some very reasonable suggestions with regard to solutions. We've also heard from both Dr. Edelman and Dr. Rubino, who described some specific examples of how our prior authorization has delayed treatment and actually caused very significant and expensive injury to patients. I know many of you have heard my specific story, how I began my practice in 1989 with only one employee who was able to perform all of my administrative functions, and how I ended my solo practice a year ago with 6 employees needed to do all of that work, including one who literally spent half her time on hold doing prior authorizations. Many, but not all, insurance companies require prior authorization for cataract surgery. Some require it for every single case that we do, and some only for specific plans that they carry. What that tells me is there is not agreement on the utility of this process within the industry and even within individual insurance companies themselves. Ultimately, virtually all of the cases that I put through prior authorization are approved. So it leaves me wondering, like Dr. Freed, is it just a delay tactic? Is it something that's just a burden that's easy to apply and designed to discourage appropriate care? Speaking of which, some of you may have read in newspaper a recent study that was published in JAMA that showed that cataract surgery has a significant effect on delaying the onset of dementia. And it's worth thinking about this for at least a moment, because if you could just delay anyone's admission to a nursing home for 1 year, you would save at least $100,000. Now, that's not the insurance companies, the health insurance companies' money, but that's patient out of our pockets as individuals, and if we have plans, other plans. With regard, Dr. Russo has spoken about the incredible technology that we all have available to us. And it just a struggle to me to understand, with all this technology available, why do we still have insurance plans insisting that we use
your time's expired.
Technology like faxing to do this process? It befuddles the imagination, and I hope this committee can push them to find solutions. Thank you for your time, and I'm happy to take questions.
Thank you, Dr. Emmel. We certainly are pushing for solutions, and you have been at the table with us during many of these discussions, and I want to thank you for your time. I don't see any questions from the committee, so I do see a question from Representative Pavlik D'Amato.
Just one question, Madam Chair, and thank you. Doctor, what do you think of I think that one of the parts that we're struggling, or I'm struggling with, is the 24-hour turnaround time. And like, I understand things happen on the weekend and then there's emergencies and other caveats, but I guess the 24-hour response, what do you think of that? Do you think that's workable as is, or do you think there's some alternative that we can, that you
I absolutely think it's workable. I think this is where technology comes in. One of the suggestions Dr. Russo made was if this was tied to our electronic health records and we had systems where if prior authorization was appropriate, you could just hit a button. And there are a lot of mechanisms. I don't think 24 hours would be too big an ask. No.
Like an algorithm, you guys are saying, basically, with the programs, right?
Yeah, there's an algorithm in place now. You call up for a prior authorization and you get someone with a paper menu in front of it with a telephone. And, it's a kind of a crude algorithm.
Yeah. Okay. All right. I appreciate it. Thank you very much.
You're welcome. I'd also like to say, with regard to high deductible health plans, that, we sort of slipped into this sort of gradually without recognizing what's really happening. And what's happening is it's slowly but surely taking the role of underwriter away from the insurance industry and putting it on in the hands of physicians. And we're not really qualified to do this. We're not capable of doing it to the degree that a bona fide industry should be able to do it. And we're becoming the bearers of risk, which is what the insurance industry was in fact invented to do. Manage risk.
Good point.
Thanks for coming, Dr. Emmel. Have a great night.
Thank you.
Next up, we have Susan Eastwood, followed by Dr. Dasan.
Good evening, Senator Lesser, Representative Wood, and members of the Insurance and Real Estate Committee. My name is Susan Eastwood. I'm a board member of the Permanent Commission on the Status of Women in Connecticut, nonprofit, and a resident of Ashford in Windham County. Thank you for the opportunity to talk about SB 5449 with suggestions for strengthening the bill. I'm especially concerned with Section 4, and that directs a study of various issues, as you've heard. I suggest that time is of the essence. The distressed communities like Windham, Sharon, and Rockville, which has seen closures of cornerstone services, very important essential services, they need help now. Although the Certificate of Need law was strengthened, it hasn't stopped the practice of closing services without completing a Certificate of Need. Please add strong consequences for violations and remedies for communities, including more input in the con process. And this will make the bill a lot more meaningful. As a resident of Windham County, I can speak to the hardship that we have suffered due to the sudden closing of the Windham Hospital ICU and maternity services. Both of these were done without certificates of need, as you know, and I'm deeply concerned about this in particular because of the inequities in healthcare that have been exposed by these terminations of services. Most of the Windham who have now and will be affected by the lack of obstetric care in the area are low-income minority women who will be more disadvantaged than most by the long distances they will have to travel for services. In 2020 and 2021, the PCSW, Permanent Commission on the Status of Women in Connecticut, conducted a study of the economic impacts of COVID-19 on Connecticut's women. And I cited that among my other citations in my written testimony. Hope you'll take a look. It's very interesting work. About 1,020 women were reported, surveyed, excuse me. And in Windham County, 68% reported a negative impact on their health. That is higher than the state average, and so it kind of leans to indicating that this will affect them even more than most places in Connecticut, loss of services. Again, obstetrical services are one of the most basic needs in any community, and a safe, accessible place to deliver your baby is a necessity. I believe the women of Windham and all the families of Windham and Northeast Connecticut will be deeply affected. Loss of the maternity service that have been available in Windham since the 1930s. I believe a proper certificate of need proceeding would have considered these inequities and hardships and should have prevented the closing of these much needed services. The community has spoken up loudly and will continue to do so, but they have yet to be heard. I ask this committee to address these serious health and equity concerns and strengthen the bill, first of all, and the con process in order to help the people of the community rather than favoring corporate profits. And I have a few specific suggestions here in my written testimony, such as guaranteeing local representation of community on the hospital board, revamping the health plan of the state, which obviously is a bigger ask, but setting standards for measuring quality because of consolidation, going back and looking at that, and setting higher penalties, as I've mentioned. So thank you very much for your attention to my concerns and considering these suggestions.
Susan, thank you. And your testimony was very informative. The overall statewide health strategy plan is an important part of this. I don't know if you were here when Vicki Veltri was giving testimony, but that is something that she and her team will be working on. So we look forward to that as well. Senator Lesser.
Thank you so much, Madam Chair, and it's good to see you, Susan, have you heard of specific ways in which this is already impacting residents in your area?
Well, I have heard stories, and I'm sure you're going to hear some more from some of the other folks that are coming. And I've been popping in and out through the day. Heard Lynn, Ide, and some of, and Dr. I'm sorry, never mind. I'm blanking, but the stories of the women who had the baby on the side of the road. Of course, that one is very compelling. And, time spent going back and forth to try to visit family or not being able to because so many people don't have cars. I've heard about that quite a bit in the area, Matt.
Great. Thank you so much. It's good to see you.
Good to see you too.
Thank you, Representative Nuccio.
I just wanted to say thank you, Susan, for coming and testifying. I've been talking to people over at Wyndham, honestly, but right after I got elected, they started calling me and learning more about what was happening in the community. And as you know, Wyndham Hospital is not in my district, but there are some of my people that do go there, right? And it is a community hospital, and I'm pretty fiercely protective of the community hospitals. So if you need anything, or if you have any information you think that will help, then please reach out and let me know.
Yes, thank you so much. And also thank you for participating in the PCSW study. You were it was one of the first focus group that we did, and I know you were there. So I thank you for that as well.
You're welcome, anytime.
Thanks for coming tonight. Have a wonderful rest of your evening.
You too. Bye-bye. Bye,
Okay,
Alex.
next up we have Dr. Dasan, followed by Kathy Flaherty.
Hi, thank you for the opportunity to testify. My name is Paul Dazan. I'm a psychiatrist employed at Yale New Haven Hospital. I'm a past president of the Connecticut Psychiatric Society and here to testify on their behalf. I'd like to illustrate briefly the intensity of the parity mental health crisis in Connecticut by discussing my experience as a consultant for 1,300 residents at our center. I assist them in finding psychiatric and medical care. They all have commercial insurance. We encounter three problems. First, it's very difficult to find psychiatrists or APRNs who will take their insurance in a timely fashion. They complain of poor reimbursement and arbitrary treatment decisions. Second, they complain about arbitrary formulary restrictions and prior authorization, which is conducted by telephone and fax and is burdensome. As testified eloquently on several occasions earlier today, there's no reason we can't have a transparent, rapid online process for prior authorization in most cases. Thirdly, when we require inpatient care, it's currently up to about a 2-week delay to get an inpatient psychiatric bed. As COVID recedes, we're not seeing as much improvement as we hoped for. So I think what all of this shows is that we do not have parity in the state. When I assist residents in finding medical care, I seldom encounter any of these problems. Consequently, I and the Connecticut Psychiatric Society are pleased to support 414 and 415 and 5447 as a step towards gaining greater mental health parity. Thank you very much.
Thank you for being here, Dr. Dasan. I want to just ask a quick question on your comment. You said during COVID, they were waiting for weeks sometimes to find a bed. I thought that the prior authorization was lifted during COVID.
No, that's the delay in finding psychiatric beds in Connecticut is related to a lack of facilities. And I think during the COVID time, we had a lot of trouble moving people out of our psychiatric units because so many disposition resources just weren't available. And now these resources are becoming more available, but we're still finding there are huge delays in getting psychiatric beds. We need many more psychiatric beds. That's a bit far afield from the specific issue of prior authorization. Now, prior authorization remains a burdensome and vexatious part of the hospitalization process. I hope the committee will do everything you can to streamline prior authorization.
Thank you, Dr. Dazan, and we appreciate your testimony here tonight.
My pleasure.
Next up, we have Kathy Flaherty, followed by Christopher Agro.
Good evening, Representative Wood, Senator Lesser, members of the Insurance and Real Estate Committee. My name is Kathy Flaherty. I am the Executive Director of Connecticut Legal Rights Project, and we represent people who receive mental health services from DEMIS. You have my written testimony on Senate Bill 414 and Senate Bill 415. I just really wanted to reply to Rep. Nuccio's comments to Jordan Fairchild, because I decided, let me go to the insurance department website and look at the 57 companies that submitted mental health security annual compliance survey certification, which they've been required to do since 2014. Unfortunately, the years that we're talking about on that insurance department website are from 2017, which is before the state law was passed in 2019. So given that it's now 2022, of course, it's not May yet, but where's the 2021 compliance? And I'd also point out that despite the fact that all 57 companies certified that they were in compliance with mental health parity, when the insurance department did a market conduct survey of a particular company, which I won't name, although you can go to the press release dated June 29th, 2021, those companies were fined a combined $575,000, which was distributed to 20 or 25 different mental health organizations in the state, of which Connecticut Legal Rights Project was one of them. So we were very grateful for that money for mental health advocacy and awareness. But we got that money because insurance companies are violating parity. So I just want to put on the record that saying that all the companies, they may well have been in compliance in 2017, but we're now in 2022. I hope that this committee will start holding the public hearings that you're supposed to have under the 2019 law. And just, I've repeated my story multiple times about problems I've had with both prior authorizations and step therapy. And we can't have companies making profits by denying people care. Thank you.
Thank you, Kathy. We appreciate your testimony. I don't see any questions from the committee, so have a wonderful evening.
You too.
Next up, we have Christopher Agro, followed by Armin Abrahamian.
Chairwoman Wood and members of the committee, my name is Chris Agro, as you just said. I'm a doctor of optometry and I practice in Enfield. I've also served as a past president of the Connecticut Association of Optometrists and currently serve on a committee that routinely meets with provider relations directors for insurance companies to discuss issues affecting both parties. I'd like to address two bills that are before you today, and you'll also hear from my colleague, Dr. Erin McCleary, on the issues. Connecticut optometrists are supportive of House Bill 5410, an act concerning high deductible health plans. And thank you for bringing this up for discussion. As you know, the bill would limit maximum deductibles to the minimum amount that must be placed for a qualified plan, which is $1,400 for the individual and $2,800 for the family. We believe this is enough for an out-of-pocket requirement. When you go above that, such as the $5,000 deductible, you can really begin to ask yourself what insurance really means. And I know you've heard from other medical professionals who have told you stories of patients walking out of their office when they learn that their visit will be applied to the deductible. That happens to us as well. I find this very sad because the patients have medical eye care issues such as diabetes or glaucoma that can worsen over time, leading to blindness if not detected and treated early enough. Connecticut optometrists also support House Bill 5447, an act concerning prior authorization for healthcare provider services. It is our understanding that the insurance department would be charged with undertaking a review of prior authorization process to hopefully determine ways it can be simplified or streamlined. That is the intent, we support it. I know you've heard from other medical professionals today who have experienced problems with prior authorizations. This happens in our office all too frequently. We can submit a prior authorization request in advance of the patient's appointment. Many times it's not processed and we treat the patient only hear later that it's denied retroactively or their medication request is delayed as they deal with the paperwork issues. It's just not fair. In conclusion, the Connecticut Association of Optometrists appreciates consideration of these two bills. We'd be happy to discuss any aspects of them with you as needed. And I want to thank you for your time. I know it's been a long day as I've been watching some of this off and on. And so I appreciate for all the time you guys put in to the hard work. So thank you. We'll open up. Take any
Now, we do
questions.
appreciate your testimony, and we have been going a while, but still really important to hear from you. And I know you've been waiting around, so it means a lot. Next up, we have Armin Abrahamian, followed by Lisa Rosenthal.
You pronounced that correctly. Thank you.
Oh my gosh, I thought I just ruined your name. Sorry.
No, not at all. Good evening, everyone. I know this has been a long day for all of you. Madam Chairman, thank you. Members of the committee. My name's Armin Abrahamian. I have a long-term care insurance agency located here in North Haven. Been in business since January of 1995. So I've been smack dab in the middle of this whole mess that's been going on with the industry, things essentially flipping on its side. We've got, or I personally have over 1,000 clients insured with long-term care insurance, and through our agency, nearly 2,000. And I would say that we've experienced hundreds of these rate increases across the board. Many of the companies, I'm sure you've heard from others today, but Genworth, Transamerica, John Hancock, MetLife, Bright House, AIG, many of these carriers, they're all going through the same thing. And why? Because the actuarial assumptions were significantly off. And it's really the legacy policies that are the problem. Today's policies, the actuarial data has, they've corrected the three primary areas where they were wrong. And I would say those three areas are the number of claims that the actuaries assumed that they would be seeing, not only the frequency of claim, but I would say the duration of claim. Every time, you know, a new medication comes out, you know, the MS patient is able to live longer. Let's say Parkinson's patients, they remain on claim. Interest rate assumptions were way off. They were assuming 5 to 7%. And the lapse rates, people keep their policies. Now, I will say to you that we've seen, I've experienced now with many of my clients who purchased in the mid to late 90s, upwards of about 300% rate increase. So that's very significant. These are folks that are on Social Security income, many of them, and it's just become unaffordable. So what I'm starting to see, and I'm a very active agent with my clients, I'm beginning to see not only reductions in benefits that these clients are taking, but a small percentage have had to drop their policies. And again, being as active as I am, and I stress that because most agents have left the industry. Most of the agents are gone. They don't want to deal with this. So an 85-year-old, a 90-year-old who reaches out to the agent isn't there, they contact the insurance carrier, and the insurance carrier, I have to say, the quality of customer service with some companies is good. With a couple of them, I'm going to say one of them in particular, absolutely terrible. And we are stuck in the middle of dealing with problems that I could talk about later on, but the customer
Thank you. Your
service,
3 minutes are up.
Okay.
That's all right. We will ask questions because it's very exciting, I think, for our committee to have you here and the experience that you've had in this sector. So I do just want to follow up with a couple questions because we've had long-term care informational forums on this with the aging committee. And I'm glad we met because now we have another person to reach out to. One of the things that I have noticed when really doing a deep dive into these policies is that the insurers do something called a closed group, which is they have a group open, they get a bunch of people in there, and then they close the group. Right. And to me, how is that actuarially sound that they're not bringing in new people into that group. I mean, of course, premiums are going to go up because the group is closed. Everyone's aging together. So that is something that I wondered if anyone on a national level has looked into. I don't know what your thoughts are on that.
I do believe that, oh, come on, Armin. I'll think of his name. I'm having a brain fade right now. Who is involved from Connecticut. He's involved with Paul Lombardo. Why am I forgetting his name? Yeah, Paul has been involved on a national level with looking for some of the solutions. Yeah. But I agree with you that this closed book of business, essentially, it creates a big problem. Remember something, the folks who bought back in the mid 90s and early 2000s, the average age was 65 to 70, even 75. Had a lot of clients buying back in the mid 90s at 75 years old. Okay, so what you're talking about, though, is a an aging group of clients, no new money coming into that class or that pool, and all that's happening is money is exiting in rapid fashion to pay for claims. So one of the problems also when rate increases are filed, and again, this is something I've heard, I've read about, but I may not be able to substantiate, is that when a rate increase is filed, the insurance company, these are multi-line companies. The insurance company is providing just that long-term care block of business. And the claim that the company is going insolvent, I would debate that. I'd like to see that. If a company like Transamerica says, hey, we're going to go insolvent if we don't get this rate increase, well, long-term care insurance makes up a very small segment of their overall business. They're a life insurance company. They've got executive benefit and pension programs, big dollars. LTC is a small piece of that. So my argument would be that, you have three stakeholders here. We've got the policyholder who is taking essentially 100% of the brunt of the rate increase. You've got the long-term care insurance policy, long-term care insurance company, excuse me, whose actuaries were wrong, right? But they're able to come and petition the state and say, we need a rate increase. And then you have the state of Connecticut, who frankly has been promoting the heck out of the LTC policies. I believe in this. My wife and I own these policies. I will not drop my plan. I see what goes on with clients and my own parents, actually. But what's happening there is that the state should bear some of the burden for approving the policies at those rates, at those actuarially found rates. And there are several potential suggestions and possible solutions. I'm not saying any one of them is perfect. This is certainly a big problem. But
now, are you saying that maybe earlier on the Department of Insurance didn't approve a high enough rate, and that's why we're in this? Okay.
Yeah, I'm saying that. And plus here, I do have some statistics too, an interesting statistic. One of the big problems has been interest rates. So the insurance companies, the actuaries were assuming a 5 to 7% interest rate on their policy reserves. If they set aside $1 billion in reserves or 100 million in reserves, they're anticipating making substantial interest. They weren't doing that. We all know interest rates have been way down for at least a decade and a half. So a statistic that comes from the American Association for Long-Term Care says that for every 1% decline in interest rate, which these companies have been experiencing, certainly more than that, for every 1% decline in interest rate, a 10 to 15% increase in long-term care premium is needed going back to year one. So what that says is I know for a fact that some of these insurance carriers were filing for rate increases in the early 2000s, were not getting them, And all that did was create this, I've heard the word death spiral being thrown around. So yeah, I mean, the state approved the products, to your point, initially, but then the rate increases didn't take place soon enough. And now they're just chasing and can't keep up.
Okay, well, that you know, having the state play some role in this, whether it's responsibility, assistance, is something that, you know, we've all kind of gotten to that point, and exactly how we do that. We're looking at a tax break. We're looking at a fund. We're looking at even doing a captive, which is what we did for the crumbling foundations. So all of this is how we move forward. You know, we'd love to have you at the table, and I just appreciate you bringing the experience that you have here, and I'm sure Senator Wong will have some questions. I don't see his hand up, but I'm assuming he would. Oh, Representative Pavlak-Tomato.
I'll ask it, Tony, or at least a couple. So yeah, you did mention, I know, Carrie, you just asked this, I'm just unclear the answer when you say some state responsibility, like, yeah, what are your suggestions if the state were to take a role? I mean, I'd rather take the approach of, yeah, well, I found your interest statistic very interesting, and we've been trying to be proactive and have been successful in having some plans that the state put forward removed. But yeah, I think it's something I'm not sure what the solution is you're suggesting there exactly. So maybe if you could clarify that.
One of the, and again, I appreciate everything. I know this is not an easy job for anybody sitting on your side of the table. The Connecticut Partnership, let's just take a quick look at them. The statistics on their website show that there are about 60,600 policyholders. Roughly 5,400 have gone on claim. Okay, so a small percentage of them, let's just call it roughly 10%. That saved the state $83 million. Okay, and I would submit to you, I don't know this for a fact, but if 5,400 have gone on claim, I would say that there are a number that are still on claim, still have saved the state money, A, and B, there are others that are hanging on to their policies, okay, and will be going on claim. Again, for those very actuarial reasons, they're going to live longer, hang on to their policies, even if they reduce the coverage levels somewhat. So it saved $83 million divided by 5,400 policyholders. That's over $15,000 per policyholder that the state has saved money. Okay, so I would say, is there a possibility? Is there a way to potentially funnel? Now, we don't know where that money is, but even going forward, okay, where the state is able to show with proof and the numbers and so forth that we're saving X numbers of dollars, that those dollars could be used towards a fund or a pool. I'm not sure where the pool in the proposal is coming from, where the monies are coming from, but maybe siphoning off some of the savings that the state is actually publishing that they're saving as a result of just 5,400 policies. In addition to that, so that might be one suggestion. There are plenty of non-partnership policy holders. There were more non-partnership companies selling these policies than ever were partnership. I think at one point in time back in the mid-90s, there might have been 8 companies selling through the partnership. But I would think that there were many more non-partnership policyholders here in the state undergoing the same sort of thing. So potentially taking the savings, that might be one suggestion. I'll just kind of leave it at that right now.
But that's not actually income. I mean, they're assuming savings because the person isn't relying on the state, but that's not actually generating income.
But it's saving Medicaid that much money, 83 million.
Right.
Okay, so could them out of the Medicaid budget, okay, which, by the way, with the Medicaid budget, it's really interesting. I was reading something here sorry, I want to find this. Anyway, it's something like 5 or 8%. I think it's 54,000 people have used Medicaid for long-term care out of 855,000 Medicaid recipients. Okay, it's a very small percentage are using it for long-term care, yet out of the Medicaid budget in Connecticut, it's over 40% of the Medicaid budget is being used for long-term care. So if there was a way to be proactive with some of that budget and potentially use it to help with some of these rate increases for those to maybe fund this pool, which I'd be real interested to hear how the pool is funded and how that works.
Well, you seem to find all the good data. So yeah, I hope you stay in touch so we can work with you further and definitely figure out something, because I know it's something that we struggle with a lot in this committee. So thank you very much, though. I appreciate your testimony.
Thank you for the questions.
Thank you, Senator Wong.
Thank you, Madam Chair, and thank you, Representative Kara Pavlak D'Amato. I haven't had to say that too often, but I'm going to try your last name, Aram. No, I'm just going to call you Aram. Thank you. It has been a long day, but I have to tell you, thank you so much for your time in being late, because the insight that you've offered is very helpful and thoughtful, as the Madam Chair said. But take me through. I don't think a lot of people understand the Connecticut Partnership for Long-Term Care is a separate entity than the private market insurers that sell long-term care. And you mentioned that a couple of times in regards to it as a product that saves the Medicaid marketplace money in regards to long-term care. Perhaps maybe other people know, but I don't think so. Could you explain in your expertise the difference and what that Connecticut Partnership for Long-Term Care is as a joint program between the state and private insurers versus the travelers and the bright lights that we've heard other people struggle with?
Right. So certainly, I'll try to make this as clear as possible. A Connecticut Partnership long-term care policy at its very core is still a long-term care insurance policy. Okay, so you could buy a long-term care insurance policy from a company that was not certified by or authorized by the Connecticut Partnership. So back in the day, I could go to a company like Transamerica, who was selling long-term care insurance, but they were selling it in two flavors. They were selling non-partnership and Connecticut Partnership. Okay, both of them were long-term care insurance policies. They pay for you at home, they pay for you in a facility. Okay, what's the difference? The difference was, and I'm going back in time now, back then a Connecticut Partnership policy had to meet certain muster. There were certain criteria, boxes that needed to be checked. One of those boxes was that there had to be a 5% compound inflation rider built into the policy. So the benefit package that you bought had to grow every year, 5% compounded. That was number one. And number two, there was always a minimum daily benefit that was required to be purchased in the policy. Okay, so let's say that the minimum daily benefit way back when was $200 per day. If I bought a policy that was $200 per day from Transamerica with a 5% compound inflation rider, as long as the company, Transamerica, and they was certified by the partnership, I could buy that contract from Transamerica and it would have that partnership certification or seal of approval on it. But if I wanted to buy a $100 a day plan or $150, something under $200, or something, say, without inflation or a lower inflation rate, it would not be partnership. Okay, so hopefully, at least for the first part of your question, I think I'm just trying to spell out what qualifies as a partnership and what does not. The incentive to buy a partnership plan, why in the world would I buy a Connecticut partnership plan? What's it going to do for me? It's going to give me something called dollar for dollar asset protection. It's going to incentivize me to buy the long-term care insurance, whereas I might otherwise say, I'm not going to buy it. I'm going to buy long-term care insurance. There was a tremendous marketing program, and I mean, you know, everything was good. I'm not taking shots at that, but it would incentivize me to buy the insurance. And if you look at all the statistics and the algorithms and this, that, and the other thing, most people don't last more than a year or two when they get ill, okay, and have a long-term illness. But what those policies would do is they would be the first line of defense, right? And protect the Medicaid system by people who didn't have a great number of assets or income, who would end up going otherwise onto the Medicaid system. What these policies would do would be to act as that first line of defense, okay, and pay for the expenses, keeping the person off of Medicaid, and then let's say the person would pass away. Now, if the person lived a lot longer and went on Medicaid, then the state is paying. But again, there were tens of thousands, hundreds of thousands of dollars have been paid out by those policies. But many people purchased long-term care insurance because of the partnership. Without the partnership, they weren't going to get dollar for dollar asset protection. I don't want to take up too much time. I could explain that to you briefly, how that works, but it does provide a tremendous incentive to the buyer of long-term care insurance to say, I'm going to buy if I'm going to buy long-term care insurance, I'm going to get a partnership plan because I'm going to guarantee protection of assets that I could guarantee to protect for my spouse, my kids, in an inheritance, et cetera.
And the reason I asked that is you offered an explanation of it because it could be the same company. I'm just using two examples, Mr. Mayor and Ms. Kelly, and they both bought Travelers, and that was acquired by Brightstar.
Bright House, right.
Bright House. Is that a partnership company?
Travelers was a partnership company, yes. And so that contract would have passed on to Bright House as a partnership policy, but they also sold non-partnership. Every company that sold partnership policies also was selling non-partnership. They were always selling both flavors. There was never a company, to my recollection, that only sold partnership policies.
I'm going to follow up with both Mr. Mayor and Ms. Kelly to find out if indeed, if they were partnership programs, if not. Have you seen in your expertise better cost control on partnership programs because of the guardrails that we talked about, or you saw no difference in the salary premium increases?
Unfortunately, no. And many of my clients, as I've dealt with them, have said, you know, Armin, we thought that the partnership certification, having that kind of seal of approval, would have helped to mitigate some increases or make sure that there was some quality element, I'll call it, that would have helped. But no, not at all. Not at all.
That's discouraging.
Yeah.
But nevertheless, it's good to get this kind of facts. And I know Mr. David Gutchin is well regarded in the industry by colleagues like yourselves and professionals throughout the country. And I know he's due to retire soon, so there'll be a vacancy in that important role. Now, as we look to craft policy in the proposal of this bill, would we be applying the legislation to the partnership program and its policy and the way it's run?
I'm not sure how to answer that, Senator, but what I would say is that any legislation that is done is going to need to apply to both partnership and non-partnership policy holders. I would say there's like I was saying, there's 60,600 Connecticut partnership policyholders, at least that's what's on the website, I'd probably say there's at least another 60,000 out there that are non-partnership, at least that much. I could be wrong. I don't have those numbers or statistics, but any legislation that's crafted needs to impact all of these folks, because there are a lot of policyholders out there, for example, that I have and that other agents have, that are non-partnership. They're being impacted the same way. There's really no distinction when a rate increase is submitted by the insurance company and approved by the commissioner's office that I have seen that distinguishes partnership policies are going to get this kind of increase, non-partnership that kind. I have not seen that, but I don't know if in the legislation there's something in the partnership guidelines, regulations, whatever, that's going to that you need to thread a needle through, so to speak.
This is the part of the process for the public hearing, and I know it's already been a long day, and I'm probably disrupting St. Patrick's Day corned beef dinners, and we got UConn basketball. But one last quick question, sure. And I hope, as the Madam Chair said, we would be able to engage you moving through with your expertise. Is for many of those people that have policies that are in process, and they are litigating because they're not getting the services. You mentioned a little bit that you service a wide range of clients. You not only sell the product, but you have the expertise to be able to be a kind of an advocate on a fee-for-service to help those individuals. How does what you do compare to the ombudsman? I mean, it's fascinating. This is not an issue that's happened overnight. The state has made efforts to accommodate the challenges of our aging population and the need for supportive services and healthcare services. So we actually have a entity called the long-term care ombudsman. So how does that compare to what you do in being as an advisor to other people that are in the process of having the insurance, needing it right now for their loved ones, but struggle with rejections or non-services? And again, thank you, Madam Chair, for the indulgence of that question.
So I would say that I do. I know that in the realm of long-term care, there's receiving the care. There are ombudsmen that are going to help with going to the right facility, for example, right? That's going to fit the particular disease state or condition or family dynamics, et cetera, et cetera. So there are those that I actually collaborate with that are on the care side. From my side, Senator, what I do is I do help a lot of, well, certainly my own clients, but a lot of many non-clients who, again, don't have an agent. I just met today at an assisted living facility. I was asked to go there today in North Haven. Met with a woman who is just put her husband into memory care. He has a Genworth long-term care policy, and she needs assistance with bathing, dressing. So she is going to be going on claim, and she's in her late 80s, and her husband is also. And navigating this, just the whole going on claim, what to do, it can be burdensome and cumbersome, certainly for any of us on this call, never mind somebody that's significantly older. So I do help and advocate for the client. I provide those services also, and but it's primarily with the company, interacting with the company on behalf of the family and the individual, helping them get on claim, helping them navigate these rate increases, because they're going, gee whiz, we got one option here or two options. Which one is the right one for me? And then just understanding what they bought 20 years ago or 15, 25 years ago.
Well, thank you for your expertise. And if you've not submitted written testimony, please do so. And then obviously include your contact information for any of the legislators that would like to get your input, because I know I definitely would. So thank you, Mr. A.
Armin, Mr. A.
and you know, we're getting into the UConn basketball game timetable, so I will stop, and thank you, Madam Chair, for the indulgence, and I was really engaged and really appreciated your insights, Mr. Abraham.
Thank you all for your time and interest.
Thank you, Armin.
Appreciate it. Okay, thank you all. Bye-bye.
All right, next up we have Lisa Rosenthal, followed by Leah Rawls.
I will just say, after such a long day, that's a really hard act to follow. Thank you, co-chairs Lesser and Wood, and members of the Insurance and Real Estate Committee for hearing my testimony regarding HB 5446. My name is Lisa Rosenthal, and I've lived in Brookfield, Connecticut for almost 3 years, and alongside my husband have raised 3 daughters. I've been in the role of patient advocate at Illum Fertility, formerly known as Reproductive Medicine Associates of Connecticut, for 14 years, as well as gay parents-to-be. This role grew from my own personal experience with infertility and the frustration of trying to access fertility benefits. I've met and spoken with thousands of people with one common goal: to have a child. My role includes helping them through facilitating peer support groups, advocating for them on both a federal and state level, conducting research, and helping support Illum Fertility's team in offering the most professional and compassionate care possible. My husband and I experienced our own infertility for 6.5 years, and while given excellent chances of conceiving with appropriate and available medical treatment, faced overwhelming twin roadblocks of both lack of insurance coverage and crushing out-of-pocket expenses. It felt, pardon the pun, but it is late, inconceivable that we were or were not going to have a child because of a reproductive problem that was not covered by our insurance. In fact, our insurance at that time specifically excluded infertility and fertility treatment. So that was 30 years ago, and now in 13 states, IVF is covered, including in Connecticut, which is great. But let me amend that. It's covered for heterosexual couples. I've experienced the heartbreak so many times of telling so many people that no, there'd be no insurance coverage from them, from the insurance companies that they faithfully paid every month, even though Connecticut is a fertility-friendly state, even though we have an excellent insurance mandate. Why? Because they were either members of the LGBTQIA+ community or they were single people. The definition of infertility is both antiquated and societal. It's not medical. It may have been 20 or 30 years ago, but it is not now. Illinois recently became the first state to amend the definition of infertility to include any person who needed medical assistance to have their baby. And I would say that this is not medicalizing the LGBTQ community. As a resident of Connecticut, one of the leaders in the country in reproductive health matters, a state that prides itself in fairness and equality, we want to be next to amend our legislation so that all people in Connecticut can build their families. 30 years ago, it was me. I was the one that was told no, that reproductive disease was somehow different than any other medically treatable problems too, and that my disease didn't deserve to be covered by my insurance company. And I delayed having a house. I delayed being able to go to graduate school, all to pay for coverage. Now, 30 years later, there's 2 other groups of people that are being told no. And it's time to make changes so that all people can build their families. Although the title of this bill is called an Act Concerning Equal Coverage for Medically Necessary Infertility Treatments, a more appropriate and inclusive title would be an Act Concerning Equal, Sufficient, and Appropriate Coverage for Fertility Health Care. I also want to add that GLAAD and other
Your 3 minutes has expired.
I also want to just finish by saying that GLAAD and other like organizations have been contacted and are waiting to see this legislation to review with their legal teams. I urge you to support HB 5446 with the amended changes, and thank you. And I'm open for any questions.
Thanks for being here, Lisa. I don't see any questions from our committee, so we appreciate it. Have a great night.
Thank you.
Next up, we have Leah Rawls, followed by Jean Brzee.
Yes, good evening, everyone. My name is Leah Rawls. I'm the president of the Wyndham Willimantic branch of the NAACP. Our branch is a member of the Wyndham United to Save Our Healthcare, which is a grassroots coalition who came together in support to reinstate the labor and delivery services at our local Windham Hospital. So I am in support of HB 5449. And in that support, I would like to suggest that the consideration be given to include the AG's office as part of the review process when a hospital wants to discontinue a necessary service in an underserved, underfunded hospital, and to allow the certificate of need process to be strengthened to stop corporations from eliminating necessary services to those same communities without following statutory requirements. The impact of abruptly closing the labor and delivery unit at Windham Hospital has been devastating on the community and affects women of low socioeconomic status, particularly women of color. The lack of notice, the lack of compassion, and the lack of transparency creates a hardship for our community. Also, the lack of community transportation adds to the stress of our women. Same as it did when they closed our ICU abruptly in 2015. Yes, we've had testimony from others about the women who delivered on the side, the woman who delivered on the side of the road. But the missing part of that story is that she was a severe psychiatric client and who lived 6 blocks from that hospital. She reported to me specifically that she was afraid, she was alone, and she was unsure of what was happening to her and her baby, while under the influence of a very strong psychiatric medication. We often tell stories from the perspective of a woman, but we also have testimony from a father of Mexican descent who talked about the fear of having his wife deliver out of the community due to the language barriers, due to the lack of transportation, due to the lack of childcare for their other children. He was fearful, and he was fearful that his wife would be swept off in the back of an ambulance and he wouldn't know where to find her. The concern of the NAACP is that the lack of access to equitable health care is an act of discrimination and a violation of civil rights. It is beyond us to understand why Hartford Healthcare did not increase funding to improve the quality of services in our hospital instead of depleting them. They could have implemented a NICU, and they could have brought in anesthesiologists as well as other OBGYNs. But instead, they built an amphitheater. They increased income.
Thank you. Your 3 minutes has passed.
Thank you. So what I would like to ask the committee to require is for a hospital to show where their certificate of needs, wherein they actually spoke to the residents who would be affected by their decisions, and not to, let's say, a town manager who may or may not live in the community, but who, even if he did, probably wouldn't utilize those services because he has other options. If the hospital is fined, I'm asking that the policy and the statute do not allow for a reduction of the fine as imposed, but to reinstate the services that they illegally shut down. And if I may, I would just like to say personally, and I'll take 1 minute to say this, I'm a retired state employee, and during the last union negotiations, there was a negotiation to have a $250 copay for me to walk into the emergency room. I am a chronic asthmatic. Each and every visit I've had to the emergency room was pretty much life-saving. And to consider the fact that I have acquired an extreme amount of medical bills at $250 per visit is just unimaginable.
Leah, thank you so much for your testimony. Did you submit written testimony on your three suggestions?
I did not, but I will.
Okay, that would be really important. You can submit it, I think I think it's a couple weeks after our hearing.
Yeah.
So please do so. And, you know, we really appreciate you waiting to testify and giving that. We'd like to further dive into your suggestions, and a lot of people from the area as well had given us really great things to work on. So thank you so much for coming here.
Thank you so much for allowing me to testify.
Okay, great. Next up, we have Jean Brzee. Did I say your last name right, Jean?
You did. Thank you.
Excellent. Thank you for coming.
Good evening, distinguished members of the Insurance and Real Estate Committee. I'm here today in support of House Bill 5447, an act concerning prior authorization for healthcare provider services. Again, I'm Jean Brzee. I'm a registered nurse in the state of Connecticut. I've been practicing nurse in the state for over 25 years, the last 10 of which in the specialty of case management. I'm employed at Bristol Hospital, and I've been consistently caring for patients throughout the COVID-19 pandemic. As others, I've submitted written testimony to the committee today. In that testimony, I explain my role and exactly how the myriad of prior authorization requirements negatively impact my patients every day. But in the interest of time, I will not be reading that. I just want to encourage you all to take a look, and I hope you'll find it helpful. Instead, I want to use my time to impress upon you how big of a problem prior authorization requirements are. Many speakers today, including some of my colleagues, have spoke about issues of prior authorizing patients in the healthcare system. In case management, my role is on the tail end of that care. I work closely with insurers at the point of discharge to authorize the next level of care. We have so many processes in place to make sure every patient gets exactly the right care when they need it leaving the hospital. My biggest personal struggle is when those patients need skilled nursing facilities that require prior authorization. Unfortunately, with our aging population and the rapid rise of Medicare Advantage programs, there's a lot of them. And when a patient is medically stable for hospital discharge, they should be able to get to the rehab center promptly and get the care they need. To be sure, when patients have federal Medicare or Connecticut State Medicaid, they're able to go immediately, no auth required. However, when they have any type of commercial or managed Medicare plan, that dreaded prior auth process begins. So listen, I get it. Private insurance companies are for-profit entities needing to make sure every single medication, procedure, diagnostic, and care setting is medically necessary. Though I hate it, I can understand it and even accept it. My issue is not the process itself. My issue is the time it takes. The time it takes from application for authorization until a final decision is rendered is simply unacceptable. A recovered patient anxious to get back to life absolutely should not have to sit in the hospital for 1, 2, or even 3 days to get an insurance approval. My job as case manager is to get the patient to the right level of care in the right facility and at the right time. Honestly, most of the outcomes I'm measured against go back to just those few things. But after all too many times, these patients have to sit in the hospital and await that auth process. So I'm the one who has to go into the rooms. I have to sit with the families and explain to them why they're still languishing in the hospital, why their mom can't get to the rehabilitation facility. And I have to apologize for outcomes that are beyond my control. So I really need your help. Truthfully, I need more than a study. I need meaningful legislation setting limits on the time period it takes for an authorization request to be approved. It needs to be on the order of hours, not days. And it needs to be comprehensive, because I can easily see the insurance companies complying with a 2-hour rule, say, by just denying all cases and letting a 1 to 3 day appeal process play out. We would have no net change. The good news is there is a solution, and I spoke of it in my written testimony. I did it in 1 paragraph, and I ask that you please take the time to look it over. It's simple, we've done it, and it works. I'd love to discuss in more detail anytime if desired, and I do recognize how many bills and how many viewpoints you all have listened to today. So I really appreciate your time and attention to my concern. Thank you.
Thanks, Jean. We have a question from Representative Pavlak D'Amato.
Thank you, Madam Chair. Can you summarize your for that? Because I find that piece also very complex, the nursing home or aftercare facility part. So in like 1 or 2 sentences, can you give me an idea?
I sure can.
I
can. And the short version is we've seen it. And we've talked about it today. It's the waiver process that was enacted during the most acute times of the COVID pandemic. Those days when hospitals were at capacity and patients needed to be discharged. That was done through pressure and oversight from the DPH and CMS and the CHA. And in any case, during those short periods, weeks to months, during the worst times, patients were allowed to immediately transfer from the hospitals to the nursing facilities while the same authorization process continued as always. That same process was followed each and every time. The difference is the patient was allowed to be in the nursing home receiving that care and not languishing in a hospital bed waiting for an insurance company to make a decision. There's strict criteria for a patient to get to a nursing facility. Everybody knows the criteria in both the healthcare side and the insurance side. Patients are not sent to nursing homes for rehabilitation when they don't meet that criteria. And if they absolutely need that care and they're denied by the insurance, we just keep fighting until they get that care. We just don't give up, and they always get the care no matter how long that process takes. So with regard to the waiver, during those short periods, people were able to go to the nursing facility, start their care, and then the insurance reviewed it. Those were always short-term approvals under the waiver, like maybe on the order of 1 to 3 days. But that gave enough time for the insurance companies to make their decision, and then we can go from there.
Okay, so you said waiver. So, and I'm not against that, but is there an option B? Like, is there a, I don't know, retroactivity, or, because I don't want somebody using a hospital bed if it's not necessary also, but I'm just looking for possible other options as well, just to be creative. And I'm just trying to kind of playing devil's advocate as well. So.
Yep. This was called a waiver, but like I said, the exact process was followed, and I can get behind the process. I think it works. Insurance companies have to ensure under managed plans that the patient needs the care they're receiving to pay for. But the issue is right now, the way the system is set up, they sit in the hospital with no care at all. And like one of my colleagues referred to earlier, with no reimbursement for that care. So not only is it bad for the patient, it's bad for the hospitals, and nobody makes out. The only one who makes out is the insurance companies, because those are unreimbursed days. So if I'm the insurer and it takes me 1 to 3 days to make a decision, that's 1 to 3 free days in my pocket. I don't have to pay a hospital or the nursing home for that care. Unfortunately, the patient is at the sharp end of that. So I do think that process should continue as always, but the patient should be allowed to transfer to the facility and start their care. And then you have 1 to 2 or 3 days to make that decision. And if you decide that the patient doesn't need that care and you're going to deny that claim, well, then the patient can either exercise an appeal process there, or they can agree, you know what, maybe I don't, I can go home. No harm, no foul. You're only talking about a 1 or 2, when the insurance companies are now paying for the care, that process won't take 1 to 3 days. That process will be done 1 day. So it won't go on too long, but the patient will not have to languish.
Okay. All right. Yeah. I want to work on, I can't work on every, and I don't know if we can work on every single section. But I'd like to work on this section. I just think there's a solution there. And I don't know if we're going to get every section in even the pre-auth bill, but at least Kurt made it smaller this time than he did last time. And, I would like to work on that language further. So, but thank you for your testimony. I appreciate it.
I thank you. I appreciate it.
Thank you, Jean. Have a great night. Next, we have Cheryl Kapler-Champ, followed by Kate LeBlanc.
Thank you. Yes, my name is Cheryl Kapellner-Champ.
Thank you. Thank you for that.
Good evening, committee chair, members, and all who are with us in person this evening. I am here in support of HB 5449. We live in Pomfret, which is in Windham County, and I was employed at Windham Hospital back in the late 1970s. Thank you for the opportunity for me to share my views today, and I am representing the following groups: Quiet Corner Shouts, Windham Willimantic NAACP, and our coalition, Windham United to Save Our Healthcare, and our work to restore the delivery room at Windham Hospital. I come to you today as a person of vast experience with 50+ years as a member of the nursing profession, My worldview is colored through the lens of being a mother and a grandmother. It's important to note that many of the healthcare professionals I've had the honor and pleasure to work with were called into their professions due to a dedication to help the people they cared for, their patients. After World War II, our government got to work on how to provide healthcare for our citizens. They needed to decide who was to pay, with two prominent choices, government or business. They decided on business. I bring this up because it's the germ of how we've gotten to where we are today and why. Not all business is good or bad, just as not all government is good or bad. What is bad is when the business model for the bottom line is more important than quality medical care for all phases of life. After all, we are all born and we all will die. Some years ago, a well-known credit card corporation came up with a catchy phrase for the last word in their ad. They continue to use it to this very day because it truly is priceless. Some years ago, as years went by, we've seen more and more health corporations emerge. During this, the Supreme Court decided to classify corporations as a person. Anyone who looks up the word person in the dictionary knows this is not true. How do we know that? In this case, it is an untruth because one person's choice to shut down an intensive care unit or a delivery room would be impossible. But in a corporate setting, the organization is classified as a person, yet they can still do that. We're seeing this throughout the country, and now small, often rural or isolated communities are forced to devote time, energy, and income in pushing back against giant corporations just so their families, neighbors, and friends can have health equity. I'm certain this was not the intended plan when our government designated the private sector to provide health care for Americans. I can make this statement honestly, having been—
Thank you. Your 3 minutes is up.
Okay, can I just close? I can make this honestly because I've seen it unravel before my very eyes. And it's been very embarrassing and is outrage because Connecticut is one of the wealthiest states in the country and we can do better than this. Thank you very much.
Carol, thank you for coming here and sharing your testimony. And please let all of your groups know how well of a job you did, and we appreciate you delivering this message.
Thank you. Thank you.
Thank you. Have a wonderful evening. Next up, we have Kate LeBlanc, followed by Stephen Osmond.
Good evening, everyone. Thank you so much. My name is Kate Weldon LeBlanc, and I'm the Executive Director of Resolve New England, which is an independent nonprofit organization that provides emotional support, education, and advocacy for anyone in New England that is struggling with fertility and family building. And I'm here tonight to express our strong support for House Bill 5446. And I know it's been an extremely long day, and I certainly don't want to be standing between anyone and their dinner or basketball or both. But after all this time, I did want to go on the record as saying we really support this effort to make the Connecticut fertility law more equitable. And certainly Connecticut is not unique in needing to update its law. Of course, families have changed quite a bit since the law passed originally in 2005. And it has been great to listen to the previous testimony because it highlights, I think, to me that many people on this committee and in the legislature in general want to do the right thing around making fertility care more accessible and more equitable. And in fact, I know many of you, Senate Chair Lesser and others, have worked really hard to do that. And I think it felt in some ways maybe like the problem had been solved, but as you've been hearing today, in our experience, it has not. And there is still sort of a double standard in terms of how many residents of Connecticut can access fertility care and treatment. And so we strongly support the goals of this bill. And also, as many people have mentioned, and I'm going to detail in my letter that we do support some amending of the language from the bill as filed, but we certainly support its intent. Like I said, I'm going to submit a letter in more detail. So thank you all for all your work. And this
Yes,
is.
and thank you for submitting that, because I know there's a working group that will be working on those fixed issues.
That's
so
great.
if
We'd
you
be
are
happy to be part of that.
okay, I would reach out to Representative Nuccio just to let her know that you're interested. Representative Pavlak-Tomato.
So if you could just give me, what's the example or who's being denied or what's the reason for the denial for the fertility coverage?
Sure. So as others have mentioned, and again, Connecticut is not unique in this, but traditionally if states even have a fertility insurance law, it is an outdated definition that's very, I often say heteronormative, and then someone corrected me that a term you could use is heterosexist, which is that infertility is only defined in terms of a heterosexual couple trying to conceive without preventing pregnancy for a certain amount of time. In some states is the only way infertility is determined. And obviously, there's many different reasons that people need fertility treatment to conceive, including being an LGBTQ couple or a single person trying to conceive on their own, but also even just other medical reasons. You know, we work with people who have had a hysterectomy, for example, due to cancer. It doesn't make sense that they should have to wait a certain amount of time to try to get pregnant when they know they can't carry a pregnancy without fertility treatment. So for example, like heterosexual couples, often their entry into the fertility care world is to share, you know, that they have been trying without success for a certain length of time. And then all that does is pretty much get you to the starting line of then getting diagnostic care, trying to figure out what's happening, and then navigating what makes sense for you in terms of fertility treatment. So in my mind, what this bill is about is not special treatment for anyone. It's just to be equitable, that basically people can get to that starting line without a double standard. So for example, say there's a two women couple that is trying to conceive. It's many cases, insurance requires them to pay out of pocket for multiple cycles of insemination, basically just to get to that same starting line that me, as my husband and I, as a heterosexual couple, we could just self-report as we did that we were struggling. And that just gets you in the door basically to diagnostic care. Does that make sense?
Yes, but I guess are you saying that did they try, let's say in that example, did they try like artificial insemination first or from a donor and then it didn't work? They're not saying that, hey, we're two women, we can't get pregnant together. Like, I mean, you know what I mean? Like, or
right.
Example,
well,
it's
I mean, to me, they cannot conceive on their own. And they do, to me, like I said, to me, they should, if for true equity, they should be at the same point that my husband and I were at when we reported that we hadn't been successful, because all that really just makes you be at the starting line together because for them to try, they are paying. I mean, you know, people can try home inseminations, but some insurance companies don't sort of take that as proof of trying unsuccessfully. So some people are paying for multiple cycles of assisted reproductive technology to just even prove that they aren't successful.
Well, so, but that's what I mean. And I mean, yes, the thing is they need sperm, right? They don't create it on their own. So, and that is, you know, that's just the way it you know, God made it. So I can understand if they tried some cycles with some donor sperm and then it didn't work and they get coverage. But I mean, yeah, obviously they can't do it alone.
Right. Well, I mean, I guess, and that's precisely why I and Resolve New England support this bill, is that I think we have to see it more broadly than a traditional view of infertility. Some people have diagnosed infertility, including LGBTQ couples, but others need fertility treatment because they're paying for private insurance just like anyone else. And what they need is fertility insurance, or fertility coverage rather, to try to build their family. So They might not have infertility in the traditional medical sense of the term, but they need fertility treatment to become parents, to try to conceive.
Right.
Obviously, we support many different paths to parenthood, but if they want to conceive, then they need to try fertility treatment. And it's economically inaccessible for many people if they don't have insurance coverage.
But so is somebody like, you know, I don't know, who's 60, who's not on, let's say, Medicare, or like, but somebody who's older, or, you know, let's say had I want to say had a hysterectomy, or I don't know, or both ovaries removed. And yeah, aren't they still paying towards it?
I mean, I think there can certainly be parameters to the bill. I mean, I think it's our intention that this would be consistent with clinical guidelines that are, you know, promulgated by our reproductive health bodies in the country. You know, this is not kind of like, in my mind, this bill is not about like fertility treatment for anyone who could possibly want it. There certainly will be clinical guidelines that are based in current science, not arbitrary. That's what, you know, again, the current system is not equitable because it is based on an outdated definition of infertility that is really narrow.
Yeah, and I don't want anybody who you know, is trying to conceive, right, to be denied, let's say, just because they're a lesbian. Okay,
right.
I don't want that, but you know, infertility is not being able to conceive for whatever reason. And you know, I guess a woman, let's say a single woman, because I know being, you know, if there's no other partner, does a single person still have to show that they were, that they tried some type of artificial insemination several times?
Yeah, I mean, I don't know as much about that in Connecticut, but single parents by choice, throughout the country have an extremely difficult time accessing insurance coverage for fertility treatment, because most states don't even have a fertility insurance law. And even if they do, they are not written in an inclusive way that would typically cover single people.
Because I mean, as long as there's no difference there, I just, you know, like I don't want to be able to claim that, you know, I can't get pregnant by myself. Well, obviously I can't get pregnant by myself, you know, I mean,
right.
Like a genius to figure that one out. But
yeah.
And as long as that individual and even a lesbian couple, as long as they're treated the same, then I'm fine with that. As long as we like face the realities of the way a baby is made, then yes, I want that equal coverage.
Right.
So
yeah,
I mean,
because right now it truly isn't equal, as we've been saying. So I think we're in agreement that it frankly is discriminatory in the current scenario for many people, which is that they are held to a different standard that often requires them to pay out of pocket for multiple attempts. And sometimes that, you know, like I said, I think it's better for everyone if they get good diagnostic care, because then they will find the best path forward for them clinically.
Okay, thank you very much.
Thank you.
Kate, thanks for being here tonight. Enjoy the rest of your evening.
Thank you. Go UConn.
Okay, next up we have, it looks like Wyatt Bosworth, followed by Kurt Barwith. Hey, Wyatt.
Hi, Madam Chair. How are you? Can you hear me?
Great. Thank you for being here.
Yeah, the UConn hoops just tipped, so I will be as quickly as possible. I'll be out of here as quick as possible. My name is Wyatt Bosworth. I'm assistant counsel with CBIA, here to comment on two bills tonight. I submitted written testimony. Feel free to refer to that. I'll be summarizing. So the first bill, House Bill 5410, this is the high deductible health plan bill. CBIA strongly opposes this bill. Practically speaking, the bill would mandate that state regulated high deductible health plans would not be permitted to impose a deductible greater than $1,400 for an individual and $2,800 for a family. As was noted in the high deductible health plan task force, any state regulation of HDHPs have limited impact because we don't have the ability to regulate self-funded plans, which are covered by ERISA. So this would strictly apply to fully insured high deductible health plans, which represents a very small segment of the market, primarily utilized by small and mid-sized companies. So the proposal to cap deductibles at the federal minimum will inevitably lead to plan designs, which would include a combination of premium increases, out-of-pocket maximum increases, and/or just droppage of the high deductible health plan, and either shifting to a plan that doesn't meet the requirements of a qualified high deductible health plan, or if you're a small business, just simply not offering health insurance at all. So what I did in my testimony was I attached an employer survey from the Kaiser Family Foundation, which kind of breaks down what deductibles are imposed on different high deductible health plans. And the data is really striking when compared to the intent of this bill. 79% of small firms, which KFF designates as 1 to 200 employees, have a deductible greater than $2,000 for $2,000 for an individual, and for a family, 82% of high deductible health plans with small firms have a family deductible over $2,800. So we're talking about a lot of small businesses in Connecticut that would be impacted by this. So the data is clear. The vast majority of small businesses offering qualified high deductible health plans will either have to redesign their plans or drop coverage altogether. Under the first scenario, so where small businesses are redesigning their plans, premiums will have to increase dramatically to make up for the shorter time frame for which cost sharing kicks in. Further, the out-of-pocket max for these plans will likely increase to require more cost sharing before the insurance plan pays for everything in full. And under the second scenario, if the small business, let's say, drops the high deductible health plan and goes to a traditional health plan, since only those who are enrolled
Thank you. Your
in
3 minutes
qualified-
has expired.
Okay, you have my testimony. I think the takeaway here is this is going to make healthcare extremely unaffordable for small businesses, with the possibility of even losing the ability to have an HSA, which provide tax incentives for both the individual and the employer. And then quickly on Senate Bill 14, step therapy, just want to align my comments with the PBMs and the health carriers. Step therapy is a very effective tool to monitor cost and quality for prescription drugs. And you're going to see more prescriptions filled and less generics filled, and costs are going to go up. So we just ask you moving forward to at least balance the cost saving and quality measures step therapy brings with things like undue delay for care. So that's it. Thanks.
Wyatt, thank you so much for your feedback, and we are very much in line with trying to pass things in a way that stays with our eye on cost of care. I mean, we are the insurance committee, and we are really trying to do everything we can to lower insurance costs to people in the state of Connecticut. So we always appreciate your feedback as you bring some really great insights. Thank you.
Yeah.
Senator Wong.
Be very quick, Madam Chair. I just wanted to thank Wyatt for his work and CBIA's input for the past couple of years in regards to Connecticut businesses and their interest in being able to provide healthcare costs, but just the viability and success. So I appreciate the opportunity to hear you today and keeping it short, but also know that we'll be looking forward to connecting with you throughout the rest of the session. So thank you for your patience, and thank you, Madam Chair.
Yeah, and Senator, my door and my cell phone, my email inbox always open, so always reach out.
Great, thank you.
Thanks,
Next
everybody.
up, thank you. Next up, we have Kurt Barwis, followed by Samuel Koskovich. Kurt, for some reason it looks like you're off mute, but we can't hear you.
How about now? Is this better?
Yep, great.
Okay, thank you. Sorry, too many mute buttons over here. So thank you so much, Madam Chairperson and committee members, for your consideration both last year and this year. You've heard from many of my team members this evening. I am the Chief Executive Officer of Bristol Health, and we support HB 5447, but as you heard earlier, we really believe the bill does not protect patients and their providers. It does not go far enough, so I'm hopeful for your consideration. We're a nonprofit, charitable, highly integrated, self-supporting standalone organization. I've heard a lot of conversation today about the interest in keeping small standalone facilities alive. The pandemic has weakened our financial state. Contributing to our weakened state is our overall government reimbursement mix of 72%, which makes it difficult for us to make up the loss in government pay with our commercial book of business. But it's not impossible. Actually, if our requests for authorization and payment for health services were processed efficiently and fairly. The single most significant risk to our financial viability is the aggressive and inappropriate use of prior authorization by commercial health plans. I'm going to repeat that because it is absolutely true. The single most significant risk to our future financial viability is the aggressive and inappropriate use of prior authorization by commercial health plans. I'll make that easy to understand. You heard testimony about what happens when you have to transfer a patient to a skilled nursing facility. That causes the most harm to patients and the most harm to our facility. 82%, and we really worked hard to put data in the testimony, and so you'll be able to see the charts and graphs in there with exact data of where I'm getting these numbers from. 82% of our commercial health plan discharges to post-acute care require prior authorization. You heard Jean testify that we don't get paid for those days. So at the end of the patient's stay, when they're ready for discharge, we get paid zero. There were 406 days of care we provided to patients that were waiting for commercial insurance prior authorizations last fiscal year. These days are not part of what the hospital get paid for. We factually received no payment for the patient that occupies the bed waiting for an authorization. That cost us $1 million. I just can't fathom, as in doing this all my life, how it is possible that I am providing and subsidizing insurance companies that have profits. I just can't understand it. So we really urge you to not simply study the issue, to enact real authorization reform this session. And if I ask for one thing, I would ask for reform over that process. So without question, the sustainability of the hospital is in the crosshairs of prior authorization abuse. Oversight and regulatory action is absolutely needed. I wanted to comment a little bit on the gold standard method that was referred to earlier. A denial is determined by a commercial insurer who can and does change what requires prior authorization, and they unilaterally determine prior authorization criteria, right? Unilaterally, these rules can be changed to determine who and if in fact anyone actually received the gold standard status. So the insurance company has the whole control there. In September of 2018, the Inspector General issued a formal report which found that commercial MA plans overturned 75% of their initial prior authorization on appeal. That really hasn't changed. So will the gold standard status be determined based on initial or ultimate authorization if you actually do that? It's very important.
Thank you. You've reached your 3-minute mark.
I'm cited. I'll wrap it up. CMS cited 56% of the audited commercial insurance contracts for making inappropriate denials and sending denial letters with incomplete and incorrect information, which may inhibit.
Kurt, you put yourself on mute.
I'm sorry. So CMS cited all the commercial payers for actually providing denial letters that did not provide enough information for beneficiaries to actually file a successful appeal. So my question is, if we did that plan, how would you consider this? There has to be an independent, consistent, objective standard if we're to implement a plan, a gold plan. And given objectively all that I'm aware about, I find it very difficult to understand how the proverbial fox in charge of the henhouse is a reasonable and viable solution. So thank you very much.
Kurt, thank you for your testimony. We were introduced, I think, a year ago now, and the reason why we are talking about prior auth going on the second session is really under your leadership on this. Your entire team has always been available to speak with us. I know that a lot of them are busy taking care of patients and find time to testify. So thank you for everything that you've done on this, and we look forward to working with you on as this bill moves forward. Representative Pavlik-D'Amato.
Thank you, Madam Chair, and thank you, Kurt, for your testimony. I'm looking at your written testimony, and I did review the chart. What are the columns? Are those? There's like 7 different columns. What are those?
So there's seven different commercial payers. Each one represents an individual commercial payer.
Okay. You testified, I believe, that the loss, and this is, I think for just the nursing homes is $1 million, correct? Over $1 million.
It is, and I think I really believe it's understated. So you all understand that we're under extreme staffing pressures. We've paid as much as $190 an hour for RNs during the crisis. And as a consequence, we use the Medicare numbers and we use proxies that are known to estimate that cost. My guess is it's well over $1 million just for that element of prior authorization.
And again, to your point, like as far as additional staff that you've needed to hire, that doesn't take that into consideration. This is actual loss of people in your hospital utilizing beds that could be utilized by somebody else that you're not getting paid for, correct?
That's correct. That's absolutely correct.
Okay. Yeah, so this is an area I think that that I'd like to work on this session and get some, maybe if you guys can look and maybe find any other states, and if just keep it narrow as far as the nursing home portion, any other language in any other states that might be helpful. So I'm just looking for maybe a few different alternatives, options. I like having options. So yeah, for just to deal with that issue, because I really find that to be unfair that, not to get paid at all. Does any of this get put on the backs of nursing homes?
The nursing homes won't accept a patient without a prior authorization. So basically, legally, I can't discharge a patient, as you heard Jean say, without a safe discharge plan. So we're like stuck in the middle of this. And as he pointed out, there is no incentive for the insurance companies to actually move the patient on a timely basis because they could just leave them here. I just sent you, Kara, the CMS determination letter that says that they actually only have 1 hour to provide that or they're financially responsible. As a small system, I am unable to get any language that even closely resembles what the federal law requires that they do. I am unable to get any language that's fair and pays me and compensates me fairly. And I can tell you in other states, I've talked to large systems, CFOs, who tell me that they get paid for what's called disposition days. I can't get those in my contract. I'm told they can't change or modify those contracts. And I've been at the table as both the CEO and the CFO for the last 2 years, and they refuse to change any part of those, the MA plan language, saying that it's done somewhere else out of state by corporate and they're not allowed to change it. So, when I say it's our survival, it's not just $1 million. The cost, you heard 26 people we have now dealing with prior authorization. The cost is now climbing to almost 2% of our overall operating costs. And it's costing Connecticut. These prior authorizations are actually increasing exponentially the cost of care in this state of Connecticut, not reducing it or managing it.
Now, but that also could be due partially because what you're talking about is money follows the person, right? That program that the state implemented and requires that you can't just discharge somebody without a plan. Correct?
Legally, we would be absolutely shut down if we discharge people without plans. And so that has always been the case. Even without any other legislation, we just can't legally discharge a patient. So we are truly caught in the middle of this. And the fact that there's an ignorance of the actual federal policies. And again, I sent you a didactic determination letter, which says our interpretation of the federal rules is 100% right. And but I can't get any. So when it says they have to be financially responsible, I can't get any language to say what that means in any contract. So you have a nonprofit organization lost $1 million to a for-profit insurance company that's reporting billions of dollars of profit. It just makes no sense to me.
Well, and I know we have discussed that, keeping somebody in a hospital, there's other sick people there that that infection rate is
right.
Highest probably there, right? So, but of course you can't push them out the door, but then again, now you're actually putting them in a situation that is probably one of the worst situation. I don't want to say the worst, right? But not an ideal, right? As far as recovery goes.
So I point out that Bristol Hospital has the lowest hospital-acquired infection rate in the state of Connecticut and has never been penalized for that. But what you're saying is clinic absolutely 100% correct. You increase the risk that a patient, as Dr. Lim said earlier, could be exposed to a hospital-acquired infection, end up sicker, and not be able to be discharged as a consequence.
So I'll just finish, by saying again, it's more government interference, which people don't understand the consequences of. And, it goes back to a point I made earlier about other rules. Great protection that we do. It just, ends up, I just think not necessarily the best option for the person, and puts the burden on you guys. Now you're eating it, which means, me as a taxpayer, I'm eating it and I can barely pay for myself. So thank you for your testimony. I mean, I have enough to pay for, but thank you for your testimony. And I look forward to talking to you more about what we can accomplish with this. So thank you.
Thank you, Kara, so much. I appreciate it.
Kurt, thank you for being here and for spending the evening with us. I appreciate it.
I did get my corned beef and cabbage in the cafeteria at the hospital here today, so I didn't suffer the consequence of not getting it. Thank you so much.
Yeah, when I put my video down, I'm actually eating mine, but mine's vegetarian.
Thanks. Take care.
All right, next up we have Samuel Koskovich, followed by our last speaker, which is Aaron McCleary.
Thank you, committee, for inviting me to speak and provide testimony. I provided, first of all, I'm a co-founder of a firm called Financial Medic, LLC, based in Connecticut. We look at health, and we look at long-term care insurance, and we look at a number of financial issues to ensure that people are able to retire safely. And so LTCI is a major component of that. I'm responding to Bill 409, and there's 4 components to that. And I'm going to focus my attention on the financial impact on Connecticut taxpayer as a result of a proposed 20% credit. So we ran numbers on this, and they're actually very easy to get to because we work with LTC numbers all day long. So, and there's a source 2021 NAIC long-term care insurance experience report that shows that Connecticut annual premium for LTCI is close to 300 million. There's 104.9 thousand, 105,000 standalone LTC legacy policyholders. We run numbers all the time. We see rates increasing on aggregate basis 15% annually. Some carriers are into the 20% annual increase in perpetuity. Bright House is near the top. They would run close to 25, 26%, if not for the cap. Others run a little bit lower. I looked at this today, the top 5 carriers, if you average them all out, John Hancock and Genworth and Transamerica, met 15% in perpetuity. I ran a model. I looked at 1% unforced lapse rate, but I have some bad news here. So what am I trying to drive to in terms of the graphic that we have here is how much present value tax credit would this 20% credit involve for the state? And so in 2023 would be close to 42 million. If extended out over to 2030, cumulatively it would be close to $500 million. But there is an assumption here that the industry continues to do what's called past loss recovery, and that is at the core of the issue. I've provided prior testimony on this. Prior speaker, Gary Mayer, referred to it. And NAIC says that best practice is not to use it. And so we're at a turning point here.
I think you've reached your 3-minute mark.
Okay. stop. People get a question or two. Go ahead.
Yeah, no, Samuel, I'd like you to just continue with, where the high level is that you
Yeah,
are.
the high level
focusing on,
here is
because-
that NAIC has said that the practice of past loss recovery should be verboten. And we don't know whether the DOI has gotten the message yet. And so from what we see here in the proposed legislation, and Gary referred to this as weak, it's not strong enough. We need to see some rate stabilization put in here. The 20% tax credit costs the taxpayer a lot of money over the next 10 years. What we really need is a tougher DOI that puts their foot down to the carrier and says, you will not be able to recover from past losses plus interest. That was NAIC's message to our DOI. Part of the good news is the fact that in 3 recent filings, it appears that the DOI got the message. And so for Bright House got 0, Met got 0, and John Hancock got 0 when they all asked for large double-digit rate increases. But the dilemma for us is we don't know if this is permanent or not. So if we're planning, we can't tell whether the DOI just gave them 0 this year, and next year they'll turn about and ask for something even greater. So we're confused as to what the DOI's policy is. And we've asked them and we haven't gotten a response.
Yeah, have you been listening? I don't know if you listened to some of the recent speakers on this, but what are your thoughts on one gentleman was on saying that the Department of Insurance probably kept the increases lower when they should have been a little bit higher.
We know that. Yeah, we know that from our research. We've reported that 2 or 3 years ago.
Okay.
So in 2004, Bright House asked for 40% and Transamerica asked for 40%. Our DOI at that time, for whatever reason, gave them 0. When clearly from a statistical standpoint, if you looked at the original pricing models compared to the actual experience, there was such a wide deviation that any high school statistician could recognize a deviation was such that the DOI should have given 40%, as most other states were giving at the time. So, we've probed that a little bit, and we thought that maybe there was a little bit of overreach by the Office of Policy and Management to stop the rate increase because that would have interfered with the partnership sales. So that's in it in a nutshell. So, we've dug up all this information for the last two or 3 years. That's what we come out with. That it was in the OPM's best interest to intervene on rate increases when they should have been given. That's an easy statistical argument. We have pictures of that shows that there's wide deviation in terms of original pricing assumptions, the models that created all this underpricing versus what was actually happening until year 2003, 2004 was a real, was a year where you can see all these models collapse. I don't know what else I can say about that.
No, you gave us some great points. I have looked at your testimony, so you will likely be hearing from members of this committee as we move forward. Thank you, Senator.
Okay. Thank you,
Senator Anwar. You have your hand up.
Thank you so much. Yes, Madam Chair. Good to see you, and Mr. Koskovich, and thank you for your testimony. And every time you speak, it confirms how much invested into this difficult process and difficulties that communities have had. So I wanted to thank you for that, and I look forward to learning more later. Thank you.
Thank you.
Thank you, Samuel. Have a great night.
You too. Bye.
And our last speaker, I'm so tired. Erin McCleary. Is it Dr. McCleary?
Yes.
Thank you for joining us.
So I'm sorry to be the one holding you between this and what comes next in your life, but I do want to say thank you so much to Representative Wood, Senator Hong, and Representative Pavlak D'Amato for being here and having my comments at the end of a very, very long day. I've been seeing patients all day and kind of watching where we're at, and I thought I was gonna be second to last, and here I am last. I did submit my testimony. I'm going to try and just summarize rather than reading directly from that to help everyone move along. I did speak with you, I think a couple of weeks back on another bill, but I am a local optometrist in a privately owned practice in Plainville, Connecticut. So you just heard from Kurt, who is kind of representing a larger hospital-based entity. And obviously I'm coming from the small people. I think you just heard from one of my colleagues earlier tonight, Dr. Chris Agro, who's in a similar position. Both of us have intimate history with the Connecticut Association of Optometrists, and I somewhat am representing them as well as an individual. I'm speaking tonight specifically on Raised House Bill 5410, which is the high deductible plan bill, as well as the Raised House Bill 5447, which is the prior authorization. So specifically, and I think I'm going to be a little bit of a broken record from everyone that you've heard earlier today. To give another spin on the high deductible plans, the 5410, I mean, we see this every day. And we have patients who are signing on to these high deductible plans at a higher and higher rate. And I feel like we're seeing more of this in recent years than ever before. And specifically right now we're in March. And so we're at the beginning of the year, and we see this very much. It's on my desk every day. I have my patient conversations every single day where you have patients who, one, either don't understand their insurance policy and they don't even know what's covered or not going to be covered, or they're choosing to actually deny or avoid care that they really need because of these high deductible plans. And so they just are not getting it or opting not to do that. I can give you a very specific example of where this comes into my office every day. I treat a lot of dry eye patients, and these patients are on medications that keep them well controlled, comfortable chronically, kind of like a diabetic medication. And at the beginning of the year, some of these patient medications are $600 for a 1-month supply of eye drops. That's like car payment. That could be, part of your rent payment. And these patients, obviously, to be well controlled, they're choosing between these things. And so obviously, I think this legislation in this bill is a step in the right direction to try to help limit some of these high deductible, annual amounts. Obviously, it's not the whole answer to this problem, but I think it's definitely moving in the right direction. So I'm just speaking in behalf of approval and support of that. Regarding the Raised House Bill 5447, which is the prior authorization. You obviously have just heard this very eloquently from several people before me. But to their point, a survey wholeheartedly we support. But more importantly, this is something that needs to be fixed, and we need something put in place sooner than later. I am a small practice. I have 2 doctors and 10 staff that I employ. And I cannot tell you the number of hours in any given week where prior authorizations are in stacks like this in my office. And the amount of paperwork and phone calls and time spent on online portals to try to get authorizations for these patients who have been chronically controlled on medications, and then all of a sudden they have to go through all these prior authorization processes. It's time consuming, it's taxing on my staff, and it does not allow me to care for my patients and do my job, the thing I was trained for. And I'm spending a ton of time doing paperwork. And this is obviously a big thing that needs to be addressed. So I do want to just, really thank the committee for your leadership in raising these bills. And I definitely look forward to, both not as myself, but also as the CAO, the Connecticut Association of Optometrists, more than willing to work with you to try and help find some of these solutions.
Great. Thank you. I have a quick question. When you say that someone's being charged $600 for eye drops, is that what the eye drops cost? I mean, because is that price gouging? I mean, is there something else going on here? I just wanted to get your feedback on that.
It is a combination of things, right? To be honest, this is unfortunately what many big box pharmacies will charge for their self-pay pricing for some of these medications. So yes, that is the fee that, and for example, there's a very specific example. There's 3 medications that are actively used to treat dry eye. Without naming names, I have a patient who's been on one of them for 4 years. And this year, all of a sudden, her insurance changed. One of them cost her $740. One was charged at $623, and the other was at like $650. And that's what they were charging, full self-pay price, because they had not met their deductible. And once they meet their deductible, then maybe it's covered. But these people obviously cannot afford that. And by the time they can pay for it, like we're giving them supplementary medications to cover it. Like, okay, well, try this one while you're trying to meet your deductible. It's a lesser therapy. They're not as comfortable. We're, having other things going on. But are they actually going to meet their deductible? By the time they get there, it's going to be like August or September. Now we've missed 9 months of care on the actual medication. But yes, I will say some pharmacies where they go to, again, not naming names, are notoriously charging higher fees for the same medication versus maybe a local homegrown pharmacy.
Okay.
So there is a little bit of that, but not that much, to be honest.
Okay. All right. I just wanted to better understand kind of the cost drivers, and that's a whole nother hearing that we could have. So thank you so much. I really appreciate you waiting around to speak, and your time is precious, but it really means a lot to hear.
Oh, well, thank you. And also, what a devotion, but your entire day listening to all of these things. So at least I get to be a bookend and not one just lost in the middle. So I appreciate your time. Thank you so much. And we're more than happy to work with you on behalf of the CEO.
Great. Well, everyone, we have come to the end. I know everyone's sad, but happy St. Paddy's Day. Enjoy your pint of Guinness, and we'll see you all tomorrow for our next public hearing at 9 a.m. Bye. Oh, thank you.